in Bengaluru. And mind you that the company rolls out 5G services in all 17 priority circles by August 2025. Next up is alcohol stocks such as Radico Khaitan and United Spirits. These will be in focus as Maharashtra government hikes excise duty on IMFL by 50 to 60% according to the reports. Credit Access Grameen is the next one as the company secures $100 million multi-currency syndicated social loan facility. Next is Texmaco Rail and Engineering. The company gets an order from Mumbai Railway Vikas Corporation of nearly about 44 crores. Hence, this will be in focus. Next is Keynes Technology. Company's arm, that is Keynes Semicon, signs asset purchase agreement with Japan's Fujitsu General Electronics for nearly about 1.59 billion yen. Next is Maruti Suzuki. According to sources to CNBC-TV18, the commercial launch of e-Vitara in India is likely to be delayed. And lastly, coming to AB Capital, according to sources, Advent International is likely to sell 1.4% stake via block deal. And the total block size is around 856 crores and the floor price is around 237 per share. So all in all, we'll be looking out for all these stocks in focus today.
Well, thank you so much for that, Upasna. And finally, we now have Sudarshan joining in with cues from the F&O space. Good morning, sir.
Good morning, Vamangshi. So it was a range-bound day of trade as expected. At the end, good part was Nifty held on to levels for 25,100, while minor profit booking was seen in the banking space. For today, also GIFT Nifty is indicating a flat start. On the flows front, the data is not looking that bad. In the cash market, we saw both FIs and DIs buying. FIs bought more than rupees 2,300 crore. DIs also have bought more than rupees 1,100 crore. Even in the index futures too, FIs have bought more than rupees 560 crore. Also, they have reduced long position, but reduction is very less. It's just 130. But at the same time, they have reduced short positions of almost 3,000 contracts. And FI's long exposure remains around 20%. On the option front, action remains above 25,000 levels. 25,200 call has seen addition of 32 lakh shares. Similar addition was seen for 25,150. On the put side, 25,100 put also has seen addition of nearly 19 lakh shares, and 25,050 put has seen addition of more than 11 lakh shares. Support for Nifty remains around 24,830, that is 20-day moving average, and resistance remains around 25,230, that is the recent high. Two stocks have entered the band. First one is Ireda and second one is RBL. Apart from these two, Titagar, AB Fashion, Chamal Fertilizer and Hindustan Copper remain in the band.
6 stocks in the F&O band today, including names like Ireda. Sudarshan, thanks a lot for that. Take a short break. On the other side, we bring the spotlight on Maruti Suzuki, who has cut its near-term EV production target. Stay tuned.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, a Reuters news break reveals that Maruti Suzuki's big launch for the year, the e-Vitara's production, may be delayed on the back of the rare earth magnet crisis. Parikshit gets us more on this front. Parikshit?
Yes, Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnets. The big launch for them this year was the electric Vitara. They had showcased the e-Vitara with great fanfare at the Auto Expo. The plan was to start exports and have a commercial launch in India probably between July and August. All of that could be delayed right now because of the export curbs. And there is not enough stock of rare earth magnets to make the e-Vitaras, as many e-Vitaras as was planned earlier. We hear from sources that the company had an initial plan in April to make 88,000 electric Vitaras. That outlook was earlier slashed to 67,000. For the period between April and September, the company had a plan to make 26,500 electric Vitaras. Because of the current magnet crisis, that outlook has been slashed to 8,200 electric cars only. What Maruti hopes is to make up for the loss of production from October onwards. So they feel that the production can be adjusted and somehow the company will still manage to meet its revised production outlook for the e-Vitara at 67,000 units in the full fiscal year FY26. But for the moment, clearly there is a problem. We've been told by sources that the start of production has not been deferred. Production is taking place of the e-Vitara, but in small quantities, and perhaps this will be only for addressing the export market initially.
Parikshit, thanks a lot for that. We'll keep an eye out on Maruti Suzuki today. The stock had ended at the lowest point of the day yesterday. It'll be interesting to see how it reacts this morning. Now, the World Bank has cut India's growth forecast for FY26 and FY27, projecting growth acceleration being imminent from FY28. However, the report has highlighted that India is estimated to maintain the fastest growth rate among the world's largest economies. The World Bank also expects global growth to slow to levels of 2008, which is at 2.3%, excluding the recession, citing rising trade barriers and policy uncertainties as its key factors. On that note, we take a break here on Power Breakfast. On the other side, cues from the commodity space. Manisha Gupta joins in. Stay tuned. Welcome back, and as promised, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What is on your radar today?
Well, some consolidation really, because as we've seen the global equity markets run up, the commodity markets really seem to be staying within the ranges. Crude oil prices should come in on your screens because we've seen prices hold around 7-week highs onto this one. The focus clearly and squarely is on US-China trade talk as it enters day 2. And with the fact that the Canada also has entered direct tariff talks with US, the markets really are looking at some positive cues continuing. The most important thing to watch out today is going to be the US May CPI inflation data. That would tell you or give you an immediate direction, really. A softer inflation outcome could drag US dollar lower and could support many of these commodities yet again. Not just about the crude oil prices, but the precious metals also seem to be trading quite steady right now. As I said, the focus is going to be on the US inflation numbers. The silver prices, after that initial run-up of nearly 6 to 7 trading sessions, also seem to be just about holding around its 13-year highs. $37 an ounce is a resistance right now for the silver prices. Some profit taking is what we've also seen in case of copper prices. It fell 1% overnight. The weak China industrial data seems to be weighing onto the market. But having said that, the U.S. copper continues to trade at a premium of almost $1,000 a ton to LME today.
Well, thank you so much for that, Manisha. So, largely commodities holding steady. But moving on then, the much anticipated launch of the Axiom 4 mission to the International Space Station has been postponed due to a technical snag, according to a statement by SpaceX. The delay in the mission comes due to a leak identified during post-static fire booster inspections. The new dates of the mission will be announced soon.
And on that note, we call time on this edition of Power Breakfast. From Amakshimi and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for the day ahead.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call. We're coming to you as always live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me, my colleague Nigel D'Souza. And today we have Mangalam in the house as well to liven things up, brighten things up. And, I dare say markets have several reasons to cheer middle of the week.
Yeah.
And for now, globally at least, the color seems to be green.
Well, a lot of news, on the global front as well, whether or not the US and China can seal a deal, whether or not there's going to be a new Fed chair, and, the courtrooms as well having their say with regard to tariffs. So plenty of global news flow, but I think our market's in a bit of a range.
Our market's in a bit of a range, for all that happened globally and locally as well after the 2 days of a rally that we saw post the RBI policy. The Nifty had just 1 point in terms of a change yesterday over the previous close. So maybe liven things up midweek, and that's why I'm here.
Love it.
Let's see if Mangalam can be the lucky charm, whether we get an upside break on that range today or not. But okay, let's straight away get to the action because there are lots of global headlines coming in. And for the Trump administration, I'm going with 2 wins because right now, for what it's worth, at least in the interim, it looks like 2 wins. Now, what are these 2 wins? One, the very clear signs of a thaw, some sort of a trade breakthrough with China, and we'll get to that in a bit. And second, there's relief coming in from the courts, at least an interim relief when it comes to the legitimacy and the legality of the Liberation Day tariff. So let's take it step by step. Markets, even ahead of some of these developments that happened, some of them happened post the US market close, markets were anyway feeling in good spirits. They were in high spirits, so to speak. So the gains were about 0.25% to as much as 0.6% on the NASDAQ in particular. Let's talk about the first quote-unquote win. The trade representatives on both sides, US and China, after the second day of talks in London, have been striking very, very positive tones. And what we have been given to understand is that they have agreed on a trade framework. Now, what will this framework exactly entail? The specifics are not out, but it should keep the tariffs in abeyance, which is what the Geneva Agreement had spoken about. So basically, this is going to be a framework to operationalize the agreement that the 2 sides had reached in Geneva, that's we know. However, please bear in mind that the presidents of both the US and China have to sign off on this, which is why a lot of the top-level US negotiators, including Lutnick, including Jameson Greer, they'll all be going back to the US to get that sign-off from the US president. But first, let's listen out. Commerce Secretary Howard Lutnick, he was speaking to reporters immediately after those trade talks with China, and here's exactly how he's describing the progress.
We have reached a framework to implement the Geneva Consensus and the call between the 2 presidents, right? So that was on June 5th. So we've combined those 2. We've reached a framework for implementation. So the idea is we're going to go back and speak to President Trump and make sure he approves it. They're going to go back and speak to President Xi and make sure he approves it. And if that is approved, we will then implement the framework that we have worked hard over these last 2 days. Absolutely expect that the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that.
And that is a very, very important takeaway because rare earths are pretty much in some sense at the center and heart of all the conversations. And we've seen the overtures from the Chinese because they've started supplying those rare earth magnets to some of the large US automakers like Ford, General Motors, and even Stellantis. So some thaw is happening. Rare earths should be resolved as part of the framework. That's what he is saying. Now let's come to the second win for the Trump administration. That's a win coming in the courts. Now, what has happened is this US Court of Appeals, the Federal Circuit Court of Washington, D.C., that has basically said that tariffs can continue as of now. However, remember, this is an interim order. So the tariffs have been reinstated while the court continues to review their legality and their legitimacy because the lower court, the trade court, has struck down the tariffs as being illegal. It basically had said that the emergency powers that were used to levy these tariffs are not constitutionally valid. The appeals court is still examining that order. It will come out with its view, but in the interim, tariffs can stay. So that's a win of sorts definitely coming in for President Trump as well. Now let's come to how markets beyond equities reacted to a lot of these developments that were ongoing. It's been very range-bound, frankly. In between yields, we don't have much of a move, 1 to 2 basis points on the lower side. That's the US 10-year and even the US 2-year yield. Slight inch down. The dollar has been in a range, but the dollar index has managed to stay above 99. Even this morning, I mean, if you're looking at it, 99.16 is what we're getting on the screen. Coming to oil, oil is pretty interesting. After rallying to over 67 as we started the week, now we're looking at levels of below 67. So that's good news for India. The Iran-US stocks are in focus over here on the potential of a new deal, and the Iranians are saying that they'll offer a counter deal. In the meantime, what we got from Trump yesterday, he was speaking to Fox News. He says Iran is acting much differently in negotiations than it did just days ago. It's far more aggressive. It's surprising to me, and it's disappointing. So let's see. I mean, it's negotiation, wait and watch. China seems to be progressing well, but when it comes to oil in Iran, seems to be a bit of a blip over there. Coming to our market, consolidation is what we've been seeing. That's what happened yesterday as well. The Nifty dip was absolutely unchanged. We're right at the top of the trading range. It's about a 550-point trading range from 24,450 on the way down to 25,100. The bulls need to punch through it, stay above it, and then only will it be completely proven, because the broader market also was cooling off yesterday. For me, the critical question is going to be, can the bank Nifty get back to its winning ways? It took a breather yesterday, but can it go back and provide some leadership to this market? Let's see. I guess, Nigel, we are all set for a very interesting trading session.
Well, that's right. During yesterday's trading session, there was a bit of a short covering bounce that did play out as well. You had the Nifty that in fact ended higher. The Nifty Bank unbound some long positions in trade, but there were some mild signs of some short covering, and that tallies in because the FI as well, there was some mild action out there. They continue to remain net short with close to around 20% of the positions on the long side, while 80% of their positioning is on the short side. In yesterday's trading session, 3,000 contracts on the short side were covered out. Moving to the options data, then you had the 25,200 call. Well, that was fairly active. It added close to around 30 lakh shares, and the premium out there has come down to around 45 rupees. So, that's going to be a bit of a resistance zone going by the kind of writing we have seen at around the 25,200 call. On the downside, though, the 25,100 put, well, that had a fair bit of action. That was, the premium out there has come down to around 100 rupees or thereabouts. There was mixed action that was seen at this particular level, which brings us to the level. Just going by the options data, since that 25,200 level is seeing a lot of addition, and you have the premium out there in the ballpark of close to around 50 rupees, the resistance zone comes in at around 25,250 odd mark. So that's the first level. Then you're looking at around 25,400. Important remarks to keep an eye out on. On the downside, you'll have to say both on the Nifty as well as the Nifty Bank that 20 DMA becomes a bit of a resistance, bit of a support mark. So the 20 DMA for the Nifty, well, it's only around 1% or so away, while for the Nifty Bank, it's close to around 2% away. So that's the level you're looking at. 55,500 should not break on the downside. For the time being, you'll say that maybe the Nifty Bank wants to take a bit of a breather and then resume its uptrend. But that's a reference point which is quite deep and quite far away from current levels. Though the recent high becomes a bit of a resistance mark at around that 57,100 odd. Now, since there is a lot of talk with regard to the US-China trade deal, and maybe in fact there's a framework that's been laid out, I'll keep an eye out on two sectors, but both of them did well yesterday. So let's see how they do, in today's trading session. The metal index, there was buying from the low point of the day, and the tech index as well. That took the lead yesterday from the Nifty Bank, and it outperformed in trade. But if the global environment is a little bit better, then in fact we'll keep an eye out on both these two. And in terms of stocks that I'm going to be looking at, well, a few stocks have moved into the F&O band. So IRDA as well as RBL Bank, both of them should be on your radar since they moved into an F&O band. And from the cash market stocks, the stock that I'm going to be keeping an eye out on is CRISIL. Yesterday, in fact, the stock did pop up a little bit. In fact, from the December lows, it's made up close to around 50% of the losses that we saw earlier. The next mark you're looking at on CRISIL itself is, close to around 2 to 3% away from current levels. That's a bit of a resistance mark, 3 to 4% actually broadly. And it had big delivery we were spying. So from the cash market stocks, because of the high delivery, I'll keep an eye out on this name as well. But Mangalam, what else are you tracking?
Well, back to the US, we're watching out for obviously the details of what comes out from the US-China trade talks. Surabhi's pointed that out as well. But apart from all of this, all eyes will be on the consumer inflation data itself. The US consumer inflation for May is due today. Economists expect 0.2% month-on-month and 2.4% year-on-year increase. So to that extent, it will be an important data point, largely because all the other macros for the US have remained stable, including the 10-year bond yield, Brent, as well as dollar index, which is stable around that 99 mark itself. Indian indices, the Nifty was virtually unchanged yesterday as the IT stocks supported it and the banks took a breather. Let's see where that goes. Both, the DIIs and the FIIs were buyers in the cash market, so that's a positive. What's interesting is the question where has Nifty now begun to consolidate at a range higher than what it was earlier trading at. So if you look at it between May 16th and May 27th, which was before the RBI policy, all the highs on the Nifty saw supply between 25,070 to 25,150 or 113 at best. So May 16, May 26 and May 27th, all those data points come up for you. The high on the Nifty was just below 25,100. The last two trading sessions, the high on the Nifty has been about 100 points higher. So 25,160 to 25,199 was yesterday's high. So we'll keep an eye out on that. While 25,000 becomes an important psychological support, a broader major support for the Nifty would be the 20-day moving average, which is 24,833. For the Nifty Bank, the broad range over the last few trading sessions, 56,500, very close to yesterday's low, to 57,500 on the way up is something that we'll most definitely keep an eye out on. So that's about the indices and the setup.
Okay, all right. So let's see if we can get through these ranges, whether the Indian market can find its mojo back or not. Let's kick it off then with the equity call of the morning. Harold van der Linde of HSBC India says that India is offering a refuge for investors amidst jitters about global macro domestic policies. He says the first quarter earnings fared better than consensus expectations. Sustained recovery in demand is still a few quarters away. He adds that their top 5 ideas in India are Godrej Consumer, UPL, GAIL, Ujjivan Small Finance Bank and HDFC Life. He says they're neutral on India from the Asian perspective with a 2025 end index target of 82,240 for the Sensex. Okay, all right. So that's a call from HSBC. Let's move on now to our first guest on the show this morning. Prashant Paroda, Portfolio Manager, Emerging Markets at Allspring Global Investments is with us. Prashant, great to have you on the show today. Thanks so much for joining in. It's quite astounding that maybe the quote-unquote good news is trickling in now on the trade front and for now at least on the US legal front as well. Markets have just been marching higher. What do you make of this very, very smart pullback? It's been a great summer so far, whether it's equities in Europe or in the US itself.
Yeah, I think, obviously April was a very tough market environment, especially for the US market here. But as soon as, it became clear that President Trump wants to use this to be able to do deals with respective countries, I think the market quickly recovered. And now I think with China, hopefully with the rare earths, their production and their supply to US will start. So overall, it seems like market is climbing the wall of worry regarding tariffs. And I think there's definitely more deals that will come through later in the summer as well.
All right. Hi, Prashant. Good morning and good to see you. And as always, I wanted to ask you, have you seen Trump peaking out? The peak Trump in terms of volatility, he'll have to do something more now to fear the markets. A couple of months or so ago when he was, launching a lot of things, saying a lot of things, the markets were reacting. But in the last couple of weeks, actually, the markets have stopped reacting to that. So do you think Trump has peaked out? And then we'll get to your preference on global equities.
I think less so than his impact on the markets is more that the market sees clarity with where the administration wants to go. And, there was this deal with UK, there are deals with India that will hopefully happen. And, China as well. Initially the thought was that there would be some sort of trade embargo, but those worst case stories are out of the picture now. So it seems like the market is kind of waking up to the fact that, the world will move on and hopefully there'll be more deals in the future as well.
And what's your preference in terms of global equities, developed markets or the emerging markets? The flows that we were looking at, the flows picture that we get with regard to the US markets, it appears the foreigners have been taking out some money after going very much overweight on the US markets in the, in the prior 6 months. What's your take on developed markets and where do you see this money flowing? Will it go to Europe? Will emerging markets get a chunk of it? And in that case, India as well gets some part of the flows.
Yes, I think definitely. And even though, the US market has recovered, there's still a huge delta between what emerging market returns have been this year versus what the US market has. Some of those flows will also go to Europe. I think what's happening in US is if you take out sort of, the Mag 7 names, the 493, the S&P 493, the earnings expectations have been pretty muted, and their earnings are not compounding so fast. So if you take out sort of the Mag 7 out of the picture, then you see that earnings compounding in the rest of the world is pretty good. And if dollar continues to stay a little bit weak, people will look abroad to park some of that money.
So when you say people will look abroad, what does that abroad entail? I'm just trying to understand, because you manage portfolios at emerging markets, what emerging markets are appealing to you right now, and where does India stand in that pecking order?
No, India, I think always has, a dominant top 2 or top 3 positions as well. I think with there was some concern in the first quarter with valuations being a little bit high and earnings expectations were not sort of matching some of the consensus estimates. We'll see how things evolve. I think with India, the market leadership has changed a lot. Last year it was kind of buy at any price names, which were sort of the high growth names. And today the market leadership has kind of evolved to the banks and financial sector and some of the telecom names as well. So I think the market leadership is changing within India. There is, some of the small caps are also recovering.
Right. So let's ease it out for all our viewers here. If you had 100 rupees to be deployed into emerging markets, how much would you deploy where? And of the chunk that you're deploying in India, how would the market sectoral deployment be?
Yeah. So I mean, roughly, I think if you look, you would still look about 20+% to be deployed in India, and within that, I think the financial sector, which will take about 30% of that chunk itself. So a lot of these financials, as you can see, last 3 to 4 years, they haven't had a good kind of performance vis-a-vis the Nifty. So we see some of these sort of catch-up trades sort of continuing within that.
Okay. All right, Prashant. Good speaking with you this morning. Thanks very much. We'll leave it on that note. Good getting that perspective. You have a good day. Well, with that, let's move on because it's a packed lineup. We have plenty coming up for you. So let's tell you all about it. At 8:35, Harshit Kapadia of Elara joins in. Railway stocks have been running up off late. Is there any fundamental reason? Is it just sentiment? Should you be looking at them? We'll discuss that with him. At 9 a.m., Gaurav Malhotra of Axis Capital talks about some of the key developments in the telecom sector. At 9:20 a.m., we have Anand Shah of ICICI Prudential AMC. He's a market master of the day. At 9:30, we get chatting with the management of Shree Cements, talk about the impact of the West Bengal's government's decision to revoke incentive schemes for the sector. After that, we get to the auto space full throttle. Venkesh Gulati, former president of FADA, as well as Hormaz Sorabji of Autocar India, join in. A slew of developments, and the rare earth magnets are beginning to bite. It looks like Maruti will have to delay some of their launches because of this. We'll discuss this as we go forward. At 9:50 a.m., Nilesh Sathe, former IRDAI member, and Raghvesh from JM Financial Institutional Securities joins in to talk about insurance. A couple of important developments here. So we'll discuss what investors should be looking out for. Towards the end of the show, Lata is going to be with us, and she is in a conversation with Mr. Subramaniam Sharma of L&T. She talks about the company's energy business.
Time to slip into a short break. We got a lot of stock-specific action in our special Top 10 segment. For the time being, I'll run you through the list. We're looking at IRDA, Marksans Pharma, Tata Communications, Max Financial, Kolte Patil Developers. All of them will be reacting to positive news flow. Add to the list, Keynes. But on the flip side, Maruti Suzuki, Aditya Birla Capital, United Spirits, and Radico Khaitan will be reacting to negative news flow. Take that break, come back, get into further detail on all of these names.
Wait.
You're watching us here on Bazaar Morning Call. In case you just tuned in after good cues from Wall Street overnight, we're seeing a green screen on the Asian markets, but the GIFT Nifty is not reflecting that. In fact, it's absolutely flat at the open, so it's about 27 points on the upside. Let's get you individual stocks. We have our research team standing by with the CNBC-TV18 list of top stocks for the day. Let's start with Maruti Suzuki. A Reuters news break reveals that Maruti Suzuki's big launch for the year, the e-Vitara's production, may actually be delayed on the back of this rare earth magnets crisis. Parikshit joins in to get us more on this front. Parikshit.
Yes, Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnets. The big launch for them this year was the electric Vitara. They had showcased the e-Vitara with great fanfare at the Auto Expo. The plan was to start exports and have a commercial launch in India probably between July and August. All of that could be delayed right now because of the export curbs. And there is not enough stock of rare earth magnets to make the e-Vitaras, as many e-Vitaras as was planned earlier. We hear from sources that the company had an initial plan in April to make 88,000 electric Vitaras. That outlook was earlier slashed to 67,000. For the period between April and September, the company had a plan to make 26,500 electric Vitaras. Because of the current magnet crisis, that outlook has been slashed to 8,200 electric cars only. What Maruti hopes is to make up for the loss of production from October onwards. So they feel that the production can be adjusted and somehow the company will still manage to meet its revised production outlook for the e-Vitara at 67,000 units in the full fiscal year FY26. But for the moment, clearly there is a problem. We've been told by sources that the start of production has not been deferred. Production is taking place of the e-Vitara, but in small quantities, and perhaps this will be only for addressing the export market initially.
Got that, Pariksha. Thanks a lot for that. Well, let's hop across to Vamakshi. She's looking at IRDA. Morning, Vamakshi.
Good morning, Nigel. Well, IRDA has actually gone ahead and approved allotment of almost 12 crore shares at an issue price of 165.14 per share, which aggregates to 2,005 crores rather. Keep in mind that the QIP had opened on June 5, closed on June 10th, and the issue price that the company has now declared is very close to the indicative price that they were indicating. Out of the entire QIP, around 50% has been allocated to LIC. We also have Societe Generale as well as Morgan Stanley Asia picking up close to around 9% stake each. So good investors entering the stock. The development will be seen as positive.
Okay, all right, got that. Vamakshi will keep IRDA on our radar as well. A couple of more blocks expected today. Never a dull day when it comes to block trades. Vivek is tracking. Which are the companies this morning, Vivek?
Well, good morning. Never a dull day, especially when it comes to block deals. So today we are looking at two stocks. The first one is AB Capital, Aditya Birla Capital. A block is expected here. What we understand is that, as per the term sheet, Advent International, with whole stake in the company under the name of Jomai Investments, is looking to sell close to 1.4% of the total equity. The block size, is at, or the indicative price is at 238 rupees a share, indicating a block size of a little over 850 crore. So, expect a slight negative reaction at least at the open as far as AB Capital is concerned. But the other stock on the radar is Marksans Pharma. Here the seller is the Chinese private equity investor OrbiMed. They are looking to sell close to 2.27% of the total equity. Interestingly, no discount has been given as far as this particular block is concerned. So the indicative floor price is at close to 250 rupees a share. The deal size is slightly over 250 crore. So both of these stocks expect large trades in the session today.
Okay, Marksans Pharma and AB Capital. Got that, Vivek. Thank you very much. But guys, forget tariffs, forget trade deals, forget all of it. We have far more important news to discuss, and Manglam is going to take it away because there's an excise duty hike in Maharashtra that's come through.
That is an excise duty.
Very grave. It's very grave news, Manglam.
Well, it is grave news for the ones who consume, grave news for those who are shareholders. But, it wasn't entirely unexpected. I'll tell you why. Because we've been having conversations with industry leaders, and the big positive for the industry was the India-UK free trade agreement, which allowed a big cash on the bulk Scotch imports.
Yeah.
But that would have been a positive if states did not go ahead and increase the duty.
Oh, so they are demanding their pound of flesh.
So now what the centre has given, the states have taken away. And that is why after the UK FTA deal happened as well, we didn't see a big surge in any of these stocks because the street was awaiting clarity here. And that's exactly what has happened. Maharashtra government, and these are news reports because we don't have the official document yet, Maharashtra government has hiked excise duty of Indian-made foreign liquor by around 50 to 60%. How much was the cut on the bulk Scotch imports? It was halved, right? From 150%, it was brought down to 75%. So the important part is there will be an increase of 30 to 50% in terms of an initial price, but that is if all things are same. But we have to look at the net benefit, should be around 10 to 20% in terms of an increase. It's the highest ever percentage increase since 2011, also because it's also the highest ever percentage decrease in the bulk Scotch import. Maharashtra state volume contribution for the industry is about 10 to 12%. So United Spirits will be in focus, not United Breweries. You'll have Radico Khaitan, maybe some bit of allied blenders as well. So 20 to 22% of sales for United Spirits comes in from Maharashtra. 7 to 8% comes in from Radico Khaitan from Maharashtra. The likely EPS impact, as per analysts, could be around 6 to 8% and 2 to 3% for Radico Khaitan. See some red on these stocks. But two things, official document is awaited. Secondly, the net impact of this, X of the India-UK FTA, is something that we need to calculate. There will be an impact, maybe not to the extent that the street is fearing right now. And obviously, the benefit of the India-UK FTA will not be to the extent that the street was, rejoicing earlier. So the truth, as always, lies somewhere in the middle.
Well, that's right. We'll have to see whether or not demand is inelastic in nature.
Or maybe I will watch out for the other flight companies because a lot of people will be going to Gurugram, get a cheaper tipple there.
All right, that's about alcohol, but let's get back to tracking some of these telecom stocks. Tata Communications, they had an analyst meet. A lot of brokerages have written. Rima, tell us what are the key highlights?
Well, let me just tell you, break it down, because it was a fairly comprehensive investor meet where they spoke about capabilities, their plans, etc. But the 4 key takeaways are: 1, the company had laid out a data revenue aspiration. They wanted to double it to 28,000 by FY27. This was laid out in FY23. It was a 3-year plan. Now the company has pushed forward that by 1 year, which means data revenue hits 28,000 crore of aspiration by FY28. Anyway, analysts, as the last 2 years have progressed, things had slowed down. So it looked aggressive to achieve it in the first place in FY27. So it shouldn't come as a surprise. Secondly, there's one portion of their business, digital portfolio, which is currently loss-making. The EBITDA loss the company quantified was 900 crore last year in FY25. For that business, the company is hoping to achieve double-digit EBITDA margins. Again, but here they haven't specified the time, but that is the aspiration. Then on the asset monetization, because the company has 26% stake in data center JV, they have land banks, etc. Things are slow moving on the asset monetization, but they believe that can offset any adverse impact on the AGR case. And finally, the company is talking about the M&A opportunities. They're open to aid. So yeah, it's a negative that they've pushed forward the data revenue guidance, but as I said, it shouldn't come as a surprise, because to begin with, it looked aggressive and pretty difficult to achieve by the earlier timeline.
All right, Rima, thanks a lot for that. So that's about Tata Communication. Let's talk about a bunch of other stocks which are on our radar. Upasna joins in with what she has on Max Financial, Kolte Patil and Keynes Tech. Upasna.
Good morning. First up, let me start with Max Financial Services. The board has appointed Sumit Madan as the MD and CEO of Axis Max Life Insurance for 5 years with effect from 1st of October. Mind you, he is currently the Chief Distribution Officer of Axis Max Life, and earlier board had approved early retirement of Prashant Tripathi as the MD and CEO of the company with effect from 30th of September. Hence, this stock remains in focus on the back of management rejig. Now, Kolte Patil is the next one that we are looking out for. The CCI approves Blackstone's acquisition of 40% stake in the company for 1,150 crore. This acquisition will be executed via share subscription and share purchase agreement. With this, Blackstone makes an entry into the Indian residential market. Hence, even this stock will remain in focus. And lastly, coming to Keynes Technology, company's arm, that is Keynes Semicon, signs asset purchase agreement for Japan's Fujitsu General Electronic for nearly about 1.59 billion yen, which is nearly about 94 crores. This is mainly to purchase the production lines for power modules and the identify assets. So all in all, these 3 stocks will be on our radar today, and I expect all 3 of them to open in green.
Okay, all right, Upasna, got it. Thank you very much for that. Let's quickly recap our list of top stocks to watch today. The ones that have positive news flow around them are Irida, Marksans Pharma, Tata Communications, Max Financial, Kolte Patil Developers and Keynes Technology. The ones that have negative news flow around them would be Maruti, Aditya Birla Capital, United Spirits and Radico Khaitan. All right, and with that, let's move to commodities. We have, of course, as always, Manisha joining in with a quick roundup of the action. Manisha, good morning.
Morning, Sylvie. Thank you for that. I'll start with the crude oil prices, which have seen some profit taking, but still holding around that 7-week highs that we saw the markets hit yesterday. Well, 2 things that really seem to be impacting across commodities. One, the decline in US dollar index, holding just below 99. And the other is the focus on US and China trade talks as it enters the second straight day. Well, Canada also talking directly to US on tariffs is something that the markets have seen as a premium for many of these commodities. But after that very, very strong run that we saw in silver, platinum, palladium for the last 4 and 5 sessions, some consolidation is what the markets are looking at this point in time. 0.5% to 1% of a decline is what we saw across many of these commodities. Also, there's a bit of a risk on as we see global equity markets gain up. So there is some bit of a profit taking that the commodity markets have seen. Having said that, it is going to be about the U.S. inflation data today in the evening. That would set the course for the rest of the days for this week.
All right, Manisha, thanks a lot for that. We'll take note of that itself. And take a short break as well right now. On the other side, we'll discuss the rail stocks. Harshit Kapadia of Elara joins in to discuss the recent run-up that we've seen in a lot of these names.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, let's focus on one theme that's been running away. That's the railway counters. Well, they have witnessed a sharp uptake in the last 1 month, but the stocks are somehow still, way off their 52-week highs. Harshit Kapadia, the Vice President of Elara, joins us on the show. Hi, Harshit. That's the big question, right? Is the train running too fast? Is it skipping a couple of stations? If you could tell us, what are you making of this big bazooka rally? And what's your top pick? Where is there still value in this railway theme?
Morning, everyone. Yes, the train is running. The speed has already increased, is what we see. We are moving from a 40 kilometer per hour speed to 75 kilometer per hour speed. So that's been a big change which is happening. We think this team is still left here. The stocks which I would recommend is Rides Limited, RVNL, Titagar Rail. These are some stocks that you need to keep a watch out for. And over a longer term, Siemens India, given that mobility is going to be a mainstream for that particular company.
But Harshit, by the way, that's quite fascinating. When we were just saying in jest if the train is moving too fast, but we've got the stats there on how the average speeds have increased. So that's quite something. But the question is that the rally that we've seen last 2-3 weeks, this interest that's come back, there is no fundamental news flow in terms of additional order announcements or anything like that. So do you think it's just mere sentiment? If you could go into some of the other key fundamental triggers, which is making you optimistic on the stocks that you mentioned.
You're absolutely right. If you look at the budget was almost flattish. Even the components of the entire rail budget, everything was very similar. So there was no big momentum shift which was happening. But what we have seen from the commentaries of some of the companies, on the component side, as more trains which are under trial or under prototype development are giving orders on the component side. So we are seeing orders moving from that side. So we have companies like ABB, CG Power. They're getting orders on traction related components which is required. Amber Enterprises, which is manufacturing ACs for these kind of trains. We're expecting the first ever launch of a Vande Bharat sleeper train by BML probably in Q2. And many such trains like Amrit Bharat, which is a non-AC train, which also looking to be launched this financial year by the ICF. So more such projects are in anvil, and as more launches happen, we will see more orders happening, but probably may happen somewhere in FY20 side, which is.
All right, so the trend is virtually unchanged apart from the stock price move itself. Harshit, if you could, given the sort of move that we've seen in all these stocks over the last 1 month, tell us about your top picks, where there is still maximum potential, and also tell us where there is still some risk, which of these stocks have run ahead of their times.
So on the railway side, my top picks are Rides Limited. We also like RVNL as a house. We like Titagar Rail. So these are some top picks that we would suggest. Something which has, I'm not sure, which has run up ahead of time because already some of them were not have touched the 52 weeks high. So there is still a steam left. Like we also like BML. Still there is a steam left, though rail and metro is only 30% of the revenue, but that's the fastest growing segment. And on a long-term basis, Siemens is what we would prefer.
And why is that? Because Siemens, obviously, railways is one part of the business. Siemens, is present in several other aspects. So can you just elaborate on that call? Sure. Why would Siemens be one of your railway plays?
So if you look at mobility segment, it's right now close to around 15% of its revenue, and we see earlier Siemens was only component manufacturing and rail signaling system in India. But if you look at last 1.5 years, they also are going to manufacture an entire metro coach in India for the global market. So that's where the change is happening. They already got orders on locomotive side. Furthermore, tenders are expected to come for that particular locos as well, because our DFCs now, on that last leg of operational. So once things work out, more locos orders are expected, and Siemens is geared up for that. And then they also incurring capex to, increase their presence on the railway and metro side.
And the others that you mentioned are Texmaco.
Titagar is what I mentioned, but yes.
Right, RVNL and Titagar are the stocks you believe there is still value from here on, if we got that correct.
Yes, absolutely.
Yeah, just a brief explanation, maybe a quick line on each. What makes you comfortable with them?
So one is the order book is, if you look at for RVNL, has been very strong. It's just that execution was a little bit weaker side, but we expect that to pick up from this year itself. And more orders are expected to, flow in as the construction activities pick up on the railway side. So that's where we are positive. On Titagar, that's only, railway company was into all legs of from wagons to, metro coach to manufacturing of Vande Bharat. So it's a diversified portfolio. They are right now on the prototype development. Once that is done, we expect more orders to, come in for both Vande Bharat as well as for wagons. So that gives us a positive, outlook on Titagar.
Just a final question, Harshit. Typically, what is the kind of multiple that you would ascribe to these companies? Because peak multiples were closer to 28 to 30 times. Right now, the stocks after correcting and now recovering are somewhere around 18 to 21. What do you think is a fair value?
So I think the fair value is somewhere between 25 to 30 times is where I would, want to give these stocks. Given the growth momentum is there, we know the railway capex can increase to 3 lakh crore plus. Given, the bandwidth is there, you have opportunities. So it's just a matter of time by when we'll be able to reach that number. But that's what gives us a positivity.
Okay. All right. Harshit got that. Good conversation. Thank you very much for joining in.
Just one more thing, Harshit. What was that speed you mentioned so we can track that as well? What it used to
70 something now.
85 kilometer per hour.
We missed that, sorry.
75 kilometer per hour.
And earlier it was at what speed?
It was around 40-45 kilometers per hour.
Great. All right. Trains are running faster. Stocks are running even faster.
Average speeds are going up. All right, Harshit. Thank you so much. Good conversation. Appreciate all the perspective that we've got with you today. Okay, that's railways. Let's go back to a big market level story as well. And this could be really, really important. Now, we would have noticed that in the last 1 month, if there's one market in Asia that's completely trumped all of the markets, including us, it is South Korea. South Korean market has been running almost 10-12% higher, especially after the political change happened over there. Now we know that MSCI could be looking at perhaps upgrading the status of South Korea, and that review is expected shortly. How could that potentially benefit India? Let's find out. We have Vivek joining in. Vivek, all eyes on South Korea. Even us Indians, we're all looking at South Korea. So you tell us more.
That's right. This is a very important development. It's an event that, for the past couple of years, market participants have been eagerly awaiting. And there is no guarantee, given the fact that it entirely depends on the index level provider, whether or not this particular event goes through. Nevertheless, it's an important event to track. So first up, let's actually understand what exactly is expected to transpire. MSCI, the index provider, will on June 24th, 2025, announce the annual market country classification review results. Why are we watching it and why is South Korea important? South Korea may be classified or upward classified, we could call it, into a developed market from its current status of an emerging market. This particular event, the markets have been waiting for it to happen over the last couple of years. In 2024, it was put as far as the country classification review list was concerned. However, MSCI did not go and upgrade it, stating that there was a short selling ban and they expected that to be an hindrance as far as market accessibility criteria meeting was concerned. However, importantly, South Korea lifted the short selling ban on March 31st, 2025 of this particular year itself, thereby clearing the path as far as its own criteria meeting was concerned. Important to note that this particular upgrade or this particular event implementation is not likely to happen in a single tranche. Rather, it is likely to be done or it will probably be done over the next 1.5 to 2 years. Why is it important for India? Remember, South Korea currently accounts for close to 10.4% of the total MSCI emerging market index, which if South Korea goes and is upgraded to a developed market, the pie will get allotted to other countries that are part of the emerging market index. So implementation will be a net inflow event for other emerging markets like China, Taiwan, as well as India. Looking at the implication for India, remember there will be two implications. Number one will be the active funds, which are likely to pre-position, as soon as that particular event is announced. And, it's difficult to go ahead and quantify the impact as far as active funds are concerned. However, passive funds tied to, the MSCI EM index, IIFL Capital estimates that there could be close to $11 to $12 billion of inflow that could be spread out over the next 1.5 to 2 years. So it's an important event to track, and all eyes will be on the MSCI whether or not they upgrade South Korea to a developed market.
Take that point, Vivek. Thanks a lot for that. South Korea, if it's upgraded, the increased remainder of the EM pie would be distributed among all of us, and as a result of which India stands to benefit. With that, we'll take a short break. On the other side, Devin Choksi of DR Choksi joining in with some fundamental stock analysis. Welcome back. You're watching us here on Bazaar Morning Call. Let's welcome Devin Choksi, the MD at DR Choksi FinServ, joining in. Devin, good morning. First your views on Alcobev stocks. I know it's a little early in the morning and early in the week as well, but Maharashtra government has increased the excise duty on Indian-made foreign liquor and other, products as well, including the likes of, we have Maharashtra-made liquor, premium brand foreign liquor, etc. Do you think this is a negative, or do you think what was earlier supposed to be a positive, again, under the India-UK free trade agreement, is now being undone?
Good morning, Mangalam. I think the wrong person to answer this question. Not fully sure about how NZTI lead this business, because I think we don't see this business very closely. So would regret my not answering this question.
All right, that's absolutely fine. A teetotaler asking another teetotaler, and eventually, no earlier wisdom. But what about, the auto stocks? They've been under this cloud of rare earth related crisis. Do you think they will, navigate through this, barring a few delays? There's no real problem, or do you think in the medium to long term this could actually prove to be a bit of a problem?
So my take is that I think the different touching businesses pass through different challenges. I think auto industry has been passing through challenges earlier. A few years back, I think the semiconductor related issues, haunted them, and they've suffered, for a couple of quarters for sure. I think they couldn't produce at the peak level in many cases. Similar situation may arise, I think, if this situation is not resolved, I think, which is most of the auto companies are asking for by July or so. If that is not getting resolved, then couple of quarters definitely will be a washout quarters in a way that I think they will significantly struggle, even though the market demand is there. But look at the situation post that. I think once this kind of demand scenario is still there and at the same time not fulfilled, maybe in the subsequent part of the situation getting eased out, the market, the companies would end up producing and selling much better as we experience post semiconductor crisis. So I would relatively remain confident about the situation. Maybe this is one-off kind of a situation wherein some of the auto companies might probably give up at least on the valuation to a certain extent. But I think there could be a buying opportunity in some of the cases. So we remain relatively more confident about the prospects going forward. Maybe short term, yes, I think a couple of quarters may get affected if the situation is not resolved.
All right. Hi, Deven. Good morning. It's raining blocks yet again. Couple of large trades already taking place in the block window, which is the pre-open window. Any view on either of these names? AB Capital, you have a block that's just taken place out there. And on Marks and Farmer as well, no discount to yesterday's close price. 1 crore shares change hands. Any view on either of these two?
So instead of, I think, getting negative specifically on the respective companies, I feel that I think probably the companies and the promoter groups are taking, and even the investors for that matter, are taking, I think, the maximum advantage of the current market situation, wherein the valuations are continue to be quoted at a premium level in most of the cases. Nothing wrong with that, because with the entry of some of the new hands continue to the companies as the shareholders, I feel that I think the influence are going to be even more positive going forward. So, like a case of example of Tata Technologies, I think, which completed the deal a couple of days back. I believe that I think such kind of deals definitely mean a better outlook for the company and the business person, including for the post shareholders. So we remain relatively more confident about this process at a premium valuation the new investor is getting into, which is a good sign, because I think that means that he would stay in the business for 7 to 10 years, which is a very good sign as I see it from the market perspective.
All right. What about the IT pack? Yesterday, that was doing well. We were hoping that, there'd be some clarity that would emerge in the US-China trade talks. Whichever way it goes, the street believes that maybe the export-facing sectors could benefit after the underperformance that we've seen in the IT pack. What are your views here?
Yes, certainly. We agree that the worst, I think, seems to be behind for most of the IT companies. They are all waiting for the larger order inflow to take place. Their customers are waiting to get the clarity at their end. And that's the circle, I think, in which most of the companies are probably at this point of time. In my viewpoint, I think a couple of fundamental changes which are taking place in most of the Indian IT companies. They are typically, I think, changing their delivery models. I think from typical code-based delivery models to a solution or a platform-based delivery model, I think, which they have already started adopting, including some of the larger companies like TCS, Infosys, among others. The real good excitement stays with the mid-tier IT companies, which are in a niche segment, be it in the area of automation, be it in the area of digitization, be it in the area of mobility, or for that matter, even artificial intelligence or cloud computing related subjects. I believe that I think mid-tier IT companies, which are typically engaged in providing B2B solutions to their customers in engineering R&D space included, I think they are relatively better off. Maybe the valuation-wise, they all are quoting at a reasonably good valuation currently. So immediate buying opportunity may not be found, but if market does give correction for some reason, then I think they would be the right ones to buy into the portfolio.
Okay, all right. Deven, I'm not sure whether you're tracking these defense names, but Reliance Infra, that one's been going from strength to strength. Not a stock for the faint-hearted, but any view on that name?
Not in particular Reliance Infra, but I think most of the defense companies, I think, pretty exciting to find that they are getting some large-size orders from the current government. And they are multi-tenure orders, that means multi-year orders. They are not going to get over in 1 or 2 years. That means you are getting a visibility of next 5 to 7 years. And that's where probably I think one remains relatively more confident about the prospects going forward. Only point is that the market has ran up ahead of time, and as a result of which, I think they're factoring significantly large growth in their valuation. in my viewpoint, I think even though government has placed larger orders, I think the execution is not going to go beyond 15 to 20% rate of growth in most of the companies' cases. So a premium valuation of 50, 60, 70, 80, 90 kind of Ps, I think are definitely going to haunt some of these companies at some point of time if the valuations do not correct in course of time.
Right, Devin, thank you so much for joining in and giving us your view on a whole host of sectors and stocks. With that, we'll take a short break, come back on the other side. We have the pre-opening rate. Also with us will be, some technical trades. We have Sudarshan Sukhani, Mitesh Thakkar joining in for their picks.
Welcome back. So just a quick glance across global screens, and it's a bit of a mixed picture. Asia is positive, but US futures have turned very cautious. US futures are down about 0.3% thereabouts. That's the implied open, 16 points higher. And I guess markets are awaiting more details of what specific is this trade framework between US and China. And, we don't have any exact levels of tariffs, etc., or even commentary on specific goods and commodities just yet. So I think it's a bit of a wait and watch, 17 to 18 points higher. That's what the implied open is indicating. So let's get to our technical experts then for some trading calls and ideas. We have, as always, Mitesh as well as Sudarshan joining in. Gentlemen, good morning to both of you. Mitesh, so how would you look at it? I mean, yesterday it was so indecisive. The Nifty was like barely 1 point up. So what's the trading direction for today?
Yeah. Good morning, Silku. So I think, the one important observation which we can make is that after that breakout beyond 25,050-100 zone, there is a lack of follow through. On Friday, we had a high of around 25,030, and then on Monday, we opened with a gap up. So as long as this gap is sustaining, which means that as long as 25,030 is not being taken out on the downside, the immediate thrust should be on the upside. In case we see a drop below 25,030, I think we are back to the trading range of broadly 25,100 to about 24,600. So that's the way I'll approach it. I'll exit my long positions in case we start breaking below 25,030. else I'll hold on to them and still believe that while, last 2 days have been more of sideways activity, but as long as we are not breaking down, there's still a chance of getting upside targets of 25,400.
What would your call on the Nifty bank be, Mitesh?
So on the Nifty Bank, good morning. Very similar kind of an outlook. It had a breakout beyond 56,000. This one saw a good follow through and has started coming down again. But around 56,400, 56,300 zone is a good, pivot on intraday moving averages. So I think as long as those levels are holding, I'll maintain a long bias.
All right. And Sudarshan, your call on the indices?
Yeah, good morning. Well, the call is the same. The market is in an uptrend. We have broken out of a trading range, and that trading range breakout should see higher levels in the Nifty. Now, the Nifty doesn't have to go up every day. It's not obliged to do so. In fact, it would be very difficult to trade if every hour the market started going up. So this is a process of consolidation. Now, that consolidation can end today. It can end after 5 days. It doesn't matter. The more important point is what the trade should be. The trade is be on the long side of the market, and we raise our stops. Earlier, I was suggesting 24,800. Now we have sufficient confidence to say 24,900 should be our approximate stop. With that as a protection, stay on the long side of the market. Be patient. It will break out when it wants to.
Okay, it'll break out when it wants to. That's saying it as you see it. Got that point. Let's talk about stocks then. Sudarshan, I completely agree that breakouts happen when they need to, but let's talk about individual stock trades and what would you go with?
I'll go with again mid caps. That's a sector that's doing very well. Birlasoft is a B-Soft is a buy with a stop under 421. Dalmia Bharat is a buying opportunity, and yesterday also we had cement stocks stop under 2120. SJVN is a buy with a stop under 102. And Hindalco is a buying opportunity. Again, it's a coincidence. I had Vedanta a couple of days ago. Hindalco is a buy with a stop under 643. So it's an all buy list.
All right, an all buy list. Mitesh, would you have an all buy list as well?
I have one sell call that about, I think it's still a buy list. As I said, the view is positive as long as we are not breaking down. So I have more of buy calls. Buy on Birlasoft with a stop at 420 for targets of 448. Buy on Emphasis with a stop at 2630 or below it and a target of 2790 can be looked at. On a mild decline of a 2-3 point buy Power Finance Corporation around 428, 427 with a stop at 420 for targets of 440. And the sell call is on LIC, which again, is extremely overbought, so could give a pullback. Sort of sell below 944. That's the intraday pivot. Keep a stop at 961 then and look for targets of 910.
Okay. All right, gentlemen, thanks very much for the trading ideas. We'll get back to you a little closer to market opening. For the time being, let's say hello to our next guest. And we're putting the spotlight on the telecom sector. Interesting developments. There are, there was a story that's indicating that the central government could tell all PSUs to use MTNL and BSNL as their telecom operator of choice. Now, is that going to be significant, for the private sector operators at all? Does it in any way alter the pitch? Let's ask Gaurav Malhotra, ED at Axis Capital. Gaurav, great to have you on. Never a dull moment, right? One day it's Vodafone, one day it's tariffs, then it's Starlink. Starlink's also, finally they've got that official approval. But let's start with this latest piece of news. It's a little curious. Government obviously well within its right to tell PSUs to use other PSUs for telecom services. What did you make of this? And does it have any material bearing on private sector operators?
Not really, right? They're Jio has 450 million subscribers and Bharti has, something closer to that number. This does not seem the needle in any shape or form.
Okay, fair enough. So then let's get to the other story, because now it's finally happening. And I know we've discussed it in the past, the arrival of Starlink here in India. So I think the plan started 3,000 plus, if I got that correctly. I know you've told us in the past that this should not disrupt anything because the price points are way, way higher. But just revisit the whole thesis. And how should telecom investors in India look at the arrival of Starlink in the country?
Yeah, see, the thing is, like you rightly said, right? As per media reports, Starlink, the entry level is going to be around 3,000 rupees plus 33,000 rupees for the equipment, right? So even if we were to sort of assume that 3,000 is still absorbable, but that 33,000 rupees for equipment is obviously very, very expensive. And that 3,000 has to be looked in context to what you're getting from the fiber side, which is around 500-600 rupees of price plans for something on an equal footing in terms of what you're getting. Now the question is that, okay, fine, what if fiber is not available? So if fiber is not available, then operators have launched FWA also, right? Which is the fixed wireless access, which is giving you a broadband-like service using their 5G network. And today, around 7 million of these FWA subscribers are already there in the market. So where fiber was not present, the offset is in FWA. So there is no real need for someone to go out and buy something from a Starlink perspective, unless and until you are in a position where there is no fiber and there is no 5G connectivity also, and you still need to sort of get some broadband connectivity. Then obviously in those off cases you will have no choice but to go for Starlink kind of service.
Okay, hi Gaurav. Good morning and good to see you. When I wanted to ask your view not on the three telecom listed players, but I want to ask about the tower companies. Indus Towers, there's value out there. I was at the BOFA conference and the feedback that I got was they're trading at a discount, but rightfully so in comparison to the globe. That's their thought process. What about you? You believe that there is still value on the table, both on Indus Towers as well as on Bharti Hexacom. I ask you this because Bharti Hexacom actually has had a big run in 3 months. If I'm not mistaken, it's up more than 25%.
Yeah, so let me take Bharti Hexacom first. It's an easier kill. Bharti Hexacom is today probably one of the most expensive telcos on a valuation front globally, right? It's trading at almost 15 times. Now, if for you to look at a 15-16 times EV/EBITDA multiple, you have to go back all the way back to say 2006-07, when Bharti India used to trade at those multiples. But that time, the EBITDA growth of the company used to be around 40-50%. It was a penetration-led story. The ROEs used to be around 30%, ROCs of around 25%. And versus Bharti India today, also it trades at almost 35% premium. So we think that this kind of a premium is not warranted. So we are sort of neutralish on Bharti Hexacom. On Indus Towers, our view has been very simple. That look, almost 1/3 of the incremental revenues of Indus over the next 3 years are premised on Vodafone Idea expanding the network, and already in the last earnings call, the Vodafone management did allude that look, while the first level of capex expansion will be finished in the next 1-2 quarters, the expansion of network beyond that is contingent upon them able to do a debt raise, which has long been pending. So there is uncertainty on that front, and because of that, yes, the stock is not expensive. It's actually trading almost in line with its long-term averages. But given those kind of uncertainties, we would still like to sort of stay on the sidelines for Indus as well right now.
So what happens to Vodafone Idea? Let's ask you that question. Is it the end of the road? Because that is a many million-dollar question from across the board. So many retail investors, a lot of institutions, the other 2 listed entities as well. All of that is contingent on what happens to Vodafone Idea.
See, the thing is, at least for the next 1 or 2 years, the issue has been resolved because of the equity conversion of spectrum. There obviously a scope for more conversion to happen, as time progresses. So I don't think so. Existential sort of issues are there for Vodafone right now, given that there is a optionality of converting a reasonable amount of that spectrum debt into equity in the coming few years. But from a business perspective, yes, it will remain challenging, right? You are not able to spend as much as you would have on your network, and end of the day, whoever spends or whoever has a better network eventually wins in the sector, not just in India but globally.
So yeah, let's see. The final word has not been said on this, which brings me back to Starlink. And I don't know, I should even kind of link the two at all. But clearly a company as big as that, a global giant, would have some designs on India. They wouldn't want to be here, some peripheral, player, maybe catering to 10 people who don't have access to 5G, right? So Gaurav, given the landscape, and then we have a third struggling player, trying to find its last breath for survival, and then you have Starlink coming in. Starlink has partnered with the Jio and Airtel in any case, I think, for selling their services. What other partnerships do you see? And somewhere could there be some link between a Vodafone revival and a Starlink entry at all?
See, the thing is, that looks difficult, right? Because these are two very different services. And see, Starlink, you have to understand that Starlink today is present in 140 countries, right? So it's not as if, they are very selective in where they are going. I think so. The idea is to sort of go across and cover as much as possible from a country's perspective, and then see how the cost of delivery sort of starts to reduce over a period of time. So as and when the cost of deliveries of bandwidth from satellite reduces, or the CP, the customer premise equipment reduces, from maybe then it becomes a little bit more mainstream, but for the foreseeable future, it is going to remain a niche service. It's the case in globally, even in large markets like US, etc. It's a very niche service. It's very difficult for someone to take Starlink, say for example, in New York. When you have a fiber connectivity over there, right? So it's always is a niche service based on where you don't have either fiber or other data connectivity.
All right, very quickly before we let you go, Gaurav, I think you said Starlink will cost around $3,000 per month, but 33,000 rupees of equipment. Who could be the potential equipment makers here in India?
I'm not sure about that. I think so. Maybe initially the equipment will be imported, and over time it could be manufactured in India, but not sure of that for now.
Okay. All right, Gaurav, helpful conversation. Thank you so much for all the context. You have a great day, and we'll connect again soon, I'm sure, on another issue. Right now, going back to the pre-open and then our 9-10 trading ideas, markets very quiet again, about 30 points up on the Nifty. Back to Mitesh and Sudarshan. Gentlemen, so what would the calls be? Sudarshan, your 9-10 call?
Well, it's Vsoft, buy Vsoft at a stop with a stop under 421.
Okay.
Birla Soft, right?
Yeah, that's right.
And Mitesh?
I'll go with the buy on Memphis for targets of 27.90.
Okay. All right, gentlemen. Got that. Thanks very much for it. Quickly moving on to revisit that story that we were just discussing with the Mangalam a while back. An excise duty hike on liquor in Maharashtra. What does it mean for the stocks, Mangalam?
Well, it means negative for now, but importantly, now we have the official document as well. So the Maharashtra government has said following changes will be made on the excise duty rates. IMFL will be increased from currently 3 times of productions to 4.5 times of production. So that's a 50% jump out there. The excise duty on country liquor will be increased by about 14% from 180 rupees to around 205 rupees per proof litre. And they've introduced a new category of grain-based foreign liquor called Maharashtra-made liquor for companies that are making this in Maharashtra itself. So only liquor manufacturers located in Maharashtra will be permitted to produce this type. What does this mean in terms of absolute prices? The MRP for all the liquor in Maharashtra, minimum for 180 ml, has been up for you on the screen. Country liquor would be about 80 rupees, Maharashtra made 148, IMFL 205 rupees, and premium foreign brand would be about 360 rupees. The department expects annual revenue increase of 14,000 crores due to this. So that could obviously be the impact on all the companies. What does it mean in terms of listed companies? 20 to 22% sales coming in from Maharashtra for United Spirits, 7 to 8% coming in for Radico Khaitan. The likely EPS impact, all things considered right now, could be 6 to 8% for United Spirits, 2 to 3% for Radico Khaitan. Though we need to monitor how much would be the cost savings on account of reduction in duty for bulk import, import of Scotch.
I just wonder whether United Breweries will be better placed, because we haven't heard anything about that till now. So let's see how that goes.
See how that goes. But in any case, beer on a per ml basis compared to alcohol is a lot more expensive. Yes. It takes you a lot more beers to get high than whiskey.
There's no high on these stocks. They're starting off on a low. United Spirits is down 5.5% as the bell goes on. That's the impact playing out. The market's already turned negative. So the pre-open was indicating a 30-point pop. We've not even got that. Right now, about 18 points lower on the Nifty. Bank Nifty is lower by about 0.2%. Mid-caps trying to struggle back and fight up. Let's take a look at what's causing the weakness on the Nifty. Maruti Suzuki is starting lower. Remember when Parikshit told us this whole rare earth magnets issue is beginning to bite. They could be delaying the launch of the Grand Vitara. What else is weak? There's Shriram Finance, which is flashing a bit of red. There's Power Grid. There's Asian Paints on the lower side. There's L&T. That's about it. I mean, not even a single Nifty stock is actually down more than 1%. So it's again an indecisive start. It's not a weak start. It's an indecisive start. On the upside, you have some names like M&M, JSW Steel, Eternal, and Reliance. Reliance is fighting for the bulls. It's tripping in with about $7 at this point in time. But once again, Nigel, extremely quiet to start the day.
Well, that's right. Extremely quiet start actually to trade. A couple of stocks, though, that are moving around from the broader markets. Thalbros, that stock is up and about in trade today. So that's one of the top winners. You have the other one, which is Reliance Power. That as well is moving quite well. I think that's up closer around 3%. And it's moved very swiftly from around 50 to around 74 rupees. So big move out there. Reliance Infra actually is the one where there was some favorable news flow. Let's pull up that stock and let's see how that one is doing, because the favorable news flow actually was on Reliance Infra, though we have a big up move is what we're seeing on Reliance Power, and the volumes as well are rather high. Pull up the two large trades which we saw earlier today. AB Capital, that stock I think it opened up in the green, and the other one was Marksans Pharma as well. Both those two large trades getting out of the way, and I think the street likes that. Both those two stocks actually are up close to around 2.5% or thereabouts. Premier Energies as well, we had the large trade that got cleared out yesterday, which got absorbed. That stock, in fact, is up close to around 1% or thereabouts. So a decent start to trade. The clear casualty of the morning is the alcohol-related stocks, United Spirits as well as Radico Khaitan, both of them lower. Obviously, as Mangalam told us earlier, the impact to Radico Khaitan will be much less compared to United Spirits. Mangalam?
Well, we're seeing a 5% decline in United Spirits and a few in Radico Khaitan as well. Just look at Allied Blenders. They too have been, increasing their presence in Maharashtra. So that stock is another one which is down about 3.5%. But on the other hand, we have GM Breweries, which is up really 6%. That maybe the street could be, expecting that, okay, the Maharashtra-made liquor has a benefit out here. But then again, you have to reapply for all those brands, etc. Until then, all the others will also go ahead and, be part of that. So the incremental advantage goes away. But for now, GM Breweries is the one which stands or feels like it stands to benefit from the Maharashtra liquor policy. But one stock we've been pointing out for the last few trading sessions as having done extremely well is Gillette. That continues to do well right now as well. Crossed that 10,000 rupee mark in yesterday's trading session, straight off the bat at a fresh 52-week high or a fresh record high for Gillette, up around 4%. So their products doing well for the street. And then you have 361 VAM, a lot of these capital market plays doing a lot better. Tata Communications, though, down about 1.5%. They've, pushed forward their 28,000 crore data revenue guidance by a year. So the street does not like that. Lower by a smidge. Oil continues to hold under around that $67 per barrel mark, and upstream companies are benefiting from that. So Oil India is up around 3.5%. We're seeing some traction in ONGC as well. Yes, there were a couple of large trades in pre-open, but one of them, not as large, was Eternal. There was a block deal that took place. Stocks opened 1% higher after 2 days of selling on account of fears of competition coming in from Rapido. Maruti is the other one, which is mildly lower, but not too much. Reports suggest that maybe the Grand e-Vitara launch has been delayed by a smidge.
Okay, so it's even, Stephen, you can see on that map, it's pretty much split with more red than green. Som Distilleries, another one. So basically, the interest seems to be shifting away from United Spirits as the obvious casualty. And people seem to be hunting for different bargains in the liquor space. Som is up about 3.5%. Obviously, it's a smaller player. Credit Access, Grameen, about 4% up on this stock as well. Oil India is seeing interesting traction this morning. Volumes are not bad. Stocks up about 3.5%. And 361 Wealth Management, about 3% up on this stock as well. Johnson's, Hitachi, HPL Electric, some names coming in from the power and capital goods space, up about 3 to 4%. So once again, it's mid caps, stock-specific action that's driving things. At the index level, we are very, very flat. Well, good time to get some perspective in then. We've got Anand Shah, Chief Investment Officer, PMS and AIF at ICICI Prudential AMC with us. Anand, thanks so much for joining in. So the market seems to be getting into a what now mode or what next mode, right? Because we've had a good pullback throughout all the noise of April, tariffs, etc. Managed to march higher and higher. Mid-caps also pulling back very, very smartly. But now is the what next? So you tell us, what next?
Very good morning. I think bang on. Our thinking is that the market has reached a consolidation phase. And why I'm saying that, because if you go back a little bit into the history, I think 2010 to 2020 was a period when the economy was okay, but the India Inc. didn't do well. And obviously the markets also was struggling with a very narrow rally on a few stocks. Exactly opposite, 2020 to 2024 has been massively good from earnings perspective. So the profitability of India Inc., NSE 500 dropped from 4.7% of GDP in 2010 to almost 2.2% in 2020. It again bounced back to 4.8. So you had a very strong earnings recovery, normalization, and ditto for the markets. We had a very narrow rally 2010 to 2020. We had a very broad-based, led by mid-caps and small caps, a strong recovery in generally market from 2020 to 2021 to 2024. And now we have reached a stage where markets are not cheap, the earnings have recovered, return on equities have recovered, and to that extent, the market will sort of try and consolidate. And from here on, it would be more bottom up. It will be more stock picking here rather than the broader market.
Hi, Anand. Good morning. Good to see you, Ben. Anand, what are you making of the flows picture? Surbi and my other colleagues were dissecting the data. I'm keeping the faith, keeping the flows in. But, the liquidity is something that's been, you throw any kind of bad news to the Indian markets and it's been gobbled up because of the domestic liquidity. How are you reading the flows picture? The good news is the foreign flows are holding up after seeing a lot of selling. But the domestic flows, what do you make of the, the data that we got yesterday?
No, indeed, that's the new thing from the markets perspective. If you see, the volatility of markets have reduced a lot. If I go back again into the history, we used to have quite frequent 20% corrections in the market. And if you see now, since 2020, we haven't seen a 20% correction in the market. The most we have seen is 18% more recently, and generally 10% corrections, which are also very, very regular, have reduced in terms of number of such corrections. So I think one outcome of this strong domestic liquidity is that the impact of global volatility and whatever happens in the rest of the world, while it will always have an impact on the equity markets, we still have FIIs being a large participant, but the quantum of impact it makes on the markets have reduced. So overall, the volatility of the markets have significantly reduced as we have strong domestic flows to counter any global volatility leading to FII selling off.
All right, we take that point. Just before we come to you once again, Anand, the quick check and on all the Alcobev stocks. United Breweries now down, United Spirits now down about 6%. We have Allied Blenders, which is down about 5% as well. But amidst all of this, two stocks which are doing a lot better. We have GM Breweries. The street believes that the introduction of the Maharashtra-made liquor policy could be favorable for them because if it is imported and then made in Maharashtra, the duty structure is slightly favorable as against being imported and produced in other states and then brought back to Maharashtra. The one thing that we need to know, however, is that all the brand licenses, etc., will have to be re-registered with the department. So does GM Brewery stand to benefit in light of that for at least the very near term until all the other brands come by and find their alternate sources of production in Maharashtra or not? Is something that the street is taking note of. And the other one is Sula, because on the one hand, you have, an increase coming by on spirits, nothing on beer yet, but nothing on wine at all. And Maharashtra, the wine production is the highest in Maharashtra. It's also the biggest market for wine in the country. At the same time, Sula as a stock has been a rank underperformer, has halved from the 52-week high. And over the last 4 quarters, we didn't see sales improvement out there. So can this policy shift turn the things around for Sula or not is something that the street is betting on, which explains why the stock is up around 7%. So we're seeing a big move on Sula as well as GM Breweries on the back of the policy that came by. But let's bring this question back to Anand. Anand, you said stock specific is the way you would go for the markets. Consumption has been on the back foot over the last few quarters. Do you think consumption revives post the announcement of the budget? Monsoons have been normal. How would you play this? Would you play it via discretionary, specific themes, anything that you like here?
I think we've been observing the consumption very closely. And if you see, especially in the higher per capita income families, and the urban India, there is a significant shift in terms of consumption. I think for last 2 decades, we have been focusing on consuming goods. I think we started with FMCG, soap, shampoos, and the Maggies, and two-wheelers and four-wheelers, pharmaceuticals being one of them. I think as the per capita income rises, there will be structural shift from products to services. I think the underlying growth which is already happening, and we are not counting it as a consumption, is a consumption of financial services. You can see that in asset management, life insurance, consumption of telecom services. I think we have been consuming 20 times more data than what we used to consume. While we are not paying for it, but obviously we are consuming 20 GB of data, spending a couple of hours a day on our mobile phone. We are consuming travel services. Diagnostics is something which is picked up as a percentage of consumption of a family income. Education has always been there, and people are spending more on education. So I think consumption is growing, especially in the higher income people, but it's shifting from products, from paints to travel. I think that's the shift. Even within the product consumption, if you see the way we consuming products is shifting, right? The modern retail, quick commerce, these are the areas where we are finding growth. We are not consuming more of the same stuff, but the way we are consuming is shifting. And that's why the growth pockets have moved from products to services.
Okay. So that's on consumers. Just to round this up, would you expect, and I'm not talking about things like jewelry or real estate as a play of high-end consumption, that story has been ongoing for a while, but would you expect some interest to come back to staples? Could they be, if not leaders of the next move, I mean at least participants in the next move? Anand, just to complete that point.
Sorry, I lost the audio. I didn't get your question.
No, so I was just asking you to round up your take on consumer stocks. What part of consumption would you play in this leg of the market?
Yeah, so I think we continue to like within the consumption space, we are focused on services. We still have exposure to telecom, travel, diagnostics, and all the services within the consumption space, which is organized retail, quick commerce. These are the areas where we have been more overweight than the products. We have been underweight FMCG, we have been underweight consumer durables, underweight auto also to some extent.
Got it. Okay, so I mean, still going with that stance of negative on FMCG, you're looking to play it more via services. Speaking of services, I was looking at the latest fact sheet in, this is your contra strategy on the PMS side, Anand. And obviously financials get top billing over here. I think ICICI Bank, HDFC Bank, these are some of your top holdings. RBI has obliged a lot more than the market would have hoped for. So within financials, is it time to load up on other stocks beyond the bluest of the blue chips? How are you looking at the financials landscape?
I think it's very positive. In a way, it's basically a fairly strong stimulus. We all know there has been a lot of uncertainty around, particularly international markets, around the tariffs, and obviously that would have pulled some of the consumption back, some of the capex, private sector capex back, and I think this is a strong signal that RBI is giving that the attitude is towards more growth, more spending, more capex. In terms of the banks, I think we continue to like the large names for the two reasons. One, they have a very, very strong liability franchise. I think for us, the first step to winning in the banking space is your raw material cost, the cost of funds. And we continuously remain focused on the banks where you have a right to win, you have a cost of funds advantage over other banks. And that's been the key for us. So we still continue to focus more on modes, more on the cost of funds. And that's how we've been going after the banks that we like.
Okay. Finally, since we're talking financials, I have to talk about your own business, as in the asset management business, because so much excitement, right? And the IPO, I guess June. I think June is filing happens and maybe listing couple of weeks later. But Anand, you tell us. I mean, till now, when one talks about the wealth play in India, It's been wealth management, entities like Angel or 361. It's been market infrastructure names like a BSE or an MCX. But the mutual funds, listed mutual funds, they haven't, gone right up there in terms of the investor psyche. What's your sense?
No, I think, again, as I said before, as the surplus grows, India has been moving from single income to double income, and from as a P&L, the households used to be deficit a couple of decades back. Today, you have surplus to invest. And I think SIP has been a very, very strong feature of this market. Even when we are talking of flows into the domestic markets, the one thing which has stood the test, this volatility, has been SIP. So I think it's a convincing move of the Indian household towards equity. So I've been in this market for 25 years, and I've seen when equity was not looked upon as an asset class also. From there, we have moved miles, where SIP has been a big significant product which has got a good acceptance from the households. And I think insurance, asset management, and on top of it, the wealth advisory and the wealth management. I think all the three would be required as the per capita income grows and as the savings of the household grows. So I think all the three areas should get growth in times to come.
Okay, all right. Well, Anand, thanks a lot for joining in and filling us in with your take on the markets as well as on individual stocks as well as sectors. Well, time to move on then, and let's talk about the cement sector. Earlier this week, the West Bengal government revoked the incentives for cement companies to assess the impact of this development and what's the broad trends in terms of demand as well as pricing. Let's connect with Mr. H.M. Bangur, the chairman at Shree Cement. Hi, Mr. Bangur. Good morning. Always a pleasure, sir, to have you on the show. Thanks a lot for joining in. Well, let's focus first on incentives. For the past year, what were the total incentives, pan-India, that Shree Cement realized in its books?
Shree Cement realized roughly 80 to 100 crore rupees, something like this, as incentive in the books.
All right, for the past year, right?
Right.
Anything came in from West Bengal?
No, in West Bengal, we don't have any unit. And West Bengal government at present was very clear that we will not be giving any incentive. The incentive scheme, which was announced earlier, that has been revoked. But for the last 5 years or so, there was no scheme.
Okay, all right. So no exposure out there, got that. And I think the industry itself was not expecting these incentives to come about. That's why we haven't seen the stocks getting hit. Just a quick question. Do you think that other states as well could start looking at this? That 80 to 100 crores from which government do you get?
Mostly from Rajasthan, little bit from UP and various other places. And I don't think that any government will ever revoke it. West Bengal was not giving it. The scheme was not in force for last 5 years or maybe little more. So it was that they regularized it, I would say.
Okay, all right. And I think if I'm not mistaken, Mr. Bangur, your cement dream itself started in Rajasthan itself. Your first plant was in Rajasthan, right?
Right.
All right. I recall visiting it, a few years ago.
Right.
Well, Mr. Bangur, then let's get straight to business. How are demand trends, in your core markets, which include North as well as East and parts of South? What are the demand trends you have observed? I ask you this because pricing has improved. However, a couple of brokerage notes, like one that came in from Nuvama, they indicate that, in fact, demand was a little bit subdued in May. What are your thoughts? And this onset of early monsoon, has it spoiled your projections a little bit?
Monsoon comes every year. In fact, the good monsoon and early monsoon may disturb for about 10 days, 15 days when the monsoon is there or when the rains are there. But overall, good monsoons means good rural demand, good urban demand, everybody else money, the demand will be better. So early monsoon is a good sign. As far as the demand is there, demand is little subdued in May because of the heat wave. And in the first 5 days, because of the uncertainty about war in North India, we knew it little later, but the government had stopped many works and put many embargoes to work in extreme part of Rajasthan like Jaisalmer, some part of Punjab, Himachal. So something was going on, we could understand. But what was it? We were not knowing.
Okay.
Operation Sindoor, the effect has started earlier. The government has done the blackout exercise. All those were part of the things which affected demand.
Right. So in light of all of that, Mr. Bangar, what kind of volume growth are you anticipating? I remember last time you said that 8% is likely for FY26. All things considered, do you think you'll manage that? And at what prices?
Volumes of the industry will rise by 7 to 8%. I still maintain it. We will be having lesser volume growth this year. We have increased our prices very much. So our profitability will be better with lesser volume. Our volume growth will be about 2 to 3%, or maybe if the things goes well, 3 to 4%. But our price increase will be maximum in the industry. Now, whatever discounts we are given has been at par with the industry. No extra discount, no lower amount of sales.
So overall revenue growth would be how much? 2 to 3% volume growth realistically. Price growth would be how much?
Price growth will be 6%, 5 to 6%. The revenue growth will be 9% or so.
Okay, all right. So you're going with profitability over pricing, over volumes. Is that correct?
Right. The volumes will come later once the prices are corrected.
Okay, and that would mean your targeted EBITDA per ton on an average for the year will be how much? Since you'll get the benefit of pricing, you've also focused on the cost side. So that should be a firmer EBITDA per ton. Give us a range, sir.
Range, whatever was in the first quarter, I think that should be maintained. But then it is a commodity, we cannot say. But compared to the industry, whatever there was in the first quarter, that will be coming to us.
Okay, but
it is about 1,400 rupees.
1,400 rupees for the year is something we could work with, right?
Right.
All right, Mr. Bangur, there's another asset that's on the block, and there's been bidding that's been postponed actually by a couple of weeks for the JP Cements asset. I think it's around a 9 million ton unit. Would you be interested?
No, we will be quoting at our price, but as the industry is aggressive, we may not be getting it. We will be quoting what we think will be a fair price. And I am always a conservative.
And so for a million ton, what do you think it's worth?
No, it is not like that. You have to see how much limestone is there, in which market they are. Secondly, the maximum amount comes not because of the machine capacity, but because they have the market. Here they don't have the market, as they are absent in the market for so long. So their actual sale is little. So I don't think very fancy price should be given.
Okay, sir, but so according to you, what is fancy? Because in the last many years, you have been part of various, you've put in a bid, but your bid actually is quite low, sir. That's why inorganic growth is something that you have not pursued. So according to you, if you're doing inorganic growth, what is the EV per ton that it's worth?
No, that I will not say. That more details have to be there. But we are not depending on the inorganic growth. Our organic growth will put us at what I have said is that by 2030, it should be 80 million ton. It will be 80 million ton, maybe a year earlier. Because we have our plans already very much established. Now, within next 6 months, one unit should be coming in Karnataka, 3 million ton clinkerization unit. One should be in Rajasthan, again another 3 million ton. So 3 to 4. So only about few days back, few months back, our Chhattisgarh unit of grinding unit has started. So we are very much on the line.
Okay. Okay, I've got that, sir. But, I'll tell you what the problem is. You run the business well. You threw up a lot of cash. The problem is the stock has been underperforming because the street wants to see a little bit more aggression. So, fair point. You're saying that organically you want to grow your capacity. Got that. But what about the cash in your books? Do you think that you can reward your shareholders? I think you're sitting, if you could help me out with that number, I think it's around 5,500 crores of net cash in the books. Yes, maybe a one-time big dividend or buyback. Is that something on your radar? That's something you're discussing with your team?
We are discussing many ways to reward the shareholders, but it will not be fair to reveal it before the board meeting and before the other formalities are there.
Would you, look at deploying this cash because you're saying that your 80 million tons target comes 1 year in advance? Is there a way you will announce further organic capex as well?
Yes, further organic capex will be continuous, and our policy is to announce it not on the way we think, but when everything is on ground, when the permissions are there, when land is there, when all EC is clear, then only we announce. Because we don't want to announce, front running we will not do.
Ambition-wise speaking, 100 million tons by when, sir?
80 million tons, another 3 years.
80 million tons.
And 100 by when? The century?
Century, maybe for 3 to 4 years more. Because after 80 million tons, 20 million tons is only 5 million tons each year. It will be 3 years or 4 years maximum.
Okay, and this reward to shareholders, could you give us a time frame? In this year only we'll hear about it?
Yes, only this year, not date.
Okay.
So it will be what, buyback or dividend?
That's what I said. I will not be able to say right now. Because first it has to be clear by board, it has to be clear by so many people.
Okay, let's ask another way. How much cash are you comfortable with on your books? How much do you think is excess right now over and above what you really need?
What we need is, in a profit-making company, the need is not really that much. Only need is that if ever anything comes cheap or if any opportunity is there, we will not like to miss it. And the point is the company is not having any debt. So without debt, we are adding our breakup value of shares will be roughly 28,000 tons, 27,000 tons of assets we have added.
Sure.
So when you say our prices, the prices are basically replacement value prices.
Oh, yeah, sir, the thing is, I think I've been hearing very carefully, the boys are trying to push you very hard to get some sense of the shareholder reward. What is going to be the quantum? When will you come out with it? But I think Mr. Bangur is also keeping his cards close to his chest, at least for now.
Because we are duty bound not to disclose it in this forum.
Yes, absolutely.
He's a bridge player, so obviously keeps his cards very, very close to his chest. Always.
All right, Mr. Bangur, we appreciate you joining in. We're going to be holding you to some of these numbers. Profitable growth is what you're looking at. EBITDA per ton of close to around 1,400 rupees. Maybe volumes will not be as much, but pricing is something that you're focused on. And we look forward to that reward as well. The street will be waiting by for that. Thanks a lot for joining in and speaking to us here on CNBC TV.
Thank you.
Okay, all right. With that, it's time to move on to the spotlight on the auto sector. By the way, the market's very quiet. I mean, just in case you're wondering, still about 16, 17 points up. That's all we have. It's another extremely quiet morning of trade. But now, as promised, let's get to the auto sector. A story that came in yesterday revealed that Maruti Suzuki's big launch for the year, which is the e-Vitara, Grand Vitara's EV version, that production could be delayed on the back of the rare earth magnets crisis. Parikshit is here with some perspective on this. Parikshit?
Yes, Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnets. The big launch for them this year was the electric Vitara. They had showcased the e-Vitara with great fanfare at the Auto Expo. The plan was to start exports and have a commercial launch in India probably between July and August. All of that could be delayed right now because of the export curbs. And there is not enough stock of rare earth magnets to make the e-Vitaras, as many e-Vitaras as was planned earlier. We hear from sources that the company had an initial plan in April to make 88,000 electric Vitaras. That outlook was earlier slashed to 67,000. For the period between April and September, the company had a plan to make 26,500 electric Vitaras. Because of the current magnet crisis, that outlook has been slashed to 8,200 electric cars only. What Maruti hopes is to make up for the loss of production from October onwards. So they feel that the production can be adjusted and somehow the company will still manage to meet its revised production outlook for the e-Vitara at 67,000 units in the full fiscal year FY26. But for the moment, clearly there is a problem. We've been told by sources that the start of production has not been deferred. Production is taking place of the e-Vitara, but in small quantities, and perhaps this will be only for addressing the export market initially.
Okay, all right, Pariksha, thank you very much for that. So this is beginning to bite. It's getting real, no longer just within the realm of discussion. Let's take it forward with Harmaz Surabji, editor at Autocar India, and Vinkesh Gulati, director at United Automobile, and of course the former president of FADA, the Federation of Automotive Dealer Association. Gentlemen, thanks so much for joining in. Harmaz, let me open up with you. I mean, if you go by the reports last 5-10 days, the Chinese have started giving these magnets to the Europeans. They're giving it as part of the trade talk to Stellantis, to GM, to Ford. But there's still no breakthrough for us. They're still not giving these magnets to us. What do you think the fallout could start, could be July onwards if this is still not resolved?
No, I think it is. It's really a major issue. It's like someone said, the microchip semiconductor shortage or crisis on steroids. It's even worse because really production lines can completely stop, and we have no alternative but to source from China. And as we know, because of the geopolitical issue, there are going to be difficulties. And let's not forget, even India is not such a critical market for China yet. Obviously, they would kind of prioritize the Europeans. Don't forget, a lot of European brands have investments and they're huge in China, whether it's Volkswagen. So I think clearly you will see that the countries like Germany and all, they will be prioritized first. And I think India, from what I understand, there's no headway yet. And it's a very long and laborious process to get the approval. So I think that also is a challenge. So I think this is really could, precipitate into a major issue if it's not solved quickly.
So, Harmaz, just in terms of understanding potential impact, what happens? I mean, I'm not sure what inventory levels would manufacturers be holding right now, but players like Tata Motors, or I mean everybody for that matter, EVs are everywhere, including the major EV players here in India right now, which could be unlisted entities like BYD as well. What should we be prepared for?
Yeah, absolutely. I think the EV players definitely they will be impacted the most clearly because the electric motors need these rare earth magnets, and without that you can't build a car. But it's not just the EVs; it's even the standard ICE vehicles, which take about half the quantity of rare earth magnets an EV would. But even then, even in an ICE car, you've got components like the EPS, the power steering motors, the electric window motors. So all these components need rare earth magnets. So really, I think as motors have been miniaturized, that's where rare earth magnets have their advantage, and that's what has been in use in the industry, and everyone's using them. It's actually just a commodity, but I think when one country controls 90% of the supply chain, that's when it becomes a problem.
So what other countries do you think can be drummed up? Because for production, etc., there is always that China plus one sort of strategy. But for natural resources, what other countries do you believe have the potential for supply? Or are there any alternatives here? Because this can't be, so lopsided.
Well, I think the thing about rare earths is actually it's in abundance. It's everywhere. Even we have them. Why it's rare is very, very difficult to extract. And that kind of, let's say the extraction process requires huge investments and billions of dollars. It's literally like taking a needle out of a haystack, because they're in such minute quantities to mine them, then to process them, and then to convert them into a finished product. Is hugely capital intensive. So I think that's where really the challenge is, and I think that's where China has taken a lead over everyone, the rest of the world, and to set up that sort of capability of extraction, production, and then finally producing a finished product. That I think is the issue, and that can't be done overnight.
Absolutely. I mean, as some estimates suggest that I think over 90% of the world's refining capacity for these rare earths that is in China, and therefore they hold the key. And I think there's some talks already about India looking to get self-reliant, like we did in semiconductors when we started now putting up those fab units and plants. But then again, these are multi-year stories. You don't produce those magnets overnight. So your concern is well taken, Hormaz. If I could come to you, Vinkesh. Now, the issue is that let's understand what are current inventory levels like. I mean, what's your assessment, both on EV and ICE passenger vehicles? Till inventory is still okay, maybe we tide over it and hopefully there's a resolution. So it's important to understand that. Give us your perspective.
So good morning. Thanks for having me. We have just released the data, the FADA, if you have seen. It's 52 days to 53 days we have inventory at the dealership level, which normally we don't say, but I feel it's lucky to have when this rare earth material magnet problems have cropped up. And additional to this, what the messages we are getting from our OEMs is they are also sitting at 4 weeks to 6 weeks inventory at their plants or in the process of manufacturing, which clearly shows that as of now, we are sorted at least till August mid or end. But if this continues, the problem will crop up from September, which is the festive this time because Navratri is coming in September. There are some good dates in August also, but I feel the inventory at the dealership and at the OEMs will sort out till that time. And I hope till that time some problems will be resolved, maybe diplomatically or whatever things be.
That's really important, and I appreciate you, being candid on this with us, Vinkesh. I mean, typically the industry doesn't give out the real picture for obvious reasons, pricing concerns, etc. But what you're saying is that between dealerships and back at OEM plants, we're covered for a good 3 months, in terms of inventory till end of August. June, July, August, we'll be fine, right?
Yeah, I hope so.
Yeah.
So mid-August or end August, it will continue because, see, this is the time of a low season when the rains are there and so overall scenario, so there are no auspicious occasions and all that. So from August, things will start coming back. Until that time, we are covered. So,
but that kind of brings me back to the other related issue as well, which we've been all discussing. I mean, the market's been watching these numbers carefully. And PVs, barring Mahindra and Mahindra, especially from a listed universe, I mean, it's been a non-starter, right? Low single digit, flat. Those are the kind of sales numbers that we've been getting at the wholesale level. Hormaz, maybe, you take this up. I don't know if this crisis will prove to be a turning point, but otherwise, PV sales have failed to enthuse or surprise. I remember when Hyundai was listing, I remember categorically, an answer that the management gave us. And I had asked this, that what's a steady state growth expectation? So he said, look at historical data. 4% to 5% passenger vehicle growth for a company should be okay in India. Your thoughts on the big picture?
Well, I think, to be honest, we've had many years of stellar growth. We're around, 4.3 million. And, to expect consistent and the same rate of growth of that very high base, I think is quite unrealistic. I think, we have to also accept that, the demand situation, it definitely is tapering off. I think multiple reasons also. I think cars are also just getting more and more expensive. And I think, I think even the replacement cycle, we've kind of, we've kind of absorbed that one huge replacement cycle. And, I think right now it is cyclical in that sense. And Vinkesh will also bear me out. I think we are going through a phase of, flattish growth or no growth. And then I think, again, we'll get into the cycle where we will see growth again. So I think this is actually quite normal. And I don't think it's anything that I would see as unexpected because I think to expect, double-digit growth was unrealistic. I think even high single-digit growth is unrealistic of this very high base right now.
Right. Let's give the last word to Vinkesh. Vinkesh, what about EV penetration? It's been a lot slower than what the street was anticipating this time around. So for non-EV makers, it is positive. But for EV, the entire, ecosystem that everyone was betting on, it's not growing as fast. Where are your expectations on EV penetration, specifically in four-wheelers and also two-wheelers? It's been slightly slower than expected.
And if I could just supplement Mangalam's question, Vikesh, also tell us about any upcoming launches that could kind of fire up. Now, the e-Vitara seems to be a casualty of this rare earth crisis. So, would you expect any other companies to encounter the same? Go on, tell us more about your outlook on EV.
See, very frankly, 2025 was the EV launch of the year. So we have a lot of EV launches which we have seen in the Auto Expo or Bharat Mobility show this year. From Hyundai, Creta, e-Creta, and then e-Vitara, Mahindra launching in, Tata planning of 1 or 2 more products in coming months. So we have always expected that 2025 will be an year where most of the OEMs will have an EV in their bandwidth, which means most of the dealers will be selling an electric vehicle from their showroom, which wasn't there till 2024. And now, because of all the delayed launches, like Creta is still delayed. Now, e-Vitara we heard because of rare earth material being delayed. This all is clearly showing that EV adoption of the year would not be 2025. I feel 2026 will be when we start seeing bigger numbers or bigger ratios. We are currently at 4 to 5%. I feel it will start growing by 2026 when at least all Maruti dealers, Hyundai dealers, Kia already has, but a high price product. Mahindra is already there. Tata is already there. When 4 of the top 6 OEMs dealers will have a good EV, which is around 20-25 lakhs to sell, then we'll start seeing the numbers going up. No doubt the EV adoption as of now has a lot of challenges, but still the way things are going in passenger vehicle was expected. It's a good percentage as compared. And on the other hand, two-wheeler also, if you see the percentage is increasing month by month. We are now averaging more than 1 lakh vehicle per month. And I'm hoping with the kind of even HMSI has now finally announced those 2 products they are coming in. As we get those 2 products, the same thing, we'll get 80% of the two-wheeler dealers now getting an electric vehicle. So I feel the most important thing for EV adoption is actually jo dikhta hai, wo bikta hai. Every dealer should have a product in the dealership, or else they'll actually work against it. So
absolutely. Take your point, and this already sets us up for our next discussion. I'm looking forward to that one. That will 2026 year be the year of EV adoption, as Vinkesh is saying, and then what will it be? Will it continue to be those EV SUVs, or would it be something else? Which segment will lead? I think that's a good one for the next time. But for today, thank you very much, gentlemen, for joining in on what continues to be a big challenge, the rare earth magnet crisis, as it is rightfully being called around the world as well. Okay. Well, with that, that's the auto space. We're moving on to another interesting discussion, and now putting the spotlight on the insurance sector. There's been a lot of news flow when it comes to insurance in the last couple of days. And, of course, a lot of those news breaks have come in by our colleague Yash himself. So let's talk about this. I mean, in terms of news flow, there's the rise in the motor third-party premium. That's what, Yash put out, that perhaps we'll finally get an increase in motor third-party after 4 years. Also, there seems to be a bit of a go-slow approach in terms of cracking down on the bancassurance channel, something that became a big story a couple of months back. But now I think the government could be having a new, refreshed view on that. This is all, of course, news breaks that Yash has done in the last couple of days. So let's discuss this going forward with Mr. Raghuvesh, who's the Insurance and Capital Markets Analyst at JM Financial Institutional Securities, as well as Nilesh Sathe, former IRDAI member. Gentlemen, thank you so much for joining in. Mr. Sathe, let me come to you. I want to take up the contentious issue first of breaking up the agent network. Again, our colleague Yash's latest source-based inputs indicate that abhi thoda pause hai us pe. Earlier, it started becoming it would have been a massive change if insurance agents could be selling policies across multiple insurers. But I think there was some pushback from LIC for obvious reasons. So that's, I think, on hold for now. But your thoughts on whether this is a big reform that we're pushing back?
In my view, this is not the time to have open architecture for insurance agents. I will tell you the reasons for that. One is the number of agents that we have even today is only 25 lakhs. Considering the insurable population, we know that the penetration of insurance is pretty low. considering the insurable population, if we consider it 75 crore, 25 lakhs is too small a number to cater to these 300 per agent number which comes to. This number has to go up. One, it gives self-employment. And second is the mis-selling which is happening because there is a lack of understanding of the products by the customers, that may go down. So the question is, should open architecture, as is allowed in case of mutual fund, be allowed in case of insurance? In my view, no. I'll give you the reasons for that. There is a risk of mis-selling going to increase because any company which is giving higher rate of commission, there will be a tendency of agents to sell those products. There will be a loss of accountability as well because one agent may be doing good business for one company, but if he is found doing wrong things in other company, he will have to be terminated by both. So this is going to be a complex issue. Training challenges are also there. See, today there are almost 70 insurance companies, life, general and health together. If I am allowed to sell products of any insurance company, is it not necessary that I should be adequately trained for all the products of all the 70 insurance companies? That's going to be a big challenge again. So without training, if I'm selling a product just because I am likely to get higher commission, that is also not good. So this is a product
But sir, the counter argument could be that at some point in time the industry has to mature, and insurance has been, even the mutual fund journey. And then the regulator is going out there trying to segregate distributors from independent financial advisors, the IFA community or the RIA community. Agreed. So reform is a process. You have to start at some point, right?
Yes. So what has been started? An insurance agent is allowed to sell products of one life, one general, and one health insurance companies. This has already happened. Corporate agents are allowed to sell products of 9 life, 9 general, and 9 health insurance companies. There is one intermediary called IMF. He is allowed to sell products of 3 life, 3 non-life, and 3 general insurance companies. So it's not that changes are not happening. Right? If at all a person is so ambitious that he can sell products of all the 70 insurance companies, he should take brokership. That option is also available.
Okay.
The question is, and this is transition which is going on. I'm not saying it is bad. It is good in some of the countries like Singapore, Australia, it is allowed.
Sure.
But the question is the market matured enough to have open architecture in insurance?
Okay.
Insurance and investment. See, mutual fund products are investment products, but these are quite complex products. So insurance products need a lot of training on every product because every product has got a different complex.
Yes. So that point is well taken, absolutely well taken. I just want to put up a data point for reference. This year, calendar year 25, has been the year of actually more life insurance stocks than general insurance stocks. Let's look at what the stats say. Most of the general insurers or the standalone health insurers, Niva Bupa -1%, Star Health -3%, Lombard has fallen about 10%, Go Digit has done relatively better, 8.5% up. Now contrast this, so those are either your general insurers or standalone health insurers. Contrast this with life insurance, and that's where it's been a good run. I mean, the gains are ranging between HDFC Life 25%, SBI Life 28%, and Max, look at Max, 38% over there. Relatively, ICICI Pru has been an underperformer this year. Stock's up, it's not up actually, it's down about 2% odd. So let me bring in Raghavesh here on this front. Raghavesh, so let's talk about life insurance. Would you say that the reason behind this rally also is that after a very onerous series of regulatory changes in 23-24, whether it's tax or other regulation, now there seems to be a bit of a cooling off. In fact, our latest story that Yash did was actually saying that the government is now telling banks that you should help with insurance penetration. A couple of months back, there was a fear of a crackdown on the banca channel, on bank assurance. What's your view on life insurers? Which ones do you like? And what's your overall thesis?
Yeah, thanks for having me on the show. So regarding the bank assurance channel, while there have been news breaks, the companies have maintained that they have not received anything from the regulator. That being said, they are focusing on mis-selling. The growth expectations from the banca channel, especially the parent banca channel, has come off for the top listed players. if we see ICICI Prudential, SBI Life, HDFC Life are all bank-led insurers. Now, from here, the base expectation is 10 to 12% growth from the banca channel for these players. These guys over time have also invested in their agency. We are looking at a good 15% kind of growth for, say, an HDFC Life, somewhere around a 12 to 13% for SBI Life, and an 11% growth for IPRU going as they finish FY26. This is on the top line front. On the margins, last year we saw a very strong sale of ULIPs, which is the lowest margin product. The natural demand came in with markets being strong. The expectation is FY26, we see the demand for more of return guarantees, which is margin accretive for the insurers. So when we are looking at teens VNB growth, I think the life insurers are well placed to move further on that rally.
All right. Hi, Raghavesh. Good morning. Good to see you. I wanted to focus on, the motor third-party insurance hike. That's something that my colleague Yash was working on as well. So in your estimates, what are you factoring in terms of the potential hike that will finally be approved by the Ministry of Roadways, point number one? And what's the sensitivity analysis you have with regard to its impact on the combined ratio?
So in terms of the growth impact, so taking ICICI Lombard, for example, around 40% of the business comes from motor, almost evenly split between third party and own damage. Now, if we assume, say, an 18 to 25% hike in premiums, which is what was in the news, I mean, that translates to something like a 4% hike on growth. Now, the industry growth itself has been pretty weak. That being said, there is an impact of the regulation change. Like last year, the reported growth for the industry was somewhere around 6%. Actual growth, if we remove the impact of the regulation change, was around 8.5%, 8.6 to be exact. Now, what kind of TP price hike I am baking in? My base case assumption was no TP price hike. Expectation was if it was to be announced, it would have come in April and May. Now, if I were to take a 4% higher growth for Lombard, what we have generally seen is a hike in motor TP would result in some cooling off in the pricing for, say, a motor OD product, with insurers broadly maintaining their combined ratio. For a company like ICICI Lombard, I think they are comfortable on their combined ratio at 102%. They would like to bring it lower. I think the combined ratio does not materially improve. Even if there is a price hike, they'll invest it for growth. My base case assumption is somewhere around a 13% growth for ICICI Lombard for FY26, increasing to, say, a 15% growth in FY27. My base case is the growth numbers increase as they spend on acquiring new business.
Okay. All right. Got that point. Thanks very much, gentlemen. Slightly shorter discussion, but important to developments, all of this, whether it's, the relevance of the banca channel, whether it's open architecture, or, of course, those long-awaited increase in premiums on motor third party. Thanks very much for joining in. We do have to take a quick break on that note, come back on the other side, and we'll have some, updates coming in on the commodities side. Welcome back. 50 points higher on the Nifty, and it's all thanks to Reliance. It's Reliance to the rescue today with a gain of about 1.5%. Otherwise, the mid-cap index is flat. The bank Nifty is also not doing too much at this point in time. So that's equities. But let's find out what's the big news in the world of commodities. We have Manisha with the latest. Manisha, tell us what's on your radar.
It is crude oil prices because it's been very, very volatile. Having said that, it has been trading within a range, but we are trading at a 7-week highs at this point in time. All focus, and I'm assuming all asset classes as well, are looking at the US and China trade talks, where we do know that there has been a lot of progress, but the final notification or the word on the paper is yet to be seen there. The markets also are looking at Canada entering into direct talks on tariff with US as well. So some positivity coming in on the tariff side, and these are the major consumers and producers as far as crude oil is concerned. So the markets are looking at some ease in sense of prices there. Apart from that, we also have seen Saudi Aramco cut China shipments by 1 million barrels for the month of July. So even as OPEC and allies have increased production for the month of May, June, July, and perhaps going forward as well, the expectation that the OPEC plus production may not result in significant supply boost has also been supportive for the prices there. And then there are geopolitical tensions too, which are adding premium to prices. Iran, for one, is expected to submit a counter proposal for its nuclear deal. And then European Union also is coming out with an 18th package of sanctions targeting Russian energy sector this time around. The markets are looking at potential increased US sanctions on Venezuela as well. So all of those geopolitical tensions and developments and statements every day is what is impacting prices. It also is about Saudi trimming July prices for its Asian consumers, ensuring and expecting that the Asian consumers will be looking at a higher demand going forward. The peak summer travel demand season for the Western world, which remember the vacations for that and them start mid-June, is also expected to be positive. But the most supportive of factors clearly comes in from US. The very interesting IEA report came in last evening, which tells you that the US oil and rig count has continued to decline, even as we've been talking about drill, baby, drill and higher production from US markets. But that is very clear on your screens right now. For the last 3 years, and this is the third year, by the way, when we have seen the number of rigs in the US continue to decline, 20% down in 23, 5% down in 24. And this year, until now, we've already seen a 6% decline. Now, the result of this doesn't come immediately. When a rig is shut or a planning for a rig is being made for it to be shut, the final number changes only after 12 to 18 months. And that's exactly what the IEA also says. They say that by 2026, you could be looking at a lower production coming in from US. So while we've seen 13.5 million barrels per day of a record production in this quarter, next year could be much lower at 13.3. And this could be the lowest perhaps in last 4 years in sense of production, clearly supporting prices going forward.
Okay, all right. So that's all about crude. But Manisha, tell us about the Big C. The Big C for viewers is a brand new show that Manisha is going to be launching on CNBC-TV18 Prime. Tell us more, Manisha.
Oh yes, Big C actually will give you everything about commodities, currencies and crypto as well, with a big global flavor. Well, there's just so much happening in the international markets, and this is another asset class that you have to keep an eye on. We've been watching equities for a very long time now, but a lot of money seems to be flowing into these asset classes, which also are getting impacted from tariffs, the kind of investments. And these are the metals and currencies that also have seen a lot of investment, financial instruments being launched into in global markets and in India as well. So how is it that you can make use of these asset classes, include it in your portfolios, the price impact, and of course the policies impact is all that we will discuss today at 1 p.m. at our brand new show on CNBC TV18 Prime, The Big C.
Currencies, commodities and cryptos, all the big C's are there. So make sure you catch it. Thanks for that, Manisha. And looking forward to the debut show. Right now, a quick break. We have to move on. And when we come back, Lata will be in on the other side. And she'll be in conversation with Subramanian Sharma of L&T to discuss the company's energy business.
Welcome to Corporate Radar. Larsen & Toubro reported better than expected results for its fourth quarter, with revenues growing at 18% versus a guidance of 15%. Order inflow growing by 18% again versus guidance of only 10%. For FY26, the company has guided a further 15% growth in revenues and an improvement in margins as well. It's guided for a 10% growth in order flows. However, with crude prices staying below $70 this quarter, will the Middle Eastern orders slow? For these and other issues, I'm joined by Mr. Subramaniam Sharma, Deputy Managing Director and Head of the Energy Vertical at Larsen & Toubro. Mr. Sharma, good morning, and thank you very much indeed for your time. Let me start with this energy orders. Your revenues and your order book inflow was extraordinary in the quarter gone by, in the year gone by. Will it be tough to repeat? 36% growth in revenues, and I think something similar even in terms of order inflow. Will it be tough in the current year because Middle East doesn't have a very high crude price?
Yeah, Lata, thank you for having me here. Good morning to all of you. I think the budget planning and capital expenditure planning in most of the Middle Eastern countries is done based on taking a long-term view and medium-term view, and the short-term fluctuation in the oil prices do not impact the capital outlay directly. And they also have some kind of categorization. There are projects which are allocated for what I would say is essential, and there are also projects which are of high priority, and there are, of course, nice-to-have projects. So when the oil prices are in the particular range, a desirable range based on which they are budgeted, I think then all of them will go ahead. If there is some softening, which we have seen now recently, so some of the non-priority projects or nice-to-have projects will drop off. Fortunately for us, L&T is involved in projects which are like high priority, mostly oil and gas in particular, and also in renewable power, so which are all essential building blocks, economic growth and diversification of the economy from I do not expect any major
reduction in orders.
Possible shifting to the right.
Okay.
Which we are still looking good.
Okay. Well, actually, last year, the energy order inflow itself was plus 19%. And we have reports from many analysts expecting that it could be even better. You want to give us a number in terms of energy inflow orders? Your overall order book, you all say, is 10% in terms of guidance. Yeah. Yeah. Mr. Sharma, you can hear me?
Lata, sorry, I lost your connection.
Okay. I'll repeat my question. Last year you did 20% in terms of energy order inflow, actually 19%. Will it be better this year?
Yeah, now I can.
Yeah. Can you just tell us what will your energy order inflow book be in FY26? Last year you did 19%.
More or less, we are in the...
Okay. I think we probably have to connect him on phone. This is creating a problem. There has been a lot of enthusiasm. I just have an Investec report from me which expects very attractive growth opportunities for L&T and for Afcons from the Middle Eastern region because of Indian companies like Larsen & Toubro, now not subcontractors but primary contractors, what they call LTA contractors in the Middle East, and plus lesser competition from Korean companies. So the expectation is that the Middle Eastern book should do very well. The other challenge for L&T, of course, will be whether the domestic power sector will give the same amount of orders. We saw a cooling off of power prices and, of course, state governments being a little out of pocket. So whether the domestic power energy sector also will be able to give orders is something that we have to watch out for. Do we have Mr. Subramaniam with us? I mean, I guess we have to put him on the phone line. Okay, we'll just get to you in a minute. Not our best day when we thought we have one of the best of companies joining us, but we should get Mr. Subramaniam shortly, at least on phone. for us. There are a lot of questions. I'm brimming with at least the companies investing in green energies. It's also likely to get nuclear orders. We have to check out if the government of India has even begun those orders. Energy itself is an important vertical for L&T. As you can see, the revenue growth from that particular vertical has been higher than even the energy, growth from the other two important verticals, high-tech manufacturing and infra. Margins are, as per the normal margins of L&T, around 8 to 8.5%. But revenue, the quantum of orders from energy has always been very high for L&T, and therefore it's important to know what Mr. Sharma thinks in terms of orders from the Middle East. Okay, Mr. Sharma, I'm sorry, we just have you on phone. Unlucky. I was wanting to know, will you be able to repeat this 19% order inflow in the energy vertical that you got in FY25?
Yeah, I think we have discussed here reasonably good pipeline of projects.
Okay. Okay.
I think we have a very diversified presence within the Middle East. It's not just Saudi. We are seeing a lot of projects coming up in Kuwait, also in Qatar and UAE. We are quite actively participating in those. And also some of the CIS countries are opening up. So I think all in all, I remain kind of optimistic that we will be able to sort of deliver a robust growth.
Okay. What about Indian energy sector? What kind of visibility do you have from the power sector? Because power prices cooled a bit on the IEX. Transmission orders have also come your way from Andhra. You just announced some transmission lines. How is the energy sector in India looking?
I think energy sector in India is also looking good. I mean, we are a growing economy, so the energy demand in India is continued to grow. We are seeing uptake in the thermal power plants. We are also seeing increase. I mean, a lot of interest coming from the nuclear energy production, and all of that will require further enhancement of the grid, because the entire transportation of the power from various sources, including the solar plants which have been built, has to be nicely connected. The grid stability is important. So I think we'll continue to see a lot of prospects in the transmission and distribution as well, and grid stability projects.
Okay. Can you tell us something about nuclear? The expectation is that the Indian government is going to give it a push.
Yeah, I mean, I think, like I said, Lata, I mean, as the country's economic growth, we'll have a massive growth in the energy demand. And not just that, but we also want to transition towards cleaner sources of energy. Government of India has already made a commitment to have carbon neutrality by 2070. So we'll have to sort of not only build additional capacity, but it has to be cleaner sources. And more importantly, I think from a country's perspective, we also need to have energy security. So I think all of those factors fit quite well with the nuclear. So nuclear will have a bigger role to play. I mean, we only about 10 gigawatt of production we have, generation we have. As we have seen from the draft documents, this is likely to go up to 100 gigawatt by 2045 or 2047 for the Viksit Bharat, and which is like 4 or 5 gigawatts of nuclear capacity getting added every year. So it's very exciting. There are a few things to be sorted out with the government, and L&T has the whole range of offering from manufacturing to EPC projects, and we have participated in many of the nuclear.
Yeah, Mr. Sharma, if you can name anything that is on the anvil now in terms of big projects in your vertical.
Currently, I think there are no specific projects yet, because we have a civil liability issue to be resolved. I think that the discussion is ongoing with the government. Once that amendment happens in the bill, I think then a lot of projects will come in pipeline. But it's not hard.
No, I get your point. In nuclear, we have to legally sort out the civil liability issue. But non-nuclear, is there any big order or tenders on the anvil that y'all are excited about, for which you will bid?
I think not specific tender, but generally the prospect is very promising. I mean, it's a matter of time. Just few months, I think we will see a lot of opportunities coming up.
Okay. And any further exciting orders in green hydrogen, both in the Middle East, in Qatar, and those countries, as well as in India?
On green hydrogen, as you would know, I mean, we have participated in the first green hydrogen project for the Indian refinery sector, IOCL Panipat. It was a reverse auction, and we are declared as the lowest bidder. So we are anytime waiting for that award, and we are very excited about it because that's the first green hydrogen project using renewable energy and our own electrolyzers. And we also participated in similar such tenders for other refineries. We are also having discussion with some of the steel producers in the domestic market. And when it comes to international, we are seeing a lot of traction now in the Far East, more so in Korea and Japan. And what we are expecting is that the marine industry, that's where the carbon tax is quite high. The arbitrage is good, and then there the green ammonia application is quite promising. And there are bunkering facilities in Singapore and Far East and also in Dubai. So India could become a good hub for supplying green ammonia using green hydrogen. So I think the export market also will develop in next 2 to 3 years.
So shipping is the big sector that you are expecting will give you orders.
Correct.
Okay. Well, let me come to an issue which is beyond energy, but then you are the DMD, so I'm sure you're in the know of these things. This controversy that the court pointed out with respect to the MMRDA order. Has there been a rebid? Have they contacted you? What's the next step?
No, not yet. I mean, I think the court verdict came in only just a few days back. So as far as we know that the original tender has been annulled and that the whole process has been now terminated. And then now it's a wait and watch. I mean, I think it's an important project. So we are hopeful that it will come back in some form or the other. We'll have to wait and see.
Okay. What is your total exposure to state governments? Would you expect a backlash because of the court order? What's the exposure at all to state governments?
No, not really. I mean, I think, we had a principal issue, so we took it up and sometimes we have to, I mean, it's very quite nicely accepted in India to sometimes go through a legal route. So, but otherwise our relationship is good. We value our customers and they have been, MMRDA has been very an important customer. We have delivered a lot of projects. Otherwise, our relationship is great, and we want to continue to build that relationship. I think every customer is important, including state government, and that has been our approach. And that's the reason why we have been existing for almost 8 decades, right? So
Point
I
taken.
think that holds
Point
good
taken,
still.
sir. Point taken, sir. Just if I can squeeze in one more, what is the status of the Hyderabad metro monetization? That's the only part in your investor presentation where the arrow was red. Is there any progress in terms of monetization coming to cash break even?
Yeah, I mean, I think the one good news is that the footfalls have increased. I mean, I think it has been going up quite gradually. And more IT companies now asking for work from office. We expect that to grow. So that should help us in reaching closer to our break-even point. We also have monetized many of the real estates within the Hyderabad Metro framework. I mean, many of those properties. And we are in continuous dialogue with potential investors, parties who are interested, some of the pension funds investors and some other private equities. Well, I think we'll have to wait for some more time. We will see how we can reduce the debt using the funds coming from our ongoing business. And I think it's a matter of time. It should get sorted out maybe in a year or two.
Just give me a one-line answer for margins. Will you do better than last year in your own vertical?
So I don't have a crystal ball, Lata. I think we are all trying to deliver better results. And year after year, I mean, that's all we do. And we are all working very hard to continue to provide the growth, and we'll have to wait and see.
Okay. So I'll have to call it a day. We are overtime on our show, but I'll take a rain check from you for another show or another day. Thank you very much, Mr. Sharma, for joining us. So that's the word from L&T, not impacted because of the crude oil prices falling, because they're fairly diversified and they expect good orders to continue from the Middle East. Wrap up on Bazaar. Chart process coming.
United Spirits, Radico Khaitan and Allied blenders trade sharply lower as Maharashtra government excise duty on Indian-made foreign liquor has been increased. Analysts expect an EPS hit of anywhere between 2 to 8% on these companies.
JM Breweries gains with benefits expected from the newly introduced Maharashtra-made liquor category. United Breweries and Sula, they gain as the duty on beer and wines remains unchanged.
Shares of Talbros are higher by almost 3% after receiving up to 580 crore rupees worth orders coming in from leading equipment manufacturers.
Bansal Wire sees an uptick after DAM Capital initiates a buy rating with the target price, which is much higher. They are expecting a revenue CAGR of close to around 30% till FY27.
Aditya Birla Capital rises after nearly 2.5 crore shares worth about 600 crore rupees change hands. Marksans Pharma also gains after a block deal worth 257 crore rupees.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets are trading in the green. The Nifty is up close to around 40 points, but you'll have to say that it appears that we're still in a bit of a range. The Nifty Bank is underperforming yet again. Broader markets, a lot of action going on, Mangalam.
A lot of action going on, Nigel. You know, you have nearly 2 stocks which are advancing for every stock which is declining right now, and a bunch of stocks which are doing a lot better this afternoon, or rather this morning. We do have the insurance stocks. So, you know, pull up HDFC Life. That's moved to the high point of trade. Following suit is SBI Life as well. So both these insurance companies come up for you on the screen, and they're seeing some traction. LIC Housing Finance is the other one. So it's NBFCs, financial-related names, and the lower-rung, companies which stand to benefit from the interest rate cut that was announced on Friday, even as the market continues to, consolidate at higher levels. We have Samman Capital, which too has seen a spike of nearly 6% odd. But amidst all of this, there has been a listing today. This as the demerger of Quest Corp has finally taken effect. Blue Spring Enterprises is now listed as a separate entity. Remember, this is the company that holds their integrated facilities management business, their security business, the food business, and found it as well. Kamal Pal Huda, who is the executive director and CEO of the company, now joins in to discuss the outlook for the business. Let's get the basic numbers out, Kamal. For the period that you have reported so far, the revenues have been close to around 2,500 crores with 4% EBITDA margins. Going forward, what is the steady state revenue growth that you anticipate in the business? And if you could give us a sense on margin expansion as well, and break it down for all the verticals that you operate in right now.
Sure. Thank you, Madlam and Nigel, and good morning to your viewers. We're just coming out of a fresh listing half an hour back. And to your question on revenue trajectory, yeah, those numbers are 9 months numbers. And from a future perspective, see the vision, we're creating this company out of a very rich legacy of strong operational excellence, a people mindset company, and, company which is poised to grow on the massive infrastructure investment and unprecedented infrastructure creation that's happening in the country right now. With that and with, let's say, 6 powerful brands that we have, we believe that the vision for 2030 for us would be to take the margins from the present 4% to almost 6%. We want to grow at least at 3x of the GDP growth rate. And the reason we are very bullish about this growth rate is we're not a fresh company. It's just that we've got into a fresh identity right now. But we've had years of deep domain operational knowledge. And we work with 6 powerful and trusted brands. And I can probably take a minute to explain each one of them. So Avon is a brand that runs integrated facility management across country. Food brand, in integrated facility management, we do around 360 million square feet spaces, and highly compliance-led services and tech-enabled services. We run a food business where we do almost 180,000 meals per day across the country. We have a security brand which has been there for 25 plus years with almost 21,000 security guards and digital security services.
Hi, got it. Got it. All right. Hi, Mr. Kamal. Good morning. Good to see you in. Congratulations on the listing. This is Nigel on this side. So should we assume that on a steady state basis, you'll be looking at growing between 20 to around 25%? Would that be a fair estimate? And also market share, I'm going by the rough numbers that you'll put out. I think 170,000 crore is the, is the total TAM for you all. And out of that, I think you'll have close to around 2%. So, where do you see this market share number move to on a blended basis?
So Nigel, yeah, you're right. Across the service lines that we do, we believe the total TAM is around 170,000 crores in the organized space, growing at a CAGR of 13%. And, we want to obviously grow faster than the market. And hence, in the near term, we want to grow 18 to 20%. That's the target that we have set for ourselves. And you're right, despite being, let's say, one amongst the leading in the national space, we are right now only 2% of the market share. So obviously, if we want to grow 18 to 20% when the market is growing at 13%, mathematically, we want to obviously enhance our market share from the present 2%.
All right, we take that point. To what would that target be? Do you have an aspiration here?
See, we want to, be, like I said, a 6% EBITDA margin company, grow 20%. And outbeat competition and market in that. Now, this should take us from the present 2% market share to at least 3% market share over the course of next few years.
All right, 3% over the next course of few years. But, on the margin front itself, overall margins go from 4% to 6%. On the one hand, one should look at it, one may look at it as just a 2 percentage point increase, but it's actually a 50% increase on the 4%. But what I wanted to understand is what is it that will drive these margins? Because IFM, anyway, a low margin business. What are the categories out of the 6 that you just enlisted which will actually see the maximum operating leverage?
Yeah, sure. So see, you are right. Some of the business lines that we have are operating at sub-market margins, and I think one thing which will play out well for us is the mix of the businesses that we have. We've got businesses which are into food, telecom, and industrials, which definitely are doing better margins than the present 4%. So food we do around 8% margin. Telecom actually we do double-digit margin, and industrials right now is also in excess of 6% margin. So we are wanting to expand our high-margin businesses, stabilize our FM and security businesses, which are obviously a bit below the market margins, and a lot of actions on digitally enabling some of our services, bringing down our cost to serve in some of these businesses. And I think demerger is that way has been very helpful to allow us so much of management bandwidth to focus on these businesses, and a lot of cross-sell opportunities. The breadth of services and the scale at which we operate.
So if you could simplify that for us, Kamal, if you could tell us what the revenue mix of the company would look like. Right now, nearly half of it comes from IFM. The others are almost evenly distributed. If you could give us a sense of how the revenue mix of the company would look like when you reach 2030.
Yeah, so you're right. Presently, 50% comes from FM, 20% comes from security, and the balance 30% is kind of distributed between the other 3 businesses. We are very bullish to grow food and industrial business in excess of 20 to 25%, while the others grow to, let's say, 15-16%, which means that the blend of 70% with FM and food and 30% else, we want to take this to 60% between FM and security and 40%. So 10% market or let's say 10% mix we want to improve from a high margin businesses.
Okay, all right. Very quickly, Kamal, before we let you go, your 2030 vision, going mathematically, should be that your revenues get to more than $1 billion. Would that be fair? With margins to the tune of close to 6% would mean that your EBITDA number will be in the vicinity of around 500 to around 550 crores. Would that be a 2030 aspiration?
Yeah, that's the aspiration, Nigel. We want to, grow 18 to 20%, and that takes us very near to $1 billion. And you're right, at 6% with the operating businesses, we want to be near to that 500 crores mark on an EBITDA basis by 2030.
All right. And this Foundit, how much would that contribute in terms of revenues? It's still very small in your scheme of things, but how much should that move to?
Yeah, so Foundit obviously is a platform investment that we've done, Nigel, and right now you are right. They have a smaller market share, and but it's a future enabled tech platform, and we are hoping that by Q3 of this year, Foundit should be a break-even business for us. And in platform-based businesses, the investments are done, so additional revenue then directly contributes to the margin. Foundit should grow from a break-even this year to a minimum 8 to 10% margin business next year. But it's also a strategic investment, and as the valuation and the growth of business grows, we may want to be also an investor which through which we unlock value in Foundit over a period of time.
That makes sense. We'll discuss that at a later date, when you're at liberty to speak a little more about Foundit as well from its current size. But just a final question from my end. You've always been acquisitive in nature. Once when you were part of Thomas Cook, thereafter Quest Corp, that got demerged, and now Quest Corp itself has been demerged. With you having this sort of management bandwidth, are any acquisitions on the anvil in the very near future, or you will let the business settle first and then maybe look at any acquisitions in FY 27-28?
So, the whole premise of demerger was that we wanted to carve out large operating businesses and let them focus on their organic businesses. Bluespring is going to be the next investment vehicle for us in future. So, we also want to, in next 5 years, position Bluespring as a next Quest. So, we would want to take strategic bets in Bluespring when it comes to the capital allocation policies.
All right, take that point. Thank you so much, Kamal, for joining in and giving us an outlook on that business. The stock mildly lower in today's trading session, but remember, this is the first day of trade. The stock is in T2T as well. So as business chugs along, let's see where this goes on. That's Bluespring, a demerged entity from the erstwhile Quest Corp. Take a short break, come back, get you more on the markets and stock-specific action. Stay with us. We were speaking about some of the financials doing well. Just keep an eye out on, Poonawalla Fincorp. That's the one which has moved higher, was in the red for most part of today's trading session, has now moved into the green. We have Bandhan Bank as well, which has moved to the high point of trade. And we are seeing some traction in some of the gold financiers as well. Both Manappuram and Muthoot are higher. LIC Housing Finance is the other one, which too has moved to the high point of trade. Good time to get in Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market. Shilpa, overall, the market has been consolidated with a slightly upward bias. Right now, as well as we speak, the Nifty is up around 66 points after being largely flattish. Where do you see, the indices move from here on, and what would be tradable levels?
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the indices levels, we see that the FIs have been consolidating in the net longs at around 20%. And Nifty has been forming good support around 25,000 put. If you see, that's where the maximum consolidation is happening. So for time being, 25,000 is supposed to act as a good support. And on the upside, once we move surpass 25,250, we will see the higher levels of 25,500 to 25,600 zones.
Okay, all right. What about individual stocks?
Yeah, Nigel, I have two buys. The first one would be a buy in LIC Housing Finance. Financials are taking a good, thrust today, and we see LIC Housing Finance forming a good support above 620. So the support, the stop loss lies at 617, and the targets would be 635 to 642 on immediate basis. The other one would be a buy in Aarti Industries. Aarti Industries is also looking good. It is all set to test levels of 505 to 520 levels. Keep a stop loss of 480.
All right, we'll do that. Thank you so much for joining in, Shilpa. Meanwhile, a couple of these logistics stocks are spiking right now. So pull up Snowman Logistics, up nearly 8%. Remember, management of Gateway Distriparks had said that they are always looking to increase their stake in Snowman Logistics. Will they continue to do so or not is the big question here. The stock up around 8% with decent volumes backing it as well. Take a short break, come back, speak about more stocks and the market at large, where we are seeing some traction build up now.
Welcome back. Well, keep an eye on a few stocks that should come up for you on the screen. You should pull up BSE because the option volumes actually have fallen in the last 5 days. For BSE, they continue to gain market share, and that's been perking up a little bit. In fact, for the month of June, the market share has improved even from the month of May. However, the volumes on the whole dropping is a negative for stock exchanges. And that's why, in fact, that stock, after seeing a big run in the last few months, that's moved to the low point of the day. So that should come up for you. Next up is VIP. You have some negative news flow because there's a credit rating company that's come with a rating downgrade on the company. But it seems the street is expecting something from the counter because the numbers were awful that came in close to around a month or so ago. And now, in fact, maybe the normal speculation that there could be, a new buyer, that's pure speculation that we've been hearing for the last couple of years. But for the time being, the stock is up 8.5% on a day that they get a rating downgrade. And the other one is from the Welspun Group. If you look at Welspun Specialty Steel, that's been a relative underperformer. The smaller part of the business, they're in a similar business like Venus Pipes as well as in Ratnamani steel tubes. That one, in fact, yesterday it was up, and today as well it's up close to around 3.5% or thereabouts, though it's corrected from around 55 rupees odd. Mangalam.
Those are a bunch of stocks which we are looking at. Don't lose sight of the big boy Reliance as well as we speak of all the other stocks. It's in fact currently the topmost contributor on the way up for the Nifty. The Nifty closing in on that 25,200 mark. 25,175 is where we are at right now. Reliance is the one which has spiked. With that, we'll step into a short break. As we wrap up at this show, we're announcing the launch of Money Control Super Pro, which gives you live trades by SEBI-registered RAs, ready-made chart patterns, and they form AI-generated stock alerts as well. You can get your investment superpower today. Subscribe now to Money Control Super Pro. Wrap up on this edition of Chartbusters. Trading Hour comes up next.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Hormuz Fatakia in the green, not by a whole lot, but up about 60 points in the Nifty as we speak. Sensex up 200.
Oh, well, and courtesy of the two index heavyweights, right? Reliance Industries and ICICI Bank, both keeping the Nifty afloat, and courtesy the Nifty Bank as well. The Nifty Bank too holding on to the greens because of ICICI Bank. And in fact, ICICI Bank has been an underperformer in the recent past. You see, it has barely done anything over the last month or so. And it's despite the strong RBI policy, the rally seen in the other banking names, the NBFC names, ICICI Bank has been relatively quiet. Is down 2% over the last week. There's been an underperformer. So some gains coming in from ICICI Bank. And of course, Reliance Industries, 1.5% higher. The last week has seen a couple of positive brokerage notes coming in for the index heavyweight as well. And 1460 now on Reliance, with brokerages projecting targets of 1560 to 1600 or even 1700 for that matter. But for now, the index remains above that 150 mark. 70 points higher is where we stand. So now closing in on 25,200, although the Dow futures, they continue to sulk despite some positive commentary coming in from the US trade delegation. We haven't heard anything from China yet with regards to what exactly transpired in their meeting at the two-day conversation that they had in London. But for now, the stock-specific activity, of course, is what takes center stage. You take a look at some of these broader market names that are doing well for themselves, and they are the likes of HPCL. All the oil sensitives are doing really well today, be it the upstream names or the downstream names. HPCL is at the highest point of the day. BPCL is up 4%. Chennai Petro is up 3.5%. MRPL is up 3.5%. And similar moves seen on the upstream names as well. Look at Oil India. Oil India at one point was up 4%. It's slightly off the highs, but it's still trading with healthy gains of around 2.5% as we speak. 450 for Oil India as well. But on the flip side, though, what's not doing well are these Alco-Bev companies. Some of them definitely are not doing well, but some of them are bucking the trend, and that is after the Maharashtra government hiked excise duties on Indian-made foreign liquor by 50 to 60%. Mangalam is here with the winners, the potential winners, and the losers in this move. Mangalam.
Well, look at United Spirits, look at Radico Khaitan, and look at Allied Blenders today. All of them are lower in today's trading session, and sharply lower that too, because the Maharashtra government has gone ahead and hiked excise duty, and the following changes will be made in excise duty rates. Indian-made foreign liquor, the excise duty has been increased from 3 times of cost of production versus to 4.5 times. So that's a 50% jump. Remember, these stood to benefit from the duty reduction on import of bulk scotch as well. So in lieu of that, there has been this increase. Excise duty on country liquor has been increased by 14% from 180 rupees to 205 rupees. And there has been a new category introduced, grain-based foreign liquor called Maharashtra-made liquor, which is, permits to be given to people who are producing this only in Maharashtra, for which they will have to reapply for all of these licenses. So put all of this together, the minimum retail price for a 180 ml bottle would be 80 rupees for country liquor, 148 rupees for Maharashtra-made liquor, and 205 rupees for IMFL. For premium foreign brand, it would be about 360 rupees. For United Spirits and Radico Khaitan, nearly 20 to 22% revenue comes in from Maharashtra for United Spirits, 7 to 8% on Radico Khaitan. All things being equal, Street expects about a 6 to 8% EPS impact on United Spirits and 2 to 3% on Radico Khaitan, and similar is the expectation on Allied Blenders as well. But amidst all of this, there are 3 stocks in particular which are doing a lot better in today's trading session. GM Breweries up in mid-teens, and that's largely because the Street expects the company to benefit from the introduction of the Maharashtra-made liquor category, though they will have to re-register the brands with the state. The second part is United Breweries. That's doing well as there has been no increase in duty in beer, and the Street expects shift from, spirits to the premium beer category, another thing that United Breweries has been pushing as well. And finally, we're looking at Sula Vineyards. That stock too is high in today's trading session because wine is one not mentioned in the excise duty increase. Maharashtra is the largest producer of wine in the country, and the stock itself is down about 40% from its highs because of weak growth. So can all of this spur growth back into an underperforming stock is what the Street is betting on, and that stock, as a result of which, higher today.
Thank you. Well explained. Wine and beer category for now excluded from the increase in excise duty. Stocks are higher. Big moves. There's another pocket where you are seeing weakness, and those are some of these exchange names. So pull up a BSC, pull up a CDSL, pull up an MCX. BSC, for instance, is down close to about 3%. CDSL is down 3%. MCX has lost close to about 2%. And there are some sales notes which suggest that the BSC options premium over the last 5 days has come off very sharply compared to the levels in April and in May. So that explains why many of these exchange-related stocks, BSE in particular, is taking a bit of a knock. But it's a sales note talking about the decline that we've seen in the options premium volumes. But moving on now, and this is a Reuters news break, which reveals that Maruti Suzuki's big launch for the year, e-Vitara's production may be delayed on the back of rare earth magnet crisis. Parikshit joins in on this front. Parikshit?
Yes, Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnets. The big launch for them this year was the electric Vitara. They had showcased the e-Vitara with great fanfare at the Auto Expo. The plan was to start exports and have a commercial launch in India probably between July and August. All of that could be delayed right now because of the export curbs. And there is not enough stock of rare earth magnets to make the e-Vitaras, as many e-Vitaras as was planned earlier. We hear from sources that the company had an initial plan in April to make 88,000 electric Vitaras. That outlook was earlier slashed to 67,000. For the period between April and September, the company had a plan to make 26,500 electric Vitaras. Because of the current magnet crisis, that outlook has been slashed to 8,200 electric cars only. What Maruti hopes is to make up for the loss of production from October onwards. So they feel that the production can be adjusted, and somehow the company will still manage to meet its revised production outlook for the e-Vitara at 67,000 units in the full fiscal year FY26. But for the moment, clearly there is a problem. We've been told by sources that the start of production has not been deferred. Production is taking place of the e-Vitara, but in small quantities, and perhaps this will be only for addressing the export market initially.
Parikshit, thanks a lot for that. There's not a significant reaction in Maruti Suzuki as of now, just 0.4% lower. The stock had ended at the lows of the day in yesterday's trading session as well. Not an alarming reaction as was anticipated. And Reema was highlighting about these capital market names that are seeing some bit of selling pressure today, be it BSE, be it CDSL, has only par for the course as the stocks have moved up anywhere between 30 to 40% in a month. So some profit booking coming in for these names, be it BSE is up 35%, MCX is up 36% in a month. Look at CDSL as well. That too has seen gains of anywhere between 25 to 30% in the last 1 month and is heading back towards its record highs, which are close to around that 2,000 rupee mark. So 43% higher in the last 1 month is CDSL. But we spoke of oil sensitives just a few minutes earlier, and Oil India, as we just mentioned, is moving on the back of a positive brokerage note coming in from Avendus. Sudarshan is here to tell us more on that. 40% upside, Sudarshan, from Avendus on Oil India.
That's correct. So amidst an all-round gain in oil and gas space, one stock is higher on the back of a positive brokerage note is Oil India. Avendus Spark has today initiated coverage on the stock with a buy call, and target has given is of rupees 630, implying an upside of almost 41% from current levels. Avendus believes that it has potential of more than 80% earnings growth over next 3 years, and that is going to be led entirely by volume surge that company might see over next 3 years, and which will be aided by increased capacity at Numaligarh, and which is on track for completion by December of 2025, and that will start contributing to earnings from FY27. Some of the catalyst Avendus has mentioned is the infra projects which provide better visibility on production growth. Also, new well gas pricing could be an added positive. So, as per Avendus, recent correction that we have seen in commodity, it believes that it's a good entry point as far as Oil India is concerned.
Thank you very much for that. That is Oil India for you. That's up close to about 3%. Let's quickly talk about Tata Communication. And here the news is the company held an investor day for 2025. And some of the key takeaways are, the big one is the company had a data revenue guidance of achieving 28,000 crore rupees by FY27. This guidance, aspiration has been pushed forward by 1 year. Is it a big negative? No. Because the way the company's data revenue sales were over the last 2 or 3 years, it looked pretty unachievable. So analysts are not surprised. Secondly, the positive is that they have this digital portfolio which was recording losses. Last year in the digital portfolio, the EBITDA loss was 900 crore rupees. Now the company is saying that our goal is, without specifying a timeline, the goal is that this business will have double-digit EBITDA margins. So that is the third reason. Second reason. The third important thing is that they have monetization avenues, like land monetization. They have the data center JV, which they're looking to offload. All this is taking time, but the proceeds of that are enough to offset the negative impact, any adverse outcome which comes from the AGR case. And finally, they're still open to M&A. The company has done a few M&A. In fact, the reason why their margins have actually come off over the last couple of years is because of inorganic moves, the settling in, integration. Some of the companies like Switch, Kalera, which they'd acquired, were at low margins, but the company is still looking at, doing an M&A. They're open to it. So these are some of the key takeaways. The stock isn't reacting too much, as I said, because here the only incremental data point is the push forward of the data revenue guidance, but that doesn't come as a surprise. It was expected.
It's not significant as well, right? Because from FY27, they've just pushed it higher
pushed it forward by
1 year. So
in fact, there are some who believe that even in FY28, it looks difficult. But then the company is saying they're open to an M&A, right? So maybe that can help plug the gap.
Yeah. And even Nuvama came out with a note earlier in the day on Tatacom. They had a 2,000 rupee price target. They called it a play on the best of both worlds, calling it the stability in IT and stability in telecom and the growth potential in IT. And as a result of which, they were projecting a 2,000 rupee target on Tatacom. And hence, the initial dip was very quickly bought into. And the stock now trading 0.8% lower. So doing fairly okay for itself.
Actually, there's one more. Also remember that Tata Communication hasn't done too much. In the last, I think 1 or 2 years, if you pull up the chart, it's been going through this price consolidation. So it's not given too much of a return. So that is another reason why analysts believe that it's prime. I mean, there is upside.
Indeed, it's an interesting stock there is Tata Communications. Take a short break here on Trading Hour. On the other side, everything commodities with Manisha Gupta.
What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regret. And the only way to live is to live like an entrepreneur. Nature wants you to do that.
What would you consider today your highest conviction bet?
The abiding faith that India's time had come.
What is holding us back?
We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a new story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding a balance sheet, because balance sheet is accumulation of good and bad.
What, to your mind, is your leadership language?
So the leader or a CEO has two roles, one of a mother, one of a captain. In the Infosys journey, not from public, but much earlier, right? Mr. Murthy was a mother.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back. 90 points higher now on the index, and we are heading towards that 25,200 mark now as we speak. 300 points higher on the Sensex as well. It's a bit of a spike that we've seen in the last few minutes. We pull up Reliance Industries and ICICI Bank, the two contributors that have led this up move so far. Reliance continues to remain a percent, almost Reliance and ICICI Bank too, 0.7% higher at the highest point of the day. What has also moved higher is Mahindra and Mahindra. Infosys is seeing a bit of a move higher, and Bajaj Auto too among the top gainers on the Nifty today. And shifting focus now to the commodity space, Manisha is joining in, and today we are putting the spotlight on an IEA report on global energy investments, Manisha.
Oh, well, yes. A couple of IEA reports that have come in last 2 or 3 days do tell you the story on how there's not so much of investment going in for the fossil fuels or for crude oil and gas, etc. When you look at the numbers that IEA has put out for the US markets as well, we've seen a record 13.5 million barrels per day of production in this quarter, but they expect that to decline to 13.3 in the next quarter. And that's exactly what this table as well tells you, that even as IEA believes that the global energy investment will touch a record $3.3 trillion of an investment in this year, the fossil fuels will just about get 1.1 trillion of that. Double of that, which is $2.2 trillion, is what is actually going in for cleaner energy technologies, including renewables, nuclear and energy storage as well. So when you look at within these numbers as well, as you can see, the solar power stands quite tall at around $450 billion of an investment that the street is anticipating in this year. IEA believes that the battery storage could see a bit of a decline in sense of investments at around $66 billion. But it is going to be grids. Electricity clearly is going to be on the top of there, where you are looking at $400 billion of an investment coming in for this one as well. Solar, as everybody is talking about, whether it has been about the US markets, European markets, Middle East and Asia as well, has been looking at very, very strong numbers there. For the Indian markets as well, the latest data that has come in shows you that between Jan to April, the first 4 months of this year, the solar generation has been at a record high of around 32.4%. So solar clearly looking at very strong investment. The generation numbers also quite mirror that.
Thank you very much for that. We will slip into a break on that note. We'll come back and address the market technicals. Mitesh Thakkar joins in with his top trading bets. Welcome back. Let's talk about trade. Things have been quiet for the markets. Yesterday was a session of consolidation. We closed unchanged. Today we're in the green. The Nifty is up close to about 85 points and very close, inching towards that 25,200 mark. So slowly ticking up. Reliance Industries is a big contributor on the way up with a gain of nearly 1.7%. Mitesh is now with us to join in for a quick technical check. Mitesh, even yesterday you were saying, though we didn't clock in gains, we protected the downside, and it was on a positive session. The fact that we could hold on. From here on, what would the trade be?
I think, after that breakout beyond 25,050, we took about 2 days of consolidation because we opened Monday with that gap up and then Monday and Tuesday were sideways. Today, I think it's picking up steam. So pretty okay. I think, it doesn't look negative to me. I think I still believe that 25,400, 500 zone should be tested, maybe more, but we'll start with that. And therefore, the bias should be on the upside.
We're on the upside now. Exactly 1,100 points away now is where the Nifty stands from its all-time high levels of 26,277. Mitesh, what about specific stocks then?
Because Biocon is something which is come radar. I think is breaking out from a short-term negative setup. So that could turn positive. Keep a stop below 340 here, look for a target of 360. And the other one is NTPC, which I would recommend buying with a stop at about 336.5 for targets of 350.
All right, Mitesh, thank you so much for sparing time, joining us today with your views on the index and on specific stocks as well. It's the first time since October of last year that the Nifty has crossed 25,200 intraday. So a positive move coming in on the index. 90 points higher is where we stand. In fact, we did speak to Sunil Kaul, the global emerging market equity strategist at Goldman Sachs yesterday, for his outlook on the Indian markets as well as his views on the cement stocks and, of course, the hot theme of the last few months, defense. Listen.
I think the issue obviously remains that the valuations have kind of re-rated back to 23 times, which is expensive. And so we don't have as much upside at the index level for Nifty. So we have a 26,200 for Nifty, which is, I guess, 4-5% upside from current levels. And if you bake in currency appreciation of 2-3%, that's roughly around 6-7% upside in dollar terms, which is not bad given where the markets are. But we think it's kind of more a stock pickers market, more sort of alpha beneath the headline index. And that's where we are advising people to pick up stocks and sectors. In our allocations, we are underweight cement, we are underweight industrials. So we do have that strong preference of financial consumer versus the rest of the market. But we are sort of neutral on defense. So if there is one theme within that broader manufacturing industrials complex where we still feel that there is more to go, given how the geopolitics and the world is moving, that would be defense. So we wouldn't be sort of cautious on the defense names. I think there is more room for that to come through if that gets backed up by the government orders and all of that. But we will be probably more cautious on very highly capex sensitive sectors, which are more to do with sort of construction cycle, so to speak.
His two big bets are financials and consumption. So that's the large two bets that Goldman Sachs is taking on India right now. We will slip into a break. On the other side, we'll chat about the market fundamentals with Devang Mehta of Spark Private Wealth Management.
Suddenly e-commerce started to happen in India.
Yeah.
He was watching it here. I was watching Shopify in the US. And that was the point I realized that there is no Shopify in India. I thought, okay, well, I know how to build websites. I do HTML development. And how difficult can it be? Neither of our parents were convinced.
So they were not convinced for good 3-4 years.
For 3-4 years.
Yeah, you have to imagine how it was 2013, 14.
Yeah,
people not look at startup or founder like that in that sense.
Right? Jobless.
From Craftly to Shiprocket,
What was the hypothesis?
India e-commerce is still fledgling. Nobody can predict how it will go. What do we do as a business, right? Okay, let's become the Twilio of shipping. A lot of times people still ask us, are you like Shopify? Are you like FedEx? And who are you like?
You're a little bit of everybody.
We're like us, right? Because we are solving a fundamental problem. In fact, we have noticed some other companies now in other emerging parts of the world in their slide decks calling them X of Shiprocket or whatever, Shiprocket of their country, right?
Welcome back. 25,190 is where the index continues to remain. And of course, you can't ignore specific stock moves here. And Tata Tele is at the highest point of the day now, almost 12% higher, the top gainer on the Nifty 500 in today's session. What has also sprung up to the highs of the day is Wockhardt, 7% higher on that stock as well. And good moves seen there for the drug maker. Some of the others, a very sharp spike seen in the last few minutes of trade in Wockhardt. Some of the other movers, of course, GE Vernova is one of them, 4.5% higher on that stock. Oil India is continuing to claw back towards the highs of the day after we reported about the Avenda Spark initiation. And there you can see almost 4.5% higher on Oil India as well. But an important MSCI event is upcoming, and that is not the rebalancing, but it is the expected 2025 annual market country classification review results. Can there be any implications for India? Vivek is joining in to explain all of that to us. Vivek.
That's right. So a very important event coming in as far as MSCI is concerned. Like you mentioned, MSCI will announce the 2025 annual market countrywide classification review results, and this is expected on June 24th of 2025. What is the reason that we are tracking this particular event? Remember, South Korea for the past couple of years is on the watch list to be upgraded to a developed market from its current classification as an emerging market. Now, what is the likelihood of an upgrade for South Korea? Remember, it's been on the watch list for the past couple of years, but in 2024, MSCI had said that the short selling ban that the South Korean market had kept had actually hindered market criteria as well as accessibility worries was something that had kept South Korea out of the developed market. Now, an important update is that, remember, at the end of March 31st, 2025, there is no short selling ban as far as South Korea is concerned. Now, what is the implication as far as India is concerned? Remember, any such upgrade of South Korea from the emerging market to the developed market most likely will be done over the next 1.5 to 2 years. However, for India, what it means is that a larger piece of the pie as far as the MSCI EM or emerging market is concerned. Remember, South Korea accounts for a little over 10% weightage as far as MSCI EM is concerned. So the reallocation of EM money will go into other EMs like China, Taiwan, and India, indicating that this particular event, if it fructifies, will be a net inflow event for India. What is the likely quantum of the inflows that India could witness? There are two aspects to this particular info. Number one will be the inflow that will be seen from active funds, which at this point of time is tough to quantify. However, IIFL Capital has made an attempt to quantify the quantum of passive funds that India could see in case this does happen, and that could be in the range of $11 to $12 billion. So overall, a positive event if it fructifies as far as India equity is concerned.
Thank you very much for that. By the way, the other pocket that's moving is the railway stocks once again. Right, they went sideways for the last couple of days, but now RailTel is spiked up close to about 3.5%. You've got an IRCON and RVNL again on the gainers list. Big moves seen. Remember, many of these railway stocks are about 35-40% away from their 52-week highs, and you're seeing a big spike in a couple of them. Devang Mehta from Spark Private Wealth Management is now joining in to discuss the market fundamentals and his top sectoral picks. Thank you very much for joining in. Devang, as we speak, we've clocked in a very good up move from the April lows. I think markets are up close to about 13-14%. Do you think the best of the alpha, the return, is in the price at these levels? How would you look at the setup for the markets for future gains?
Thanks, Rima, for having me on the show. It's always a pleasure to be on CNBC-TV18. Yes, I think very clearly we had a view for the last 6 months. I think entire narrative has changed. Look at what happened since September 27th, 2024, when markets sort of peaked out. And we saw a correction in October, November, December, Jan, Feb, a little bit of recovery. In April, again, as you rightly said, it made a new low. What has changed from there? Honestly, the macros have changed. Beautiful, it has changed. I think we talk about GST collection. We talk about a bit of consumption data showing a bit of spur. We also see that the government capex had slowed down. That has also come up brilliantly, and that is why the defense and the railway stocks and all are up. It's not just a story now. It's not just a narrative. But I think most of these companies will be led by earnings. So one thing which we saw is that the improvement in the macro set of data. Now macros also saw that the inflation came down, and nobody the last year was talking about rate cuts, which we saw an excellent RBI policy just last week, where defying expectations, I think 50 bips was cut, and again a relaxation in CRR, which spurs the entire economy. It spurs banking, rate sensitives. I think most of the data points are increasingly becoming positive. The past earnings cuts that we saw the last couple of years, where earnings were sort of not delivering. In fact, this time, if you just sort of dissect earnings, we saw that the broader markets came up with good set of earnings, and more importantly, positive commentaries from a lot of sectors. So my sense is when macros are good, micros are good, market being slave of earnings, ideally also there were good cash flows operating as well as free cash flows by a lot of companies. My sense that probably for the next 6 months, 1 year, markets will probably head northwards. Yes, will there be correction on the way? There should be corrections on the way if this is a healthy rise. But I think, yes, I will be more positive than negative at even this point. Risk reward still looks quite interesting at this point.
Risk reward looks interesting. Devang, good morning. Thank you for joining in. Does this interesting risk reward apply to railway stocks as well? We just mentioned, we covered this last week on our editors roundtable, that despite the moves that you've seen, the valuations or their growth that you've seen over the last couple of years does not match up to the stock price rally that you have seen whatsoever. And despite this 30-40% move that you've seen over the last 1 month, the stocks are still almost 40 to 50% away from their record highs. What is your stance on this railway space?
I think I'll just try to just explain the situation. What is happening is probably be it railway, be it defense, be it power or energy, automation. What is happening is ideally, yes, if you sort of again dissect the Nifty or the Sensex, the benchmark indices, you would find that 35% is in financials or rather banks in Nifty, around 14-15% into IT, 10-12% into oil and gas, and maybe 8-9% into FMCG. Now, these are the traditional sectors where whether somebody wants to intend and buy something with an objective of probably earning 18, 20, 25% type of return over the next 3-5 years, is it going to be possible? My sense, it's difficult. Probably a 10, 12, 14% type of returns can be made on Nifty on the back of earnings growth. But the broader markets, and I think more and more, if you look at even the domestic investors and even FIIs, if you look at their holdings over the last 6-7 years, they are also getting into, I'm not trying to sort of broad brush the entire map, but I think beyond the Nifty, beyond the Sensex and beyond the indices also, there is so much that one can probably buy into, because India now is growing on 2-3 wheels, right? One being the capex, which was absent 5-6 years back. The second being discretionary consumption, which is extremely strong. Third being financials. Again, in financials, if you just take out the banks, and again, I'm not saying banks will not do well, but a lot of NBFCs, a lot of financials in terms of brokerages, depositories, exchanges, you already seen wealth management companies. I think all these sectors, and railways, defense are also part of that, where even the earnings pool are shifting. So if you look at earlier, the earnings were only concentrated towards the top 50, 100 companies, but I think it is getting spread out evenly. I'm not saying that everything will do well. You need to take out exuberance from that. But ideally, yes, I think a lot of other sectors, which we always talk about, be it power automation, energy efficiency, be it air cooling systems, I think a lot of this would come to the fore and start doing well if I think the broader markets earnings also come. And I think there is always a chance that all these earnings have seen good traction and they will maintain it for the next 2-3 years.
Where are some of the other sectors that you are finding value in, Devang? Where are you putting your money to work at these levels?
I think, yes, as I said, we believe in ideally the three themes which we always talk about, the 3 C's. The first being capex, and I think I've been talking extensively on this at the expense of being repetitive. We place our bets in a lot of capital good ancillaries. We feel that a lot of engineering companies, ER&D companies, cap good ancillary companies, lamination as well as stamping, power automation. These are sectors that I classify under a bit of capex and manufacturing, where if India grows on the manufacturing side, engineering side, capex side, this will benefit. The second C being consumption. Consumption, again, as we all know, we have seen strong discretionary consumption trends generally. The travel tourism as an industry, we have seen organized retail, particularly we used to talk about companies like Trent. I think this has also seen good bit of traction. Yes, the valuations have corrected a bit for a lot of such companies, but I think the space looks extremely interesting in the discretionary consumption upper end space. And the third being credit growth. Now, again, credit growth we have seen probably in the lower teens, and if this expands after the RBI monetary policy, we'll see banks doing well. We'll see NBFCs. We'll see other where penetration and density is low, maybe broking, maybe wealth management companies, where I think people are going to probably put in more money. They're putting their money to work, and investments as a sector would also start doing well. So I think these are broadly the 3 themes, which I think if one prepares a portfolio even today, it would reward them over the next 2-3 years.
Interesting. But Devang, there are also certain names here over the last few days that have done fairly well for themselves are the private financials, be it the large-scale private banks or the NBFCs after the RBI policy. Has the tide finally turned for them, or is the market discounting the pressure that NIMs are going to face because of these rate cuts by the RBI a little too much too soon?
I think probably what we saw is the last 4, 5, 6 months, while the recovery was led by a lot of other sectors as well, but financials led the recovery. And as we know, most of the banks which underperformed over the last 3-4 years, be it HDFC, be it Kotak, be it even ICICI, they all did extremely well. I think over here now, what one needs to monitor is that there are other sectors which I said which are part of the financials. Now today, if you ask me today, India's BFSI sector would be in terms of market cap around say 110-115 lakh crore out of 450 lakh crores, which is around 25% of the market cap. Now today, here banks would do well. Yes, over the next 5 years, they would give you 12-14% CAGR. But private financials, as you talked about, certain NBFCs, certain wealth management companies, here the growth rates can be 18 to 22, even 25% in certain cases. So I would place more bets. Yes, we would probably buy banks, but we'll buy other financials with a lot more conviction than banks.
Devang, pleasure having you as always. Thank you so much for sparing time and joining us today. Devang Mehta there of Spark Private Wealth. Take a short break here on Trading Hour, but before we do that, CNBC-TV18 Access is a premium membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC-TV18's flagship events, interaction with our journalists, along with curated studio tours, e-learning sessions, and masterclasses, and curated lifestyle benefits. Now, designed for an immersive and enriching experience, it empowers members with a premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence is yours to claim. You can become a member by logging on to cnbctv18.com/access/plans.
Welcome back. After months of trade tensions and tariff negotiations, the US and China have reached a consensus on trade following a second day of high-level talks in London. US Commerce Secretary Howard Lutnick says that the two countries have reached a framework to implement the Geneva Consensus. Listen in.
We have reached a framework to implement the Geneva Consensus and the call between the two presidents, right? So that was on June 5th. So we've combined those two. We've reached a framework for implementation. Now the process will be, we're both going to go back. We, Ambassador Greer, myself, and Scott Bessent, who just left a little earlier, which you saw, because he's testifying tomorrow on the Hill. So the idea is we're going to go back and speak to President Trump and make sure he approves it. They're going to go back and speak to President Xi and make sure he approves it. And if that is approved, we will then implement the framework that we have worked hard over these last 2 days. Obviously, the team stayed at it until it was done late into the evening. Absolutely expect that the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that. Also, there were a number of measures the United States of America put on when those rare earths were not coming. You should expect those to come off sort of, as President Trump said, in a balanced way. When they approve the licenses, then you should expect that our export implementation will come down.
Meanwhile, India and the US as bilateral trade agreement negotiations also took place between the 4th and the 10th of June in New Delhi. Parikshit is now joining in to give us details on what transpired during these negotiations and discussions. Parikshit.
Well, 6 days of intense negotiations, and there were very widespread discussions on all aspects of reducing tariffs. Digital trade was also discussed, technical barriers to trade was also discussed, but essentially what the US is saying, they just don't want tariffs on goods and services to come down. They want access for US wheat, maize, rice and dairy. Now, these have been no-go areas for the Indian government, and the United States wants access for these agricultural sectors. Having said that, when it comes to removing also the 10% baseline tariffs, the US does not seem to be very keen to remove it because they've had this kind of arrangement with the UK and the EU as well. So it remains to be seen whether any kind of special carve-out will be made for India. But for the moment, it seems that US will implement the 10% baseline tariffs. India also took up the issue of steel and aluminum tariffs, which are now as high as 50%. And India wanted, as part of the interim deal, for that to be removed. Let's see which way things progress. But the sense that we get after speaking to both sides, to sources in the Indian and US government, is that talks have largely been productive and positive. And there is work on now to have an interim trade deal. This is what India wants. And we saw Commerce Minister Piyush Goyal and also External Affairs Minister before the reciprocal tariffs kick in on the 9th of July. Let's see what happens, but there will be more negotiations in the next few days.
Parikshit, thanks a lot for those updates. We take a short break here, but just as we do that, some good news for our viewers. India's business news leader is now just a click away. And of course, that is CNBC TV18's all-new app, where you get instant access to breaking news, in-depth articles and financial world updates, all of it at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen. We take a short break, back on the other side. Welcome back. Now, the World Bank has lowered its 2025 global GDP forecast to 2.3%, citing increased trade barriers and policy uncertainty. India, meanwhile, stands out and is expected to grow 6.3% this financial year, remaining one of the fastest growing major economies. Ritu is here to get us more details on this. Ritu.
Let me begin with India, which is projected to maintain the fastest growth rate among the world's largest economies at 6.3% for FY26. But this is a slight downgrade, about 40 basis points lower than World Bank's January forecast, mainly because of weaker global demand and rising trade barriers impacting our exports. Now, this number compares with IMF's forecast of 6.2% and RBI's own 6.5% projection for the fiscal. But India is expected to bounce back. Growth is projected to average 6.6% in the next 2 fiscal years, at 6.5% for FY27 and 6.7% for FY28, driven by a strong services sector and a recovery in exports. But the picture is far less optimistic for the global economy, where growth is expected to weaken to 2.3% this year, with deceleration in most economies relative to last year. This, the World Bank says, will mark the slowest rate of growth since 2008, aside, of course, from outright global recessions. Now, a slow and uneven recovery is expected, with growth inching up to 2.4% in 2026 and 2.6% thereafter, leaving the global output materially below the January projections. To compare, IMF's last forecast for global economy was a tad higher at 2.8% this year and 3% for 2026. Now, the World Bank says rising trade barriers, policy uncertainty, and geopolitical tensions are largely to blame. Growth in advanced economies as well as emerging market economies will still remain far below their pre-pandemic trend, and the per capita income growth in emerging economies is expected to lag behind the richer nations, and poverty reduction, especially in fragile and conflict-hit countries, is stalling. Now, global trade is also expected to slow down sharply to well below historic averages this year. The World Bank says risks are mostly to the downside. A major worry, of course, is if the US raises the average tariffs by 10 percentage points, for instance, and trading partners retaliate, global growth could plunge by another 0.5% this year. But if disputes are resolved and tensions ease, growth could also increase by 0.2 percentage points, which offers some upside potential.
Ritu, thank you very much for that. And that brings us to a close in this edition of Trading Hour. From the entire team, thank you for watching.
Stocks trade ranged after US and China agree on a trade framework, but China's curbs on exports to India are a new bother. Oil and gas stocks are the big gainers while FMCG drags.
China's curbs on rare earth magnet exports are starting to pinch, with Maruti Suzuki likely to push back the launch of e-Vitara. The auto major has also trimmed its output target for the model till September.
Maharashtra has raised excise duty on Indian-made foreign liquor while keeping the levy on beer and wine unchanged, sparking big moves in stocks. The state has also introduced a new category for liquor made locally.
US and China reached an agreement on trade after high-level talks, and the negotiators will now seek approvals from Trump and Xi for implementing this, based on the Geneva framework. Well, hello and welcome to the Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek, and with me today is Mangalam. Good morning, Mangalam. You've had a very busy morning, but irrespective of all of the news flow, the good part is all of the four indices that we track closely are in the green. The Nifty well above the 25,200 mark. The Nifty Bank, after yesterday's brief breather, is once again back to winning ways. Mid-cap and small-cap index largely flat, but it's a positive bias. So overall, not much to complain about, but you've had a very busy morning.
Yes, not much to complain about, barring, some of these alcohol spirit companies, which we'll talk about in detail later during the show as well. But it's actually quite a good day for the bulls if you look at it. Over the last 3 trading sessions, the Nifty has been making higher highs, and right now as we speak, Nifty has crossed yesterday's high of 25,199 as well. Those are a couple of stocks which are under pressure right now, but just look at the Nifty, it's moved higher. And the good part is yesterday's up move was led by the IT stocks. Before that, it was the banking index, and today now we have the energy stocks which are backing or batting for the bulls. So pull up Reliance. It's the top contributor on the way up for the market right now, and Reliance as a stock is at a near 8-month high. So just keep an eye out on that. The other couple of stocks which are doing well, Wipro's moved higher. So IT stocks continue to hold well, even as the Nifty Bank gains about 100 points. The broader markets, even as the mid-cap index at an index level is flat, and a large part of that flatness is because of the underperformance that we're seeing in the Alcobev companies. Look at the advanced decline ratio, and that would tell you that portfolios are feeling a lot better today than what they were in the last few trading sessions. We have 1,800 stocks which are in the green versus about 740 stocks which are in the red. Among the stocks which are in the red include the Alcobev stocks, particularly United Spirits, and we also have a big gash that we're seeing on Radico and Allied Blender. So let's tell you what exactly is taking place out here. Overnight, we had the notification coming from the Maharashtra government where they've increased duty, excise duty on Indian-made foreign liquor from 3 times of production cost to 4.5 times of production cost, basically undoing the benefit that happened with the India-UK free trade agreement on a slash of duty on bulk import of scotch. But at the same time, the excise duty on country liquor has increased by about 14%. So Indian-made foreign liquor increased by 50%, country liquor increased by 14%. We have a new category of grain-based foreign liquor called Maharashtra-made liquor, which has been approved. So only liquor manufacturers located in Maharashtra will be able to produce this type. So that gives a boost to the local producers here. Put all these together, what does a 180 ml bottle of alcohol cost in Maharashtra? The minimum retail price for country liquor would be 80 rupees. Maharashtra made would be 148. Indian made foreign liquor would be 205, and a premium foreign brand would be about 360. So this puts a bit of a dent into companies which are looking at IMFL and premium foreign brands as a strategy to grow itself. And that, for United Spirits, accounts for 20-22% of sales, Maharashtra alone. And Radico Khaitan, 7 to 8% of their sales come in from Maharashtra. So analysts believe, all things considered, this could be an impact of anywhere between 6 to 8% on United Spirits and Radico Khaitan by 2 to 3% on an EPS basis. But remember, this also will be a little lower because of the benefit that the India-UK FTA would bring on scotch imports. There are 3 stocks, however, which are spiking as we speak. We have GM Breweries. The street expects the company to benefit from the introduction of the Maharashtra-made liquor category. They will have to re-register brands with the state, but until that happens, they have a fair amount of headroom, so this stock is doing well. Secondly, United Breweries is not falling as much. In fact, for brief periods was in the green as well, because the street expects shift from spirits to beer at the premium level, something that United Breweries has been pushing as well. No increase in duty in beer. And finally, we have Sula Vineyards. That was
high single-digit sort of gain coming in on that stock because one, wine is not mentioned in the excise duty increase. Secondly, Maharashtra, the largest producer of wine in the country. And third part, the stock already has seen a 40% correction from its all-time high. Last 4 quarters have been very weak for growth for Sula Vineyards. So let's see whether going forward, this duty would shift some consumption into wine, and that stock stands to benefit from that.
Thank you so much, Mangalam. Neatly breaking down a few gainers, few laggards. But if you're a drinker, you definitely have to shell out more.
Well, I am not a drinker, so I'm okay. But the unfortunate part is that it's not just alcohol. Because the flush season, every monsoon, price of milk increase as well.
Right.
So for me, for those who drink alcohol, yes, it is getting expensive. But for those who drink milk as well, 1 to 2 rupees per litre is increased.
Inflation across the board. Well, thank you so much, Mangalam. Well, moving on, a Reuters news break reveals that Maruti Suzuki's big launch for the year, the e-Vitara's production, may be delayed on the back of the rare earth magnets crisis. Parikshit joins in with more details on this front. Parikshit, over to you.
Well, yes, we hear that the big e-Vitara launch, which was the big product launch that Maruti had showcased in January at the Auto Expo, and it was supposed to hit the Indian roads sometime in July and August. That launch is possibly going to be delayed. The export plans may also be delayed because of the rare earth magnet crisis. What we are learning that Maruti Suzuki, and this is what CNBC-TV18 has independently verified, that Maruti Suzuki initially had a plan of making 88,000 e-Vitaras in the month of April, and this was for the entire fiscal year FY26. That plan was later reduced to about 67,000. The plan was to make around 25,000 vehicles between April to September out of the larger 67,000 target. That plan has been slashed further to 8,200 vehicles only till September. This is because they do not have enough rolling inventory of rare earth magnets, which are a critical part of electric motors which go into EVs. Having said that, Maruti Suzuki sources tell us that they are still hopeful of meeting the full year target, and whatever production has been lost between April to September because of the rare earth export issue, it will be made up October onwards. But overall, it seems that the export of the e-Vitara, the India launch, all of that could be impacted because of the rare earth crisis.
Well, thank you so much, Parikshit, for joining us, giving us a sense of how exactly the rare earth magnet crisis is impacting production across OEMs. Well, the other stock in focus today is Tata Communications. It's under a bit of pressure. This is post the analyst call that the management held. Rima joins in with more details.
Thanks so much for that. So there are 4 key takeaways. One is that the data revenue guidance of 28,000 crore of revenue has been pushed forward by 1 year, from FY27 to FY28. But this doesn't come as a surprise because anyway, going by the current run rate, it was pretty challenging for the company to achieve that guidance by FY27. So in that context, it's not a surprise. Secondly, on the margin front, what the company did say is that there's one portfolio, the digital portfolio. It's been loss-making. Last year, 900 crore of an EBITDA loss. But eventually, their aspiration is that they want to hit double-digit revenues, margins in the digital portfolio. So that's a positive. Third, they spoke about asset monetization. Remember, they have a data center business where there is a JV, they hold 26% stake, they're sitting on land bank. They're saying all that takes time, but eventually when it happens, it will be enough to offset any adverse outcome of the AGR dispute. And finally, remember the company has made a lot of acquisitions, Kalera, Switch. That's the reason why EBITDA margins for Tata Com have also been under pressure. They're still open to more M&A because they've managed to bring their debt to EBITDA lower over the last 2 or 3 years. So they're open to M&A too. Back to you.
All right, we take that point, Rima. Thanks a lot for that. That's about Tata Communications, lower by about 0.25%. But let's slip into a short break. And as we do that, let's get you to step into a world where insight meets influence. CNBC-TV18 Access. It's a membership-only platform which offers users premium content, strategic market intelligence, and access to the minds shaping India's economy. From behind-the-scenes interactions, you get priority access to CNBC-TV18's flagship events. Gives you studio access as well. And you get masterclasses, elite lifestyle perks. And this is more than just a membership. It's your front row seat to the future of business and growth. The power of insight, the privilege of access and exclusivity, experiences and influence. It's all yours to claim. Become a member. Log on to cnbctv18.com/access/plans. Let's take note of a few stocks which are moving higher right now. PI Industries is the one which has moved to the high point of trade. Another stock which is doing well actually has recovered from the lows is Biocon as well, currently at the high point for that counter too. So PI Industries, a sharp spike is what we've seen. Biocon is the other one which is at the high point. And we're seeing some traction in names like Vishal Megamart, which too has moved off lows, fairly off lows in fact, at the high point for that counter. And High-Tech Pipes is the other one which is gaining almost 5% right now. Decent volumes backing that one as well. But from micro, let's move on to a macro. And it's an important MSCI event that is upcoming. In the expected 2025 annual market country classification review, could there be any implications for India? Vivek joins in. Vivek, you've been telling us how they're considering whether to put South Korea into the developed markets or not. Were that to happen, what happens to India?
That's right. So, that's the key talking point. 24 June 2025 is when MSCI will take the call. Will South Korea be reclassified as a developed market? It's currently classified as an emerging market in the same category as India, as well as China, as well as Taiwan. This has been in the works for quite some time. MSCI has been considering this for quite some time. But there were concerns related to South Korea. What were the concerns? Number one, they were not eligible or they were not meeting certain criteria, including criteria related to, ban as far as short selling was concerned. Now, as of March 31st, 2025, there is no longer a ban in South Korea on short selling. So that is one key tick mark as far as South Korea is concerned. Timeline for the event, it's expected to be implemented post the announcement in the next 1.5 to 2 years. So it is an event that will take a certain amount of time to be implemented, given the fact that the implications of this particular development are quite significant. Now, why are we tracking this event? What is the implication for India? First thing that we need to understand is, as far as the MSCI Emerging Market Index is concerned, South Korea has 10.4% weight when we last checked it. So reallocation of the money, of EM money, will go to the other constituents within the MSCI EM, and some of the other constituents include names like China, Taiwan, as well as India. Now, in case this were to happen, there is a twofold implication as far as Indian equities are concerned. The first implication, of course, is the kind of positioning that active funds will take ahead or immediately post the announcement. That is a little tough to quantify. However, when you're talking about passive funds or index funds that do track the index provider as is, we do have a sense of the quantum of flows that India could witness. And this is a significant quantum. Expect inflows in the range of $11 to $12 billion. Now, this particular number is an analysis or an estimate by IIFL Capital. So, a significant inflow event where India were to get and be the beneficiary. But what we need to keep an eye out for, in the past, MSCI has deferred, upgrading the status of South Korea. And secondly, what's actually happened is that it will be deferred, at least the implementation will happen over a period of time. So maybe 7 to 8 quarters is when we will see slow inflows coming in. Nevertheless, a positive event in case it were to happen.
All right, Vivek, thank you so much for explaining that. A positive event, if it were to happen, and if it did happen, $11 billion do not come directly on one day. It comes over 8 quarters itself. But what's doing well are a lot of these oil marketing companies and some of these upstream companies as well. Sudarshan joins in to decode what's fueling this surge. Sudarshan, typically we see OMCs rally when the upstream companies aren't rallying. Today it's both of them are moving in tandem. ONGC has moved higher, Oil India has moved higher, Reliance has moved higher, and all the oil marketing companies are higher too.
So it's an all-round gain that we are seeing in oil and gas space, and for Oil India, there was a positive brokerage note. But for OMCs, there is an outlook that has come from US oil body that is known as Energy Information Administration, which had released outlook for the short term, that is for 2025 and 2026. And it believes that in 2025 and also in 2026, crude is expected to move lower. Remember, in the month of May, the average Brent crude price was $64 per barrel, which was down of almost $4 per barrel if you compare from the month of April. Now, this oil body like OPEC or IEA, it believes that crude in 2025 is likely to end at the $61. And it may fall further in 2026 and may settle at around $59 per barrel. And it's on the back of rising global oil inventories, which, as per this oil body, which is known as EIA, is going to help, or basically going to make sure that, not make sure, basically which indicates that crude will be falling further in both the coming years that we may see.
Well, thank you so much, Sudarshan. the sector, oil and gas, today for a change, both producers as well as the marketing companies, all of them doing quite well. IRC, HPCL, BPCL, all of them moving higher in the session. Well, it's now time for a short break. Pritesh Mehta, Executive Vice President of Yes Securities, joins in with some trading strategies on the other side. Stay tuned.
Watch out for a few of these life insurance names. You have ICICI Pru, which has spiked to the high point of trade. All these life insurance names had been doing well all through today, but we've seen an incremental spike come by. The other one is LIC. That's the one that should come up for you as well. Up around up around at the high point of trade, and 0.6% have come in terms of gains in just the last 15 odd minutes or so. But if you look at the markets on the whole, and equated with the way the FII or FNO data is right now, we have the Nifty Bank, both of them doing well. The Nifty's crossed yesterday's high at the high point of today's trading session so far. At an index level, the mid-cap index is lower, but broader markets are a lot better. If you look at Reliance, that's the one that is at an 8-month high, the top contributor to the Nifty in terms of gains today. And alongside Reliance, it's all the energy stocks, which Sudarshan just spoke about moments ago, which have been contributing to the overall health of the market. So ONGC, Oil India, both the upstream companies or the downstream refiners, we have BPCL and HPCL doing well. If you look at the advanced decline, that tells you that portfolios are feeling a lot better today. 1,800 stocks in the green for about 743 in the red. And barring the first hour of volatility or so, it's been pretty much a straight parallel train track, which tells you that the strength of the market is good, alongside the decline that we've seen in India VIX, which after falling below 15 2 days ago has fallen below 14 now. So put writers are fairly active. Where are the put writers active? 25,100. So the support for the Nifty is moving higher as the market inches higher. 25,200 puts are also seeing a fair amount of traction, telling you that the support has moved higher from 25,000 to around 25,100. Though on the way up, 25,250 call is still fairly active, premium of 60 rupees, telling you that the market faces some supply around 25,300. But if this were to break, then there is a further up room for up move, and that's visible in the 25,500 call. Moments ago, this was just around 10 rupees, fairly well bid, a lot of punt buying taking place out there. In, just a bit, it's increased by 10%. Today, it's up by 50%. So those option buyers making a fair amount of money. In terms of individual stocks, watching out for United Spirits, a lot of short positions being added on it, and we've explained the reason why too. But CDSL is one of the stocks that I'll watch out for very closely this evening, because it may enter F&O ban. Remember yesterday we had spoken about IREDA and RBL Bank having the possibility of entering F&O ban. That's happened. Today, I see that happen in CDSL.
Well, very, very interesting. CDSL is the likely candidate you're predicting that could enter the F&O ban. Of course, based on data.
Of course, based on data.
Well, like we promised, Pritesh Mehta, Executive Vice President of the Security, joins us on the show. Thank you so much, Pritesh, for joining us. First up, what do you make of the markets at current levels? Nifty comfortably above the 25,200 mark, and we sustain the rally.
Yeah, good afternoon. Now, see, this week is all about follow-through moves. Nifty had a breakout in previous week's trade after days of consolidation. And then rather than witnessing retracement, what we have seen is a gradual move on the upside, which it is really good to see. And even broader markets are displaying similar trends. So we have a scenario where broader markets and something like small cap index is up by 2% so far this week. Mid cap is up by 1.2% this week. So yes, whether it's Nifty, the broader markets, everything is moving in the same direction together. So in this kind of scenario, I think what we can do is ride the wave. No need of questioning it, no need to doubt it. But whether it's in mid-cap IT, whether it is commodities, recently we have seen oil and gas stocks moving well, doing well. So there is rotation being seen from the the large cap space. Something like we have seen the likes of banks doing well, financials doing well, the top heavyweights name. But now it is going to sub-sector theme. So this is a welcome sign. I think there is momentum is going to continue.
All right, momentum is going to continue. What about individual stocks? Where are you betting today?
So there are two stocks that we like. The first one is Biocon. Now, see, we have a slightly negative view on the pharma space, because the ratio of pharma versus Nifty is on the downside. But this particular stock is an outlier. It is outperforming the pharma index. When we look at the pointer figure chart, we are witnessing the bullish anchor column, which was formed in the month of April. Thereafter, we are witnessing follow-through moves on the upside. So buy for a target of 385. The stop loss would be around 335. The second recommendation is buy LIC Housing Finance. Now, it is attempting to surpass the downward sloping 45-degree trend line, drawn off the peak of June 2024. Once it sustains about 625 in next couple of days, we can see renewed uptrend taking place. And it has already confirmed a bullish order break. So buy for a target of 720. And the stop loss would be around 590.
Thank you so much, Pritesh, for joining us, giving us a sense of how exactly you expect markets to trend, as well as your individual trading ideas. Well, we now slip into a short break. We will be back with Manoj Menon, Commercial Director of Kantar World Panel, on the other side. Stay tuned.
Welcome back. 1 India, 1 market. 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 1 India, you look at the sectoral indices today, it's the FMCG sector that stands out in terms of its underperformance. It's down about 1/3% at a time when the Nifty is up by 100 points. All the other sectoral indices are doing fairly well. Metals, IT, infra, name whatever. Why is it that the FMCG sector is not doing so well? Could be perhaps because of this report which suggests that urban India's shift to unbranded good outpaces branded FMCG growth, and even as macro improvement has taken place in the sector, it hasn't related in or translated into FMCG growth. FMCG purchased growth grew by about 3.5% in the first quarter of 2025. That's the fourth quarter FY25, and it's the slowest that we've seen since the fourth quarter of calendar 2022 itself. So growth still lags the sector. Manoj Menon, who is the commercial director of Kantar World Panel, joins in now. Manoj, thank you so much for joining in. There's telling data, right? FMCG growth at just around 3.5%. Growth split, while it's higher in urban India, lower in rural India. If you look at the listed brands, they've grown much slower in urban and much higher in rural. What does this sharp divide in rural and urban tell you about the consumption environment and what people are preferring?
Thanks, Magalam. Thanks for having me here. So there's one big divide when it comes to urban-rural. I think rural, what is driving the growth is more from essential and some of the snacking categories. So for example, if you look at, say, soaps and hair wash and utensil cleaner kind of categories growing pretty well in rural. And also some of the snacking categories like, say, noodles and salty snacks, which are doing very well. So the aspirations and the experimentation is very similar to urban, but the rural consumers are actually sticking to the essentials, but also adding to their bit of snacking to their basket, which is what driving the rural growth. And as you rightly said, the listed companies' growth is much higher in rural as compared to urban. And urban consumers, bit on the other side, where having the heat on the inflation more. Actually, while we all talk about the inflation being moderate and playing around 4-ish on a month-on-month basis, and the predicted one being 3.7. But what we also need to understand, we're living in an industry where the food inflation is still high. I mean, it kind of yo-yoing actually. In some months, it comes down to around 3%, sometimes goes up to 11%. So that's actually having an impact on the urban consumers more. Actually, therefore, I mean, there's a kind of trade-off happening in the urban consumer set.
Are you trying to say that there is still an impact of inflation on urban consumption, and that explains the shift to unbranded because, branded is now getting a little more expensive even as rural maintains its, consumption levels?
So that's what you're seeing actually, because in many categories, the unbranded growing faster. I mean, be it mostly in the staple categories, but not only staples, even a snacking category, which is big on unbranded, which is the Indian namkeens, which are the unbranded ones, which is growing faster. While listed companies are managing to convert consumers from unbranded to branded, but at the same time, unbranded is also growing. So I think it's a bit of a tricky situation for for the consumer. I mean, not from a manufacturer standpoint, getting one is that you're converting consumers from unbranded to branded. That's a strategy that most of the companies are following within the staples or snacking categories. But at the same time, pricing, of course, is going to be a big differentiator. And if there is a stress we've seen in the past where if things are going to be tough on an ongoing basis for a long time, I mean, there could be a reverse shift that happens from branded to unbranded.
And just for bookkeeping, unbranded does not include D2C or private labels and all of that, right?
No. It's actually only the ones which are not having any brand attached to it is being sold as loose, and the consumer what is paid for is what we call unbranded.
Understood.
It happens mostly in, say, edible oils and atta and salt, spices. So it's big actually. I mean, in edible oils, I mean, the unbranded penetration is around 62%. I mean, in spices around 40%. So it's not a small number from a penetration angle, because these are big segments that sits in those categories.
Well, the next big question is, as far as the listed, branded, organized space is concerned, when can we expect growth to return, or will players be forced to go ahead and tweak pricing?
Interesting one, actually. We do see what our forecasting, or the way we have seen markets so far from a data standpoint, is that I think this is probably going to continue for next couple of quarters. And there will be a recovery towards the last quarter of 25 is what we are seeing from the data science standpoint. And recently, we have just done one study to understand the consumer sentiments toward the future, because we are talking about improving macroeconomic factors, and also government is supporting on various things on taxation, etc. But we're still not seeing that reflecting into the behavioral angle. And even if that happens, we still don't know whether FMCG is really going to gain from that. So those are some of the areas that is not clear. But from a consumer sentiment standpoint, people are still skeptical. I mean, that's a recent report, as recent as 15 days back. We've just finished that study to understand the future sentiments part of it, but it's still people are holding back from a positivity standpoint.
So people are still holding back, and you don't see growth return until the fourth quarter of this year. But you also speak about data that you've cut across rural, urban, unbranded, branded, listed, and other branded, which is not listed. How have those trends played out over the last few years? Because a lot of experts that we speak to, they say that maybe, listed is not growing also because unlisted, but yet branded are doing a lot better, be it private labels of modern trade, be it the D2C companies, be it ones which are quick commerce, exclusive, etc. So are listed players becoming less relevant as barometers of true consumption? What's your thought here?
So you rightly said, I mean, at some point, I'm not even very far, once the COVID time or when post-COVID time, I mean, the listed players had that trust, and, those brands continue to grow faster because people chose to select those trusted brands more than anything else. But things are now getting diluted because now we are almost in the post-COVID era, almost 3 years down the line. We are seeing those smaller brands. You rightly said, not the unlisted, not the unbranded ones I'm talking about. I'm talking about even, for example, Joy in face wash. That's one of the fastest growing brand in face wash category. Even so as Mamaearth, which is growing faster. These were not in the top 10 list of clients. I mean, maybe a few years back. But I think they are now actually getting into the share, maybe the kind of innovation they're having and the kind of product portfolios that they're having, which is actually helping to grow those brands. So while the bigger brands still bigger, no doubt about that, because we can't really challenge their space in those categories. But those challenging brands are really growing much faster because they are far more agile and far more innovative in nature.
Manoj, when you're talking about quick commerce, it's been around for a while now. Does that increase overall consumption trends, or does it cannibalize from other channels?
So quick commerce, if today, I mean, if I just talk about only top 6 metros, e-coms actually stands around 31% penetration today. That means 31% from an FMCG standpoint. E-commerce can be much larger when you look at other categories. And quick commerce is around 12% today. So from a top 6 metros. So while the consumers are all omni-channel consumers, because there are no only e-com buyers or only GT, I mean, obviously there will be a direct overlap with the GT consumers. So from a consumer level, there's a clear overlap. But from a spend standpoint, we are seeing a big shift in terms of expenditure when it comes to quick commerce. People are buying more premium categories when it comes to the premium is growing much faster when they're buying from quick-com. But only thing is, we still need to understand if the overall market is 100, I mean, quick commerce is still 12%. So the ability of quick commerce to change the needle today towards the extra spending is still limited. But of course, it's growing naturally. And now the quick commerce players are talking about growing down to the other pop strata. So I think if that happens, I mean, things can be very different.
All right. So let's look at the crystal ball now from here on. Last time 5% growth happened was in the first quarter of last calendar year, which is Q4 FY24. What is your prognosis for FY25 on the whole, or rather FY26 on the whole, and FY27? What kind of growth do you expect for the sector?
FY26, I would say it's going to hover around between 5.5%. That's the kind of growth that we're seeing. There are a lot of other pointers that we called out. I mean, whether rural monsoon was predicted is very good for this year. If those are going to happen, I think this can be an acceleration. But right now, I think it's going to be hovering around 5.5.
What about the next year? Do you think it improving beyond that, or structurally growth has come down by a few percentage points?
No, I think it will improve in financial 26-27 is what our understanding.
To what? To what will it improve?
It will improve to around 6.2. I think that's the best we can think of at the moment.
All right, take that point, Manoj. Thank you so much for joining.
A lot of things happening at the same time, but I think this is a possible number.
It's understandable. Too many moving parts. You'll have to, and too many moving categories as well, so to say. Let's see how this goes by. We'll, keep touching base with you periodically to understand where you are on the consumer sentiment and how your prognosis is tracking with real world itself. With that, we'll take a short break. And as we slip into that short break, here's some good news for you viewers. In case you missed this conversation You can watch this on CNBC TV18's all-new app. Remember, it gives you instant access to not only breaking news, but in-depth articles and financial world updates, all of them at your fingertips. All you got to do is download the CNBC TV18 app from either the Apple Store, the Google Play Store, or just scan the QR code, which is there for you on the screen.
Welcome back to Halftime Report. Well, some very interesting news flow coming in at the bottom of the screen. Last week's big news, which was the Donald Trump-Elon Musk fight that kept escalating, now clearly seems to be awaiting. Elon Musk has now taken a conciliatory tone and has just tweeted. What does its tweet say? He says, "I regret some of my posts about President Donald Trump last week. They went too far." So clearly some scale back as far as the tensions were concerned. Remember, this has had significant implications. Number one, on Tesla itself, the share price of Tesla did see significant volatility in the week gone by. It fell almost 20-25%.
Right.
Has rallied a little bit from the recent lows. But despite that, this is something that street markets as well as USA itself will take a little positively.
They will take that a little positively. It will be very interesting to see what happens because, when the Trump and Musk conversation on Twitter was going on and, the focus of Trump was all internal in the US. So all the trade deals of the world or all the trade-related uncertainty of the world was taken care of because of the focus being domestic. Now that domestic problems are being sorted, with Elon Musk actually backtracking what he said, will the focus be back on trade uncertainty over the world or not is something that we'll most definitely keep an eye out on. But what happens to the Indian market as a result of all of this? with the levels at which we are trading, Indian market is approaching too expensive levels. That's not my word, that's not Vivek's word, that's the word coming in from Goldman Sachs' Sunil Kaul. He shared his take on cement and defense stocks as well. Let's hear out what he had to say.
I think the issue obviously remains that the valuations have kind of re-rated back to 23 times, which is expensive. And so we don't have as much upside at the index level for Nifty. So we have a 26,200 for Nifty, which is, I guess, 4-5% upside from current levels. And if you bake in currency appreciation of 2-3%, that's roughly around 6-7% upside in dollar terms, which is not bad given where the markets are. But we think it's kind of more a stock pickers market, more sort of alpha beneath the headline index. And that's where we are advising people to pick up stocks and sectors. In our allocations, we are underweight cement, we are underweight industrials. So we do have that strong preference of financial consumer versus the rest of the market. But we are sort of neutral on defense. So if there is one theme within that broader manufacturing industrials complex where we still feel that there is more to go, given how the geopolitics and the world is moving, that would be defense. So we wouldn't be sort of cautious on the defense names. I think there is more room for that to come through if that gets backed up by the government orders and all of that. But we will be probably more cautious on very highly capex sensitive sectors, which are more to do with sort of construction cycle, so to speak.
Well, clearly a preference there as far as the defense space is concerned, especially post-Operation Sindoor. Well, we'll now slip into a short break, but before that, some important updates for our viewers. Remember, you can stay updated on your favorite stocks with Money Control Super Pro. Receive real-time alerts with AI stock update feature of Super Pro and get insights on key corporate announcements on stocks of your choice for quick decision-making. Get your investment superpower today. Subscribe now.
Welcome back. 110 points higher on the Nifty. Strides Pharma is one of them, which is making big strikes right now, up around 6% as we speak, doing extremely well. And KPIT Tech is the other one, which has seen a big spike as well at the high point of trade. So a bunch of stocks doing well, but that's about our equity coverage. Let's get to Manisha Gupta, who joins in for all things commodities. Manisha, what do you have on your radar today?
Plenty.
As always.
As always. But Mangalam, it also is about the dollar index, which has seen a bit of a decline. It also is about the fact that you have the US inflation numbers coming in today, where headline inflation at 2.5 and core at 2.9 is what the markets are working with right now. But anything more and less, and that would impact the dollar index and, of course, various asset classes, including commodities. Well, let's put that question across then to Kishore Narne. He is Director Head of Commodities at Motilal Oswal. Kishore, hi. How are you reading the US inflation numbers, and what's your sense on what those numbers could be and its impact on dollar index?
Morning, Manisha. I think, inflation numbers are better than what market was looking at, and that's where actually dollar also have slightly positive this thing. But at the same time, the rhetoric is increasing further that there should be a rate cut, and probably as we all anticipate, or most of the market is anticipating that this FOMC, they might keep the rates flat, but probably the next FOMC, they will be doing a rate cut. So I think that's actually boosting a little bit of risk sentiment in the markets, and that's expected to push up the risky assets, including the industrial metals as well as some of the equities across the board. I think the overall thing is I am expecting inflation to further soften, and I'm expecting, excluding the tariff impact, they might be forced to do a rate cut in the next meeting.
The other thing that the street is watching out for, Kishore, is clearly the US and China trade agreement conversations, and they seem positive as well.
Yes, I think it's mildly positive. I can say that because they have not come out with any big bang. So probably they have agreed on the framework of how the talks have to proceed from here, and what's the basis for their talks and all. And again, even that is subject to the approval of their respective governments. I think so. But it's a start at least, and it's something that the market will be looking at as a positive development. But again, if there is any negative news, if both the representatives go back to their respective presidents, and if there is any discrepancy there, and if the presidents don't approve this framework, then probably the market will go back into the tailspin. But keeping that in mind, actually today, most of the risky assets are getting benefited from that across the board. Though we are seeing a rally in gold and silver, I don't think that will hold at this point of time if that's going to be true.
So when you talk about the risky assets, and would you include metals in there? Because we've seen some support continue in case of copper. Also supporting copper is a backwardation, almost $1,000 a ton of a backwardation there. How do you read that?
Yeah, of course. I think, that's impact of tariffs also, because there's a lot of inventory built up happening, especially in the Western countries and US. There's a huge upfronting of the demand. So that's actually pushing up the backwardation. But I think, supporting, $1,000 was on the cards for some time. $970, $960 is something which would be $9,600 to $10,000 per ton is something what we are looking at. So anything close to that is going to be very difficult to sustain. But again, having said that, short term, both aluminum and copper are looking very positive, and if this talks between China and US progress a bit also, that will increase this positive outlook. So both aluminum, zinc and copper, I think all these three metals are looking positive. For today, anything close to 870, 865 is a good level to buy. On the top, it should be around 882, 883 is the upside potential.
Since metals are doing well, would you count silver within that? Because it's more an industrial metal and less a safe haven now.
Yes, I think, of course, that's what we have seen in the last week or so, where the silver outperformance significantly dominated the precious metal segment. But again, 36 is where a little bit of breather is expected. Probably we can see some corrections coming up. Both gold and silver, I'm expecting a technical correction from here. So that's what I'm seeing. Probably today, both of these may not hold these gains. So towards the end of the day, there should be some dips coming up in both gold and silver. Anything close to 1,07,000 in India is where I would be looking at a short-term selling opportunity. Downside could be 1,05,500, 1,06,000, probably 1,000 to 1,500 rupees downside could be potentially possible. Gold also anything close to 97,400, 97,450 in Indian terms. I'm looking to short-term sell as an opportunity. Downside could be 96,600 odd levels, around 700-800 rupees levels. So though intraday gold is still looking positive, it had done a gap up today. But I have a suspicion these gains might not hold, and towards the end of the day, we might see correction in both gold and silver.
All right, we take that point, Kishore. Thank you so much for joining in and giving us your views on a bunch of these commodities. Manisha, thank you for taking us through with that conversation. With that, we are out of time on this edition of Halftime Report of the News. The Nifty is still holding with gains of almost 100 points. The Nifty Bank has trimmed some of its gains, but still holding with a gain of almost 80 points. Take your leave. Business Lunch takes all the market action ahead.
Stocks trade range after US and China agree on a trade framework, but China's curbs on exports to India are a new bother. Oil and gas stocks are beginners while FMCG drags. China's curbs on rare earth magnet exports are starting to pinch, with Maruti Suzuki likely to push back the launch of its e-Vitara. The automaker also trimmed its output target for the model till September. Maharashtra has raised excise duty on Indian-made foreign liquor while keeping the levy on beer and wine unchanged, sparking big moves in the stock. The state has also introduced a new category for liquor made locally. US and China reach an agreement on trade after high-level talks, and the negotiators will now seek approvals from Trump as well as Xi Jinping before implementing this based on the Geneva framework. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and thank you so much, as always, for tuning in. What we're seeing in terms of a trading session coming in, pretty much a muted day that we are seeing coming in from the broader end of the market. But benchmark indices, like you can see, are managing to hold on to green. So Nifty, day's highest point as of now, 25,200 is what the Nifty is holding on to. Sensex holding on to similar level of gains as well. So good performance coming in from the benchmark indices. Now let's pull up the mid and small cap. That's where a bit of a subduedness is coming in, a bit of an underperformance in today's trading session is what we're seeing from the broader end of the market. Nifty mid cap as of now has slipped into the red again. Small cap is just flip-flopping between the red and the green so far. So keep an eye out on that. What is doing well today? We are seeing those oil and gas names that are buzzing in trade, right? You saw IOC, HPCL, BPCL buzzing in trade after the US oil body Energy Information Administration has released the crude oil outlooks. On the back of that, we're seeing all these names buzzing in the trading session. What's not doing well? What is the sector that is in the red today? We have Nifty FMCG that's trading in the red today. So you're seeing some bit of a subduedness coming in for Nifty FMCG, trading almost near the day's lowest point, down almost 0.5% in today's trading session. But on that note, let's shift focus and put the spotlight on alcohol beverage companies, right? They are in focus. Why? Maharashtra government has hiked excise duty on Indian-made foreign liquor by 50 to 60%. Mangalam is here to get us more details on this front. Mangalam, over to you.
Well, look at United Spirits, look at Radico Khaitan, and look at Allied Blenders today. All of them are lower in today's trading session, and sharply lower that too, because the Maharashtra government has gone ahead and hiked excise duty, and the following changes will be made in excise duty rates. Indian-made foreign liquor, the excise duty has been increased from 3 times of cost of production versus to 4.5 times. So that's a 50% jump. Remember, these stood to benefit from the duty reduction on import of bulk scotch as well. So in lieu of that, there has been this increase. Excise duty on country liquor has been increased by 14% from 180 rupees to 205 rupees. And there has been a new category introduced, grain-based foreign liquor called Maharashtra-made liquor, which is, permits to be given to people who are producing this only in Maharashtra, for which they will have to reapply for all of these licenses. So put all of this together, the minimum retail price for a 180 ml bottle would be 80 rupees for country liquor, 148 rupees for Maharashtra-made liquor, and 205 rupees for IMFL. For premium foreign brand, it would be about 360 rupees. For United Spirits and Radico Khaitan, nearly 20 to 22% revenue comes in from Maharashtra for United Spirits, 7 to 8% on Radico Khaitan. All things being equal, Street expects about a 6 to 8% EPS impact on United Spirits and 2 to 3% on Radico Khaitan, and similar is the expectation on Allied Blenders as well. But amidst all of this, there are 3 stocks in particular which are doing a lot better in today's trading session. GM Breweries up in mid-teens, and that's largely because the Street expects the company to benefit from the introduction of the Maharashtra-made liquor category, though they will have to re-register the brands with the state. The second part is United Breweries. That's doing well, as there has been no increase in duty in beer, and the Street expects shift from spirits to the premium beer category, another thing that United Breweries has been pushing as well. And finally, we're looking at Sula Vineyards. That stock too is high in today's trading session, because wine is one not mentioned in the excise duty increase. Maharashtra is the largest producer of wine in the country, and the stock itself is down about 40% from its highs because of weak growth. So can all of this spur growth back into an underperforming stock is what the Street is betting on, and that stock, as a result of which, higher today.
Thank you so much for that, Mangalam. But just marking the flashes at the bottom of your screens, we have government sources who are saying that the Power Minister, Manohar Lal, is to conduct stakeholder consultation on market coupling and ministers to apprise stakeholders on the benefit of market coupling going forward. Whenever it takes place, market coupling will happen through broad bid, not an internal bid, is the word coming in so far. This is according to government sources. IEX is the stock that we're keeping an eye out on right now. But other than that, let's move on. And the government is now exploring course of action for India rare earth and can be leveraged for production of these rare earth magnets in India. Parikshit is joining in with us to give us the details on this front. Parikshit, we've heard a lot coming in, especially in terms from China, but what is India doing on this front? What are you picking up now?
Well, this seems to be a very grave issue for the Indian automotive industry. In the near term, there doesn't seem to be a solution apart from stopping production if the industry does not get those rare earth magnets from China. There is no alternative source at the moment. Having said that, the government is holding almost daily meetings when it comes to the rare earth magnet issue. The Commerce Minister Piyush Goyal held a meeting on Sunday with all automakers. The message was that the government will do whatever it can to support medium to long-term self-reliance in rare earth magnets. One issue that is being explored right now is how India Rare Earth Limited, which is an existing PSU looking into mining of rare earth, how this PSU can be leveraged, its capabilities can be leveraged in order to have a domestic supply base of rare earth magnets that the industry needs. At the same time, how can public-private partnerships be considered with India Rare Earths Limited so as to increase its capacity to manufacture in the months to come. The government is also considering ways to give capital subsidies, incentives, maybe a PLI scheme to the industry to have a domestic assembly, processing, and also recycling of used rare earth magnets in India as well. All of this is going to take time. But what will happen over the next 3 to 4 months in the near term? Well, we've been told by our sources that the Indian embassy in China, the Indian ambassador, has taken up this issue with the Chinese Commerce Ministry. They are seeking transparency in the application process and the early approvals of applications. The Director General of Foreign Trade in India also held a meeting with automakers to discuss this issue. While the applications have been cleared from the Indian side, they are pending with the Chinese government. 30 to 35 automakers, component makers have sent applications to China. None of them have been approved. An Indian industry delegation was supposed to go to China for a meeting with the Chinese Commerce Ministry. They are yet to get clearances. And when I say clearances, essentially they are yet to get a meeting with the Chinese government. Let's see what happens. But clearly this is a tricky issue. The government is trying to see how this can be resolved diplomatically in the next 2 months. But a PLI scheme is also being considered for the long term.
Absolutely, Parikshit. Thank you so much for that. A tricky issue, important to watch out for in the next couple of months, how these discussions will go and what is the solution we come out from the India point of view as well. But now shifting focus, and sources tell CNBC-TV18 that the Customs Department issued notices to 2,000 copper importers for paying low duty for several years. Timsy is joining in with us to give us more information on this front. Timsy, afternoon. What are you picking up here?
Well, yes, what we are given to understand from sources is the fact that the Customs Department is probing a case that is a pan-India case of duty evasion by the copper importers under the India-ASEAN FTA. What we are given to understand that the Customs Department currently has issued notices to over 2,000 copper importers for paying lower duty, that is at around 0% by wrong classification, whereas they are liable to pay 35% is what the Customs Department say as per the value addition rules, and thus they have demanded the payback from the industry along with demands of bank guarantees. Meanwhile, Customs Department in these notices have actually come forward saying that they have validated this through third-party data from producers in Vietnam, and that is what is backing their claims. On the other hand, when it comes to how industry has reacted to it, well, industry has approached Finance Ministry, knocking the doors at Finance Minister's office along with the Revenue Department, seeking an urgent intervention because this, according to them, is arbitrary. And yes, these retrospective claims are actually impacting the entire sector. Industry via Bombay Metal Exchange has issued an urgent appeal to the Finance Ministry urging immediate action. They claim that these imports are essential for AC and refrigerator manufacturers in India who are getting impacted, and these claims are arbitrary and retrospective, which should not be the case because it does not go well with the FTA's spirit. So let's see what happens finally in terms of how do these customs notices actually fare out for the industry, whether the department gets some payout or it lands up at the courts again in a legal battle. Something
absolutely,
that we have to wait and watch for.
Absolutely, Timsi. That is what we'll be watching out for. But on that note, we're going to actually slip into a very short break. So thank you so much, Timsi, for that. But here's some update coming in for our viewers as we slip into the break. Stay updated on our favorite stocks with Money Control. Super Pros receive real-time alerts with AI stock update features of Super Pro and get insights on key corporate announcements on stocks of your choice for quick decision making. Get your investment superpower today. Subscribe now. Welcome back to Business Lunch on CNBC-TV18. Now let's move on, and sources say that the government is encouraging financial entities to use Central Registry of Securitization Asset Reconstruction and Security Interest data for KYC. Sapna is joining in with us to give us more details on this front. Sapna.
Well, what we are picking up is definitely on these lines that, the government is very keen that the practice of giving central KYC a unique number, it's a unique ID, that should be given by the regulated entities to the existing customers. This is what should be used. Basically, they are trying, the government along with all the other stakeholders, including the financial sector regulators, they are really trying to push this because the practice of using a central KYC in terms of your overall KYC process can really help in cross-utilization of the data where all the other financial sector regulators don't have to keep asking for the same documents again and again. Like you switch from one bank to another, again your KYC documents are asked for. So basically, the onboarding of existing customers should be done on the basis of the central KYC unique ID. But what we are observing is that probably this practice is not really picked up to the extent that is required. So government is making an all-out effort. A lot of sensitization has already happened in terms of financial regulators telling their regulated entities, as well as the government coming up with this matter also in the FSDC meetings, which have just got concluded yesterday. The finance minister has also reiterated that the entire process of KYC should not only be digitized, but also should be simplified. One last quick point here in terms of downloads, uploads and updates. That's a very important criterion to judge the sanctity of the central online registry. Well, those downloads have really gone up. 150 crore is what we're talking about as of May 31, but the government wants to encourage that even further.
Absolutely, Sapna. Thank you so much for that. Now, moving on to an exclusive, governments also say that the Power Minister Manohar Lal is planning to conduct stakeholder consultation on market coupling. Abhimanyu is here to give us more details on this one. Abhimanyu, over to you.
Well, what we have learned from sources is that Power Minister Manohar Lal is going to meet stakeholders over the issue of market coupling and is going to apprise stakeholders about the benefits of market coupling. Also, sources have indicated that whenever it takes place, whenever market coupling takes place, it will take through a broad bid and not an internal bid. Now, market coupling by definition means aggregation and match of buy and sell bids by power exchanges for a uniform price discovery. And if at all, market coupling, when it takes place, it will imply a single price for electricity to be traded at any point through the power exchanges. Now, it has been some time since market coupling has been indicated that the policy would come out in the public domain, but there hasn't been any activity on that front. There have been indications which have been given since the past few years by several ministers, even in the previous government, that is from 2019 to 2024. The then Power Minister R.K. Singh had indicated that market coupling will eventually take place, but had refused to ascribe any timeline to that. Also, on the 21st of February, the Power Secretary had indicated that the Ministry and the CERC were reviewing the Grid Controller of India's report on market coupling. And a government official last year in September 2024 had also told CNBC-TV18 that market coupling is on the cards, but had refused to ascribe any timeline to that. And now, with the fresh set of inputs, of course, it remains to be seen how early this meeting would take place, what kind of suggestions would be given by stakeholders, and what action would further be taken by the minister.
Okay, Abhimanyu, thank you so much for that. And since the time we flashed the story, you're seeing that the stock has fallen in trade. But Abhimanyu, do hang on with us, because India-US bilateral trade agreement negotiations are also something that will be taking place 4th of June to 10th of June in New Delhi. And you were tracking this as well when these updates happened. Could you give us more details on the discussions as well as the negotiations that happen right now?
Well, the negotiations took place between the Indian negotiating team and the visiting team from the United States, which was led by the Assistant U.S. Trade Representative from the 4th June to the 10th of June in New Delhi. And now several issues pertaining to market access, pertaining to technical barriers to trade, legal framework, and also several other concerns on sanitary and phytosanitary issues were discussed between both the sides. Now, both the sides are looking to sign an interim deal before the 9th of July to avert the applicability of reciprocal tariffs, which have been stayed till the 9th of July by the United States. And both the sides are also looking for the first tranche of a bilateral trade agreement, which they are looking to sign by the September or October of this year. Now, concerns exist on both the sides. There are sensitive issues for which both the sides are making their respective pitches. Speaking of India's stand, India till now has indicated that it is going to bilaterally resolve the issue of steel and aluminium tariffs which have been levied by the United States. Also, India may be looking looking at a minimum import price for products in the dairy and agriculture sector to protect sensitivities. Apart from that, market access continues to be a big issue for both the sides, even as negotiations continue, and both the sides are looking to conclude negotiations at the earliest.
Okay, Abhimanyu, thank you so much for that and giving us the updates on both the fronts as well. But on that note, we're going to step into a very short break. We'll bring you more on the US-China trade talks on the other side of the break, so do stay tuned in. Welcome back to Business Lunch on CNBC TV18. Now, updates coming in on the US-China trade talk front. After 2 days of trade talks, US and China reached an agreement to ease retaliatory tariffs as well as the restrictions on the export of rare earths. We have CNBC's Sylvia Amaro, who's getting us the latest update on this front.
U.S. and Chinese trade officials have agreed on a trade framework after 2 days of talks here in London. In the words of the U.S. Commerce Secretary, it puts meat on the bones of a deal reached last month in Geneva to ease bilateral tariffs. We have little insight, however, on what has actually been agreed after talks wrapped up at around midnight local time. What we do know, though, is that the deal adds to what was decided in Geneva last month, with both sides agreeing to ease tariffs, while also easing China's export restrictions on rare earths. China's international trade representative Li Changgang and the U.S. Commerce Secretary Howard Lutnick offered measured remarks after talks drew to a close.
In
the past 2 days, the Chinese and U.S. teams have had in-depth exchanges. Our communication is very professional, regional, in-depth, and candid. In principle, both sides agreed on implementing the consensus reached by the two heads of state on the June 5th in the phone calls and also the Geneva talks.
I think both sides had extra impetus in order to get things done because we both have our presidents behind us, pushing us to make sure we take care of our respective sides.
And then some more on big news coming in from the United States. A billionaire and Tesla CEO Elon Musk has apologized on X for his recent post on President Donald Trump. He wrote on X that he regretted that some of his tweets had gone too far. Now, shifting focus, protests against U.S. President Donald Trump's immigration policies continued in Los Angeles on Tuesday. Local authorities mandated a curfew in some areas of the city. Los Angeles Police Department said that the protesters were being addressed and mass arrests are being initiated. The arrests and the curfew followed several days of intense protests against the ICE raids, leading to clashes between demonstrators as well as the law enforcement. Widespread vandalism and some looting, particularly during the late night and early morning hours. The curfew, which began at 8 p.m. on Tuesday, will last till 6 a.m. local time on Wednesday. Earlier, police arrested another 197 people for the violence there. Meanwhile, the launch of Axiom 4 mission carrying India's Shubhanshu Shukla and 3 others to the International Space Station has been postponed again due to the leak of liquid oxygen in the rocket. This is the second delay in as many days, and Shukla's travel to space will mark India's return to human space flight after over 41 years. And with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, your Midcap Radar.
Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Vivek Iyer. Good afternoon to you, Vivek. Well, it's been a steady, slow rise for the markets, but at least, thank God, at least the benchmark indices are in the green. Cannot say the same for the midcap end of the market though.
That's right. Good afternoon, Vamakshi. Vamakshi, just an hour ago when we were on air, we were talking about how markets, especially the Nifty Bank, after a brief breather yesterday, was back in the green. But just in the last hour, we've seen quite a bit of a sell-off. But we have quite a lot lined up on the show. Let's start off with the top headlines. Stocks move steadily higher after US and China agree on a trade framework. But China's curbs on exports to India are a new border. IT, metal and pharma stocks are big gainers while FMCG drags. Mid-caps lag.
Maharashtra has raised excise duty on Indian-made foreign liquor while keeping the levy on beer and wine unchanged, sparking big moves in stocks. The state has also introduced a new category for liquor made locally.
OMCs higher after US oil body Energy Information Administration releases crude outlook. Says rising global oil inventories will drive crude oil prices lower.
Oil India surges after a Vendis Spark initiates coverage with a buy and a target of 630 rupees. Brokerage firm expects over 80% earnings growth potential over the next 3 years.
Aditya Birla Capital rises after 2.34 crore shares worth 568 crore rupees change hands, while Marksans Pharma also gains after a block deal worth 257 crore rupees. Welcome to Midcap Radar. Well, the big story as far as the last half hour is concerned has been the fact that market coupling could be back on the table as far as the Indian power spot market is concerned. We are talking about the short-term power exchange. This is a story that was done by our colleague Abhimanyu from Delhi. And the simple, one-liner as far as this particular story is concerned is that the power minister is going to conduct stakeholder consultation as far as market coupling implementation is concerned. The reason you are seeing quite a sharp downtick as far as IEX is concerned is that it means that there could be increased competition. Remember, IEX is the single largest player as far as the spot market is concerned. Any competitive intensity rising for the spot market is something that market participants view negatively as far as IEX is concerned. That explains why the stock is now perched at the lowest circuit. But we have Horma standing by the wall. He'll take us through all of the stocks in the broader end of the market that are moving around.
Well, IEX has grabbed all the spotlight, right, over the last few minutes, and that takes away from the fact that there are plenty of other movers in the broader market. So we start off with some green, since Vivek has mentioned a lot about IEX. It's just down in the dumps right now. But look at Walkhard. There's a very sharp spike that we had seen somewhere around 11:30, and since then the stock has moved 15% higher now on that stock in Walkhard. Positive commentary coming in from Oil India on a brokerage note. Newland Laboratories and Sterling and Wilson too. Newland Laboratories now at the highest point of the day, 7% higher for that stock as well. Now, some of the others in today's trading session, the Alcobev names, they were the ones that were in the spotlight since the morning. And United Spirits at one point was down 8%, still down 7%. Allied Blenders also. But bucking the trend here, GM Breweries and Sula, it's 16% higher on GM Breweries, 8% higher on Sula. And of course, Sula, mind you, still below its IPO price of 357. But some of the other movers in the profit booking coming in for these capital market linked names, BSE, of course, we just mentioned the fact that it has been put under additional surveillance now, 5% lower on that stock. CDSL, MCX, Motilal Oswal, all of these names have risen anywhere between 30 to 40% in the last 1 month. So seeing some bit of profit booking from higher levels. On the other end, stocks that are doing well on the volumes front, Tata Tele Maharashtra was the top gainer on the Nifty 500 today, 10% higher on that stock. CRISIL doing well for itself, and IKS on strong volumes is up 4%. And as Vivek was just mentioning, IEX among the top losers, of course the top loser on the Nifty 500 now, 9% lower on that stock. And of course some profit booking seen in Garden Reach, Zen Technologies, the defense names, and KFin Tech 2 at the lowest point of the day. Back to you guys.
Well, thank you so much, Hormas, for that comprehensive list. I think it's a good time to now welcome in Jay Thakkar from ICICI Securities for a technical check on the market. Jay, very good afternoon to you. This is Vamakshi joining in. Jay, what is your take on the markets for now? We saw a very strong, steady rise from the muted start that we saw, but it has come off slightly from the day's highest point. Where do you think the markets are headed now?
Very good afternoon to you, Vamakshi and Vivek. Well, see, as far as the Nifty is concerned, I think that since last week. I mean, since Friday, we have seen this breakout coming beyond the levels of 25,000, and it's been almost 3 consecutive days is what we got a close about 25,000. So that level becomes a clearly important level. Also for this weekly expiry, Mamakshi to see. And 25,100 and 25,000, these are the two strikes wherein we have good amount of put base. However, on the upside, there is just 25,200 wherein we are seeing the immediate call writing, and that would act as a resistance, which is, in fact, and that's the reason we have seen the index correcting from the high levels. It did move beyond the levels of 25,200 but could not sustain above it. So I think that the expiry could be between this range of 25,200 to 25,000. However, the probability of breakout post this consolidation is upside only, because overall, if you see the banking and financials, which had actually got a breakout, are almost about to retest their breakout levels. And once that retesting happens on both Bank Nifty and Fin Nifty, I think the upward journey again would start out there. So buy on it should be the strategy on Bank Nifty and Fin Nifty, on the financials, because they have been correcting since 3 days now. Nifty has been like first day after this breakout, wherein it's consolidating. So overall, the trend is bullish. I think till, positionally 25,000 on Nifty and 56,000 on Bank Nifty, these levels are held. The overall trend will be bullish.
Well, Jay, thank you so much for your market views. Individual stocks, do you have buy calls? Do you have a buy and a sell as well?
As our outlook is positive, I have two buy recommendations. First one is on GAIL Authority of India, that is Gas Authority of India, GAIL. The stock has provided a very nice breakout from an ascending triangular pattern, coupled with a long build-up in the derivative segment as well. It's been after a long time that, the open interest has started moving up with the price, and the positions were quite low. As far as future segment is concerned, Vivek. So one can go long on GAIL. It's currently trading around the levels of 199. I think 194.5 would be a good stop loss on the downside, as that's a crucial support. And on the upside, one can target 210 to 215. That would be my first target. My second buy recommendation would be on, from the metal pack, and that's on Nalco. In today's trading session, we were seeing that, it's trading sideways to negative. But then, Vivek, overall metal have, come back into the momentum, and I think Nalco could head towards the levels of 205. Positionally, one can go long on this, placing a stop loss below 185.
Well, thank you so much for that, Jai. So keeping an eye out on both GAIL as well as Nalco. But before we slip into a very short break, then let's take you through our newest offering. CNBC-TV18 Access is a premium membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, as well as master classes and curated lifestyle benefits. Designed for an immersive and enriching experience, it empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influences. Yours to claim. Become a member. Log on to cnbctv18.com/access/plans. Welcome back. You're watching Midcap Radar on CNBC-TV18. Let's put the spotlight on BSE. Keep in mind that the stock had recovered as much as 130% from the lows that we saw in the month of March. In fact, the stock had been gaining momentum over the last 9 sessions. It closed in the green, but today it is taking a bit of a breather. The stock is down as much as 5% in the trading session today, and let me take you through the reasons. First up is the option premium turnover in the last 5 days. If we look at the trend, of course, when you look at the Tuesday, it is the day of the weekly expiry. Therefore, the volumes do tend to be higher. But when we look at the average option premium turnover in the last 5 days, it stands at 10,824 crores. This is much lower as compared to the average options premium turnover that we've seen both in the month of May as well as in the month of April. It has ranged, on an average in the last 2 months at 15,500 odd crores. In fact, when we particularly focus on the expiry days as well, we have been seeing the average option premium turnover in the previous 4 expiries, not the one that is on the 10th of June, but from 13th of May to 3rd of June. These are the 4 expiries that I'm talking about. Out here, the average option premium turnover was 41,815. Now, when you look at the expiry that took place yesterday, the options the premium volumes seem to have dipped by almost 50%. So therefore, it's a very large dip coming in as far as the volumes are concerned. The third point is on the market share. Now, when we look at the market share for BSE, keep in mind that in the month of December, the market share was at 16.4%. It then improved to 23.6% in the month of April. And this came on the back of the change in the day of the expiry from Friday to Tuesday that happened in the month of Jan. Now, when we look at the market share over the last 5 days, it has slipped by 70 basis points to 22.8% as if we compare it to the whole month of May. Today as well, there is a negative news flow around the counter wherein, it has been highlighted that BSE has been added to the stage 1 of the additional surveillance measures framework. And resultantly, on account of that, the trading on the stock rather will now attract a 100% margin. So that's another negative coming in for BSE. So largely, if we, just to conclude why the stock is down, first up is, there has been a decline in market share. Of course, the volumes in the option premium turnover have fallen, and given that the stock is seeing a downtick of almost 6% in trade today, even though Vivek, the stock had been making fresh highs consecutively.
Well, Vamakshi, clearly not a good day if you're an owner of any exchanges today. BSE, some negative news flow, MCX2 under pressure, and IEX, just an hour ago, our colleague did tell us about the worry of market coupling once again being in focus. But what's doing well today is the entire oil and gas pack. Oil India is in focus after a note from Avendus Spark. Sudarshan joins in with more details.
So amidst an all-round gain in the oil and gas space, one stock that is moving higher on the back of a positive brokerage note is Oil India. Avendus Spark has today initiated coverage in the stock with a buy call, and the target has given is of rupees 630, implying an upside of more than 41% from current levels. Avendus Spark believes that there is a potential of more than 80% in earnings growth over next 3 years, which is going to be led entirely by volume increase that company is going to see, and which will be added by increased capacity at Numaligarh, which is going to see high single-digit growth in the production. Also, Numaligarh project is expected to be completed by 2025 end and is likely to contribute to earnings by FY27. Some of the other catalysts that it has mentioned is first, infra projects provide better visibility on production growth. Also, new well gas pricing could be an added positive. So as per Avendus Spark, the recent correction that we have seen in commodities can be a good entry point as far as Oil India is concerned.
Well, thank you so much, Sudarshan. Even as we see quite a bit of a sharp sell-off emerging as far as the broader end of the markets is concerned, this particular stock well in the green, up over 5%. Well, before we slip into a short break, some important updates for our viewers as we understand that we could enhance our technical analysis with ready-made chart patterns feature from Money Control Super Pro. Monitor chart patterns as they develop live in the markets and be the first to seize opportunities. Get your investment superpower today. Subscribe now.
Welcome back. You're watching Midcap Radar on CNBC-TV18. Pull up the intraday chart for the Nifty index. We've seen the index significantly cool off from the day's highest point. In fact, when we compare the price right now, it's almost 100-point downtick as compared to the day's highest point. The mid-cap end of the market too is not doing too well. As far as some particular stocks are concerned, from the Nifty pack, we're seeing some very sharp falls on Shriram Finance. In fact, in the last 1 hour, the stock has given up 1% worth of gains. BL2 seeing a fall in today's trading session. But apart from that, when you look at the mid-cap end of the market, that is also taking a big knock. It is underperforming the benchmark indices. The mid-cap index is down almost 0.7%, and contributing to the fall is actually Hindustan Zinc. Keep in mind that there is a board meeting scheduled today to consider the first interim dividend for the company. The stock has taken a knock of almost 3% in the past hour. GIC too down and out almost 2% from the day's highest point. But moving on then, let's also focus in on the World Bank, because it has lowered its 2025 global GDP forecast to 2.3%, citing increased trade barriers and policy uncertainty. Meanwhile, India stands out, expected to grow 6.3% in FY26, remaining one of the fastest growing major economies. Ritu is here to get us more details on this. Ritu?
Let me begin with India, which is projected to maintain the fastest growth rate among the world's largest economies at 6.3% for FY26. But this is a slight downgrade, about 40 basis points lower than World Bank's January forecast, mainly because of weaker global demand and rising trade barriers impacting our exports. Now, this number compares with IMF's forecast of 6.2% and RBI's own 6.5% projection for the fiscal. But India is expected to bounce back. Growth is projected to average 6.6% in the next 2 fiscal years, at 6.5% for FY27 and 6.7% for FY28, driven by a strong services sector and a recovery in exports. But the picture is far less optimistic for the global economy, where growth is expected to weaken to 2.3% this year, with deceleration in most economies relative to last year. This, the World Bank says, will mark the slowest rate of growth since 2008, aside, of course, from outright global recessions. Now, a slow and uneven recovery is expected, with growth inching up to 2.4% in 2026 and 2.6% thereafter, leaving the global output materially below the January projections. To compare, IMF's last forecast for global economy was a tad higher at 2.8% this year and 3% for 2026. Now, the World Bank says rising trade barriers, policy uncertainty, and geopolitical tensions are largely to blame. Growth in advanced economies as well as emerging market economies will still remain far below their pre-pandemic trend, and the per capita income growth in emerging economies is expected to lag behind the richer nations, and poverty reduction, especially in fragile and conflict-hit countries, is stalling. Now, global trade is also expected to slow down sharply to well below historic averages this year. The World Bank says risks are mostly to the downside. A major worry, of course, is if the US raises the average tariffs by 10 percentage points, for instance, and trading partners retaliate, global growth could plunge by another 0.5% this year. But if disputes are resolved and tensions ease, growth could also increase by 0.2 percentage points, which offers some upside potential.
Thank you so much, Ritu, for joining us and giving us all of the details as far as what are the World Bank expectations as far as global growth is concerned. Well, the last hour has not been a very pretty sight, especially if you're looking at the markets. Have a look at the Nifty. It's fallen almost 0.5% from the day's highest point, a 100-point downtick. But the bigger worry or the bigger fall is actually in the broader end of the market. Have a look at the Nifty small cap index. Remember, we started the day in the green, and in fact, if you look at the mid cap index, down almost 1.2%, the small cap index seeing a much steeper fall, down almost 1.7% from the day's highest point. Let's have a look at few of the stocks that are bearing the brunt of the selling pressure. First up, the entire power pack. Have a look at names like Power Grid. Remember, it's a heavyweight. Have a look at names like Torrent Power. Look at IEX. IEX has once again slipped to the day's lowest point. Vamakshi and me just discussed a couple of exchange stocks. So look at names like BSE as well as MCX. All of these stocks at the day's lowest points. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
suddenly e-commerce started to happen in India.
Yeah.
He was watching it here. I was watching Shopify in the US. And that was the point I realized that there is no Shopify in India. I thought, okay, well, I know how to build websites. I do HTML development, and how difficult can it be? Neither of our parents were convinced.
So they were not convinced for good 2-3 years.
3-4 years.
3-4
For
years.
3-4 years.
Yeah, you have to imagine how it was 2013, 14.
Yeah,
People not look at startup or founder like that
Yeah.
in that sense.
People
right?
were jobless.
From Craftly to Shiprocket, what was the hypothesis?
You know, India e-commerce is still fledgling. Nobody can predict how it will go. What do we do as a business, right? Okay, let's become the Twilio of shipping. A lot of times people still ask us, are you like Shopify? Are you like FedEx? And who are you like? I mean,
You're a little bit of everybody.
We're like us, right? Because we are solving a fundamental problem. In fact, we have noticed some other companies now in other emerging parts of the world in their slide decks calling them X of Shiprocket or whatever, Shiprocket of their country, right?
Hello, good afternoon and welcome to Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. And in the last 1 hour, we've seen that the markets have actually seen a fall coming in. As of now, when you're looking at it in terms of the Nifty, it's trading at the day's lowest point. As of now, still managing to hold on to gains of almost 0.1%, but 25,150 below that mark is what the Nifty is trading at. Nifty Bank, look at that as well. That has also seen a sharp fall coming in, and it's trading on the red side is what we're seeing coming in for the Nifty Bank as well. So a sharp fall there, 0.2% of decline coming in for the Nifty Bank. Broader end of the market was anyway seeing a bit of an underperformance coming in. So it seems like that was also something that has continued for the mid cap as well as the small cap. Mid cap now down 0.6%, and small cap too similarly is under pressure in today's trading session. That's how the market setup is looking like. There are just a few names like Walker that is surging away in trade today. We have some of these IT names like Infosys and TCS that are managing to hold on to good gains. We have HCL Tech, so IT is doing well. That's what we are keeping an eye out on. But this is a show where we solve all your stock-related queries, and to do just that, today we have our experts joining in with us, Asta Jain, Research Analyst at Hem Securities, and Somil Mehta, Head of Alternate Research, Capital Market Strategy at Mirae Asset Sharekhan, to solve all the stock-related queries. Afternoon, Asta, as well as Somil, and thank you so much for joining in with us. Let's move on and get started with the first query for today. This is a phone line query that we have coming in from PG James from Kerala. He's joining us right now, and he has an investment in Muthoot as well as IRFC. Mr. James, I'll tell you to take away the query. What is the doubt coming in? And afternoon.
Yeah, ma'am, good afternoon. Yes, I'm holding Muthoot Finance for a long time, and about at an average of about 170. About 1,300 plus stocks in that. Also, IRFC about 10,000 plus stocks bought about 39 average. I'm not in a hurry to cash in, but I would like to know in 3 years. I'm a senior citizen, so I don't have a very long thing, but about three years outlook.
Okay. 3-year outlook is what you have for Muthoot Finance as well as IRFC. Muthoot Finance is purchased at 170 rupees and IRFC is at 39 rupees. So you're making a profit on IRFC as well. And Muthoot Finance also, you are making a profit right now on this front as well. Asta, let me take this to you. 3-year time period is what the viewer is managing to hold on to. Mr. James is saying that he's already holding on for a while. What should he be doing in terms of a strategy? Book out profits, look at something else, or continue to hold both these stocks?
Hi, good afternoon to all of you. See, talking about first of all Muthoot Finance, I think it is a better choice to remain invested in this counter, because what we have seen is a robust set of numbers. First of all, a strong 40% growth in their gold loan portfolio. In fact, the asset quality is also very strong in this counter, and NBFCs are now the flavor of season. So there is no need to book out profit at this momentum of time. Maybe some short-term dips can be seen, but I think there is no need to worry for that. In the longer term, this is poised to move upwards till the level of 2,700 to 2,800. So these are short-term targets which I am giving. In the longer term, the targets can be much higher. But in the short term, that is from the time period of 3 to 4 months, this stock is looking good to us. So stay invested in this. Now, talking about IRFC, IRFC has started doing one very strong, good thing is that they have started diversifying their client base. So it is not only the Indian railways which they are catering to, but they are catering to the whole railway ecosystem now. So I think that is looking very strong to us. And the kind of margin this company is earning, it is very strong as compared to the other peers. So these two counters are looking very good to me. And I think there is no need to take the profits out from these counters. Remain invested in this counter. For IRFC, my target is 170.
Okay. Keeping an eye out on those levels over there. Fundamentally, both these are strong. Technically, Somil, both these continue to be on the positive side. Could we expect a further up move?
Absolutely, absolutely. Muthoot Finance, one of my favorites. It's broken out of a huge flag pattern, a consolidation in last 3-4 months, and this consolidation has broken on the upside. And I think strong uptrend on the higher time frame. I'll be looking for a much higher targets than 2750. Supports would be around 2400 and 2250. So these are two very strong, important supports for a medium to long term outlook. So hold on to the stock. The second stock would be IRFC. Okay, IRFC has a support around 140. Definitely a basing out pattern breakout on the upside for in the higher time frame, high top, high bottom formation on the weekly charts. great stock to hold on to. My targets would be around 170, 180 as well. Supports would be around 140 and 135. So hold on to both these stocks.
Okay, hold on to both the stocks. That's the view coming in from our fundamental as well as technical expert. Mr. James, I hope that answered your question, and thank you so much for calling in this afternoon. Moving on to the next query for today, Keshav Kumar is writing to us from Bangalore. He's holding 3,525 shares of Bajaj Housing Finance. Price is 143 rupees per share. So currently the stock is at 124, 125. So they are making a loss on this one. Wants to know if it could continue to hold for a time period of 2 to 3 years. As the 2 to 3 years time period, Bajaj Housing Finance, what's the outlook?
Outlook is positive. Why not positive? The time horizon is such a long duration, 2 to 3 years. So definitely one can remain invested in this counter. Although in the short term, we can see the price targets, or we can set the price target of around 136 to 140. Now, talking about this counter, first of all, AUM growth was very strong. And in fact, they have got a very good GNP and NNP ratio of around 0.29 and 0.11% respectively. In fact, ROAs of around 2.4% is also looking decent to us. The main concern in this is only the valuation, and that is why we are not seeing the stock moving higher to those levels. So right now in the long term, I think it's better to stay invested in. In the short term, one can keep the price target of 135 to 140.
Okay, keep an eye on those levels. And on the technical front, Bajaj Housing Finance, what should the viewer do, Saumil? They're making some bit of a loss right now, though 2 to 3 years is the time period.
There's not much data for the stock. However, in the very short term, I don't see much happening here. It's in a range between 130 and 115, and I'm expecting this range to be there for a little while. If the stock closes above 131, that is the 200 daily exponential moving average, then we can think of a good rally on the upside. But I will wait for that breakout on the upside. Once it breaks out about 131 levels, the next level on the upside would be 150. So positive in the short term, and buy on declines would be the strategy.
Okay, positive in the short term, buy on declines is the strategy that's coming in for Bajaj Housing. Next query for today, this is an investment query that we have. Praveen Kumar is writing to us from Kerala. He's asking if you can buy Uno Minda at current levels. Asta, what's your view coming in on Uno Minda? Is it the best play that you have in the auto ancillary side? Is there something else they could look at? What should they be doing?
Yes, I think it is one of the best play. Why? Because the kind of performance or the volume which this company is clocking in, it is almost 1.5 to 2x of the other peers. So yes, it is very strong as compared to its other peers. And yes, one can make an entry into this counter, but at the lower levels of around 1050 to 1060. This is what I can suggest as of now. However, price target can be set at around 1150 to 1200 in the medium term.
Okay, and on the technicals, Uno Minda, Saumil, what is that looking like? Last 6 months, not much of a move, right? It moves up, goes to that 1,100 around that mark. Then again, it's gone down to 800 levels as well. So should we watch out for a fall before, the viewer actually looks to enter Uno Minda?
I think now it's already broken out of a big consolidation. A downward sloping trend line has already broken on the upside. So in the medium term outlook, definitely positive. In the short term, maybe a sideways correction, because we've seen a good rally since last couple of months from 770 to 1090 levels. In the short term, I'll be expecting a small consolidation, a small correction. But in the medium term outlook, for a positional outlook, I think it's a great stock to hold on to. 980 and 950 would be a very, very crucial support to watch out for. On the upside, I'll be looking for all-time highs above 1200, 1250 levels.
Okay, keeping an eye out on those levels over there. Next query for today, we have a couple of stocks here. So Prashant Thakkar is writing to us from New Delhi. He's holding 100 shares of HDFC Bank. This is at a price of 1,400 rupees per share, and 100 shares of LIC bought during the IPO. So he wants to know whether he should hold or book profits for both the stocks. Asta, your view coming in on both these names, HDFC Bank as well as LIC.
So LIC, what we have seen is the volume uptick was there. We have seen the margin improvement. So in fact, LIC is also looking very strong to us, and one can remain invested in this counter because what we have seen is not much upside momentum from the IPO price. So I think there is much steam left for this counter to move upwards from here on the back of the industry tailwind also. So overall, this is a hold from my side with the price target of around 1150 to 1200. Talking about HDFC Bank, it is a no-brainer. Definitely a very good quality banking stock with a very good margins as well as asset quality. So we are keeping the price target of 2100 for this counter and recommending a hold as well as buy on dip strategy can also be applied to HDFC Bank.
Okay, buy on dip strategy can be applied to HDFC Bank. Keep an eye on that level also that Asta mentioned. But Saumil, on the technicals, what's the view coming in for LIC, right? Because after IPO for some bit of a time, it didn't do anything. Then we saw that run-up coming in, and now, it's managing around that 700 mark, above that level. So any worry coming in there? Should they just book out their profits? And HDFC Bank, both these.
HDFC Bank, let me start with HDFC Bank. HDFC Bank is a great stock to hold on to. Definitely in the very short term, the stop loss would be around 1885, and I'll be looking for a target of at least 2200. So this is a short to medium term outlook. In the long term, if you've seen a consolidation, we have seen a consolidation from last 3 to 4 years for HDFC Bank, and the range was broad. Now that broad range has broken on the upside very recently, and I'll be expecting this rally to continue in the long-term outlook as well, and I'll be looking for a target of at least 2,500, 2,600 levels. So that will be a medium to long-term outlook. So HDFC, a strong buy in the medium-term outlook. For LIC, it has started, high tops, high bottom on the weekly charts, taking supports at on the averages, and short to medium term outlook looks great. My targets in the very short term would be 1,10, and the next target would be 1,095.
Okay, keep an eye out on those levels over there. But on that note, we're going to slip into a very short break, viewers. And as we slip into the break, CNBC-TV18 Access is a premium membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses, and curated lifestyle benefits designed for an immersive and enriching experience. It empowers members with a premium business intelligence and a unique lifestyle benefit, the power of insight, the privilege of access, exclusivity, experience, and influence. Yours to claim. Become a member. Log on to CNBC TV18 Access Plans. Welcome back to your stocks on CNBC-TV18. We still have with us Asta Jain of Hem Securities as well as Somil Mehta of Mirai Asset Sharekhan to answer all your stock-related doubt. Moving on to the next query for today, we have Deepak Dave, who's writing to us from Gujarat. He's holding 30 shares of Raymond. This is at a price of 1,800 rupees per share. He wants to know the outlook of the stock and whether he should add more or exit the stock. He's bought it at 1,800. Stock is at 611. But I think that, lifestyle business demerger, and I think that also comes into play. But nonetheless, Raymond, what's your view coming in, Asta, on this one?
So I think one should continue holding this stock because with the demerger taking place, I think now the company will be focusing on its core business, and that will really help the company in posting good numbers. So one should give a chance for that, and only for that reason, I'm recommending a hold on this.
Okay, hold on this counter. Demerger also is something that comes into play as well. So the business is something that we could see some value unlocking. That's what Asta is highlighting. Somil, on the technical front, Raymond, they're not talking about lifestyle. They're only talking about Raymond. So what should they be doing now with this one?
Raymond, definitely positive in the short term, in the medium term, both. It has broken out of an inverted head and shoulder pattern on the weekly charts, taking support at 200 daily exponential moving average, high top, high bottom formation. Great stock to be in right now. Support would be around 580 levels, which is around 40 daily moving average. That will be a very crucial support. The targets would be around 760, 770 levels in the medium term outlook. So positive outlook in the medium term.
Okay, positive outlook in the medium term. So positive views coming in from both the fundamental and the technical front. Next query for today, Anthony is writing to us from Kochi. He's holding 1,500 shares of Bank of Maharashtra. This at a price of 56 rupees per share. Wants to know whether it's a good stock to hold on to for the long term. Asta, finally, again, a PSU bank has come in the show as well. We have a lot of these coming in on and off, right? Bank of Maharashtra, long-term story, good.
Yes, definitely, because the AUM growth or a CAGR growth in the AUM is 17.5%. So strong AUM growth with very good quality, asset quality, and the strong NIMs is making it a good play in the PSU banking space. So yes, one can remain invested in this counter with a price target of 65.
Okay, remain invested. Price target you can keep an eye out on. E65 is what Asta is talking about. On the technicals, Somil, what should we watch out for in terms of Bank of Maharashtra? Last 1 year, it's not done anything exciting, right? It's come off instead. 17% down in the last 1 year approximately. Are we expecting now a bit of a run-up? What are the levels they should keep an eye out on for the long term?
Since last 2024 May, I think the correction was from 73 to the bottom of 42 levels, and we have seen a very good run up in the couple of months from 42 to 58. And PSU banking is looking great. I've been talking about PSU banking for a little while now, and this stock has broken out of an ending diagonal pattern, which is a great sign for the stock. High top, high bottom formation. In the short term, my target should be 63, and I'll be expecting new highs very soon, above 73, 74 levels.
Oh, 73, 74 levels. So continue to hold the stock. That's the view coming in from both our experts. Next query for today, we have Raja Shekhar, who's writing to us from Bangalore. He's holding 30 shares of Siemens at a price of 7,816 rupees per share. Wants to know whether to hold, sell. What's the long-term story that is playing out for this one? Your view coming in on this one, Asta.
Definitely a hold, because the kind of focus this companies into the diversified sectors like railways, etc. Definitely, they have got a very good, demand from those sectors. So first of all, that is looking good to us. In fact, the order intake is high, and the financial performance of the seems to be okay to us. So overall, it is a decent counter to remain invested in with a very good long-term prospects. However, price target which we are keeping for this counter is 35.90 to 36.50.
Okay, keeping an eye out on that. Let's move on to the next. Actually, Somil, sorry, your view coming in on Siemens as well. On the technical front, what should they be watching out for now? And does it merit holding the stock now?
Absolutely. In the short term, in the medium term, positive outlook for Siemens. The stop loss the support, crucial support would be around 3152, which will be a medium-term support and which is very crucial for the stock. Anything below that, closing below that would reverse the view. However, on the upside, my targets would be around 3860 in the medium-term outlook.
Okay, keep an eye out on those levels over there for Siemens. Next query for today, Venkat Matta is writing to us from Telangana, holding 30 shares of Protein eGov. This is at a price of 1,040 rupees per share. Currently making some bit of a loss on this one. Wants to know whether he should remain invested or switch to some other stock. Specifically, Asta, in the last 1 month, obviously we had that news flow that came in on PAN 2.0, them not getting it right now. So that was a bit of a concern coming in. And then just yesterday we had some positive news flows because of that 100 crore order on Bima Sugam is what they've received. But that's a 6-year contract. Protein eGov, long-term view, what's the story? Or should they just switch the stock?
It's better to remain invested in this counter, although initial price targets are not very high. Maybe 1,090 to 1,100 is the target which we are setting for this counter at the initial levels. But yes, they got one RFP win yesterday only from the Bima Sugam India of 100 crores. So that is acting in favor of this company. And I think going ahead also, the financial prospect seems to be improving for this counter. So a good, not a good, but yes, not making a losses is also advisable for this counter at this point of the time. Maybe some upside can be seen on the basis of the news flow which we are receiving for this counter, hence recommending a hold for the price target of 1,100.
Okay, 1,100 is the price target to watch out for. So instead of selling at a loss, at least they could get the cost price out of the way. Saumil, your view coming on the technical front, is that also an 1,100 that you would say, or you're expecting a further more up move as well?
I think 1,100 would be the target. 1,120 probably, that is the 40 daily moving average. I'll be expecting a small bounce, but overall, if you see in the medium term outlook, doesn't look good. Always taking resistance at the averages and making new lows. So in the medium term outlook, negative. However, in the short term, there could be a bounce.
Okay, however, in a short term, you could maybe see some bit of a bounce. That's the view coming in there on Protein eGov. But that was the last query for today. So thank you so much, Asta, as well as Saumil, for joining in with us as always and helping our viewers solve all the stock-related queries. And viewers, thank you so much for tuning in. And thank you so much for sending us your queries. Keep sending them to us on the email ID that will be flashing at the top of your screens. But with that, we're absolutely out of time. So thank you so much for tuning in. Up next, we have Closing Bell to take you through the last hour of trade.
beyond market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Kospi continues to outperform, is now heading towards its highest level in over 3 years.
We will then implement the framework that we have worked hard over these last 2 days.
From the December lows, it's made up close to around 50% of the losses that we saw earlier.
Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnets.
Right now, about 18 points lower on the Nifty.
Seeing a lot of projects coming up in Kuwait, also in Qatar.
And the United States wants access for these agricultural sectors. The government is holding almost daily meetings when it comes to the rare earth magnet issue.
It's been a steady, slow rise for the market.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Reema. With me are Surbi and Nigel. Well, it looked a lot better, right? Sometime in the day. We've given up on our gains. We're holding on to the green line for the Nifty and the Sensex, but just by a smidge, up 35 points in the Nifty, Sensex up 120 points. And look at the way the mid-cap index has come under pressure. The mid-cap index is down close to about 400 points. So, and Nifty Bank underperforming yet again.
You know, there is something slightly uncanny about the way mid-caps are cooling off, but maybe we shouldn't complain. I mean, they've had a great ride, a great bounce back. And yes, it's a day of cool off. And the reason we're taking note is look at the pockets where the cool off is happening. Capital market plays, defense stocks. It started with Alcobev stocks in the morning, but that's where there's fundamental reason for those stocks to sell off. But then it's spread to other parts of the mid-cap market. It's still not too bad. I mean, just about a 0.6% drop. But yes, I think India is underperforming global markets today, so have to take note of that.
I think it's about a 20% up move for the small cap index from our April lows.
Yeah. It'll be more than that.
I think it's when I last checked, it was about 20%. So keeping that in context.
Yeah, it's par for the course. Yeah. I mean, I think so. It's par for the course. And still, if you look at the breadth of the market, it's 1:1. After seeing that kind of a run, I think you'll take that. And the point today is bad news is getting punished. BSE, the stock is down 5%. It's had a big run, some money being taken off the table. The alcohol beverage, companies like United Spirits, maybe, some pocket of the market will argue that demand is inelastic, but United Spirits is still down. One would have thought after a 5% downtick in the initial part of trade, the stock will recover. But it's not really recovered in today's trading session. It's still down close to around 7%. And the others as well, even Radhiko Khaitan, I think it has a single-digit contribution coming in from Maharashtra, but still that stock is down close to around 4.5% or thereabouts. However, a few stocks are doing well. This morning we highlighted CRISIL. There was delivery-based buying being seen on that counter. The volumes are very, very high today. And the stock is taking off crucial technical levels as well. So that's the reason why, in fact, that has moved up. The delivery that we saw yesterday was much higher than the averages. Today's volume is even higher than that. And I think that 5,850 odd mark is the crucial level. Normally, we don't talk about the stock whose volumes are low, but today the volumes are unusually high on that particular name as well. Well, let's get across to Mitesh, who's joining in to help us out with how would he trade the Nifty. Mitesh, very volatile last 90 minutes. The Nifty from being higher had come sharply lower, and then in fact that dip has got bought into. What's your take in terms of the Nifty? Where do you go from here? And the Nifty Bank has a couple of days of cooling off. You think more to go? Does it want to go ahead and retest its 20 DMA?
Definitely. So I think the only worry in this entire thing is that those that break out about 25,050 zones, the follow-through has not been very strong or very convincing. Typically, this could be a sign of momentum being slightly lost at high levels, and therefore, I think, while we don't have a signal of reversal as yet, I think it will be very prudent to trail your stop loss slightly on the tighter side. And I would recommend a spot level of 25,080 as the new trailing stop loss for long positions. As I said, I think there's no sign of reversal on the Nifty. Similarly, on the Bank Nifty, also, after a good rally, is still just giving a pullback. So I'm not sure whether starting a negative trend. But as long as it's above 56,100, we'll maintain a positive stance. Though I think, looking at the way the market is shaping up, not very keen to go aggressively long on individual stocks. But on the index, just tighten the stop losses slightly closer to the current levels.
The high today was 25,222. So from that level, the Nifty has given up close to about 80 points. IT is doing well yet again. HCL Tech, Infosys, Wipro, Tech Mahindra. The top 4 Nifty gainers today are the large cap IT names, and these stocks have moved up anywhere between 4 to 5% so far this week and at the day's high. So for at least some of them, like HCL Tech. So IT is one pocket, and the other one is Reliance Industries. Again, it's come off from the day's high, but it's still trying to bat for the bulls. Reliance Industries 1450 with a gain of close to about 0.8%. Mitesh, yesterday you were long on many of these large cap IT names. I remember HCL Tech, Tech Mahindra. Are you continuing to hold them? Considering that we've seen another leg of up move in IT names, what are the charts telling you? And throw in a word on Reliance Industries too.
So one, IT still remains the pack, which is showing strength. We've just booked some profits in TCS, but otherwise it is still a sector and set of stocks which is on the positive side. So maintain long bias on IT. On Reliance, I think, again, under stock, which I've just booked out purely because of the fact that it's not sustaining about this 1465, 1470 levels. Though I like the overall structure, I think a momentum will come in once we see this 1470 levels being taken out decisively, and then we can look at targets of 1530 plus. So structure is positive, but given the fact that the market is showing lack of follow through, we're slightly cautious and we've reduced our positions.
Okay. All right. Got that. Just, Mitesh, before we let you go, very quickly, I want to do a level check with you on IEX. IEX is down over 7% this afternoon. Yes, there is a broader mid-cap sell-off underway, but the additional news that's taking IEX down today is that this whole talk of market coupling is back. Look at the way the stock, sold off. We'll get our colleagues from Delhi on the story in just a bit, because there were some statements made today in Delhi by, I think, the minister himself, about how whenever market coupling happens, it'll be a wide bidding process or whatever. Market coupling basically means that you have the same price of electricity across any exchanges. So the fear was whether it's going to break IEX's monopoly. And that fear is back and the stock is reacting. Just Mitesh, quickly, it's a news-based move, but levels to keep in mind here?
See, IEX, had a very good rally, and I think today's first sign of strong selling coming in. It's just taken support at the 190 or pivot. The intraday low is slightly lesser than that, 188.5. But I think as long as on a closing basis, it's about 190, there could be one more bounce back to about levels of 200, where I would suggest people get profit. Or if it breaks today's low, I think exit the positions. I think if the stock is now showing signs of this rally, which started from 155 odd levels, has completed, and therefore I think could go into a consolidation either or a correction if it breaks 188.5.
Got that. Let's talk about some of these capital market plays, particularly Bombay Stock Exchange, which is under pressure after the options premium turnover has fallen, and it's fallen sharply over the last 5 days compared to the averages of, say, April or May. Vamakshi is here with the numbers and the analysis.
Well, Rima, when we look at BSE, the stock overall had done very well over the last couple of sessions. In fact, it was up for 9 consecutive sessions and had recovered almost 130% from the lows in March. But today, the stock is taking a bit of a breather, and that is because, the option premium turnover, especially if we take the average, has seen a bit of a dip. Now, when we look at the data that is currently flashing on your screen, keep in mind that 10th June, which is Tuesday, is actually the weekly expiry, and resultantly the volumes there are, higher than the other days. But, average option premium turnover in the last 5 days stood at 10,824 crores. Now, when we compare it to the average turnover in May as well as April, this is significantly lower, because on an average, BSE registered turnover of almost 15,500 odd crores that time around. But, when we particularly focus on the last 5 expiries, that data will also come up for you on the screens. 10th June, the expiry option premium turnover fell to 20,749. This is almost a 50% up if we compare it to the average in the last 4 expiries. Overall, when you look at the company's market share as well, this is for the index options that, keep in mind that too has seen a bit of a dip. Keep in mind that BSE's market share had already improved from 16.4% to 23.6% in the month of April. But, given the kind of drop we're seeing in the volumes, the market share too has now slipped by 70 basis points if we compare it to the average that we saw in May. Apart from that, today there is also an announcement that came through. BSE has been added to the stage 1 of additional surveillance measures, that is the ASM framework, and the trading on the stock will now attract a 100% margin. So today as well, The stock is trading lower on the back of these developments.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's get in Prakash Diwan on the show. Prakash, BSE was defying gravity. Now, in fact, the volumes have fallen a little bit. And that ASM as well has put a bit of a lid out there. But we have seen this in the past. BSE has been the stock you want to buy on the dip. But this time around, is it different? Has it gone too far in terms of valuations to justify these sort of valuations that it's trading at?
Good afternoon, Nigel. So you're right. The valuations were a stretch. Market always loves an excuse to kind of book profits. And, this whole thing about options, volumes coming down, very progressively, and suddenly this drastic, this thing from the 3rd to the 10th of June is primarily, my sense is primarily driven by a lot of the hedge funds getting investigated for, whatever misdoings were reported or, were heard of in that space. So if that were the case, I'm sure they've pulled back from the market for at least this week. Now, if they were to come back after a couple of weeks, things could start looking up, and the stock will also kind of absorb that reaction positively. But what we need to look at is this is a secular long-term story, whether it's the BSE, whether it's any of the depositories, whether it's any of the registrars and transfer agents. You will have to latch on to this from a slightly longer-term perspective. So yes, BSE makes sense to buy a dips. It's a great franchise. You can't replace it. Even if the NSE were to be around, they both parallelly will kind of continue to grow at their own respective pace. So I think you will have takers for the BSE, but at lower levels. And you could probably wait for some consolidation to happen in the stock. So there'll be a churn. Change of hands as we all see whenever a stock rises meteorically, and once that is done, you'll probably see a new base being formed and a growth from there on. So I would believe that's likely to happen more than not.
Okay, let's get back to the other big story, Prakash, IEX. And before that, for our viewers, let's just get the news. This is an exclusive. Government sources say that the Power Minister Manohar Lal is planning to conduct stakeholder consultation on market coupling. We've heard this news before. Stock has fallen, it's recovered. But once again, on this news, it's down nearly 7%. Abhimanyu joins in with the details. Abhimanyu.
Well, what we have learned from sources is that Power Minister Manohar Lal is going to meet stakeholders over the issue of market coupling and is going to apprise stakeholders about the benefits of market coupling. Also, sources have indicated that whenever market coupling takes place, it will take through a broad bid and not an internal bid. Now, market coupling by definition means aggregation and match of buy and sell bids by power exchanges for a uniform price discovery. And if at all market coupling, when it takes place, it will imply a single price for electricity to be traded at any point through the power exchanges. Now, it has been some time since market coupling has been indicated that the policy would come out in the public domain, but there hasn't been any activity on that front. There have been indications which have been given since the past few years by several ministers, even in the previous government, that is from 2019 to 2024. The then Power Minister R.K. Singh had indicated that market coupling will eventually take place, but had refused to ascribe any timeline to that. Also, on the 21st of February, the Power Secretary had indicated that the Ministry and the CERC were reviewing the Grid Controller of India's report on market coupling. And a government official last year in September 2024 had also told CNBC-TV18 that market coupling is on the cards, but had refused to ascribe any timeline to that. And now, with the fresh set of inputs, of course, it remains to be seen how early this meeting would take place, what kind of suggestions would be given by stakeholders, and what action would further be taken by the minister.
Prakash, IEX, once again, the stock is under pressure on the back of this market coupling fear.
No, I do agree. A couple of days back, it was flying because the MCX tie-up happened, and MCX was likely to take the price, this thing from IEX, inputs from IEX, and everybody thought that was a great occasion to celebrate, and the stock, actually reflected that. I just want to take ourselves back to the moment where the stock has lost a lot of ground because of this fear of market coupling coming in. And throughout the last 1 year, it's been regaining ground more because of the organic growth that's likely, right? I don't think market coupling is something that needs to be made into a bugbear the way it is right now. In fact, price discovery will have to be as broad-based as possible, and you can't rely on the whims and fancy or mechanisms of only one institution. So eventually, once that happens and gets digested, it will lead to a much healthier market in terms of volumes, which is good for IEX, right? So they should focus more on what brings them volumes, more customers, more depth, rather than be worried about, some sort of a monopolistic, or if not monopolistic, some sort of an advantageous position that they can keep expecting to leverage forever. So they'll have to live with that reality. And if you look at that possibility, I don't think there is any reason to panic. The stock will probably, bounce back at some point in time after this initial gush of selling liquidity gets absorbed.
All right, Prakash, besides these exchanges, I wanted to ask you about DCX. That's a stock that you liked. The stock is down close to around 5% today, but it appears there was a large trade that was pending that got cleaned out, because it's close to around 100 crore of large trade that's got cleaned out. What's your view on this name? And if you're aware if there was any kind of overhang on this name?
So, Nigel, I think, of course, it's, the huge volume that you are referring to is probably the reason why the stock, couldn't kind of hold its ground in terms of where it started off from. But let's face it, this rise post-Operation Sindoor for most defense stocks has also benefited this particular name. It moved up very rapidly. The results came in. There has been a bit of a disappointment in results. If you listen to the con call, very clearly people have been asking questions why the company with 1,400 crores of revenue is just talking about a 5% margin, whereas, it's into such a lot of high entry barrier kind of businesses. But then, and the management probably is constrained to clarify given the confidentiality of the business, of the nature of its operations. So I think the market probably will have to wait for the numbers to happen. And that could, and remember, this is a lumpy business. Most of the earnings actually come in the last 2 quarters of the financial year. So this Q4 is gone. You'll have to wait for Q3 and Q4 FY26. If there is any indication of revenue and margin improvement there, then probably, the stock will continue getting re-rated. But, this exit, the beauty is that the exit has got absorbed as well. So there are takers at this level, believe in the story. But it will take some time because the numbers do not corroborate the hope and promise that the commentary has built up over the last many quarters.
So tread with caution. That's DCX Systems. Got that point. The other set of stocks where there's a lot of selling, Prakash, this afternoon. Alcobev, this whole excise hike in Maharashtra, that's really knocking them out, right? We're seeing United Spirits still down about almost 6%, Allied Blenders, Radico, all these stocks are down. Now, there'll be some offset because they'll be able to import cheaper, bulk scotch from the UK FTA. But nonetheless, there's this, excise hike coming through. I mean, what's your sense? Are the stocks still, worthy of being bought in such a dip? Or do you think this could become a bit of a longer lasting overhang?
So, few first order effects. So, people will come down to Goa to drink and carry back whatever they can. The second thing is you'll probably have, wine and beer probably remains unaffected. So, there are pockets which will probably continue to do well. The third thing is after the UK FTA, there was really no shakeout of sorts a reset. Let me not call it a shakeout, but a reset in the price mechanisms and the supply chain, the way they are structured, because it's going to take a while for the FTA impact to get executed. Now, once that were to happen, you'll probably end up having a lot of these companies either importing bulk scotch and, bringing down the price point for themselves and continuing to enjoy the margins while, MRPs have already shot up so much. In some cases, it's going to be 40-50%. So that's quite steep. But then, this is one sector which is slightly agnostic on the premium side in terms of demand. So we've seen that even in the past, just because it's happened after so many years, almost 13 years, that it looks very lumpy. So it will probably get absorbed in other ways. But my sense is the overhang won't last for too long. And there will be some mechanism where, as you rightly said, it will be offset with some sort of margin increase somewhere, relief somewhere. But the stocks that you need to look at are the ones that will also benefit from export potential. And again, United Spirits come to mind. And that's exactly the reason why it remains so resilient in spite of so much of news flow in the last 1 year, 2 years that you've seen around the liquor industry. I think USL or Diageo actually remains a very, very strong player. and they will continue to grow from here on in different ways, which Radico probably cannot, or Allied might take some time to match up to. So that's the picking order in that sense. You will be safer with the United Spirits, irrespective of what happens to the sector in one state.
Any view?
Now, Prakash, you know, right, what our request is going to be. We know you're from Goa, and time to time you come to Bombay. So you know where this is going. Since you prefaced your answer by talking about the interest in Goa now. But yeah, go on, Nigel.
No, I mean, Surbi is speaking for herself, Prakash.
Yeah, because he's the premium consumer. For him, it doesn't matter. Like you were saying, Prakash is saying, right? Premium consumption is pretty inelastic to all these small price increases. So.
All right, let's move on from alcohol then. Prakash, I wanted to ask you about rating agency CRISIL. It had corrected to around 4,000 rupees, when the markets were a little bit of a tizzy. And today the volumes are very, very large. And earlier this morning we had pointed out that delivery-based volume as well was very, very large. As we speak, right. CRISIL is up closer on 7-8%. Any view on this name or from the rating agencies? Do you like any of them?
Oh, they're lovely businesses, Nigel. So, and especially in a situation where interest rates have started coming down, we're probably going towards the end of the fundraising winter of sorts. And this is discretionary fundraisers by businesses, by corporates, and a lot of PSUs for that matter, which will continue to kind of expand their balance sheets now that the interest rates have come within a very reasonable band. And, when you're in the middle of the interest rate softening cycle, this is exactly what happens. And all this issuance and the way the bond market is being sought to be deepened, I wouldn't be surprised if, it becomes a very significant play in the next 24 months from where it is today. The delta is quite, there are lots of things you can talk about around that. In fact, you can do a special show on how the bond market is likely to be a big, element of asset allocation for even retail investors and HNIs and all the institutions, of course. But that activity levels is something which could probably come to the favorable listing of all the rating agencies. But CRISIL is likely to benefit more because of the nature of issuance of paper, which is going to happen. Is always CRISIL is favored as a rating agency by larger corporates, by PSUs. And that's where the benefit will be front-ended. So I think that's the story. But why it would do 7-8% today, of course, escapes my logic. But there must be a reason for it to kind of be so bullish about the business itself. And I've been positive on the business for the last month and a half, and we've been seeing a lot of buying happen come back into these names, which otherwise have been languishing for quite some time.
Some big movers today. Wockhardt stands out on the mid-cap end, 17% up on Wockhardt. Pretty large volumes. It's a fresh 52-week high on Wockhardt, 1,800 plus. VIP is another stock. This is a stock which is about 30% away from its 52-week high, but it spiked up close to about 10%. And again, the volumes are fairly large.
And there's a downgrade on this one. There's a rating downgrade that's come on this one on a quantum of around 400 crores. And after that, the stock is up. So beat your imagination, weak numbers, rating downgrades. The street is expecting something, it appears.
Looks like, and Oil India, because we were talking about, reports. Here there's a brokerage note, not ratings downgrade, but a brokerage note. Avendus Spark is written on Oil India. They've initiated coverage with the buy. Target price is 630. That is about a 35% upside from the current price of 465. So Oil India is a stock liked by Avendus. Recent correction in commodity prices presents a favorable entry point, they say. Prakash, thank you very much for joining in and discussing, the last hour of trade with us. We'll slip into a break. As we do that, let's tell you how you can unlock a new dimension of business intelligence with CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. From market-moving insights and thought leadership to exclusive access to market events, journalist interactions, studio tours, high-impact learning sessions. This is truly an elevated experience with members also enjoying curated lifestyle privileges and perks. The power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to cnbctv18.com/access/plan.
thoughtfully.
Welcome back. Let's talk about the markets, the way forward. Rahul Veera, fund manager of equity investments Nippon India AIF, is now joining us on the show. Rahul, thank you very much for joining in. From the last time we spoke, markets have inched up. The RBI has front-loaded its liquid rate cuts and liquidity infusion, and plus US and China have agreed upon a framework. So all those trade talks and tensions, tariff, perhaps a little bit, has eased compared to before. How are you looking at the markets from here on? Because last time you were busy deploying your cash.
Yeah, you're absolutely correct. Just to add to all the catalysts that you mentioned, right? Also the earnings cut that we saw in FY25, almost like 5 to 7% across the Nifty names, and across the NSE 500 names, it was closer to 15% to 20% in the small cap side. So that is largely behind. So in the Q4, if you see the earnings cut that has happened, that has hardly been 1 to 2%. So going forward, right, given the low base of Q1 plus FY26, the earnings expectation from the market is just 10 to 12%. We believe earnings cut is also largely behind. So this year will be largely a year of consolidation. And in terms of earnings visibility, macro stability, it's very clear that things will be positive from here on.
All right. Hi, Rahul. Good afternoon. Good to see you in. The last time around, you had cut your cash in the, that you were holding, I think, from early teens. You had brought it down to single digits. Now, I wanted to ask you about a couple of sectors, particularly the ones you are not very bullish on. Real estate, I don't think that's a sector that you like too much, right? Now, with this rate cuts, there is hopes that, EMIs become cheaper. It gets people more interested in housing. Have you changed that view, or would you want to stay away from real estate?
As of now, we prefer to be on the sidelines. We do not see much of the traction that is happening in terms of the volume pickup. So if you see the top 7 metro cities, the inventory levels on the higher end has started increasing. So some of the indications are there that probably the kind of numbers that the market is penning in terms of the pre-sales, I believe that next 1 or 2 years, it might not be as much as the market is expecting. There will be some disappointments there. So on the lower end of the curve, yes, like your 1 crore, 2 crore kind of a flat, some volume traction might come in because of the rate cuts. But broadly, the pre-sales will not match the FY23, FY24 numbers.
So you continue to remain, real estate is in a void for you all. And as you said in the past, I think cement is something that you liked. So we'll keep an eye out on that. But what about, the power sector? That is a theme you've been extremely bullish on. Let's narrow it down a little bit. If you want, you could share us some names as well in terms of what you'll hold in the fund. But how do you play this theme? Because, there'll be a lot of ways to play it. Please go ahead.
Sure. See, overall, across the power demand supply mismatch, the story is very well known. But what kind of plays you want to do? You don't want to direct power generators, or you want the transmission and distribution. So we prefer the transmission and distribution names. Multiple MNCs are out there, largely 3. And again, in terms of their specialization, right, they are going to be there over the kind of order book. More than 1 lakh crore is still expected to come through. We're largely bullish on that space, HVDC transmission lines. Now, what is happening in the sector is the kind of solar power and the grid connectivity, right? We recently saw how the disconnection happened in Spain with too much of emphasis on renewables. So all these kind of one-time impacts have to be reduced only with HVDC lines. So our expectation is the larger order books for some of these HVDC companies is going to become stronger. They're expensive, but they'll continue to remain expensive in the medium term.
What's the cash that you're holding? And incrementally, in the last 1 month, where have you deployed the money that you've got?
So incrementally, we have started deploying in some of the PVC pipe names. We believe the sector has broadly bottomed out. So if you see the past 10 years average for PVC resins, right, has been closer to 72. Broadly, now that has gone down because of the Chinese dumping that came down to 65, 66. In the past 1 month, there have been 3 price hikes that have happened. So once it was 1.5 rupees, the second time it was closer to 1 rupee. Again, last year, we saw the kind of volumes the management were expecting across the names didn't come through, largely because of the government capex. Now this year, monsoon is going to be better, plus your government capex is going to be better. So volumes plus price, both these impacts will start throwing the numbers for the PVC segment now.
Do you want to name some names? Is it Astral, Phenolex? I mean, with the appropriate disclosure, or is it the entire sector which is going to do well from here on?
Our is across the sector, we like all the names.
You like all the names, okay. Anything else that you've put to work in terms of further deployment, in terms of further buys?
So our view is even IT as a sector, which we were a little bit underweight over the last 1 year. We are getting incrementally positive. So when we are doing a channel checks, we are meeting a lot of ground level people. We are seeing that the kind of pessimism that has been built in for the IT, probably that is not the case. The numbers will come through. It will be slightly better. So we are getting incrementally positive on the IT sector now.
Large cap, mid cap IT, what would the bias be?
So across our mid cap and small cap funds, we are preferring the mid cap, small cap names. That is a larger bias. But in the meantime, even for the larger names, the kind of pessimism is built in. We believe there is some kind of an opportunity in the large caps as well at this point of time.
Okay, all right, Rahul, I wanted to ask you about the biggest and the hottest theme in the last 45 days, defense. You didn't like that space, right? Did you all manage to finally get in? Or is that the place that, in fact, there is obviously a big runway and there's plenty of hope in terms of penetration, say, in the next 10 years, but valuations are too expensive for your liking?
Absolutely. The valuations are very, very uncomfortable for us to start kind of adding those names. But we have some pseudo defense names that we had in our portfolio that has helped us sail through this kind of an environment.
Okay, all right, Rahul, appreciate you joining in and filling us in with all of those details and all of the themes. But if you want to tell us, leave us with one comment on the headline index. Do you think it will outbeat fixed returns by the end of this year, from year on, post the pullback we have seen?
Yes, I believe we will have a positive outperformance against the other asset classes.
Okay, all right. So then you're optimistic that the headline, the Nifty, trends even higher from here on. Got that, Rahul. Appreciate you joining in. And thanks a lot for giving us all those themes. Power, real estate, banks, and IT is something that Rahul likes. Well, on the flip side, the theme that he doesn't like too much is the real estate pack as well. Well, we have LIC. There's some continuity, I think, that's coming out there. Financial Services Bureau has recommended Mr. Durai Swamy as the MD and CEO of LIC. A bit of a perk up on that stock. It's still holding with a gain of close to around 2% or thereabouts.
Okay.
Okay, all right. I'll tell you what, we'll slip into a short break. We'll come back. We'll continue to focus on markets. We'll also address individual stocks that are moving around. Welcome back. Well, markets continue to hold with gains of around 40 to around 45 points. So let's see how it goes from here on. But let's get in Mitesh Thakkar. Mitesh, you've got a fresh couple of picks for us?
Yeah. So I have BTST calls on PI Industry. I think that's a stock, which is near the day's high. So we will take BTST with the stock just below levels of 39.60 for targets of around 4,000. The other one which I liked is Biocon, which can be taken as a BTST with the stock below 351 for targets of 359.
Okay, all right, got that. Mitesh, thanks very much for all your advice through the day today. You have a good afternoon, and we'll connect again tomorrow. By the way, those are announcements coming in from the cabinet meeting. Okay, a railway project getting approved in Bellary, Chikjajur, if I got the pronunciations correct. It's a large one, 3,300 crores of a project getting approved. We know the railway stocks have been very excited. Not quite sure if it's going to impact any of the listed players or not, but those are some initial announcements that are coming in from the cabinet meeting. As we wait by and get more of those details, let's go back and revisit the big story, the reason why Alco-Bev stocks are not quite feeling the high this afternoon. Most of them, look at the cuts, still between 4% to 6.5% down on most of them. That's because Maharashtra has decided to sharply increase the excise duty on spirits. Manglam's here. Manglam, break it down for us.
Well, the first time there has been an increase in excise duty in Maharashtra all the way back since 2011, the biggest one that we've seen. And that's definitely not gone down well with the names like United Spirits, Radico Khaitan and Allied Blenders. Why is that? Because remember, recently they were hoping for some sort of improvement in their costing, and that's largely because of the UK-India Free Trade Agreement. But that's not the case because the state's taken away what the centre had given them. Maharashtra has gone ahead and increased duty on IMFL, Indian-made foreign liquor, from 3 times to cost of production to 4.5 times the cost of production, which is basically a near 50% jump if you look at it that way. The other thing that you're looking at is that country liquor, there has been a duty increase, but that's just 14%, not as much as foreign liquor. The third part is they've introduced a new section for Maharashtra-made liquor. This is basically grain-based foreign liquor, which is being produced in Maharashtra itself. So all the companies which produce in Maharashtra will now have to reapply for this category, and as a result of which they would stand to benefit. By how much will they benefit? The new revised minimum prices for country liquor, Maharashtra-made liquor, foreign liquor are all up for you on the screen. 80 rupees for country liquor, going all the way up to 360 rupees for a premium foreign brand. Maharashtra-made is about 150, whereas IMFL, the minimum price that it can be sold at for a 180 ml tipple is close to around 205 rupees. As a result of which, we've seen a gash on both United Spirits, Radico and Allied Blenders. Initial estimates suggest that 20 to 22% of United Spirits sales come in from Maharashtra. So the premium end definitely facing the heat. Radico Khaitan as well, 7 to 8% cut. Analysts expect this could be an EPS cut of 6 to 8% on United Spirits and about 2 to 3% on Radico Khaitan. But not all is lost because 3 stocks in particular are doing extremely well. Let's look at GM Breweries. That's higher in high teens, and that's largely because the street expects them to benefit because of the introduction of the Maharashtra-made liquor category and the lower rise that we've seen in country liquor. So these 2 factors doing well for GM Breweries. They will have to re-register brands with the state, but how long will that take? And by then, do the others go ahead and register as well or not is the big question. But until then, they stand to benefit. The second part, United Breweries, not falling as much. In fact, for a brief part, was also in the green. That's because no increase in duty on beer. And more importantly, the expectation is that those who are having premium spirits will now shift to premium beer. And that itself is what United Breweries' own strategy was as well, premiumization. So that should work for them. And the third thing that we're looking at is Sula. That's again a big gainer in today's trading session because wine is not mentioned in the excise duty increase. Secondly, Sula, Maharashtra is the largest producer of wine in the country. And thirdly, Sula as a stock before this had fallen about 40% from its highs. Last 4 quarters, not much had happened. So maybe what is spirits loss could perhaps be the gain for beer, country liquor and wine. All of them stand to benefit today.
Okay, all right, got that. Thanks very much for that, Manglam. Those are the key reasons why some of those stocks have been, under pressure today. That's important news that's coming in. Is India going to be making the Su-57? Well, from the looks of it, I think this is news that Parikshit is picking up. and we'll try and have him on in just a bit. So the request for proposal for the Advanced Medium Combat Aircraft program is to be issued next week. So we were supposed to move to the 5th gen of these aircraft, and the Su-57 is supposed to be one of the best-in-class stealth fighters with superior technology, the ability to go undetected, within radar systems, lesser heat signature, so on and so forth. So it seems that conversations are underway, and the government could be considering a collaboration with Russia. And let's see, the question is whether these fighters will be made in India or not. Let's pull up the HAL stock because, of course, Hindustan Aeronautics has been making the Su-30 fighters for many, many years. We've got, let's get HAL up and see if there's some excitement showing up on the stock. Not quite. But Parikshit's with us. Parikshit, this could be a big moment. So Su-57 soon?
Well, a final proposal is yet to be made and cleared by the government. Currently, we believe that there are multiple options being considered by the government in terms of plugging the gaps in our fighter jet fleet. The number one point that we're going to see some action on very soon is the Advanced Medium Combat Aircraft program. Recently, the government had modified the execution model, come up with a new model whereby foreign players, domestic players will be allowed to participate, and they will also be able to partner with PSUs like HAL to bid for the AMCA program. Now, a request for a proposal, inviting proposals from the industry for this fighter jet program to make them in India is going to be issued later next week. And 15 days within that period, we will see the a pre-bid meeting also taking place where the industry will be called for a meeting. And within 45 days or so, bids may also be called for by the government. Having said that, the short-term measure that the government is considering, because having an AMCA program means almost 10-15 years of development, you also need to plug the gaps immediately. So the option is to also consider acquiring Su-57 fighter jets, 5th generation fighter jets from Russia, acquire them in a flyaway condition and also make them in India. Now, this is a proposal that the Russian government has given to the Air Force. It is under consideration. If approved, then the government will come up with a proposal and will start working on talks with the Russian government. Early stages, but it seems that the government would be keen on this, considering there is already an existing HAL line making Su-30 fighter jets. Then you also have the 5th generation fighter engine development program that is ongoing, and the government is considering proposals from both Safran, which is a French company, and Rolls-Royce for manufacturing 5th generation fighter engines in India. Now, these are the only two companies which have qualified as per the criteria to give 100% technology transfer and IP transfer as well. Now, as far as collaboration with the United States goes, no proposal right now for acquiring F-35s is under consideration. There is also a larger plan to improve our air defense systems. The S-400s performed very well for the government during Operation Sindoor. We've got 3 units of S-400, 2 more are likely to be delivered by next year, and the plan is to possibly consider acquiring at least 1 or 2 more units of the S-400 beyond the current timelines. And the Defense Acquisition Council could very soon also take up a proposal for acquiring quick reaction surface-to-air missiles for the Indian Army. This weapon platform could be acquired, and the acquisition could be worth at least 30,000 crore, and this would be a big boost for the domestic industry.
Oh, absolutely, Pariksha, that's very, very comprehensive. So you answered my second question. I was wondering what happens to the F-35. So what you're picking up is that there's no proposal to go to the Americans now to get them. So just to wrap this up in full context for our viewers, so what you're saying is that we could be looking at buying the Su-57s, some of them in fly-ready conditions, and eventually look at making them in India. And this would be in addition to the procurement of additional Rafale aircraft as well, is it?
Yes, just a few months back, and we had interviewed the Defense Secretary on this, Surbhi. The Defense Secretary had said that they have submitted a report to meet the gaps and the needs of the Air Force. The Air Force Chief has been speaking about how we need many more squadrons in the Air Force, and there is an aging fleet issue as well. So there was a plan in terms of near-term measures, medium-term measures, and long-term measures that were recommended. So what you see right now is a part of that larger exercise. The Rafale fighters, we already have Rafale fighters for the Air Force, and there is a supply chain, a domestic supply chain also, which is now coming up. The Rafale marine aircraft are also being acquired. And the reason why that has happened is because the Navy needed them, and there is already a Rafale base in the country. Now, we need 5th generation fighter jets fast. We can't wait for 10 years also. So what acquiring them from Russia can do is we can possibly get them in a shorter span of time. And eventually the plan would be to also make them in India. And Russia is willing to offer that technology, offer such a collaboration. And considering that you have a long history of collaboration with Russia on the Su-30, HAL has a line in Nasik. So there is a complementarity which you would like to leverage. For the long term, you would also need Atmanirbharta in engine manufacturing. So that's a separate program for the 5th generation fighter jet. We need those fighter engines. Safran and Rolls-Royce are willing to give you 100% technology transfer. So they are being considered. Now, as a long-term measure, India needs its own advanced medium combat aircraft program, or the 5th generation fighter jet program. Which is being developed indigenously. Till now, DRDO, HAL were working on it, but you need now foreign partners to come in, collaborate with Indian private firms, collaborate with PSUs, and then come up with a strong program, but it's got a long gestation period. So probably the Su-57 program will be a early harvest, so to say, or the near-term measures that the Indian government needs to take.
Absolutely, got that. Thank you for that, well-rounded, comprehensive take, Parikshit. Very, very important steps when it comes to India's fighter capability. And also the engines have been very, it's quite interesting because you know that those GE engines have been delayed pretty much forever. And without the engines, you can't have the jets. So if you want to make in India, I guess the eventual goal is to make the engines as well. And as Parikshit says, there's talk of technology transfer with Rolls-Royce now, among others.
Interesting developments. But for now, they're looking to plug the gap by now, and then make in India eventually over the next decade. Let's move on now and talk about Oil India. That's in focus. This is an Avendus note. Sudarshan joins in with the details. Sudarshan.
So today we are seeing an all-round gain in the oil and gas space, and also Oil India is higher, up more than 6% on the back of positive brokerage note that today Avendus Spark has initiated coverage on the stock with a buy call, and target has given is of rupees 630. That is an upside of more than 40% from current levels if you calculate. Now it says that over the next 3 years, it's predicting that company might see earnings growth of more than 80%, and that would be entirely led by increase in volumes aided by Numaligarh refinery, which might see an increase in the capacity over next 3 years. Also, Numaligarh refinery project is expected to be completed by 2025 end, and it will start contributing to earnings of the company, that is Oil India, by FY27. Some of the other catalysts that it has mentioned is, first, infra projects provide better visibility on production growth. Also, new well gas pricing could be an added positive. So as per Avendus Spark, the recent correction that we have seen in commodities can be a good entry point as far as Oil India is concerned.
Okay, that's on Oil India, but so also a word on OMCs. I mean, in a market which is overall dull, we've seen some green on OMC stocks. Anything specific here? So
all three oil marketing companies, IOC, BPCL and HPCL, are seeing buying in today's trade up in the range of 3 to 4%. Yesterday, there was US oil body, which is known as Energy Information Administration, has released short-term outlook that is for up to 2026. And it believes that in the short term, crude oil might move lower, and that can happen because of rising global oil inventories. Now, by the end of 2025, it expects that Brent crude might fall to $61, and by 2026, it might fall further and can settle around the levels of $59 to $60 per barrel. If you remember, last month, also in the month of May, the average Brent crude price was $64 per barrel, and if you compare against April, it was down $4. But in the last few sessions, we have seen a minor increase. But nevertheless, if you take a look at the short-term outlook, it's expecting a fall in the crude price.
Okay, all right, got that. Sudarshan, thanks very much for all the updates. We do have to take a quick break on that note. But, as we take the break, let's tell you about some programming developments as well. The good news for our viewers is that India's business news leader is just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the Apple Store or from Google Play, or you can just scan the code on your screens.
What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regret. And the only way to live is to live like an entrepreneur. Nature wants you to do that.
What would you consider today your highest conviction bet?
The abiding faith that India's time had come.
What is holding us back?
We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a new story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
What, to your mind, is your leadership language?
So the leader or a CEO has two roles, one of a mother, one of a captain. In the Infosys journey, not from public, but much earlier, right? Mr. Murthy was a mother.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं कि we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back. Well, the markets are holding with a mild gain. The broader markets, actually, you have the mid-cap indexes in the red, but still more number of stocks advancing than declining. So you take heart from that fact. Amrish Palika is with us. Hi, Amrish. Good to see you in. Give us that one stock that you're tracking.
Nigel, the stock which I'm tracking and recommending today is Voltas, a leader in cooling and refrigeration products, a Tata Group company. In room ACs, they are the leaders with about 19% market share, have both the segments B2C and B2B. And Voltas Beko is an international JV which is expanding fast in the home appliances market. And they have done backward integration and got PLI benefits. And if you look at the projects business, there's a major turnaround in FY25 with a 169 crore profit as compared to a 328 crore loss in FY24. And they have a robust order book of about 6,500 crores. So a strong visibility, at least in the medium term. And overall, if you look at FY25, it saw the highest profits till date, nearly 3.5x of what they saw in FY24. And at least from a short-term angle, the weather forecast for North India is that the heat wave would extend a bit longer. So this is again a minor positive for all the air conditioning and refrigeration companies, at least in the short run. So if you're talking of FY27 EPS, I'm expecting about 38. And with that, my target price works out to about 1710.
Okay, so that's a view on Voltas. Amrish got that. Just talking about some of the, these Alcobev stocks, we've been discussing them quite a bit because of this Maharashtra duty hike impact.
Right.
Would you use the dip to buy, Amrish? Or would you stay away?
I think I'll wait for a while because this just, I think, the beginning of a dip, especially when you're talking of the IMFL manufacturers. At the same time, I really don't know as to why the breweries and the wine manufacturing companies have shot up. I mean, it's possible that it's moved up as a since there was a relief, since it was not really taxed. And there's another school of thought which feels that there'll be consumer shift from IMFL to beer and wine, which I don't think is practically possible. I mean, a small quantity, yes, but not a major shift. If you look at the overall scenario, Maharashtra contributes about 12% of the IMFL sales all India. And if you look at specific companies like United Spirits, I think it's anywhere between about 20 to 24%. So United Spirits would be hit decently badly. So I still feel a further dip from here. I mean, I'll not be surprised if we see another possibly 10 to 12% fall in United Spirits. Maybe at those levels, if you're looking at a much longer term, could look at buying. Because whatever said and done, these taxes on cigarettes and liquor, it has an effect from short to medium term. And if you look at the longer term, things normalize. So from that point of view, at lower levels, I could buy United Spirits. But like I said, either 10 to 12% sort of a correction from here.
Amrish, what are we missing in VIP Limited today? We were just discussing earlier, Q4 numbers were muted. But the stock is up, and I believe there was a rating downgrade too. Yeah, so a negative assessment from a rating agency too. Stock is up 10% on large volumes. Have you heard anything?
I missed the...
VIP Limited.
No, I really don't track it very closely, so it's a bit difficult for me to really comment on this.
Oh, got that. Oil India is another big mover, and Wockhardt. Wockhardt now locked in an upper circuit, 19% up.
Yeah, I think after a decent amount of time, we have seen this sort of a move in Wockhardt. So I think it can sustain the momentum for a while longer. Possibly we could see another 12 to 15% sort of move from here.
Okay. All right. So that's a take on some of these pharma stocks. Many of them actually. Newland Laboratories, Natco, Strides, Suven Life Sciences is a big move building up in pharma. And of course, Wockhardt is right at the forefront, 19% up on Wockhardt. Some more names. I mean, today is a listless day otherwise for the broader markets. Look at Lee Travenues Tech. That's Ixigo, up 7%. VIP is up about 10 to 11%. So the market's, moving through, trying to find new mid-cap leaders, I guess.
Well, that's right. Amrish, very quickly, if you have any view on Vedanta or Hindustan Zinc, it appears there's a bit of a pair trade going out there. Vedanta is virtually at the high point of the day. Hindustan Zinc is lower, but Hindustan Zinc actually has been the big mover, and liquidity is very, very less out there. But there's a big open interest built up on Hindustan Zinc. You're tracking any of these two?
Yeah, in fact, I tracked both of them, and I have a buy call on both of them. And I think Hindustan Zinc clearly is moving up because of the silver component, because close to about 40% of the profits come from the silver business. And I think, the way the silver prices have gone up, I think that is contributing to Hindustan Zinc. Vedanta, I think clearly the play is on the demerger. I think that's much closer than what it was earlier. And that would be a wealth creator for the shareholders. So I think Vedanta can still move further from here. In fact, I had a price target of about 520 for Vedanta, pre-merger.
By the way, all the oil marketing companies are on fire today. BPCL has now moved up close to about 4.5%. Pull up HPCL, IOC. And Sudarshan was earlier telling us that the EIA, that's the Energy Information Administration, have released their crude outlook. And they're basically saying that crude prices are likely to fall. And that's the reason why oil marketing companies are higher. So they're saying the average Brent crude price in the month of May was $64 per barrel. By the end of 2025, it's expected to fall to $61 per barrel, according to EIA. And in 2026, that's next year, it's seen further moderation expected to $59 per barrel. So look at that, BPCL 4.5% up.
Yeah, big moves on some of those oil marketing stocks for sure. On mid-caps, today was one of the days where there was a lot of profit taking. So let me talk about some of the ones that have lost ground. Alcobevs, we've been seeing that throughout. United Spirits about 6.5% lower. Allied Blenders, and of course Radico Khaitan also ending with a cut of almost 3.5%. ICX was the other casualty of the day, down about 8% as the talks of market coupling have resurfaced. A couple of financial names weak. I mean, this is beyond lending financials. ICICI Lombard, Aditya Birla Sun Life, AMC on the weaker side, and BSE, of course, let's not forget BSE. Was down quite a bit as there's concern about those F&O volumes, whether they're drying up. So that's where a lot of the profit taking was. Even defense names, Garden Reach Shipbuilders, for instance, losing about 3.5%. So that's where the weakness was. But then, like we've been pointing out, pharma really stood out. Big pharma rally in the mid and small caps today. So Wockhardt, Newland Laboratories, Natco Pharma, Suven Life Sciences. Many of these stocks are between 10 to 20%. Big moves in some of these names.
Just rounding up the large cap action then, IT on the front foot, HCL Tech top gainer, 3% up. Infi, Wipro, Tech Mahindra up close to about 2%. Reliance Industries, that heavyweight, did well, closing at 1450. ICICI Bank, after 2 days of losses, rebounded today. And a couple of these two-wheelers, Bajaj Auto and Hero MotoCorp, riding in top gear, 1% up. So outperformance seen by some of these two-wheelers. On the way down, Shriram Finance came in for profit booking, and weakness seen in Power Grid, BEL, Adani Enterprises, Tata Consumer. Well, that brings us to a close on this edition of Closing Bell. Don't go anywhere. On the other side is Markets Forward.
The market closes mixed with benchmarks outperforming broader markets. The Nifty gains for the sixth straight day. IT stocks led support to the market while financials dragged.
China's curbs on rare earth magnet exports are starting to pinch, with Maruti Suzuki likely to push back the launch of e-Vitara. The auto major has also trimmed its output target for the model till September.
Maharashtra has raised excise duty on Indian-made foreign liquor while keeping the levy on beer and wine unchanged, sparking big moves in stocks. The state has also introduced a new category for liquor, which is made locally.
Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. We'll also wrap up today's trading action. I'm Rima. With me is Subhi Upadhyay. Subhi, all in all, another session of consolidation, very quiet and lackluster. The only disappointing bit is the mid-caps corrected a bit. Not too much, but a bit.
That's true. I mean, and the good thing is that at least there was some upward bias by the time we got through. But the bears will say that this is the second day running. Or rather the third day running, that the Nifty is not finding enough momentum to sustain very convincingly above the 25,100 mark. Though for what it's worth, I mean, it's 25,141. So, that's what really counts. But yes, the mid-cap profit booking was something that you had to take note of today. After many, many days, the mid-cap index was underperforming the large cap indices with a cut of about 0.5%. And a lot of the pockets which have run up recently, for instance, names in the defense space, names in the capital market space, that's where the profit booking was. And, again, some will argue it's par for the course, but that was the shape and form of today's trading action. The caveat is that today India has underperformed most global markets, whether it's Asia, whether it's Europe, slightly quieter than the rest of the pack. So that was today's day. We have plenty lined up for you on the show. So let's tell you what it's going to be all about. We'll start off with the key movers and shakers of the day. Hormaz will join in with the action. Then, as the headline told you, liquor stocks in sharp focus today, whether it was United Spirits or Allied Blenders or Radico Khaitan, all of them down after Maharashtra hiked the excise duty on IMFL. We'll, of course, look at that. We'll look at some other key movers of the day as well, including IEX. And finally, we'll get to the key market events to watch out for tomorrow. But first up, let's go across to Hormaz for the movers and shakers. Hormaz?
It was a blessing for content hunters like us today, being a news-heavy day. And of course, we're starting off with the Alcobev names, as you just mentioned. The names like United Spirits at 7% lower today. Allied Blenders, Radico Khaitan also. But the ones that bucked the trend, though, were the ones to watch out for. GM Breweries at one point was up 17%. So it cooled off slightly from the high, still ended 10% higher. And Sula, of course, a 7% up move today, but still well below its IPO price. Some of the other newsmakers, though, IEX after the market coupling news break that we just did earlier in the day, 8% lower on the stock. BSE after the exchange moved into the ASM framework, 4.5% down here as well. Oil India, and not just Oil India, of course Oil India was on the back of a positive brokerage commentary, but all other oil sensitives did well today. Marksans Pharma after the block deal, and of course BPCL, HPCL, all of them were doing well in today's session. Capital market names saw some profit booking today. The BSE's news having a cascading effect on the others as well. Look at KFintech, CDSL, MCX, all of them seeing losses of anywhere between 2.5% to 5% today. The other pocket under pressure has been defense, with stocks moving up 50-60% in a month. It is only par for the course that you're seeing some profit booking here as well. And Garden Reach, even after an order win, was down 4.5%, and most of the others too down 2 to 4. And lastly, some of the volume-led movers. Look at Walkhard, at one point ending almost was 18% higher on the stock today. CRISIL's volumes were the highest in over a month in today's session. Natco, IKS and Tata Tele 2 saw healthy gains and on healthier volumes as well. Back to you guys.
Thank you very much for that. Now let's go across to our guest. Ambrish Balika stays with us from Closing Bell. Chandan Taparia of Motilal Oswal Financial Services is now joining in. Chandan, let me start with you. Your thoughts on today's trading action. We didn't close at the day's high, which was above 25,200, but still a green tick. And what would be, your thoughts on how tomorrow might pan out and individual stocks that you have on your radar?
Yeah, good afternoon. Thanks for having me. So Nifty formed a dozy sort of candle, which indicates that tug of war is clearly visible at higher levels. It closed near its opening level after taking support at 25,080, headed to 25,222. So we are witnessing some sort of consolidative move in market from last 3 trading sessions. But the major trend of the market is positive, as index has been making formation of higher tops, higher bottom. So I believe till it holds about 25,000, overall bias could be positive and market has potential to rally towards 25,350 to 25,400. So look for long position, use any small decline till it holds above 25,000 marks. Now talking about Bank Nifty index that witnessed profit booking for third consecutive trading session, but multiple supports are visible at 56,000. So I believe small decline could be bought with support of 56,000 and it can again head towards 57,000 mark. So looking for positive to range bound bias and buy on decline stance in both the indices.
Okay, all right, got that sense, Chandan. Thanks for the quick setup. Let's get to the movers and shakers of the day then. And IEX was in sharp focus. The stocks were down almost 7-8%. This after news came in that Power Minister Manohar Lal is planning to conduct a stakeholder meeting on market coupling when it comes to power exchanges. Abhimanyu is joining in to give us more details. Abhimanyu?
Well, what we have learned from sources is that Power Minister Manohar Lal is going to meet stakeholders over the issue of market coupling and is going to apprise stakeholders about the benefits of market coupling. Also, sources have indicated that whenever it takes place, whenever market coupling takes place, it will take through a broad bid and not an internal bid. Now, market coupling by definition means aggregation and match of buy and sell bids by power exchanges for a uniform price discovery. And if at all, market coupling, when it takes place, it will imply a single price for electricity to be traded at any point through the power exchanges. Now, it has been some time since market coupling has been indicated that the policy would come out in the public domain, but there hasn't been any activity on that front. There have been indications which have been given since the past few years by several ministers, even in the previous government, that is from 2019 to 2024. The then Power Minister R.K. Singh had indicated that market coupling will eventually take place, but had refused to ascribe any timeline to that. Also, on the 21st of February, the Power Secretary had indicated that the Ministry and the CERC were reviewing the Grid Controller of India's report on market coupling. And a government official last year in September 2024 had also told CNBC-TV18 that market coupling is on the cards, but had refused to ascribe any timeline to that. And now, with the fresh set of inputs, of course, it remains to be seen how early this meeting would take place, what kind of suggestions would be given by stakeholders, and what action would further be taken by the minister.
Thank you very much for that. Amrish, quick word on IEX. The market is fearing, but market coupling will come, right, at some point or the other. But every now and then, you know, when there is these stakeholder meetings which happen, you hear voices from the minister, the stock falls only to recover later. Your thoughts on IEX and the way the stock is priced right now?
In fact, I think for the last, 4 years or more, whenever there's a talk of market coupling, you have IEX falling quite sharply. And after a couple of weeks, couple of months, again, it bounces back as, the talk of market coupling reduces. But then, yes, like you rightly said, it has to come sometime or the other. And I think we are closer to that date. And that will make it less competitive for IEX. So I think the margins will fall. And that's one of the reasons why we are seeing that correction. So I would say any sort of a bounce back in IEX over the next few months, I think should be utilized by people to reduce positions.
Chandan, IEX just earlier this week had rallied when MCX got that approval for the electricity derivatives. Today it's taken a leg back. Now, with this kind of volatility in the share price, what are the charts telling you?
So the price structure got changed. It witnessed buildup of short position as open interest headed by 16%. Only the good part is it managed to hold its 50-day exponential moving average, but on weekly chart, it negated the recovery of last almost 5 weeks. So I believe some sort of more profit booking could be seen. As of now, the major support for the counter goes at 182 marks.
Okay, that's a take on IEX. Got that, gentlemen. Let's move on to the other big story of the day, and that is, of course, the fall in liquor stocks. All of them under pressure after Maharashtra hiked the excise duty on IMFL. Banglam is here to break down how this impacts several of the listed companies. Banglam.
Well, the first time there has been an increase in excise duty in Maharashtra all the way back since 2011, the biggest one that we've seen. And that's definitely not gone down well with the names like United Spirits, Radico Khaitan and Allied Blenders. Why is that? Because remember, recently they were hoping for some sort of improvement in their costing, and that's largely because of the UK-India Free Trade Agreement. But that's not the case because the state's taken away what the centre had given them. Maharashtra has gone ahead and increased duty on IMFL, Indian-made foreign liquor, from 3 times to cost of production to 4.5 times the cost of production, which is basically a near 50% jump if you look at it that way. The other thing that you're looking at is that country liquor, there has been a duty increase, but that's just 14%, not as much as foreign liquor. The third part is they've introduced a new section for Maharashtra-made liquor. This is basically grain-based foreign liquor, which is being produced in Maharashtra itself. So all the companies which produce in Maharashtra will now have to reapply for this category, and as a result of which they would stand to benefit. By how much will they benefit? The new revised minimum prices for country liquor, Maharashtra-made liquor, foreign liquor are all up for you on the screen. 80 rupees for country liquor, going all the way up to 360 rupees for a premium foreign brand. Maharashtra-made is about 150, whereas IMFL, the minimum price that it can be sold at for a 180 ml tipple is close to around 205 rupees. As a result of which, we've seen a gash on both United Spirits, Radico and Allied Blenders. Initial estimates suggest that 20 to 22% of United Spirits sales come in from Maharashtra. So the premium end definitely facing the heat. Radico Khaitan as well, 7 to 8% cut. Analysts expect this could be an EPS cut of 6 to 8% on United Spirits and about 2 to 3% on Radico Khaitan. But not all is lost, because 3 stocks in particular are doing extremely well. Let's look at GM Breweries. That's higher in high teens, and that's largely because the street expects them to benefit because of the introduction of the Maharashtra-made liquor category and the lower rise that we've seen in country liquor. So these 2 factors doing well for GM Breweries. They will have to re-register brands with the state, but how long will that take? And by then, do the others go ahead and register as well or not is the big question. But until then, they stand to benefit. The second part, United Breweries, not falling as much. In fact, for a brief part, was also in the green. That's because no increase in duty on beer. And more importantly, the expectation is that those who are having premium spirits will now shift to premium beer, and that itself is what United Breweries' own strategy was as well, premiumization, so that should work for them. And the third thing that we're looking at is Sula. That's again a big gainer in today's trading session because wine is not mentioned in the excise duty increase. Secondly, Sula, Maharashtra is the largest producer of wine in the country. And thirdly, Sula as a stock before this had fallen about 40% from its highs. Last 4 quarters, not much had happened. So maybe what is spirits loss could perhaps be the gain for beer, country liquor and wine. All of them stand to benefit today.
Okay, all right, got that, Maglam. Thanks very much for explaining that to us. Let me go to Chandan on this. Chandan, we've seen those sharp reactions on the stocks today. Would you advise anything? Is anything a buy on dip? Would you advise staying away from the whole pack? What's the advice? United Spirits, Radico?
So I'll focus on the Sula Vineyards. The stock has seen a positive price pattern. In fact, the surge in trading volume also indicate the bullish stance. Recently, it formed the bottom near 292 and given a decisive breakout above 315 marks. During the day, it headed towards 335, witnessed some profit booking again. Buy on decline could continue. So I believe with support of 305, one can look for an upside target towards 350 in Sula.
Sula has also been an underperformer. I think the stock is down about 35%, 38% from its 52-week high. So Chandan sees some upside in Sula with the support at 315. But let's talk about MSCI. MSCI's 2025 annual market classification review results are expected in the coming days. Vivek is joining in to tell us what kind of classifications are anticipated and will there be any benefits for India?
Well, that's right. So it's an important event as far as MSCI is concerned. MSCI will announce the 2025 annual market country classification review results, and this will be done on 24th of June 2025. Why are we watching it? Remember, there is a likelihood that South Korea, which is currently classified as an emerging market, could see an upgrade as far as this classification is concerned and could be classified as a developed market. Now, as far as this particular event is concerned, remember market participants as well as the index provider MSCI have kept it on their watch list for a couple of years now. There have been multiple reasons why it has not yet been upgraded. The latest being that there was a short selling ban of stocks as far as South Korea was concerned as late as till last year. However, as of March 31st, 2025, the short selling ban on stocks in South Korea has completely been lifted. Now, one thing that market participants must realize is that the implementation, if any, of such an upgrade will be a staggered event. It could take close to 1.5 to 2 years to fully implement this event. And what does this mean for India? Remember, India, China, Taiwan, all of them are also part of the MSCI EM index, where South Korea has 10.4% weightage. So the remainder when South Korea gets upgraded to the developed market, the remainder of the flows will get distributed amongst the existing members of the MSCI EM index. There are two components of this particular inflow that India can expect to see. The first component is the active fund buying, which will be done immediately post the announcement. At this point of time, it's tough to quantify the active fund buying. However, we do have an estimate of what we can expect in case this particular development does fructify. India could see passive inflows in the range of $11 to $12 billion. This as per an IIFL Capital estimate. So it's a significant event. It could be deferred, and the implementation definitely will be staggered.
Okay, all right, got it, Vivek. Thank you very much for that. Let's quickly move on to another important story. China's stranglehold on rare earth magnets has, of course, got the Indian auto industry in a bind. Sources are now telling CNBC-TV18 that the government is exploring how to leverage India Rare Earth Limited's production capabilities to manufacture these magnets domestically. We have Parikshit joining in with the details. Parikshit, this is sounding quite interesting, but is it a long drawn-out thing? I mean, I don't know if they can do something very quickly to break the logjam.
No easy answers to the rare earth magnet crisis yet. In the near term, there is bound to be pain and problems. What the government is trying to do in the near term also is to see how certain domestic PSUs, such as Gujarat Mineral Development Corporation, GMDC, and also India Rare Earth Limited, can be leveraged in terms of producing rare earth magnets. Can there be public-private partnerships? Can there be collaborations through which the production from these companies can be maximized? But these are very early stages of discussions. We'll have to see the contours of any kind of final decision. Having said that, to resolve this issue diplomatically, the Commerce Minister Piyush Goyal and also the Minister of External Affairs Jaishankar, their teams have been speaking to the Chinese Commerce Ministry and the Chinese Embassy here in Delhi. In fact, the Indian ambassador to China has taken up this issue with the Chinese Commerce Ministry, and they've requested the Chinese government to show some transparency in the application process and also early approvals for the Indian entities, at least 35 or 40 of them, which have applied for import licenses. In the long run and the medium term, the government is also looking at capital subsidies, PLI schemes and incentives to ensure that there can be a domestic supply chain and manufacturing and assembly of rare earth magnets. This also includes a plan for recycling of used rare earth magnets in the country. So all of those plans are under consideration. There was a meeting held by Commerce Minister Piyush Goyal just before he left for Switzerland and Sweden. And there the consensus and the message was that the government will do all it can to support the industry in this crisis. Having said that, an industry delegation has been wanting to go to China to hold talks with the Commerce Ministry, but we are told that they are yet to get a formal appointment, a formal approval from the Chinese government to do so.
Okay, all right, let's see. I mean, all hands on deck pretty much when it comes to this rare earth crisis. Thanks for that, Parikshit. Amrish, your thoughts? I mean, any take on auto stocks? Because they're dealing with this situation. They were anyway dealing with issues around inventory. I mean, I always ask guests that forget M&M for the time being. Aside of M&M, is there anything else that you like in the auto space?
No, I mean, auto space, I like a couple of these stocks. I mean, including, like rightly said, including M&M, and in the two-wheeler space, I like Hero MotoCorp, TVS. As far as the others are concerned, clearly Maruti also is one of my picks. But the issue today is the rare earth magnet crisis. And I think that could hit us quite badly. I mean, going forward from July onwards, already, I think Maruti has given a warning. And I mean, it's quite difficult to start the processing facility immediately, from scratch, because it takes about 5 to 7 years to actually get the processing facility in place. So I think the only way out for most of the countries, including India, would be a negotiation with China. I think that's the only way out. But I think clearly going ahead, globally, I mean, every major auto manufacturing country would like to become self-sufficient in rare magnets going ahead. So I think that is the way it would happen. But as of now, I think negotiation is the only way out.
Gentlemen, thank you very much, Chandan and Amrish, for joining us. We will slip into a break. On the other side, we'll get you the top corporate voices and the key market events to watch tomorrow. Stay tuned. Welcome back. You're watching Markets Forward, and let's recap some of the big corporate voices that we had today. So first up, Shree Cement Management says the focus will be on profitability over volumes in FY26. That said, they're targeting a 9% top-line growth. They expect good demand supported by an early monsoon. The cement industry volume growth is forecasted to be 8%, while for Shree Cement, the volume growth is likely to be 2 to 3% in FY26.
Next up, L&T. The management believes that the 14,000 crore rupee infrastructure project, which was scrapped by MMRDA, will return in some form. This after L&T had approached the court after being disqualified by MMRDA. As of now, the company has decided to maintain a wait-and-watch approach in terms of other projects. The management expects order flows from the Middle East to remain robust despite the fall in oil prices.
Last but not the least, Blue Spring Enterprises. This is a demerged entity of Quest Corp. It debuted on Dalal Street today. Now, the company's vision for 2030 is to increase margins from 4 to 6% with a near-term revenue growth target of 18 to 20%. They also expect to improve their market share from the current 2% to 3% over the next 2 years.
Okay, so that's a lot of the corporate commentary that we got today. Let's now head across to Upasna for all the events to watch tomorrow. Upasna, over to you.
Firstly, let us look at the global economic cues. Now, coming to India first, one of the most important event tomorrow is the CPI data, which will be out. Now, coming to US, they will be reporting its initial jobless claims, producer price index data. UK will be reporting its trade balance and GDP numbers. In coming to Europe, ECB's speaker, that is Schnabel, will be speaking tomorrow, giving an outline of the economic outlook and the monetary policy. Now, let us look at the key stocks that will be in focus on the back of corporate action. Trent, Tata Chemical and Avantel, these stocks will be in focus on the back of as these stocks go ex-dividend tomorrow. Ethos will also be in focus as tomorrow marks as the record day for the right issue in the ratio of 4:43. That is 4 shares for every 43 held. Lastly, Canara Bank will also be in focus as board meeting is scheduled for tomorrow to approve capital raising plan of the bank for FY25, FY26. So all in all, briefly, these are the events that we'll be tracking for tomorrow.
Thank you. And that brings us to a close in this edition of Markets Forward. We'll be back with more news and updates.
Hello and welcome to Business 360. I'm Arundhati Ramanan and these are the headlines that we're tracking for you this evening. Sensex and Nifty end with marginal gains, but mid-cap index and bank stocks decline. IT and oil and gas stocks offer support. US and China agree on a framework to get the trade truce back on track after 2 days of negotiations in London. US Commerce Secretary says the deal should end China's restrictions on rare earth magnets. The framework needs to be signed off by President Trump and President Xi. India and US make progress towards a trade deal after a week of negotiations in Delhi. Indian government sources say the talks were productive and remain confident of an interim deal before the 9th of July. India to collaborate with Russia as it aims to plug gaps in its fighter jet fleet. Sources say government is actively considering Russia's Su-57 fighters. No proposal to acquire American F-35s. For now, that's an exclusive. Government is exploring ways to incentivize mining of rare earth magnets as China's curbs bite the industry. Sources say government is exploring ways in which it can leverage its public sector unit for production, even as diplomatic efforts to resolve the crisis continues. Copper imports under government scanner. Sources say Customs Department is probing alleged duty evasion under the Asian Free Trade Agreement. Industry writes to the finance minister saying the customs action is arbitrary. Alcohol gets costlier in Maharashtra. The state government hikes excise duty on IMFL and premium liquor by at least over 50%. Also approves a new category of grain-based foreign liquor called Maharashtra-made liquor. This is the first excise duty hike on liquor since 2011 and is expected to add 14,000 crore rupees to the state government's kitty. Top liquor stocks drag in trade. A Singapore flag cargo ship is still on fire for the third day near the Kerala coast. Coast Guard says 40% of the fire has been extinguished. China thanks India for rescuing the crew members, which included 14 people from China and 6 from Taiwan. Israeli forces kill at least 35 people at a food distribution center in Gaza. 10 other people killed in strikes at Khan Yunis. Nearly 55,000 Palestinians have died so far. UK, Australia, Canada and others place sanctions on 2 Israeli government ministers. Elon Musk regrets some social media posts he made about US President Donald Trump during an explosive public dispute. Musk says some of his posts went too far. U.S. cities brace for more protests over President Trump's crackdown on immigrants. Parts of Los Angeles placed under curfew. Thousands marched through downtown Chicago. The launch of Axiom 4 mission carrying India's Subhanshu Shukla and 3 others to the International Space Station delayed once again. SpaceX cites a technical snag. No new launch date announced just yet. Those were the headlines that we're tracking for you this evening, but straight to the day's market action. Benchmarks outperformed the broader markets, with Nifty holding on to levels above the 25,100 mark and gaining for the 6th straight day. IT stocks lent support while financials dragged the market down. Oil and gas stocks also witnessed all-round gains, with the index rising over 1%. In a bid to crack down on cyber frauds, market regulator SEBI has launched new validated UPI handles for secured payments by investors. Addressing a press conference in Mumbai, SEBI chairperson Tuhin Kanta Pandey said that there were concerns over people falling prey to cyber frauds. Pandey said that the check tool, which would be available from October 1st, will allow investors to check if the UPI account belongs to a verified broker.
The issue that we are going to have on a much wider systemic scale, which is the payment system itself, where we are bringing in a new UPI within the UPI system, and you have seen how it will help in knowing for you to know, and you can check up on any bank account whether it is a bank account of a registered invented, either broker or mutual fund. You should be able to check it. So this would be very handy, and going forward, as we all see, it will be implemented from 1st of October.
The big story this evening, US and Chinese officials have agreed on a framework to restore their trade truce after 2 days of intense negotiations in London. Addressing reporters outside the Lancaster House, US Commerce Secretary Howard Lutnick said that the framework will only be implemented after US President Donald Trump and Chinese President Xi Jinping approve the terms of the agreement. He also said that the deal should end China's restrictions on rare earth magnets. However, trade negotiation teams from US and China did not disclose any details of the framework agreed upon in Geneva in May. US Commerce Secretary Lutnick only said that the new agreement solidifies the Geneva deal.
We have reached a framework to implement the Geneva Consensus and the call between the two presidents, right? So that was on June 5th. So we've combined those two. We've reached a framework for implementation. Now the process will be, we're both going to go back. We, Ambassador Greer, myself, and Scott Bessent, who just left a little earlier, which you saw, because he's testifying tomorrow on the Hill. So the idea is we're going to go back and speak to President Trump and make sure he approves it. They're going to go back and speak to President Xi and make sure he approves it. And if that is approved, we will then implement the framework that we have worked hard over these last 2 days. Obviously, the team stayed at it until it was done late into the evening. Absolutely expect that the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that. Also, there were a number of measures the United States of America put on when those rare earths were not coming. You should expect those to come off sort of, as President Trump said, in a balanced way. When they approve the licenses, then you should expect that our export implementation will come down.
And speaking of a trade deal with USA, India and US are making progress towards a deal after a week of negotiations in Delhi. Indian government sources have said that the talks were productive and remain confident of an interim deal before the July 9 deadline. Abhimanyu Sharma joins us now with the details. Abhimanyu, take us through what's going on with these negotiations.
Well, the negotiations took place between the Indian negotiating team and the visiting team from the United States, which was led by the Assistant U.S. Trade Representative from the 4th June to the 10th of June in New Delhi. And now several issues pertaining to market access, pertaining to technical barriers to trade, legal framework, and also several other concerns on sanitary and phytosanitary issues were discussed between both the sides. Now, both the sides are looking to sign an interim deal before the 9th of July to avert the applicability of reciprocal tariffs, which have been stayed till the 9th of July by the United States. And both the sides are also looking for the first tranche of a bilateral trade agreement, which they are looking to sign by the September or October of this year. Now, concerns exist on both the sides. There are sensitive issues for which both the sides are making their respective pitches. Speaking of India's stand, India till now has indicated that it is going to bilaterally resolve the issue of steel and aluminium tariffs, which have been levied by the United States. Also, India may be looking at a minimum import price for products in the dairy and agriculture sector to protect sensitivities. Apart from that, market access continues to be a big issue for both the sides, even as negotiations continue, and both the sides are looking to conclude negotiations at the earliest.
Right, Abhimanyu, many thanks for those details. Now, China's stranglehold on rare earth magnets has left the Indian auto industry in a bind. Sources say that the government is exploring ways in which it can leverage its public sector unit for production, even as diplomatic efforts to resolve the crisis continues. The government is also exploring how to leverage India Rare Earth Limited's production capabilities. On to a CNBC-TV18 exclusive, the Indian government may collaborate with Russia with an aim to plug gaps in its fighter jet fleet. Sources have said that the government is actively considering Russia's Su-57 fighters. However, no proposal to acquire American F-35s for now. Parikshit Luthra joins us now with the details. Parikshit, take us through the government's plan on this front.
The Indian government is deploying a three-pronged strategy to meet gaps in its fighter jet program. This after Air Chief AP Singh recently said that India needs at least 35 to 40 fighters per year. The Defence Ministry had announced a new execution model for the 5th generation fighter program 2 weeks ago, and this was to encourage participation of foreign and domestic private companies and provide them a level playing field with Indian PSUs like HAL. Sources tell us that the government is set to issue a request for proposal for the AMCA program next week, and this will be followed by the first pre-bid meeting with the industry in 15 days. The government may then invite bids in 45 days, so they're moving on this quite fast. As the development of an advanced medium combat aircraft or a fifth-generation fighter has a long development period, the government is also looking at ways to meet immediate needs of the Air Force for a fifth-generation fighter. Now, the Russian government has submitted a proposal to the Indian Air Force to supply and make Su-57 fighter jets. The government is now considering this proposal actively to see if Su-57 fighters can be acquired in a flyaway condition from Russia in the short term and also made in India. The reason why this is under consideration is because HAL or Hindustan Aeronautics Limited already has a Su-30 production line in Nasik, and we have a long-standing collaboration on fighter jets with Russia. Thirdly, the government is looking at ways to develop and manufacture fifth-generation fighter jet engines in India. Proposals have been received from Safran and Rolls-Royce, and these are the only two companies willing to provide 100% technology transfer and intellectual property. No plans as of now to acquire F-35s from the United States, and there is no proposal in front of the ministry either. When it comes to boosting air defense, this is a priority area, and the government is thinking about ordering perhaps 1 or 2 more units beyond the existing order from Russia for the S-400. Now, Russia has already delivered 3 squadrons of the S-400, and 2 more will be delivered by 2026. When it comes to quick reaction surface-to-air missiles systems for the Army, the Defence Acquisition Council could soon take up a proposal for this acquisition, and the total cost of this would be around 30,000 crore rupees.
All right, Parikshit, thank you so much for taking us through those details. And it's time to move to another CNBC-TV18 exclusive. The Customs Department has issued notices to nearly 2,000 copper importers for allegedly evading duty under the India-ASEAN FTA. It is now seeking a 35% retrospective duty as per value addition rules. Industry has dismissed these claims and has appealed to the Finance Minister for immediate action. Timsy joins us now with all of those details. Timsy, what is the potential impact of this move?
Well, yes, what we are given to understand from sources is the fact that the Customs Department is probing a case that is a pan-India case of duty evasion by the copper importers under the India-ASEAN FTA. What we are given to understand that the Customs Department currently has issued notices to over 2,000 copper importers for paying lower duty, that is at around 0% by wrong classification, whereas they are liable to pay 35% is what the Customs Department say as per the value addition rules, and thus they have demanded the payback from the industry along with demands of bank guarantees. Meanwhile, Customs Department in these notices have actually come forward saying that they have validated this through third-party data from producers in Vietnam, and that is what is backing their claims. On the other hand, when it comes to how industry has reacted to it, well, industry has approached Finance Ministry, knocking the doors at Finance Minister's office along with the Revenue Department, seeking an urgent intervention because this, according to them, is arbitrary. And yes, these retrospective claims are actually impacting the entire sector. Industry via Bombay Metal Exchange has issued an urgent appeal to the Finance Ministry urging immediate action. They claim that these imports are essential for AC and refrigerator manufacturers in India who are getting impacted, and these claims are arbitrary and retrospective, which should not be the case because it does not go well with the FTA's spirit. So let's see what happens finally in terms of how do these customs notices actually fare out for the industry, whether the department gets some payout or it lands up at the courts again in a legal battle, something that we'll have to wait and watch for.
Right, Timsy, many thanks for those details. Now, Power Minister Manohar Lal is likely to conduct stakeholder consultations on market coupling. Sources tell CNBC-TV18 that whenever a market coupling will take place, then it will happen through a broad bid and not an internal bid. Shares of Indian Energy Exchange stumbled after the news. Remember, market coupling is an aggregation and match of buy and sell bids by the power exchanges for a uniform price discovery. The centre is looking to slash the average turnaround time for setting up a nuclear power plant. As per a money control report, the government is planning to reduce the time from 13 years to 8 years. The average time taken to build a nuclear power plant globally is between 6 and 8 years. The centre is also planning to increase its nuclear production capacity to 100 gigawatts by 2047. As of now, only an additional capacity of 15 gigawatts has been approved. National Securities Depository is pressing ahead with its plan to raise about 3,400 crore rupees through an initial public offering. According to a Bloomberg report, the IPO is now slated to take place by next month. The IPO will be an offer for sale by existing shareholders, including IDBI Bank, NSE and SBI. Market regulators SEBI and stock exchange BSE have granted approval to Jio BlackRock Investment Advisors to begin operations in India. Jio BlackRock Investment Advisors is a 50-50 joint venture between Jio Financial Services and BlackRock. The company has said that it will focus on building a digital-first product to benefit consumers. On that note, it is time for us to head into a short break. But coming up next, Singapore-flagged cargo ship is still on fire for the third day near the Kerala coast. Coast Guard says 40% of the fire has been extinguished. That and more when we return. Stay tuned. Welcome back. You're still with us on Business 360. Top liquor stocks were under pressure a day after Maharashtra hiked the excise duty on Indian-made foreign liquor and premium liquor by at least 50%. Santya Gora joins us now with the details. Santya, take us through Maharashtra's plan on this front.
So now alcohol consumption is going to become even more expensive in Maharashtra. The Maharashtra government has hiked the excise duty on all categories of liquor in the state. Maharashtra already has the highest excise duty on alcohol across the nation, and the revised rates will further widen this gap. The state government has increased the excise duty on IMFL, Indian-made foreign liquor, from 3 times the manufacturing cost to 4.5 times, a steep 50% hike. Excise duty on country liquor has been raised from 180 rupees to 205 rupees per litre. And this is how this is going to impact our pockets. And before that, so this is how the new excise duty will impact liquor prices in the state. A 180 ml bottle of country liquor, which used to cost 60 to 70 rupees, will now cost a minimum of 80 rupees. A 180 ml bottle of Indian-made foreign liquor, which used to cost 115 to 130 rupees, will now cost at least 205 rupees. And a 180 ml bottle of premium foreign liquor, which used to cost 210 rupees, will now cost at least 360 rupees. The excise duty on the newly introduced Maharashtra-made liquor will also be set between the IMFL and country liquor category in order to promote Maharashtra-made liquor. Sources tell CNBC-TV18 that the Maharashtra government had been working on the plan to revise the excise duty for the last 6 months. The last such revision happened in 2011. The decision is expected to increase Maharashtra's annual excise collection by 14,000 crore rupees, an amount that can go a long way at a time when, according to experts, the state is still facing financial distress due to multiple pre-poll welfare schemes, a claim now denied by the state government.
All right, Santya, many thanks for taking us through those details. But moving on to some international news, Israeli forces have killed at least 25 aid seekers at a food distribution site in southern Gaza. The military has also killed at least 4 Palestinians in an Israeli drone attack on a tent for displaced people in Khan Yunis city. Britain, Australia, Canada, New Zealand and Norway have imposed sanctions on 2 far-right Israeli government ministers for inciting extremist violence against Palestinians in the West Bank. Russia and Ukraine have exchanged over 1,000 captured soldiers. This is the second stage of the agreement struck at peace talks last week. This comes as Russia attacked Ukraine's capital of Kiev with waves of drones and missiles, killing 1 person. Ukrainian President Zelensky called the attack one of the biggest strikes on his country's capital in the 3-year-old war. After nearly a week of heated online sparring, billionaire Elon Musk has now softened his tone against US President Donald Trump. In a post on X, Musk acknowledged that some of his recent remarks against Trump went too far. Musk has even deleted some of his posts attacking the president. Remember, the tiff began after Musk criticized Trump's tax bill as a disgusting abomination. Los Angeles Police Department carried out mass arrests following the imposition of an overnight curfew by Mayor Karen Bass amid ongoing unrest. LAPD reported nearly 200 arrests on Tuesday alone, adding to over 180 detentions over the past few days. The protests sparked by immigration raids have spread to other cities, including New York, Chicago, and Washington, D.C. California Governor Gavin Newsom slammed President Donald Trump's deployment of National Guard troops, saying that democracy is under assault. The Indian Coast Guard continues to battle the blaze on the Singapore-flagged ship for the 3rd day in a row. About 40% of the fire on the ship off the Kerala coast has been brought under control, as per the Coast Guard. The ship is still afloat but continues to release heavy smoke. Firefighting experts from Spain, UK and Netherlands are expected to join the operation within the next 72 hours, subject to visa clearance. CNN News 18's Neetu Regukumar has more from Thiruvananthapuram.
It's the 3rd day since a Singapore-flagged container vessel has caught fire off the coast of Kerala. But even today, though the fire has subsided, it has not yet been brought fully under control. The firefighting efforts are continuing by the Coast Guard and the Navy. 4 of the crew members are still missing, and the search for the missing crew members are still ongoing. 18 were rescued, and all of them were taken to a hospital in Mangalore. 2 are still hospitalized. The others are put up at a hotel in Mangalore. All of them are foreign nationals. Now, the other concerns as far as this is concerned is the vessel had about 2,000 tons of fuel oil and about 240 tons of diesel. So there are concerns about oil spilling and the damage it can cause to the environment. Another 147 containers had dangerous goods. This includes paint, varnish, flammable materials, pesticides. This could all have an impact on the environment, and once it floats into the sea. Many containers have already fallen into the sea. So these are the concerns that are being raised. The authorities, the State Disaster Management Authority is also in constant monitoring of this situation. The alert to the people living in the coastal area is not to touch any objects. If you see them coming to the coast, do not touch them. Maintain a distance of 200 meters and at the same time inform the authorities. But we are also learning that it might not reach the Kerala coast. It might even go to the coastal area in the neighboring state of Tamil Nadu. So this is a situation where we are right now at. The fire has not yet been brought fully under control. There are concerns about oil spilling and also the dangerous goods which are there in this container vessel.
So Neetu there with the latest on what's happening off the Kerala coast. Thank you so much for those details. But with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Let's talk money.
Hello and welcome to another edition of Let's Talk Money with me, Surabhi Upadhyay. The passive investing industry is slowly but surely making its presence felt in India. Out of the total mutual fund industry AUM of approximately 72 lakh crore rupees, almost 12 lakh crores is now coming in from passive funds. By the way, when I say passive, I mean funds that hug an underlying benchmark index, funds where stock selection is not left to a human fund manager. So this industry is surely growing. So how should we investors use passive investing to our advantage? How do we use it to build long-term wealth? That's what we're discussing on the show. And joining me to talk about this are two representatives, people, AMCs that are in the business of passive investing, also active as well. We're not, ruling that out. Well, let me welcome my guests, Anand Vardarajan, Chief Business Officer at Tata Asset Management, and Vishal Jain, CEO at Zerodha Fund House. Gentlemen, thank you so much for joining in. I'm really looking forward to this session because we have with us today one young fund house of India that's all passive. And then, of course, we have Tata AMC that gives investors a choice of both active and passive. So let's start by getting your bird's eye view on where we are, that number that I just spoke of, right? I mean, almost 12 lakh crores of AUM. So Vishal, you go first. And why has Zerodha chosen to go all passive? Let's start there.
Well, you said the numbers, 12 lakh crores. Approximately about 75% of that is in ETFs. And I think about 25% of that is in index funds. We've seen a huge growth, especially in the last couple of years in terms of traction, in terms of, retail investors. So if you looked at the history of passive investing, which started off in the early 2000s in India, I would say the first 15 years was taken by traction coming in more from institutions. Say from 2015 to 2020, traction started from HNI side, and over the last 5-6 years we are seeing traction now coming in from the retail segment as well. If you look at number of investors who are using ETFs, currently there are approximately about 1.8 crore investors using ETFs, and that growth, if you looked at the last 9 months, if you looked at April 24 to December 24, approximately about 45 lakh new ETF users have been added. And 45 lakh new investors, 45 lakh investors were what we had accumulated in the first 20 years of ETFs. So that is what has got added in just 9 months. And approximately the same number of investors, about 45 to 50 lakh folios have been added in index funds as well. And those numbers speak by themselves that now traction is even coming, from retail investors. When it comes to Zerodha Fund House, the main reason why we have, why we are there is because of the fact that at this point of time, if you look at penetration of mutual funds, you have about 5.4 or 5.5 crore unique PAN folios in India. And that's approximately just about 3% of the Indian population. And we feel this number needs to go up far higher than what it is. And we believe that, if you want the next, say 15-20 crore investors to come in to mutual funds, you need to give them simple products, and what could be simpler than introducing passive products to them.
Okay, absolutely. But whether all passive products are simple or not, that is a conversation that we'll get into later, because there's a lot of product evolution also happening. And Anand, let's start by getting your take. So it's very simple. When you talk about a passive fund that will simply replicate the Nifty 50 instead of picking your brain too much on this stock versus that stock. That sounds like a very simple concept. But now you have new indices coming up every day. The exchanges, BSE and NSE, are creating newer and newer indices. And there are more and more products coming out on these indices. So where are we headed?
See, I think we'll have to offer the entire plethora of options to investors, and it's really up to them to choose whether you are a sophisticated client. I think Vishal outlined the cohorts of clients who've entered this space over the last couple of years. And I think about it this way, that their needs, their evolution in terms of understanding of each of these could be at different levels. A simple Nifty 50 index could be a starting point, and as investors get sophisticated, they may say, okay, can I get something better than that in broad market index? Can I look at a mid cap or a small cap, or can you give me a smart beta passive, or these are sectors which we think are in vogue, there is a cyclical play in some of these sectors. So I would like to invest in some themes or some sectors which can give me additional alpha, where I see some structural change or cyclical change. So these are the kind of options which one would like to have, and you would like to have a full suite of products as far as passives are concerned.
Absolutely, and I mean, and I track the monthly mutual fund data pretty regularly, and even there, most of the times when you see the NFO category, a lot of the launches are actually on the passive side. In fact, let's pull up these numbers if we can. Let's talk about FY25, the year that just closed out. So if you're looking at the data coming out of the Industry Association, AMFI, then we had a total number of 150 mutual fund schemes get launched on the passive side. 102 of these were index funds. There were gold ETFs, 3 new gold ETFs that got launched. Gold prices, of course, running away, so that obviously was aiding sentiment. And then there were other ETFs, which were 45 schemes that got launched. So yeah, that in a nutshell is telling you how the industry evolved in the last 12 odd months. So, you know, for a lay investor, like I said, it's easy to understand that okay, Nifty 50 to hona chahiye. It's simply mirroring the index. But then what should be the next few steps, Vishal, for a person who wants to use passives in a more evolved way to complement an existing portfolio?
So so the beauty of passive products, Surabhi, is the fact that, look, you can create many different cuts and themes and sectors and segments, in a passive product. But I think what investors should always be aware of is that build a good asset allocation mix. You should not just be loaded towards equity or one particular segment or a sector. It's good to have a good, an asset allocation mix, across equity, debt, commodity, and through passive products, you can take exposure to all the 3 segments, all the 3 asset classes that are there. So in your equity portion, you can have exposure to, large cap, mid cap, small cap. Now you can make a mix of these 3 categories depending on your risk-taking appetite. Now, if you're somebody who wants to take a lot of risk, you could load your portfolio more towards small caps and mid caps, right? But if you're somebody who's very conservative, you can, kind of take exposure larger towards large cap. One good way is also to kind of, have a good asset allocation across debt and gold as well. Gold has a very low correlation with equity. So the day you add gold to your portfolio, it brings down the risk of your portfolio. So that's one way to, kind of use passive products and build a good asset allocation. There are always, so you can look at a portfolio as a core and satellite, where your core becomes passive and your satellite becomes a place where you can go and take additional risk, which could be through an active fund, which could be a sector, thematic. Now you could decide how you want to play the core and satellite bit. Do you want to have a 75-25%, or do you want to have a 60-40%, or something that you can decide based on, your risk-taking appetite and financial needs?
Absolutely. And the thing is, you have products on both sides. You can build this core and satellite portfolio through active funds or through passive funds or through a mix of both. The question is, what's the right balance? And here, let's start by addressing the large cap category, because traditional wisdom has been telling us that when it comes to large caps, perhaps it's time to play a large part of that through passives. One advantage, obviously, is that passive funds are cheaper. I mean, the expense ratios are much, much cheaper than active fund management. So there, Anand, what would you say? I mean, have we come to a time where, say, 50 to 60% of my large cap requirement should be met through passives? Or is there still a case, at least in India, to put some money, into active management, even for large caps?
See, there are 3 ways there are a couple of nuances that we have to understand in as far as even large caps are concerned. One is you'll have to look at which phase are you in. I mean, it's like just like in monsoon season in Mumbai, it rains heavily. You just don't know which day it rains. Similar the case with active versus passive, if you were to think about it. And we really don't look at it as active versus passive, because if you were to think about 2016 to 18 phase, you had a situation where passives did extremely well. There were some large cap heavyweights which did well, which took the index higher. And if you were in active set of funds, you could have underperformed, because those heavyweights took it higher, and active by design could not have had that kind of participation, because there are stock level limits, etc. Now, conversely, if you were to look at now, where the rally is broad based, I mean, you would find that it is really alpha coming out of stock picking and not out of,
not just a
and
broad
not really
index
beta moves or broad index moves, like you said. So that's one nuance. The other nuance is that of investor. Just to add to what Vishal said in terms of asset allocation, risk appetite, what is the investor good at? Are you a stock picker? Can you pick up the right stock, or are you better off, picking the entire index? So, if you can find diamonds, then you can go narrow and deep, and you can find it. The other option is if you cannot, then you go shallow and wide and just grow paddy, which
cast
is
your net wide.
cast your net wide and just
try and catch all the fish.
Catch all of it.
Yeah.
And the third part of it is, while we say passive, it's not really, the index is not so passive, because it has an automatic cleanser. It weeds out the bad stocks, it pulls up the better stocks automatically over periods of time. If you were to look at, jog your memory 40 years back and look at what Sensex used to have, it used to have a lot of textile companies back then, and today you'll struggle to find even one in the mighty Sensex. Whereas the nature of companies have changed, the sectors have changed dramatically, and that tells you that it has the ability to cleanse itself and weed out the not so good ones.
No, that's a great point, that the index itself is a dynamic beast. It's not static. Absolutely. You don't have the same set of stocks in any index over a course of whether it's a twice a year reset or if it's once a year reset. I mean, most indices have an element of churn as well. But Vishal, weigh in on this debate, because I remember we used to get this report, SPIVA, right? S&P indices versus active. And basically, these reports, industry reports, used to come out with screaming headlines that XYZ percentage of funds are underperforming their benchmark indices. And that gave rise to the whole argument that if the actively managed fund is going to be underperforming, then why should I pay 2% or 2.5% expense ratio for active management? Where are you on that debate?
So that's still there, Surabhi. I mean, in the large cap space, maybe about 80-85% are still underperforming the index. In the mid cap, I don't have the right numbers with me, but if I remember correctly, it's about 70 to 75% even in the mid cap space. But I think the larger point here is not your ability of a certain segment to beat the index, right? It's, as he said, it's the ability for you to pick the right stock, the right sector, the right fund manager, the right scheme. I mean, if someone showed me data and said that, look, Vishal, this is the benchmark, there are 5 guys above the benchmark and there are another 40 guys below the benchmark. I mean, it's those 5 guys who are changing all the time, right? How do I pick the right fund manager? How do I pick the right stock? Which will always be a challenge, whether it's a small cap or a mid cap, or, or a large cap in that sense,
But tell me this. So just to complete the large cap versus mid cap debate, and I think, let me tell viewers the reason why I'm taking a step back, in case you're wondering why are we saying that for large cap exposure, passives are a good way. It's because in the large cap universe, there's a lot of information and data available. Large cap companies come and talk very frequently to the media. So therefore, there is no information arbitrage as such. Everybody knows everything. And therefore, maybe the chance of picking a hidden gem is that much lesser through active fund management. That's why that was the point on large caps. But in small and mid caps, where you have a much wider universe of stocks, there, what's the sense? I'll be honest, when I saw the first of the small cap, passive launches hugging the small cap index, I was wondering, how is this going to happen? I mean, you were talking about buying the whole set of 250 stocks, so to speak. But isn't that the exact place where human intelligence is supposed to trump the index, Anand?
Yeah, you're right. I think I can argue on both sides. One is, if like they say, if you know the risks, hedge it. If you don't know, diversify. Small and mid is exactly the kind of place where you can get trapped if you get stuck in a wrong stock. The second best option is why the entire index, it kind of cancels each other out. And hopefully, you end up with a positive outcome net of that. Think about it, because one, it has too many stocks. The point that you made earlier in terms of how much information is available. Do you get to see, hear the management as often? Disclosure, governance. I mean, and then do you have the skill set, time, some of the stuff that we discussed earlier today in the show. So all this makes it very, very complex. What's the second best thing that you can do is, buy the entire index. You at least know that, you will end up mirroring the index over a period of time.
Returns.
Yeah.
At least you won't land up with the duds.
Absolutely. I mean, it's a bit like boarding the Mumbai local. The best seat is the window seat. The second best place is just getting into the train. Both the window seat guy and the guy who's on the train get to the next station at the same time. One can have a rough ride, one may have a better ride.
A breezy ride.
But the point,
when you reach your destination.
But the point is that how sure are you to get the window seat?
Yeah.
I think that's the metaphorical window seat that you're looking for in small caps and mid caps. You get it right, well and good. Second best option is not so bad.
Well, point well made. Very quickly, 30 seconds, you have to hit a break. But Vishal, he's already made a strong argument of why do passives even for small caps. So you want to add anything?
So they always say that with passives, you'll always be a silver medal, yeah. Right. So, I mean, that's all
At least
I
a
can
silver
say.
medal is guaranteed.
So, and the chance if you land up with a bronze one could be a bad
silver's
one. So,
better.
yeah,
That's true. That's true. Okay, great. We'll take a quick break on that note, but we continue the conversation on the other side because now there are passive products for thematic funds. There are passive products that are combining a lot of complex factors, the so-called smart beta passive mutual funds. So, are they worth your while? We'll discuss this after the break.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week we are discussing passive mutual funds and whether some of the more evolved, newer passive products, which let you invest in, say, certain themes, certain sectors, or certain complex strategies, whether they are worth your while. And of course, we're in conversation with Anand Vardarajan and Vishal Jain. Anand is from Tata AMC and Vishal, of course, the CEO at Zerodha Fund House. So now, gentlemen, I want to talk about sectors and investing in sectors and themes. And here I always play the investor's self-appointed advocate, right? A lot of funds get launched when sectors are doing well. It's the nature of the market. There's excitement, so defense funds will get launched, or, railway and PSU funds will get launched. And many a times, we've seen that these launches are on the passive category. And that's when, at least, I get sometimes a little, uneasy, wondering whether people understand the risks involved well enough. Anand, what's your thought? Because if it's let's say a defense sector index or any other sectoral index, which is fairly narrow, and then within that, it's a passive product, so you're just hugging the underlying index. Isn't that very concentrated risk?
Yeah, you're right. I think one is there are fads that you have to avoid. And if it's the most popular thing and everyone and their uncles are talking about it, then you know that this is getting a little too much, overheated, and best to kind of avoid. I think I will distinguish this into two parts. One is whether the story is cyclical or structural. Take the case of, there have been themes like, say for instance, India over the last couple of years, tourism as a theme has kind of evolved, or capital markets for instance, like pre-COVID, I think there were about 4 or 5 crore demat accounts. Post-COVID, now we have roughly 20 crore demat accounts, and 15 crore demat accounts have been added post-COVID. So tough to call it cyclical. So if it's a structural theme where we see financialization of savings, we think capital markets group booming and so on, then possibly all the players in the ecosystem, which could be say brokers, RTAs, asset managers, wealth managers and so on, could benefit. So an index of that sort could potentially do well over a period of time.
Okay.
If you were to look at something where, like you mentioned, if the sector is very narrow, very few stocks, hardly even churn has any kind of space because you just keep rotating in and out of the same 12, 15 stocks, that becomes a little tricky to manage. And the risks obviously then become much higher. So you have to really see whether the sector theme is tailwinded, whether those tailwinds are already there in play, and if that is the case, then perhaps it's not a bad idea to look at some of them favorably.
Okay, now let's ask both of you to wear the hat of advisor, which I know could be unfair because you guys are, product manufacturers. But Vishal, maybe give us your own example, or someone in the family, friends or family ask you to create a portfolio using maybe an all passive portfolio or a reasonable blend of active and passive. Just give us a broad composition. What would you go with? Small cap, large cap, sector, themes, etc., etc.
So I'd go for about, keeping in mind that I'm conservative in general. So I'd possibly look at about 40% large cap, maybe about 20% mid cap, about 10% small cap, 15% gold, and the rest in debt is something that I'd look at.
Now within that's the question. Will it be all through passives?
Yes, if I think that there is something which, I think that maybe might outperform, like you're saying, if there's some sector theme or some product like that, maybe max 10% of that portfolio I could allocate towards, one of those, I would say, flavors of the month.
Okay, all right. But all fully, passive investing portfolio there, cutting across, of course, some of the segments and asset classes that you spoke about. Anand, same question to you. What's the perfect blend portfolio?
I don't know perfect. It's horses for courses. That's why it's called personal finance. It's
yes.
Not, it's
personally for you. Let me
correct.
ask you.
But I would think that maybe 80-20, 80 in favor of active, 20% passive.
Okay.
And within that, if I were to split, I have a 40-30-20-10 rule, which is 40% large caps, 30% could be mid and small caps, 20% could be some of these kind of sectoral bets that that I feel convinced about, and maybe 10% is something which I would just keep aside for any kind of opportunity or just some cushion.
Okay, and the 20% that would be passives through passive funds. That would be what kind of passive? Will it be all large cap indices based? What are the other things that you feel very convinced about?
See, some of these sectoral bets is what I could be a wrong investor because I could be slightly aggressive. It could be different for different set of investors, but I would have a slightly more aggressive tilt to some of these sectors or themes, depending on what I feel constructive about at that point in time.
Okay, all right. What we've not discussed, obviously, viewers, you need to go back and discuss this with your own individual advisors, take your own informed calls, and then decide. First of all, what's your asset allocation, and then within that asset class, do you want to do it through the active route or the passive route? But one of the things that we haven't discussed, one of the greatest advantages of passive investing, that is, it's such low cost, a fraction of what active investing would cost us. Just a quick sense on whether the costs are already at rock bottom, or Vishal, would they head even lower? How do they compare with the global average?
If you look at the large cap ETFs now in the market, most of them are at about 4 or 5 bips, which is comparable to international markets as well. So I don't think in the large cap space, you can go down any further. At this point of time, mid caps and small caps and the other products are, products which are still gaining economies of scale. And, once the industry or those products get economies of scale, I mean, slowly costs will start coming down in those as well.
Okay. Your final tips and advice, I mean, the checklist, important checklist to keep in mind before you go in for passive investing.
I've said all that, Surabhi. Asset allocation, look at a core and satellite kind of an approach, and, keep investing at regular intervals in the market.
And when you choose within passives, are there any metrics to track or parameters that you should be aware of?
So if it's if you're looking at index funds, then definitely look at the tracking error and the expense ratios. If you're looking at ETFs, then definitely do look at the liquidity as well as an additional criteria.
Okay. And Anand, your final piece of advice to our viewers?
First, don't fall for fads. Be very clear whether you're getting into something which you understand, first of all. Second, this active-passive debate is kind of overdone. I think you should have a blend of both, because each of these work differently at different points in time. 3, cost to customer that I look at is basically your tracking error, tracking difference, plus your cost. I think overall you should really look at it in toto and see whether it makes sense, because TETD becomes an important thing to look at when you're investing in passives. So please pay attention to that. Yep.
Okay. All right. I think that's a very helpful advice, and it's a good mini classroom on passive investing for those who may not have started so far. Thank you so much, both of you, for joining in and giving us important context when it comes to passive funds. Thanks for joining in.
Thank you, sir.
Thank you.
Well, with that, we're out of time on this edition of Let's Talk Money. Thank you so much for being with us. Keep sending us your feedback, comments, and queries. We'll see you again next week with another theme.
Let's Talk Money.
Hello, welcome to News Center. I'm Parikshit Luthra. The big story we are tracking this evening: India and the US are making progress towards a deal after a week of negotiations in Delhi. The US delegation was led by Assistant US Trade Representative Brendan Lynch. Indian government sources have said that the talks were productive and remain confident of an interim deal before the 9th of July deadline. Sources also said that the negotiations helped in making progress towards a mutually beneficial and balanced agreement. Both sides negotiated on market access, technical barriers to trade, customs and trade facilitation, and legal framework as well. We're now joined by former Foreign Secretary Kanwal Sibal and Anjali Prasad, former Indian ambassador to the World Trade Organization. Thank you very much for joining us. Ambassador Sibal, what's your sense on the current status of negotiations? The US, it seems, wants to maintain that 10% baseline tariffs. They all also want access for US wheat, rice, maize and dairy. These are red lines for us. Do you think it's realistic for us to expect an interim deal before the 9th of July?
Well, we are presenting a positive picture, which in diplomatic terms is a good strategy, because we have also to see how we address our own public opinion. This 9th July deadline that has been imposed means that actually we have been coerced into reaching some kind of an agreement. This is a form of an ultimatum, frankly, if you look at it that way, that that by 9 July, if you can't, then those 26% or 27% tariffs across the board will be applicable to India. Now, in a sense, whether under this kind of duress we can get the kind of deal that we want, it will always remain a question, because the United States, especially President Trump, with his extremely erratic behavior and his obsession with tariffs, has got the upper hand. And since the United States is our biggest trade partner today, we have to see how we can protect our interests and not get locked into a battle with the United States, which could cost a lot of several sectors of our economy. But let me also say that the United States, two things. One, that they will not make much of a concession to us. They are negotiating from a position of strength, not only with us, but with everybody. And secondly, it's Trump's unpredictability and erratic behavior and his obsession with tariffs. You never know. I mean, you can reach an agreement, but this agreement may not be found satisfactory by Trump, or they may change the basis of the agreement at some future dates. There is no certainty that any agreement you reach would be durable, as we've seen in his conduct elsewhere. But having said all that, if we can achieve a satisfactory deal, despite all the pressures that the United States is putting on us, and you've outlined the areas on which they are putting pressure. On agriculture, I don't think we can make the kind of concessions they want. On dairy, also, the non-tariff barriers we have, I don't think we can lift them. In some areas, yes, walnuts, pistachios, almonds, things like that, we can give them satisfaction. In some other areas too. Digital trade, as well as the other issues that are there on the table, these are complicated issues. They can't be decided in a hurry. You can lay the benchmarks as to what are the kind of concessions both sides can look at. There is also the question of government procurement. You not mentioned that.
Okay.
But clearly the United States wants to also have access to that. And this is a very sensitive issue. So these are complicated issues. I think we're looking at some kind of a interim deal, partial deal before 9 July. And then the basis of longer-term discussions for the
for a larger deal
by October.
Exactly.
Will carry on.
Right. I'm going to come back to you, Ambassador, but let me get in Ambassador Anjali Prasad. Ambassador Prasad, thank you so much for joining us on the program. Let me begin by asking you, clearly the US is putting a lot of pressure in India, one, to maintain the 10% tariff, also to drop non-tariff barriers and give significant concessions. How much leverage do you feel India has at this juncture, considering the time is running out?
Thank you very much for having me on this program. First of all, I would like to say that I agree entirely with what Ambassador Sibal has just said. We appear to be in a situation of coercion. And meeting this 9th July deadline on very, very technical and difficult issues like digital trade, technical barriers to trade, and legal framework is, I think, not practical. First of all, we would need to see how much we are willing to bend to the United States on our critical interests. We have to remember that this is a trade deal like this is a derogation from the multilateral system, which was formulated as an equitable rules-based system for economies, particularly like India, which are in a developing situation. We may be the fourth, fifth, XYZ largest economy in terms of GDP. But let's not forget that's because of our largest population. We've got to look at all these things from the point of view of the per capita income or the per capita GDP. We are not equals in this negotiation, certainly. And as Ambassador Sibal said, the US has an upper hand and they are being aggressive. They have this advanced developing country narrative, which they have been peddling for a long time in the WTO. And they want to put India in that advanced developing country narrative. And they are interested, let's be very blunt, only in our market. Now, my main point is that no trade deal is worth its salt if it makes the country poorer in per capita terms than it already is.
Okay. Ambassador Prasad, that's a very important point. So you're saying that even if we're not reaching an agreement, if we are being pushed against a wall on our core interests, Ambassador Prasad, we should not rush to have an interim deal. Let there be more time. Would it be harmful for our interests if we do not have a deal and reciprocal tariffs come into effect on the 9th of July? Will things be that bad?
I don't think so. We should take our time. These interim deals, if we look at the history of these so-called interim deals, let's look at the early harvest of the India-Thailand FTA. What did it do to us? It completely damaged our fledgling electronic industry, which was coming up. It was an infant industry. It damaged that. It damaged a number of other sectors. And we had to give up that India-Thailand early harvest because of the damage it caused to our manufacturing sector. So we have many such agreements which have in the past. Why did we walk out of the RCEP? We walked out of the RCEP because it was in many ways going to harm us. And this kind of hurry that we are being pushed into in very, very critical sectors, like Ambassador Sibal also said, I think is not in our interest.
Right, that's an important point. Ambassador Sibal, to get you in at this stage, India has also been considering ways to take up the issue of steel and aluminum tariffs that the US has imposed. Now, the US has hiked tariffs on steel and aluminum to 50%. We're asking the US to waive this off for India as part of the interim deal arrangement. Do you think India should be considering moving WTO or reducing concessions for India, for America and other sectors in retaliation to this?
I think we should wait till 9th July and see what we come up with. At this stage, to drag United States to the WTO will, I think, derail the kind of negotiations that we are conducting with the United States. My understanding is that the United States is extremely demanding, very demanding. And the cue comes from Trump himself. I mean, he's not at all au fait with facts and figures. He says whatever comes to his mind. He's also talked about the deficit between the two countries being $100 billion, which is not the case at all. He's also spoken about zero tariffs that India is offering, which is not true. Howard Lutnick at the US-India Strategic Partnership Forum the other day in Washington, D.C., a few days ago, was very aggressive in terms of India opening up agriculture. So they're going to make strong demands. And if in the interim deal we agree to these strong demands, it is not going to end there. Then in the future negotiations, they will make more demands. In other words, the pressure is coming right from the top, where the litmus test for any satisfactory trade agreement between India and the United States has to be what Trump wants. And for Trump,
That's
his
right.
tariff business is absolutely the centerpiece of his entire foreign policy, not geopolitics. And mind you, although you not asked me the question, now in return we want access to technology and more investment and this and that. But he goes and tells Tim Cook that India can take care of itself, don't manufacture iPhones in India. Now, if this is said, then what are we going to get in return from this? It doesn't necessarily mean that Apple will bend or others will not come in, because the Indian market is very attractive.
That's an important point.
Others in the way.
Ambassador Sibbal, that brings me to my next question. Look at what China is doing in those negotiations. They're making this about rare earth. They're making this about visas for Chinese students. They're talking about how the Chinese national interest, the interest of an average Chinese, has been hurt. And they're making a large-scale negotiation out of this. Ambassador Prasad, do you feel that we can take a cue from what China is doing, and, as Ambassador Sibbal is also saying, demand a larger basket of things in response to the kind of pressure that the US is putting? Can we ask for GSP? Can we ask for assurances on H-1B, on visas for Indian students? Can we make this a larger exercise in our national interest?
Look, we can make it a larger exercise, but my assessment is that neither GSP nor visas will make any headway with the kind of things that have already happened. My point here is that we are basically trying to reverse the damage that the US has already, seemed to have caused us by trying to lower tariffs and trying to appease them in a way, I would say. We should stick to the agenda. I do not, and within this agenda, we should stand firm, because at the moment, we are in a situation where we need to defend our policy space in all these areas. Agriculture is extremely sensitive. Manufacturing has become sensitive because it is now a sector which is completely decimated. Similarly, digital trade, we haven't even arrived at an agreement multilaterally. Then to go into a derogation of some sort, which a bilateral trade deal amounts to, appears to be a little too early and too premature to my way of thinking. So
All right, we've completely run out of time. Yeah, but thank you so much, Ms. Prasad and Ambassador Sibbal, for joining us. Very, very important views. So there is clear coercion on the part of the United States, and there's a need for India to stand firm. But possibly we also need to get some kind of interim arrangement going in the next few weeks. We're taking a short break, but don't go anywhere. The news continues on the other side. Welcome back. You're watching News Centre. The Union Cabinet has approved 2 railway infrastructure projects worth more than 6,400 crore rupees. The projects are aimed at enhancing connectivity and freight movement across Jharkhand, Karnataka, Andhra Pradesh. The projects will expand railway network by 318 kilometers. The project in Jharkhand runs through the coal belt and offers connectivity to Ranchi and Patna. The project in Karnataka connects Bellary and Chitradurga districts and stretches into Anantapur district of Andhra Pradesh. 7 railway officials have been suspended for sending an unhygienic and dilapidated train for troop movement from the northeast to Jammu and Kashmir. The Border Security Force had lodged a protest with the railways over the condition of the train sent to transport troops from Tripura to Jammu to provide security for Amarnath Yatra. Videos showing the condition of the train went viral on social media. Acknowledging the incident, Railway Minister Ashwini Vaishnav said action has been taken and 7 officials have been suspended.
सर आपने अभी 2 लाइन के डबलिंग का अनाउंसमेंट किया, रेलवे में लगातार जो इंफ्रास्ट्रक्चर बढ़ा रहे हैं उसको अनाउंसमेंट किया, लेकिन आज सुबह से एक सोशल मीडिया पर वीडियो वायरल हो रहा है।
उसको ऑलरेडी एक्शन कल ही लिया जा चुका था। वो ट्रेन की रेक कल ही रिप्लेस कर दी गई थी और जो 4 अधिकारी इसके लिए जिम्मेदार थे उनको सस्पेंड भी कर दिया गया।
All right, let's move on. The government has encouraged financial entities to use Central Registry of Securitization Asset Reconstruction for KYC. Sources tell CNBC-TV18 that regulated entities must use a central Know Your Customer registry to onboard existing customers. Sapna Das joins us with more details. Sapna.
Well, what we're given to understand from sources is the government is very keen for the regulated entities to basically increasingly use the central KYC unique ID as far as the Know Your Customer process is concerned. Now, we are given to understand that the central registry carries KYC data of over 103 crore individuals. However, what is being observed is that probably the regulated entities across the board are not really leveraging this data to the fullest. For instance, the government has also already changed the PMLA rules last year itself, which basically allows the interusability of the KYC data. So basically, the point here is that once the central KYC unique ID is available and has been downloaded by the regulated entities. So in terms of onboarding the existing customers, a repetition of those KYC documents is not required. I think this is a big ask and a big push that the government along with the other financial regulators has been trying to do. And over a period of time, some success is also visible. So for instance, the government is very keen that the number of uploads, downloads and updates in the central registry as far as the KYC data is concerned, that really picks up. Hence, we are given to understand that as of May 31, around 150 crore downloads of KYC data have actually occurred, and the daily average now stands at 15 lakhs. This is a big number, big jump since 2019. But we'll have to keep a watch on this space as to how this really goes forward.
And moving on, Indian government is working to increase exports and find new markets for Indian manufacturing. Commerce Minister Piyush Goyal was in Italy recently to further ties and explore ways to increase tourism, filmmaking and exchanges to encourage more Italian companies to make in India. Abhimanyu Sharma gets you this report.
Commerce Minister Piyush Goyal visited Italy to further India-Italy business ties. He met Italy's Deputy Prime Minister and CEOs of top Italian companies to discuss ways to increase their investments in the Indian market. Apart from business ties, encouraging Italian filmmakers to come to India was also on the minister's agenda. Kabir Bedi, an internationally renowned actor, hopes that more Italian films will be made in India in the coming years.
Indians and Italians work brilliantly together. And if this relationship can be furthered at the business level, it will lead to a real fantastic jugalbandi. We have things that we can get from Italy, the excellence of their machines that make industrial equipment, their fashion, their food, their textiles, so many things that we can learn from Italy, as well as send to Italy. And I think with Prime Minister Modi and Meloni of Italy having a rapport, the drive is to bring more Italian producers to India, and also to let them know that the government has got a scheme of subsidies for foreign productions up to $3 million per film, depending on the expenses in India, to be a financial assistance system which is of the utmost importance to producers today. And I think spreading the word of this will encourage Italian producers to think of projects that have India as their base, as their location, and the focus of their stories.
Italy is India's fourth largest trading partner in the European Union after Germany, Belgium and Netherlands. Bilateral trade in FY24 was approximately $14.56 billion, with Indian exports touching $8.76 billion. The Bonfiglioli Group, which specializes in machine tools and the robotics sector, has offices in Tamil Nadu and Maharashtra. The Bonfiglioli Group is among the Italian companies now looking to increase manufacturing in India.
Our future plan is to invest more. So for us to have a strong and even stronger collaboration with Indian companies that are suppliers, that are customers, is for us really a precious support yesterday, today, and for the future. So in India today, we have no foreign manager, no foreign workers. We have all top managers that are Indian. So our idea is anyway develop also in the tech center that we have in Chennai, dedicated solution made in India.
During the visit of Commerce Minister Piyush Goyal, discussions were held on increasing trade and collaboration in pharmaceuticals, Industry 4.0, gems and jewelry, shipbuilding and energy transition. Both countries believe that the India-EU FTA will encourage closer trade relations between India and Italy as well. In New Delhi, this is Abhimanyu Sharma for CNBC-TV18.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
The Indian government has announced a new scheme to incentivize electric car manufacturing. But the question is, will it help draw in EV makers to make in India? Well, not Tesla. The company only wants to sell in India for now and is looking at opening showrooms here. But the heavy industries minister says that Tesla is unlikely to make in India anytime soon. Now, while the government is trying to roll out the red carpet, Beijing has put a spanner in the works for existing plans. China's stranglehold over rare earth minerals has the potential to choke automakers across the world. In fact, leading Indian EV makers have sounded the alarm bells. Globally, the big auto companies are putting the brakes on their EV plans. Companies like Tesla are struggling with sales, which are down quite sharply, while China's BYD is racing to capture share. Now, there's a lot happening in the EV space. But is it a case of much ado about nothing? Quoting a line from Shakespeare's Macbeth, full of sound and fury, signifying nothing. Is the EV sector caught in a web of its own making? Hello and welcome to our brand new series, the CNBC-TV18 Editors Playbook. Each week, our team of editors will put the spotlight on the most compelling events across the world and try and decode what they could mean for India. Today, we turn the spotlight on the electric vehicle ecosystem. Joining me on the program, a packed house, Prashant, Nimesh, Surbhi, Sriram and Parikshit joining us from Delhi. Guys, thanks very much for being here on the Editor's Playbook. But, you know, let's go straight to you, Parikshit, because the big development this week has been that much anticipated, much awaited EV policy to make in India. Let's take our viewers through what the contours are, what the government is offering by way of incentives. Is this red carpet really red enough to draw in manufacturers?
Well, this policy, Shireen, was announced almost a year ago, 12 to 13 months ago, and it's only last week that the final guidelines around implementation came out, which means the scheme is now open for applications from foreign OEMs. Now, what does this essentially mean? It means that you have to give a commitment to the Indian government that you will invest up to $500 million US. That will be the minimum investment over a 5-year period. You also have to give an equivalent bank guarantee to the government. And what will this allow you to do? This will allow you to import 8,000 cars per year, fully built electric cars, to India at a 15% import duty. Currently, the import duty on fully built cars is 100%, something that has not always gone down well with the likes of Tesla and Ford. So here, you will be able to get a duty concession up to 15%. You'll be able to get fully built 8,000 electric cars per year. If you don't meet the quota, you'll be able to roll over for the next year. But there are conditions as well. The condition is you need to start manufacturing within 3 years. You need to have 25% domestic value addition within 3 years and 50% domestic value addition within 5 years of manufacturing. 5% of the total committed investment of $500 million could also go into charging infrastructure. But it remains to be seen, Shireen, whether foreign OEMs will be interested in this. India is signing so many FTAs. Yeah. We've signed one with the UK, which has a quota system. It's only for high-end cars. We're signing an FTA with the US and the EU. So companies would like to wait and see what is the duty concession under those FTAs. If it's 10% or even 5%, will companies want to invest in such a scheme? That remains to be seen.
No, in fact, that's a very important point that, this scheme is being rolled out at a time when we are negotiating FTAs. Donald Trump has gone hoarse crying about how high our tariffs are. And it's very clear already, Tesla is not making in India anytime soon. They want to sell in India. They've taken up space for a showroom in Mumbai, but they're not going to be making in India. And as Parikshit was pointing out, I mean, till you have demand visibility, even at a concessional rate of 4,000 odd crores, that is the initial commitment that we expect people to make. Will they want to come via the FTA route, avail of lower duties as opposed to actually setting up manufacturing in India? So I would imagine that all of this is going to be up for debate, discussion.
And one more thing, with Tesla, I looked at for example, the Model 3, which is what we talk about. The cost is it's about 29 lakhs. Even at zero import duty, Parikshit was telling us 15% is the import duty, but even at zero import duty, the estimate is it's another 5-6 lakh rupees in terms of, distribution, dealership, this, that, the other. So you're looking at a cost of about 36 odd lakhs. Right?
And exchange rate.
And exchange rate, etc. as well. So the point is, will that be really feasible competition? How does that all play out?
But it's close enough to immediate competitors and rivals. The Mahindras are pitching at 30.
Yeah.
But that's their high-end model.
Tesla at 35 or 37, 38.
Yeah, but the brand matters. The brand matters, right?
So if you're
at the
buying
end
an
of the day.
Indian brand for 30 lakhs and if
Yeah.
you're getting Tesla for
Tesla.
40
I
lakhs.
own a Tesla.
You know, Indians have this.
I think that the brand allure of Tesla,
Has
5-6 years ago was like Tesla was Tesla, right? Now you got so many EV players. You got, it's just maybe that.
Still, if you ask an Indian any customer between say Tesla and a BYD, they'll still prefer a Tesla over a BYD because the brand recall is still
I'm saying,
there.
Nimesh, Tesla versus BYD, but the point is Tesla versus
Tata Mahindra.
Because look, the fast chargers, for example, we don't have fast charger infrastructure for Tesla, for example. I mean, those considerations. And I was wondering what Parishit was pointing out. Tesla makes in the US, Tesla makes in China. Will we offer the same terms? I mean, importing from US, I'm assuming, will add a lot more logistic costs, etc.
Yeah.
Will we allow concessional duty for cars out of China? Fair question. I don't know.
Well, we're not doing an FTA with China. We're not doing an FTA with China. We're doing an FTA with the US. So that's a different story altogether. But since we are talking about China, Surbhi, let's talk about China. BYD has captured mindspace and headlines, racing ahead in terms of share. But the China story, really a compelling story as far as EVs are concerned.
Absolutely. And they have been, so to speak, the poster child in the whole EV revolution. And imagine this. Up until COVID 2020, China was a net importer of cars. Today, it's one of the biggest exporters overall. And China today accounts for 62% to be specific, of the total EV sales across the world globally. So they're a very big player, but they're at a very interesting inflection point. Many times you see Chinese industry in different parts has an ability to self-destruct from time to time as well. Is the Chinese EV market at that moment right now? And I'll come to this with some facts, just some basic data points to talk about this. EVs, or NEVs as they're called in the China parlance, new electric vehicles, right now account for 40% of the new car sales that are happening in China in any year. But the stocks have risen alarming levels. Dealerships are running total inventory of 57 days. And according to their own car manufacturer association, that's the highest since December of 2023.
But we should also factor in the trade war and the glitches because of that.
No, and
this has been building for a while.
The overall slowdown in China.
The mood right now is
and this has been building for a while. Right now, it has got nothing to do with the US tariffs unleashed, got nothing to do with what happened in April. This has been building. Inventory levels have been rising. And in a response to this, on the 23rd of May, BYD unleashed what some in the Chinese automotive sector are calling the Evergrande moment of China EV. And we know what happened with the property market and what happened over there. So just to go forward, sales as of May were okay. I mean, BYD's own local sales were about 15%. That's the slowest they've seen in the last many months and years. So the pace is coming down, but it also depends. I mean, you have new model launches, someone else, Geely does better, etc. Very quickly to talk about this. So the discounts are up to 30 to 35%. That's what BYD announced, and everyone's worried. This is the third price cut that BYD has taken since March. So it's extremely rapid, the pace of price cuts as well. Why is BYD doing this? I tried to read a lot of literature around this, and the overall wisdom seems to be two primary reasons. One is to, meet their own very expanded targets. They have set out very ambitious targets of 5.5 million units. They're only at 1.76 million units so far in May because of the slowdown and the overall consumption, patterns changing over there. The second is people say it could be a long-term strategy. BYD wants to start a price war to get consolidation going in the market, to gobble up the small players, clean up.
You mean in the China market?
Sorry?
In the
we're only talking the Chinese market right now.
Okay.
They want to clean out the small guys, become the most dominant player, almost unparalleled or unrivaled player in China. So that's what's going on. The question is what happens now and what are the Chinese industry players saying? Even the Chinese government has taken very clear notice of this. So here's, here are the statements. The Automotive Association says disorderly price wars are not conducive for the industry. The chairman of Great Wall Motors says that it was his quote, this is an Evergrande-like moment for the Chinese EV sector. We need to act now. Chery Automobile CEO is saying that we are being coerced into a price war. We don't want to cut, but how can we stay alive? You have Geely Auto, which is the huge other rival to BYD, saying that we should be competing on value and not price. And there's a lot of murmur now within the political circles as well. The People's Daily, which is the de facto mouthpiece of the government over there, has said, and I quote, that low price and low quality products would seriously damage the international reputation of made in China. So the government is taking note, which brings me to the final
We've seen this happen with e-commerce a few years ago.
Exactly. They've done that with e-commerce. They've done that with the IT sector.
Predatory pricing.
They are not going to let this run unchecked because they know what the implications are. And that is really the question. By the way, there's serious pressure on dealerships. 2 dealerships went bust in the last 1 month in China just because there's a cash flow management issue. I mean, and the sense is that BYD is forcing its vendors to cut prices by 20-30%, which is why people are
and this will have global implications. I mean, this is going to have implications not just in China, but outside of China as well. And, you know, all other OEMs are going to be watching this space closely. But since we are talking about China, let's talk about a big development that actually impacts the Indian EV sector. And we've had now Bajaj Auto, TVS, as well as Tata Motors, 3 companies coming on CNBC-TV18 and saying very clearly that if we don't sort out this rare earth magnet issue, it is going to put the Indian EV sector in a position where things could come to a grinding halt. Those were the words used by July. But let's go across to Parikshit. Parikshit, you know, this is a serious problem. We are given to understand that, you know, meetings have taken place even at the level of the cabinet secretary to try and see what could potentially be the way out. What are your sources telling you? I mean, what could be the options that India and Indian industry as well as the Indian government could look at this point in time to address this big problem?
Well, this is an issue that has gone all the way up till the Prime Minister's office. You're right. 3 weeks ago, the Cabinet Secretary held a high-level meeting to review the situation regarding rare earth magnets. We believe that the Minister for Commerce, Minister for External Affairs, Minister for Heavy Industries and officials in the PMO are all reviewing this matter on a day-to-day basis. The problem is, and this is what top sources tell us in the government, that you have no option but to follow the new procedure that has been set out by the Chinese government. Well, if you follow the procedure, and companies are already doing so, the problem is you're not getting approvals. Applications by almost all companies are pending with the Chinese. They have not been approved since the 4th of April when this rule came into effect. So no supplies altogether. What are the options? Number one, instead of just getting rare earth magnets, experts tell us and industry bodies tell us that you could possibly consider getting sub-assemblies. Now, what is the problem with that? One, first of all, there are quality control orders. Second, you've got PLI schemes, the PM E-Drive schemes, which have domestic value addition criteria. How do you go around that? So we believe that the government is considering this as a measure, as an interim proposal, but then all the tweaks will have to be done. And only then will companies be able to have such imports. The second option is reach out to suppliers and other nations who have pre-existing inventory of rare earth magnets. But then the pricing will be very high, and it remains to be seen that in such a volatile environment, does anyone have such supplies at all?
Who's sitting with
Precisely.
these magnets?
And it's not just our own companies. In Europe, US, everybody is crying hoarse that, you know, they are going to run out of business.
And you know,
they have a lot more to lose.
Intervention that I'll make, Shireen.
Yeah,
just one quick point, that the government and top sources here tell us that the fight right now is between US and China. And that is why China is sending out this message to the world. But clearly, at the moment, we seem to be the worst affected.
Yes, and you know that cost, even if we do tweak the rules and allow this under PLI and so on and so forth, even the cost of importing assemblies is going to be something that Indian auto companies are going to have to factor in, and that's going to be a serious consideration as well. But you know, to the point that you were making,
you know, see where, you know, Trump flexed in one way, China flexed back, and you know
the world is suffering.
Precisely. But this is a good wake-up call, like it has been multiple times since the pandemic, of creating a supply chain. I think in this case, entire world has been has put the cart before the horse when it comes to electric vehicles. Everybody wants to build electric vehicles. Nobody cared about the supply chain because, including India, every country thought that, you know, China will continue to supply these things. And we've come to this moment where they won't, and we don't know what else to do.
See, again, you know, it will be more of a bargaining power. They will continue to supply because they are also selling a lot of
This will end soon.
Even
I'm an
China
optimist.
Not afford to not supply.
I mean, they've set up capacity.
Exactly, absolutely. So they will run into trouble as well.
Correct.
They will eventually
so
supply.
this is a temporary flex. It will end sooner than later. It will bring Trump to a negotiating table softer than he has been so far. So, but even beyond that, we need to start thinking about alternatives. Because China is, you know, it's not like the rest of the world doesn't have rare earth. India also has a lot of rare earth. What we don't have is refining capacity.
That's what we discussed.
Because, you know, as someone put it, rare earths actually are not that rare.
Correct.
They're there. It's just that the processing capacity is the one.
And you know, Prashant, right now, I got a feedback from a company who's actually into rare earth. They only have till stage 3 of mining and getting it out. After that, they have no capacity to,
which needs to be
build
now.
it further.
of that capacity
And you know
in
what?
China.
I suspect
get into a high-end
India as a
product. So
country
that
which
has
is
to be
cost
dependent on
effective.
global guys.
India is a cost effective country. We have the talent. We have a great experience of refining with petrochemicals, etc. So I think we can.
Can we replicate that?
Can we replicate that? And if you are a key player, a cost-effective player in refining, then you are a more indispensable part of the global supply chain. So instead of focusing on making people, how to make people buy EVs, how to make companies make EVs, if we can get this right.
And this is actually going to be an important piece that we need to address. And I think the world over, the conversation needs to move to this, because this over-reliance, over-dependence on China, now, you know, you're realizing the perils of that. On the supply chain, Nimesh, let's talk about what's happening as far as the Indian supply chain, Indian ecosystem is concerned. I mean, what are we looking at? What are we talking about?
So, you know, Shireen, we spoke about the top down, right? The whole supply chain and what the demand and whatever. But quietly, there are some developments happening as far as the supply chain is concerned, as far as India is concerned. Okay, I'll bucket into three parts. The first, of course, was the rare earth part. And there is only one company right now, which is GMDC, that apparently believes and has claimed that they have rare earths. They've got into that mining of rare earth as well. It's a company which is owned by the Gujarat government, so there is a government control as well. And so they were a traditional lignite player, now focusing on coal, now focusing on rare earth as well. And they're very clearly that they want to create the rare earth supply entire ecosystem in India. So that's one company to bet on going forward. So that's one part of it. The other part...
But have they given out any guidance in terms of what?
Okay, this is whatever I said about GMDC and that they want to get into rare earth and they've claimed that they have rare earths. All this is from the public domain, from the annual report and the investor call. So this has all been said by the company at some forums, either in an annual report.
But what's been the progress on any of these?
So again, they've been very quiet about this. They've not been sharing a lot of internal details on where exactly this stand and what it is.
The stock is up 24% in the last 1 month.
The stock is up
24% in the last 1 month.
But that's part of the game. I mean, it's like, every PSU is up 20-25%. So I don't think much to read into the stock price, but this is one company which is actually talking about rare earth and doing some work as well. So that's one element, the rare earth part. The second part is, a couple of key elements to this whole EV story. Cathode, graphite and electrolyte. They all will be very critical as far as the entire ecosystem is concerned. And even there has been some progress which has already been done by Indian companies. So there are names like in cathode, there are a couple of unlisted names, but there is a listed player called Himadri Chemical. In graphite, there are a couple of listed players like HEG, and again, Himadri Chemical is very much involved. And in electrolyte, there are a couple of players like Neogen and Gujarat Fluoro. They all have set up their capacities. Officially, they've declared that at least the electrolyte capacity will be commercialized in this financial year, in 26. The cathode and electrode will take some more time, so that they're expecting in 27. So maybe in the next 2 years from now, that capacity or the value chain
will come on stream.
We should be a little careful about this because the overall research shows that it takes about 5 to 6 years for you to mine the stuff, to find the reserve, mine it, and another 3 years at least to build the refining capacity. So, whenever there is a commentary, I think this is something.
No, but again, the investments have already gone. If you look at their annual reports, if you look at their balance sheets, for the last 2 years, many of these companies have started putting investments, and they're showing off the investments in the books as well. It's not like
they're starting fresh.
It's only a statement. There is a lot of money which has been gone into. So again, looks like they've done some work. The other part is the battery. And that again is a very differentiated way that India is approaching. There are 3 ways that Indian companies are approaching. One is a clear tie-up, like how Exide has done a tie-up with Svolt, and Amara Raja has done a tie-up with another company called Gotin. Reliance is doing a very different approach of acquiring companies globally to increase their capacity and the whole ecosystem. So that's the other way of acquiring companies. And someone like Ola and a couple of other names like Tata's, they've also announced setting up their brownfield project. So 3 elements, all 3 seems to be at least quietly moving around in that space. Just to give a last thing on the stock price, you spoke about GMDC's stock price. In the last 2 years since Himadri started investing and talking about this, the stock is up 2.5 times, nearly 250%.
Wow.
Exide is up 85%. Amara Raja is up 70% in last 2 years. Gujarat Fluoro is up 25% and Neogen is up 10% in last 2 years. So quietly, at least there is a bit of effort been made.
Some smart people have spotted the opportunity.
That's what they say, right?
Spot the opportunity.
The old saying that necessity is the mother of invention. Look at what we did with semiconductors. When the world was held to ransom again because there were no chips, we decided, I mean, it's a small start. We're not doing the designing. Maybe it's just the, the prefab stage or whatever. But at least a start has been made.
Well, a start has certainly been made.
Lot of chemistry, by the way. I love the sciences, but chemistry mein haath tang hai thoda
But Prashant, let's talk about what's happening with the overall EV market. I mean, globally, we're seeing a lot of companies say that they're putting their EV plans, at least slowing them down, if not putting them on hold at this point in time. And we've seen what's happened to Tesla, but that perhaps is also on account of Elon Musk and his maverick ways.
And it's also on account of BYD. Actually,
really,
BYD,
they are the biggest.
BYD outsells Tesla in Europe.
I checked this. 2 quarters in a row, they have been ahead of Tesla in global sales. It's 2 quarters. We don't know if this is a trend.
No, but they're capturing the market share.
I'm deviating for 2 seconds, but China. Subi mentioned what's happening in China. Actually, Chinese, we talk about BYD, right? But there are so many others. Huawei, for example. Technology companies are now becoming automotive companies. That relationship is also very, very strong. But to the point, Shireen, that you made, that lots of recent announcements which show a shift away from pure EV as a strategy to hybrids, even actually straight away back to the ICE engines, etc. And it's being led by, and this is the last 2 weeks, just 3 companies I'm going to talk about, is being led by the Trump's big beautiful bill, which essentially cancels some credits, etc. Right? So it kind of shows you without these credits, are EVs, pure EVs, really sustainable?
Absolutely.
Right? So General Motors, for example, it's announced a $888 million investment in a propulsion plant. And this is being seen as a reversal. They were going to build an EV drive unit by putting $300 million in that same site. So they're moving away from this. That's General Motors. Honda is cutting its EV ambitions. It's slashing investment by almost $21 billion through 2030. And they're now going to focus on hybrid models. And this, by the way, comes after they postponed their proposed $11 billion EV plant in Canada. Ford has warned that its $3 billion Michigan battery plant investment is under threat. And they're openly saying this is because, I mean, the EV consumer credits are being done away with, and advanced manufacturing incentives, etc., are going to be cancelled after 2031. So, you know, the way I look at it, it's President Trump is going to be here for 4 years. Maybe who knows how these things will evolve. But if you think about it, the biggest cost in an EV is battery. A 60 kilowatt hour battery a year ago used to cost $200. Now it costs $100, right? So that is about $6,000, which is about 5 lakh rupees. If that cost keeps coming down,
which it has been. I mean, we've seen
in a year it's come down from 200 to 100. So I think, and as Nimesh said, local manufacturing, etc., also picks up. I mean, we still import. I mean, Mahindra, for example, all their cars run on BYD batteries, the blade batteries. So I think a combination of what Nimesh said, which is localization plus the cost itself coming down because of new technologies. That I think that'll be the way.
There are many developments that we need to take stock of, and we've given you a snapshot of the factors that are moving the EV market, not just in India, but globally today. We will have to see what the response is to the government scheme that has now finally been notified to draw in vehicle manufacturers to make in India, make EVs in India. But before we go, we talked about the rare earth magnet problem. Well, listen in to the chiefs of Bajaj Auto, TVS Motors and Tata Motors on how big a problem that is for India Inc., for India's automakers. From Prashant, Surabhi, Parikshit, Sriram, Nimesh and myself, thanks very much for watching the Editor's Playbook. We'll see you again next week and we leave you with these sound bites.
The whole supply chain of the world resides in China. So if this is true, we are still trying to come to terms with the facts, all the facts. But if this is true, it would mean that, and if it doesn't change, then in a matter of weeks, the entire Indian EV industry will grind to a halt.
I would be wrong in saying that we don't have dependence on this. There is dependence. As SIAM president, SIAM as well as ACMA both are very closely interacting with the government. Government has been very supportive on this issue, in terms of reaching out to the Chinese government also, the relevant ministries there. And we hope that the issue might be, taken care of.
This EV supply chain disruption is certainly going to pose a short to medium term challenge. And I think as India plans its EV strategy and EV plan, the adoption will have to be phased in or phased up, along with developing an Atmanirbhar supply chain in India, where India, as the world's leading two-wheeler market, which has produced 3 of the top 5 companies by volume globally, has its own supply chain, its own R&D, its own capability, and EV is really built on that basis.
Hello and welcome to Business 360. I'm Arundhati Ramanan and these are the headlines that we're tracking for you this evening. Sensex and Nifty end with marginal gains, but mid-cap index and bank stocks decline. IT and oil and gas stocks offer support. US and China agree on a framework to get the trade truce back on track after 2 days of negotiations in London. US Commerce Secretary says the deal should end China's restrictions on rare earth magnets. The framework needs to be signed off by President Trump and President Xi. India and US make progress towards a trade deal after a week of negotiations in Delhi. Indian government sources say the talks were productive and remain confident of an interim deal before the 9th of July. India to collaborate with Russia as it aims to plug gaps in its fighter jet fleet. Sources say government is actively considering Russia's Su-57 fighters. No proposal to acquire American F-35s. For now, that's an exclusive. Government is exploring ways to incentivize mining of rare earth magnets as China's curbs bite the industry. Sources say government is exploring ways in which it can leverage its public sector unit for production, even as diplomatic efforts to resolve the crisis continues. Copper imports under government scanner. Sources say Customs Department is probing alleged duty evasion under the Asian Free Trade Agreement. Industry writes to the finance minister saying the customs action is arbitrary. Alcohol gets costlier in Maharashtra. The state government hikes excise duty on IMFL and premium liquor by at least over 50%. Also approves a new category of grain-based foreign liquor called Maharashtra-made liquor. This is the first excise duty hike on liquor since 2011 and is expected to add 14,000 crore rupees to the state government's kitty. Top liquor stocks drag in trade. A Singapore flag cargo ship is still on fire for the third day near the Kerala coast. Coast Guard says 40% of the fire has been extinguished. China thanks India for rescuing the crew members, which included 14 people from China and 6 from Taiwan. Israeli forces kill at least 35 people at a food distribution center in Gaza. 10 other people killed in strikes at Khan Yunis. Nearly 55,000 Palestinians have died so far. UK, Australia, Canada and others place sanctions on 2 Israeli government ministers. Elon Musk regrets some social media posts he made about US President Donald Trump during an explosive public dispute. Musk says some of his posts went too far. U.S. cities brace for more protests over President Trump's crackdown on immigrants. Parts of Los Angeles placed under curfew. Thousands marched through downtown Chicago. The launch of Axiom 4 mission carrying India's Subhanshu Shukla and 3 others to the International Space Station delayed once again. SpaceX cites a technical snag. No new launch date announced just yet. Those were the headlines that we're tracking for you this evening, but straight to the day's market action. Benchmarks outperformed the broader markets, with Nifty holding on to levels above the 25,100 mark and gaining for the 6th straight day. IT stocks lent support while financials dragged the market down. Oil and gas stocks also witnessed all-round gains, with the index rising over 1%. In a bid to crack down on cyber frauds, market regulator SEBI has launched new validated UPI handles for secured payments by investors. Addressing a press conference in Mumbai, SEBI chairperson Tuhin Kanta Pandey said that there were concerns over people falling prey to cyber frauds. Pandey said that the check tool, which would be available from October 1st, will allow investors to check if the UPI account belongs to a verified broker.
The issue that we are going to have on a much wider systemic scale, which is the payment system itself, where we are bringing in a new UPI within the UPI system, and you have seen how it will help in knowing for you to know, and you can check up on any bank account whether it is a bank account of a registered inventory, either broker or mutual fund. You should be able to check it. So this would be very handy, and going forward, as we will see, it will be implemented from 1st of October.
The big story this evening, U.S. and Chinese officials have agreed on a framework to restore their trade truce after 2 days of intense negotiations in London. Addressing reporters outside the Lancaster House, U.S. Commerce Secretary Howard Lutnick said that the framework will only be implemented after U.S. President Donald Trump and Chinese President Xi Jinping approve the terms of the agreement. He also said that the deal should end China's restrictions on rare earth magnets. However, trade negotiation teams from U.S. and China did not disclose any details of the framework agreed upon in Geneva in May. U.S. Commerce Secretary Lutnick only said that the new agreement solidifies the Geneva deal.
We have reached a framework to implement the Geneva Consensus and the call between the two presidents, right? So that was on June 5th. So we've combined those two. We've reached a framework for implementation. Now the process will be, we're both going to go back. We, Ambassador Greer, myself, and Scott Bessent, who just left a little earlier, which you saw, because he's testifying tomorrow on the Hill. So the idea is we're going to go back and speak to President Trump and make sure he approves it. They're going to go back and speak to President Xi and make sure he approves it. And if that is approved, we will then implement the framework that we have worked hard over these last 2 days. Obviously, the team stayed at it until it was done late into the evening. Absolutely expect that the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that. Also, there were a number of measures the United States of America put on when those rare earths were not coming. You should expect those to come off sort of, as President Trump said, in a balanced way. When they approve the licenses, then you should expect that our export implementation will come down.
And speaking of a trade deal with USA, India and US are making progress towards a deal after a week of negotiations in Delhi. Indian government sources have said that the talks were productive and remain confident of an interim deal before the July 9th deadline. Abhimanyu Sharma joins us now with the details. Abhimanyu, take us through what's going on with these negotiations.
Well, the negotiations took place between the Indian negotiating team and the visiting team from the United States, which was led by the Assistant U.S. Trade Representative from the 4th June to the 10th of June in New Delhi. And now several issues pertaining to market access, pertaining to technical barriers to trade, legal framework, and also several other concerns on sanitary and phytosanitary issues were discussed between both the sides. Now, both the sides are looking to sign an interim deal before the 9th of July to avert the applicability of reciprocal tariffs, which have been stayed till the 9th of July by the United States. And both the sides are also looking for the first tranche of a bilateral trade agreement, which they are looking to sign by the September or October of this year. Now, concerns exist on both the sides. There are sensitive issues for which both the sides are making their respective pitches. Speaking of India's stand, India till now has indicated that it is going to bilaterally resolve the issue of steel and aluminium tariffs, which have been levied by the United States. Also, India may be looking at a minimum import price for products in the dairy and agriculture sector to protect sensitivities. Apart from that, market access continues to be a big issue for both the sides, even as negotiations continue, and both the sides are looking to conclude negotiations at the earliest.
Right, Abhimanyu, many thanks for those details. Now, China's stranglehold on rare earth magnets has left the Indian auto industry in a bind. Sources say that the government is exploring ways in which it can leverage its public sector unit for production, even as diplomatic efforts to resolve the crisis continues. The government is also exploring how to leverage India Rare Earth Limited's production capabilities. On to a CNBC-TV18 exclusive, the Indian government may collaborate with Russia with an aim to plug gaps in its fighter jet fleet. Sources have said that the government is actively considering Russia's Su-57 fighters. However, no proposal to acquire American F-35s for now. Parikshit Luthra joins us now with the details. Parikshit, take us through the government's plan on this front.
The Indian government is deploying a three-pronged strategy to meet gaps in its fighter jet program. This after Air Chief AP Singh recently said that India needs at least 35 to 40 fighters per year. The Defence Ministry had announced a new execution model for the 5th generation fighter program 2 weeks ago, and this was to encourage participation of foreign and domestic private companies and provide them a level playing field with Indian PSUs like HAL. Sources tell us that the government is set to issue a request for proposal for the AMCA program next week, and this will be followed by the first pre-bid meeting with the industry in 15 days. The government may then invite bids in 45 days, so they're moving on this quite fast. As the development of an advanced medium combat aircraft or a fifth-generation fighter has a long development period, the government is also looking at ways to meet immediate needs of the Air Force for a fifth-generation fighter. Now, the Russian government has submitted a proposal to the Indian Air Force to supply and make Su-57 fighter jets. The government is now considering this proposal actively to see if Su-57 fighters can be acquired in a flyaway condition from Russia in the short term and also made in India. The reason why this is under consideration is because HAL or Hindustan Aeronautics Limited already has a Su-30 production line in Nasik, and we have a long-standing collaboration on fighter jets with Russia. Thirdly, the government is looking at ways to develop and manufacture fifth-generation fighter jet engines in India. Proposals have been received from Safran and Rolls-Royce, and these are the only two companies willing to provide 100% technology transfer and intellectual property. No plans as of now to acquire F-35s from the United States, and there is no proposal in front of the ministry either. When it comes to boosting air defense, this is a priority area, and the government is thinking about ordering perhaps 1 or 2 more units beyond the existing order from Russia for the S-400. Now, Russia has already delivered 3 squadrons of the S-400, and 2 more will be delivered by 2026. When it comes to quick reaction surface-to-air missiles systems for the Army, the Defence Acquisition Council could soon take up a proposal for this acquisition, and the total cost of this would be around 30,000 crore rupees.
All right, Parikshit, thank you so much for taking us through those details. And it's time to move to another CNBC-TV18 exclusive. The Customs Department has issued notices to nearly 2,000 copper importers for allegedly evading duty under the India-ASEAN FTA. It is now seeking a 35% retrospective duty as per value addition rules. Industry has dismissed these claims and has appealed to the Finance Minister for immediate action. Timsy joins us now with all of those details. Timsy, what is the potential impact of this move?
Well, yes, what we are given to understand from sources is the fact that the Customs Department is probing a case that is a pan-India case of duty evasion by the copper importers under the India-ASEAN FTA. What we are given to understand that the Customs Department currently has issued notices to over 2,000 copper importers for paying lower duty, that is at around 0% by wrong classification, whereas they are liable to pay 35% is what the Customs Department say as per the value addition rules, and thus they have demanded the payback from the industry along with demands of bank guarantees. Meanwhile, Customs Department in these notices have actually come forward saying that they have validated this through third-party data from producers in Vietnam, and that is what is backing their claims. On the other hand, when it comes to how industry has reacted to it, well, industry has approached Finance Ministry, knocking the doors at Finance Minister's office along with the Revenue Department, seeking an urgent intervention because this, according to them, is arbitrary. And yes, these retrospective claims are actually impacting the entire sector. Industry via Bombay Metal Exchange has issued an urgent appeal to the Finance Ministry urging immediate action. They claim that these imports are essential for AC and refrigerator manufacturers in India who are getting impacted, and these claims are arbitrary and retrospective, which should not be the case because it does not go well with the FTA's spirit. So let's see what happens finally in terms of how do these customs notices actually fare out for the industry, whether the department gets some payout or it lands up at the courts again in a legal battle, something that we'll have to wait and watch for.
Right, Timsy, many thanks for those details. Now, Power Minister Manohar Lal is likely to conduct stakeholder consultations on market coupling. Sources tell CNBC-TV18 that whenever a market coupling will take place, then it will happen through a broad bid and not an internal bid. Shares of Indian Energy Exchange stumbled after the news. Remember, market coupling is an aggregation and match of buy and sell bids by the power exchanges for a uniform price discovery. The centre is looking to slash the average turnaround time for setting up a nuclear power plant. As per a Money Control report, the government is planning to reduce the time from 13 years to 8 years. The average time taken to build a nuclear power plant globally is between 6 and 8 years. The centre is also planning to increase its nuclear production capacity to 100 gigawatts by 2047. As of now, only an additional capacity of 15 gigawatts has been approved. National Securities Depository is pressing ahead with its plan to raise about 3,400 crore rupees through an initial public offering. According to a Bloomberg report, the IPO is now slated to take place by next month. The IPO will be an offer for sale by existing shareholders, including IDBI Bank, NSE and SBI. Market regulator SEBI and stock exchange BSE have granted approval to Jio BlackRock Investment Advisors to begin operations in India. Jio BlackRock Investment Advisors is a 50-50 joint venture between Jio Financial Services and BlackRock. The company has said that it will focus on building a digital-first product to benefit consumers. On that note, it is time for us to head into a short break. But coming up next, Singapore-flagged cargo ship is still on fire for the third day near the Kerala coast. Coast Guard says 40% of the fire has been extinguished. That and more when we return. Stay tuned. Welcome back. You're still with us on Business 360. Top liquor stocks were under pressure day after Maharashtra hiked the excise duty on Indian-made foreign liquor and premium liquor by at least 50%. Santya Gora joins us now with the details. Santya, take us through Maharashtra's plan on this front.
So now alcohol consumption is going to become even more expensive in Maharashtra. The Maharashtra government has hiked the excise duty on all categories of liquor in the state. Maharashtra already has the highest excise duty on alcohol across the nation, and the revised rates will further widen this gap. The state government has increased the excise duty on IMFL, Indian-made foreign liquor, from 3 times the manufacturing cost to 4.5 times, a steep 50% hike. Excise duty on country liquor has been raised from 180 rupees to 205 rupees per litre. And this is how this is going to impact our pockets. And before that, so this is how the new excise duty will impact liquor prices in the state. A 180 ml bottle of country liquor, which used to cost 60 to 70 rupees, will now cost a minimum of 80 rupees. A 180 ml bottle of Indian-made foreign liquor, which used to cost 115 to 130 rupees, will now cost at least 205 rupees. And a 180 ml bottle of premium foreign liquor, which used to cost 210 rupees, will now cost at least 360 rupees. The excise duty on the newly introduced Maharashtra-made liquor will also be set between the IMFL and country liquor category in order to promote Maharashtra-made liquor. Sources tell CNBC-TV18 that the Maharashtra government had been working on the plan to revise the excise duty for the last 6 months. The last such revision happened in 2011. The decision is expected to increase Maharashtra's annual excise collection by 14,000 crore rupees, an amount that can go a long way at a time when, according to experts, the state is still facing financial distress due to multiple pre-poll welfare schemes, a claim now denied by the state government.
All right, Santya, many thanks for taking us through those details. But moving on to some international news, Israeli forces have killed at least 25 aid seekers at a food distribution site in southern Gaza. The military has also killed at least 4 Palestinians in an Israeli drone attack on a tent for displaced people in Khan Yunis city. Britain, Australia, Canada, New Zealand and Norway have imposed sanctions on 2 far-right Israeli government ministers for inciting extremist violence against Palestinians in the West Bank. Russia and Ukraine have exchanged over 1,000 captured soldiers. This is the second stage of the agreement struck at peace talks last week. This comes as Russia attacked Ukraine's capital of Kiev with waves of drones and missiles, killing 1 person. Ukrainian President Zelensky called the attack one of the biggest strikes on his country's capital in the 3-year-old war. After nearly a week of heated online sparring, billionaire Elon Musk has now softened his tone against US President Donald Trump. In a post on X, Musk acknowledged that some of his recent remarks against Trump went too far. Musk has even deleted some of his posts attacking the president. Remember, the tiff began after Musk criticized Trump's tax bill as a disgusting abomination. Los Angeles Police Department carried out mass arrests following the imposition of an overnight curfew by Mayor Karen Bass amid ongoing unrest. LAPD reported nearly 200 arrests on Tuesday alone, adding to over 180 detentions over the past few days. The protests sparked by immigration raids have spread to other cities, including New York, Chicago, and Washington, D.C. California Governor Gavin Newsom slammed President Donald Trump's deployment of National Guard troops, saying that democracy is under assault. The Indian Coast Guard continues to battle the blaze on the Singapore-flagged ship for the 3rd day in a row. About 40% of the fire on the ship off the Kerala coast has been brought under control, as per the Coast Guard. The ship is still afloat but continues to release heavy smoke. Firefighting experts from Spain, UK and Netherlands are expected to join the operation within the next 72 hours, subject to visa clearance. CNN News 18's Neetu Regukumar has more from Thiruvananthapuram.
It's the 3rd day since a Singapore-flagged container vessel has caught fire off the coast of Kerala. But even today, though the fire has subsided, it has not yet been brought fully under control. The firefighting efforts are continuing by the Coast Guard and the Navy. 4 of the crew members are still missing, and the search for the missing crew members are still ongoing. 18 were rescued, and all of them were taken to a hospital in Mangalore. 2 are still hospitalized. The others are put up at a hotel in Mangalore. All of them are foreign nationals. Now, the other concerns as far as this is concerned is the vessel had about 2,000 tons of fuel oil and about 240 tons of diesel. So there are concerns about oil spilling and the damage it can cause to the environment. Another 147 containers had dangerous goods. This includes paint, varnish, flammable materials, pesticides. This could all have an impact on the environment, and once it floats into the sea. Many containers have already fallen into the sea. So these are the concerns that are being raised. The authorities, the State Disaster Management Authority is also in constant monitoring of this situation. The alert to the people living in the coastal area is not to touch any objects. If you see them coming to the coast, do not touch them. Maintain a distance of 200 meters and at the same time inform the authorities. But we are also learning that it might not reach the Kerala coast. It might even go to the coastal area in the neighboring state of Tamil Nadu. So this is a situation where we are right now at. The fire has not yet been brought fully under control. There are concerns about oil spilling and also the dangerous goods which are there in this container vessel.
So Neetu there with the latest on what's happening off the Kerala coast. Thank you so much for those details. But with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. Lighthouse Funds has invested 300 crore rupees in Nest Manufacturers, a construction technology company. The investment will enable Nest to deepen its R&D efforts, expand manufacturing capabilities and integrate backwards.
Piston, a cardless payments platform, has raised $6.1 million in seed funding round led by Spark Capital with participation from Pair VC and Bond. Piston will use the capital to scale go-to-market operations and expand its network of independent gas stations and commercial fleet partners.
Credgenic, SaaS-based debt collections and resolution platform, has announced a 40% growth in annual revenue with a total revenue of 220 crore rupees for FY24. The company clocked a profit before tax of 25 crore rupees.
Artha Bharat Investment Managers IFSC LLP, a fund management entity operating from GIFT City, has launched a hedge fund aimed at providing NRIs, OCIs, PIOs and foreign investors with structured exposure to US equity markets. The Artha Global Multiplier Fund will invest in 6 key US market sectors, including technology, retail, artificial intelligence and financial services.
Meta Platforms has agreed to take a 49% stake in artificial intelligence startup Scale AI for $14.8 billion, the information reported. The deal, which has not been finalized yet, appears to be beneficial for Scale AI's investors, including Axel, Index Ventures, Founders Fund and Green Oaks, as well as its current and former employees, the report said. Well, those were the top headlines from the startup world. On what's brewing today, MSME-focused digital lending platform Flexi Loans has raised 375 crore rupees in its Series C funding round. Now, this follows a 290 crore rupees infusion in September 2024, taking the total funds raised to 665 crore rupees over the last 6 months. Led by existing global and domestic investors, Fundamentum, Axion, Digital Transformation, Nuveen, Major Invest, the round saw a new backer, British International Investment. The funding includes both primary equity to drive operational expansion and secondary transactions to provide liquidity to early investors. To unpack what this means for the company's next phase of growth, I'm now joined by Deepak Jain, the co-founder of Flexi Loans. Deepak, welcome back to Startup Street. What does this fresh capital unlock for Flexi Loans, both strategically and operationally? And what was the rationale behind offering early liquidity through secondary transactions at this stage?
Thank you, Shruti, for having us back on the Startup Street. It's always a pleasure coming on this platform. Raising funds in the current set of markets and environment and getting interest from very, very large private equity funds name, including some of the backers who invested in us in September 24 as well, means a lot. And thus, it shows that there is strong interest in Flexi Loans and in good startups which are doing well. These funds will help us grow further, as I mentioned during the September meeting as well, that these funds will help us grow further from here, take our plans of FY26. We are targeting to scale our AUM anywhere between 4,000 to 5,000 odd crores in next 12 to 18 months. And these funds will allow us to scale that. Also, in this round, we are welcoming BII, British International Investment, on our platform. It's UK's endowment fund. It's a very large private equity name, and this round allowed us to do that. Why do secondary at this stage? See, so this it's the current round is a mix of primary and secondary, and this allows us to give exit to some of the early backers who came in Flexi Loans 5 to 7 years back. So it's important that
what kind of returns are they getting?
Yeah, as a startup, if you take money from HNIs and early investors, it's always good to give them an exit at a certain pace.
And what returns are you giving them?
It's very good returns. They're sitting on very strong mark to market. So it's a partial exit. It's not a full exit. So from here to whenever we go public, that'll be fantastic for them.
All right, so those are partial exits that we're talking about. But Deepak, Flexi Loans has disbursed over 10,000 crore rupees with 0 branches. What's the next frontier for product innovation and tech-led distribution? Are there new credit products or financial solutions on the anvil for the underserved MSMEs?
Yeah, so the focus or the center of focus for Flexi Loans have always been small traders, retailers, and wholesalers. We believe that we've stayed true to our mission since we started this company in FY16, and we've gone into the real hinterlands of India, or as we call it, Bharat. And we've disbursed roughly 75% of our loans in tier 2, 3, 4, 5 towns. The next focus for us is, to go really hyper local, understand some of the regions, geographies, sectors to the granular level, and customize our offering for these MSMEs. So that'll be the next focus as we scale, and thus obviously launching more products. So today we have 2 products which are fairly scaled up. We have an EMI based loan, or a term loan as we call it, and we have a vendor financing or a supply chain financing solution. We'll be further expanding on supply chain financing by offering short-term working capital loans, or basically dealer financing kind of products to these MSMEs, as well as offering some other products like secured financing and other secured, be it or other security options. That we would also want to offer some other financial services to these MSMEs, at next 12 to 18 months.
Sure. Deepak, Flexi Loans runs on a 100% digital sourcing model, like I mentioned earlier. How are you using alternate data or AI to underwrite risk for thin file borrowers? And how do you ensure fraud prevention and data security while scaling in underserved regions?
So as you go to tier 2, 3, 4 towns, Shruti, most of the files may not be as thick in their banking and other things. So thus we use a lot of alternate data, their purchase data, the data from a lot of data variables come from the bureau side. A lot of data. We are one of the largest ecosystem embedded financiers in the country, and I had mentioned this earlier on this show as well. So almost every large ecosystem in the country which is enabling MSME commerce or MSME payments, we are partnered with them to provide loans to the MSMEs, through that, and thus a lot of data comes from that. Now, when you have so many thousands of data variables, right, that's when your models become really complex, and that's when AI and machine learning helps you create and improve your models year on year. Our models have proven really well over the last 4 or 5 years. Especially, we've gone through 2 or 3 cycles, and thus when your credit costs are proven across cycles, that's when you think that or you start believing in your models even more and start increasing your growth targets. So that's what we've done. AI is helping us a lot there. Not only that, we are having many other use cases for AI. So be it calling, be it processing, every part of a process, we have put an AI agent now.
Sure. We've completely run out of time, and on that note, we'll have to wrap up this conversation. But Deepak, many thanks for joining us today on Startup Street, and wish you the very best for all your growth plans.
Absolutely. Thank you, Shruti, for having us.
Well, in what else is brewing today, Y Combinator-backed API banking platform Decentro has closed a 30 crore Series B funding round that was led by InfoEdge Ventures. It will also be reversing its parent entity's location from Singapore back to India in the next 12 to 18 months. Now, founded in 2020, Decentro offers payment aggregator, KYC, data intelligence, and debt collection services to more than 1,300 companies, and that includes your NBFCs, fintechs, digital lenders, and banks. For more on their plans ahead, let me invite Rohit Taneja, who is the co-founder and CEO of Decentro. Rohit, welcome to Startup Street. Let's start with the decision to flip back from Singapore to India. It seems to be becoming the traditional startup playbook, really. What's driving the reversal, and how do you see the regulatory environment here supporting a move like this right now?
Oh, thank you for having me here. You're right, absolutely. I think in the last almost 1 year, more than that actually, 1 to 2 years, you've seen like a wave of companies, just flipping back from US to India or Singapore to India. And I think it's a good trend in general. I'm pretty sure most of the people who are founders in those companies are happy with that, because ultimately this is where we see a lot of public market returns and the next set of investors coming in from. I think the regulatory environment is also very helpful, obviously from a public market perspective. We see much more exits coming out. We see a lot of more opportunities on M&A as well, and domestic investors getting really savvy, both retail and the domestic institutional investors. I think that's really what's driving us, and probably the rest of the market as well.
Well, but if I may ask you, I mean, it's very early. I know you're going to still take some more time, but what is the estimated cost of this flipping? Because we've been listening to some big numbers, whether that is PhonePe or Razorpay that have recently done it. PhonePe, had to shell out as much as $1 billion. What is the cost you're estimating, and what is the timeline you're looking at?
Yeah, so that's where things get interesting. What happens is, if you look at the US to India flip, you actually have to pay a lot of tax. There's no way to avoid that tax. Interestingly, in our case, we are Singapore domiciled from an HQ perspective, and Singapore has a zero tax option, where you don't have to pay a tax at all. And in fact, if you look at Pine Labs, that is the best example. So Pine Labs had to pay zero tax, and they're still, of course, I think 75% through in the process, but should be completing the remaining 25% very soon. So we're following in their footsteps. So in our case, we actually estimate zero tax, in a good scenario. There obviously will be administrative and legal costs, so we'll be there. Early to estimate those, but yeah, tax-wise, we're good.
Okay, well, let's get to that 30 crore Series B funding round. Then, what is the capital for? How do you plan to deploy it?
Yeah, sure, absolutely. So we recently started targeting a lot of enterprises. I think if you look at the logos as well on the website, we've had a lot of early stage to mid stage, and late stage startups, right, both across India and global. And recently we have started noticing a wave of NBFCs, banks, large scale NBFCs and banks really coming to us, both inbound as well as outbound efforts. And I think that requires a slightly different cadence in terms of the enterprise cycles, the compliance required, the product involvement, tech involvement. And so most of this is really going towards that.
All right. You also, claim to be a profitable entity. But what are the numbers? Give us a sense of where your top line is, where your bottom line is, and what sort of target you have, say, for the next 2-3 years in terms of growth.
Sure, absolutely. So I won't share the absolute numbers, but I can definitely tell you we are in the mid-range of, I would say, double-digit CRs. So you can estimate, I would say, 3x growth once we officially report the numbers of FY25. FY26, we're looking at, again, similar 2x to 3x growth, I would say. And with roughly 60 to 70% gross margins. That's the usual range that you're looking at.
And what will be the growth driver for this 2x and 3x kind of growth that you're talking about? Which part of the business?
Yeah, absolutely. Interestingly, there will be two major lines that are really helping us. I think one is payments itself. So payments is, of course, one of our top most revenue driver. It currently contributes close to around 70-75% of our revenue. We estimate that to continue to contribute at least 60%, somewhere to that scale. So just doubling down on the existing payment volumes, existing customers, increasing their payment volumes. That's one. The second one is from these new enterprise logos. So the ones I mentioned, the large banks, large NBFCs going forward. There we essentially will be selling a couple of new modules on the KYC and debt collection side. So we have something called Scanner, I think, which we were showcasing a while back, which essentially allows a lot of these lenders to really profile users, in terms of fraud prevention. So they're able to go into much details of the user's profile, digital profile, their device intelligence, etc. Very interesting product for them.
Yeah.
And the second is, of course, your loan collections. This is an inorganic opportunity. We actually acquired a small company 2-3 years ago, close to, I think, 2.5 years ago. And there we have launched a full-fledged AI voice bot that is able to do loan collections for you and able to replace the human caller. So, yeah.
All right. Finally, let me ask you, you're dabbling in multiple things. You got that payment aggregator license. You're doing debt collections for banks and NBFCs, KYC and data intelligence and so on. Is there any other adjacent, more lucrative products you're looking at adding to your bouquet of services?
Not at the moment. I think these products will keep us, quite busy for a while. So I don't think we intend to shift away from, the existing set of products. But just doing a lot of upsell and cross-sell, and you can see a lot of these have common customer cohorts like fintechs, NBFCs, banks. They come across all these entire cohorts end to end. And yeah, so I think we see a lot of upsell, cross-sell in that. I think that's really going to be one of the key focus areas.
Well, Rohit, we'll leave it at that. Thank you so much for your time here today. It was a pleasure speaking with you.
Thank you. Thank you so much.
Well, on that note, it's time for us to head into a short break. But coming up next, Global Consumer Internet Group processes betting on India's women-led startups with its inaugural Tech Found Her Challenge. Prajna Khanna, the Vice President process, joins us to decode this initiative. Stay tuned.
Welcome back to Startup Street. Now, despite a booming startup ecosystem, women-led ventures still receive less than 3% of total venture capital funding in India. Global Consumer Internet Group Process is looking to change that. Its inaugural Tech Found Her Challenge awarded $100,000 in equity-free capital to 4 high-potential women-led startups across sectors like emotion AI, sexual wellness, and climate tech. To talk about the mission, the momentum, and what's next, I'm joined by Prajna Khanna, the Vice President and Global Head of Sustainability at Process. Also with me, my colleague Ritu. Prajna, welcome to Startup Street. And let's start with the big picture. What motivated Process to launch the Tech Founder Challenge? And how does it, tie into your broader sustainability or inclusion goals? And could this evolve into an annual initiative, possibly even expanding across geographies or sectors?
Hi, yes, thank you first of all for having me, Ritu and Shruti. It's a pleasure to be on an all-women screen over here. Rather than the big picture, we started with the picture for ourselves. Last December, we were looking at our portfolio and I had an epiphany, and I was talking to our CIO then and our CEO of Ventures and also our CEO in India, Ashutosh, and said, how do we not have many women-led startups in our portfolio? We're very actively looking at investable startups, opportunities, and there seems to be a very, very big gaping gap over there. So we just started with trying to solve or try to understand for ourselves what was going on. There is, whether is it our own processes, is it our own venture teams, or is it just not the lack of an ecosystem of women-led investable businesses? It was a question in true startup ethos, that's the question we started wanting to answer. And the Tech Founder Challenge was really an absolute jet ski to figure that out. For us, we had set ourselves a success KPI of even if 20 really amazing investable startups would have presented to ourselves, we would be super excited. We actually had 121. We needed to close the platform because we were overwhelmed by the number of startups applying. Co-founded women startups, solo women founders, which is, I think, so much more meaningful. But that was for us the first big proof case of investable women-led businesses are there. And as you know, the research suggests that 35% ROI is what is delivered by women-led businesses than men-led businesses. So it's really just to understand first the business case, are they out there? And now to really understand how can we get that cohort in front of investors. So that was the first step for us.
Well, hi, this is Ritu stepping in. All these applications and more that you had asked for that you received across 22 cities and these 14 sectors, what really stood out for you the most about this cohort of women founders? Because the winners span, across all of these emotion AI, digital health, climate tech, and so on. What does it say about the next frontier for women-led innovation in India?
So, Shruti, first of all, it busted myths for us. Our anticipation, and I'm really embarrassed to say this also for myself, is that, a lot of the startups would be in the consumer space or linked to women products or beauty or apparel, or there would be some sort of, e-commerce platforms. But we were absolutely blown away by the number of AI startups in the top 20 that were selected from the 121. How many of them are actually really technical, deep tech businesses? This was also very, very interesting for us to note. And it was a myth buster for everybody. What it means is that there is somewhere this funding gap and we need to figure out what we need to shift. Is it I think it's less than 15% of women are in the VC ecosystem writing the checks. So is that the issue that we need to tackle? Do we need to bring, just like building inclusive teams, you need to have a very diverse board of people who are recruiting. Do we also have need to build in very considered, very consciously, a diverse board of VC check writers? So that was one of the key insights that we were thinking of, okay, that's the next step we need to do. The other question is, what do we need to do for this cohort that we pulled together? It's not a small cohort, 121 really, really great deep tech businesses. How do we get them in front of the investor community in India and globally? What was also very interesting for us to learn is that...
Got that, Prajna.
Yes?
Well, Prajna, since we're running out of time, I have to stop you there. But thank you so much for joining us here. It's been a pleasure hearing you, and we wish you the best with this event. And we're going to move on now to what else? Well, it's not just billboards and TV ads, but what's selling today is what your favorite creator says is good to buy, and e-commerce platforms want to leverage that to drive orders. From Flipkart to Amazon, Myntra, e-commerce giants are actively betting on content creators to turn that trust into transactions through live commerce. Shilpa Ranipeta dives into how content and commerce are merging one live stream at a time.
Your next shopping spree might not start with an ad, but with a live stream. And the person convincing you to buy that serum or lipstick might not be a celebrity or a dermatologist, but your favorite creator on Instagram. Well, this may look like a YouTube set, but it's not. It's actually a mini shopping studio, because platforms like Flipkart are betting that the future of e-commerce is not just in search bars and filters, but in short videos, live streams, and in that creator that will convince you what to buy and why.
Betting on this fast-growing format, Flipkart is creating Creator Cities, 18,000 square feet of production space, which gives creators the infrastructure they need to create content, which will in turn help Flipkart sell on its platform.
Content commerce is starting to go up quite a bit, and we definitely want to catch this wave. And we want to address it in three parts. One is we want to provide infrastructure and capability, like a studio, capability of live streaming, etc., for creators to come, enjoy, and get started. Video is now becoming ubiquitous in Flipkart, right? So what you will see is video showing up in every part of the buyer funnel. And now the brands will be very excited. So we want to create an ecosystem where brands enjoy, the funnel, the buyer enjoys, as well as content creators enjoy.
Globally, live commerce is already over $100 billion industry, with China leading the way. In India, it's still early days, but Flipkart, Amazon, Myntra, and even Meesho are all experimenting with formats where creators demo products, answer questions, and close the sale live. Driving this is the Gen Z and how they shop.
For the Gen Z, shopping is no longer about the ratings or the reviews. It is about relatability. And who are they relating to? It is these influencers and creators. And they are the new storefronts. And now online marketplaces are handing over the tools and the space for them to sell right from their own creator studios.
Earlier, one voice was enough for a user, right? They related to these larger than life celebrities. But people have now started moving to relate to individuals. Correct. And who I relate to is very different from who you relate to. Hence, it is very important to talk the language of this Gen Z, and who better to talk this language is this influencer ecosystem.
So how big is this live video commerce bet for Flipkart?
The bet is very big. Today, it's not very large for us, but we do believe that the next set of customers, the next set of relevant customers will come by selling through this format called video. I think getting influencers to do that is also helping us, which is why you see a lot of creator-led stuff that we are doing.
From reels to reality, creators are no longer just influencers. They are the new age salespeople on the internet. And with online marketplaces handing the mic and the marketplace over to them, the future of online shopping might just look like this. Where you love it, you view it, and then you shop it, and it's all live. In Mumbai, Shilpa Ranipeta.
Well, with that, it's a wrap from Ritu and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.
Hello and welcome to Global Lens. Over the next 30 minutes, we put the spotlight on all the top stories from around the world. I'm Parikshit Luthra. These are the top global headlines. US President Donald Trump's top officials resume talks with their Chinese counterparts in London as both Washington and Beijing look to avert a full-blown trade war. The negotiations restart days after Trump's phone call with Chinese President Xi Jinping. China extends an olive branch to US automobile companies on rare earth magnets, also likely to speed up approvals for companies in Europe. No word yet on supplies for Indian automakers. Demonstrations against federal immigration operations in Los Angeles leads to violent clashes between protesters and paramilitary forces. Democratic governors criticize Trump's decision to deploy the National Guard, call it an alarming abuse of power. After weeks of global uncertainty due to a trade dispute between the US and China, the two sides are ramping up diplomatic efforts to avert a full-blown trade war. Just days ago, President Donald Trump and President Xi Jinping held a rare phone call and pledged further dialogue. The latest round of negotiations in London are expected to focus on critical rare earth minerals. As efforts to thaw trade tensions continue, China is already showing the first major signs of the toll of the trade war. China's exports to the US have plunged over 34% on a yearly basis in May, the sharpest drop since February 2020. Consumer prices also slumped for a fourth consecutive month, deepening deflation worries in the country. Meanwhile, India and the US are looking to sign an interim deal before the 9th of July deadline ends. An American delegation led by Assistant US Trade Representative Brendan Lynch is in India for talks. India is reportedly seeking an exemption from the 10% baseline tariffs and 16% additional tariffs as part of the deal. The two countries are aiming to double bilateral trade to $500 billion. So what could be the possible outcome of talks? To discuss the outlook, joining us right now is Nisha Biswal, partner at the Asia Group and former Assistant Secretary of the State Department. Thank you very much for joining us, Nisha, on the program. Let me begin by asking you, those negotiations are going on. They're very hectic, very intense. But do you feel that India can get an exemption from the 10% baseline tariff and 16% additional tariff as part of any interim deal before the 9th of July?
Well, I think that remains to be seen. And thank you, Parikshit. It's a pleasure to be here with you. Look, I know that there's a very intense activity going on in trying to come to agreement on the Phase 1A portion of the trade deal, which would really focus on the tariffs. And certainly from India's perspective, trying to gain exemptions on the 10%. As well as the 16% is important. But also, if you look at what the agreement has been, for example, with the US, UK, the 10% tariff seems to be one that the administration is keen to keep as an across-the-board tariff. So let's see where the negotiations come out. I think there's a lot of scope for dealing with the reciprocal tariffs. I'm not sure there is on the 10% across-the-board tariff.
Right. Nisha, Brendan Lynch and his delegation were supposed to be here for about 2 or 3 days, but the trip was extended to this week till about 10th, that is till Tuesday. Why do you think that extension may have happened? Do you think things are moving positively in terms of having an early deal, or is this because there's still a lot more to be done?
Well, I mean, I think it's probably both, right? I think that clearly both the United States and India have signaled that they intend to conclude a agreement in principle in time for the July 9th deadline on the 90-day suspension. That has been a priority from the very top of both governments. And so for Brendan and his team, as they get down to the crux of the matter, that's where some of the tough technical discussions are going to be, and where it may warrant that you need to extend those in-person discussions to try to meet the deadlines that both governments have set for themselves.
Nisha, we've been hearing from the sources in the Indian government, and what they say that India wants certain sectors that are important for Indian exporters, such as textiles, to go back to tariffs that existed before the 2nd of April, or Indian exports from labor-intensive sectors should get preferential treatment over US's other allies, such as Vietnam for that matter. How much of this ask is possible?
Well, I mean, I think on textiles, India has a really strong case to make, and certainly as you look at the tariffs that are imposed on the other textile manufacturers, India is trying to position itself to be able to advantage its own industry to access that market. And I think that that is something where there's going to be some possibility. There is a textile industry in the United States, and there is going to be some desire from the United States to see how much it can try to balance and protect what it's trying to do on the domestic side against what is clearly a really important sourcing for U.S. Retail brands to be able to source from India, Bangladesh, Vietnam, etc. I think that there's an opportunity here for India. So let's see if there's some accommodation made for Indian textile.
Right. Nisha, what I would also like to ask you, going by the negotiations and the template of deals with EU and UK, what do you think the US would want from India as part of the interim deal?
India is clearly, trying to get the Indian side on tariffs as we look at U.S.-India trade opportunities. India has a higher rate of tariffs, and so the U.S. is looking to see that India reduces its tariffs commensurately, particularly in some areas where U.S. products have had difficulty in the agricultural sector. I know that there are certain products that are sensitive for India, but there are many other products where I think the Indian side can accommodate. Non-tariff barriers are also a major area of focus. While we may not get agreement on non-tariff barriers in the initial phase 1A, that will be another area where the U.S. side is going to be looking for significant movement from the Indian side across many different sectors, whether it's in the pharmaceutical and health sciences side, whether it's in the digital side and the financial sector. So I think that the list of non-tariff barriers is going to be a pretty strong point of negotiation as we move forward.
Any point in non-tariff barriers, Nisha, where you believe there are very hard negotiations ongoing at this juncture, where US would definitely want an early reprieve from India?
I do believe that this is a major area of discussion. It is certainly one where U.S. companies have voiced their opinion. This has been long-standing issues, many of which, as India becomes more and more the consequential destination for U.S. investment, those non-tariff barriers are going to be key to the outcome of a trade deal, not only on the tariff side, but a more enduring trade deal that goes beyond just the initial tariff negotiations.
Right. Also, how do you read Howard Lutnick's remarks from last week when he was speaking at the US-India Strategic Partnership Forum? He said that India needs to stop buying Russian oil and defense equipment. Do you expect the United States to link this to the interim deal? Probably tell India that if you want an interim deal, then you must give us some guarantees on stopping purchase of Russian equipment and oil?
Look, I think that as U.S. LNG becomes more and more available, there will be an expectation on the U.S. side that India is going to start to manage its sourcing trends and look more to the United States for its energy. That doesn't mean that we're looking for a curtailment of its imports from other sources, but I think there's an expectation that India will look more to its trusted partner in the United States for meeting its energy needs. In terms of defense equipment, we've seen a trajectory of deepening security ties between the United States and India. U.S.-India defense trade has increased dramatically. India continues to have residual trade in security with Russia, some of which is problematic for the United States as we look to more deepening ties and more advanced and emerging technologies, defense technologies. So that is something that both sides are going to continue to have to navigate. We, I think, on the U.S. side, have been understanding of the legacy footprint that Russia occupies in the security partnership, and have sought to try to manage and accommodate that. But I think increasingly, as we look at more advanced technology, we're going to need to be careful about that.
Right. On Donald Trump's threat to Apple, do you expect Apple to change their outlook on Indian manufacturing, on making in India for the United States?
I think Apple, is going to look carefully to see how it manages its supply chains. There's not really an economic scope to move and onshore all of the iPhone supply chain into the United States. But I think certainly Apple, as with every company, is looking carefully to see how it balances what its supply chains inside the United States and what its global supply chains are. So I'm sure that that is a area of ongoing discussion between Apple executives and the Trump administration. India is a very important component of the global supply chain, and a growing one and a trusted one. So I do expect that some arrangement accommodation will be made to include India in that global manufacturing supply chain for iPhones and other electronics.
Whole of last week, Nisha, we saw a very terrible public feud between Elon Musk and Donald Trump. How do you think that's going to impact Elon Musk's plans to enter India, both with Starlink and also with Tesla?
I mean, look, I think that certainly there's been a lot of attention to that dynamic. I don't know that it's going to necessarily reflect in the companies that Mr. Musk owns and operates, in terms of Tesla, Starlink, and others. I think that SpaceX, et cetera. I think that these are global companies, and they will continue to transact important deals around the world. I don't think it's an exposure either for India or for Tesla and Starlink, though certainly managing the relationship with the administration is something that Elon Musk is going to have to think hard about, because of the extraordinary impact that the administration has on its operations in the United States, its government contracts, et cetera.
Do you expect Donald Trump and the Trump administration to crack down on Elon Musk, or probably create policies that are going to hurt his businesses?
I think that there is work going on behind the scenes to bring this disagreement into a more manageable space, and I think you're going to continue to see things quieting down on that front.
Right. I would also like to ask you about the anti-immigration stance of Donald Trump and the kind of protest that we are seeing against Donald Trump's policies. Donald Trump's use of the National Guard has come under heavy criticism from the Democrats. How do you think this leaves the United States and its image as a place where people come to work, come to make a life, or even to study?
Well, I certainly think that seeing chaos and uncertainty on the immigration front does not help the U.S. global brand. I certainly heard from many in India on my recent visit their anxiety about traveling to the United States, about sending their children to study in the United States. And I am hoping that we can get to a better place on immigration, and that we can have some calm and deliberate discussions about what is sustainable for the United States.
Right. And Nisha, my final question to you would be about the mood on India. Considering there is a lot of trade uncertainty globally, India and US are working out a trade deal, and possibly we'll have a full deal by the time Donald Trump comes to India. Having said that, the companies that you have been interacting with, are they keen to diversify, increase manufacturing operations, invest more in India, or are the next 3 to 4 years going to be about consolidation and not investing more in India?
Well, I do think that companies across the United States and around the world are very much looking at India, not only through the lens of a China plus one strategy, but really thinking about kind of the future economy. Where is the future growth going to come from? What are the markets that they need to be present in? And in all of those areas, India certainly rises to the top. So I expect that investment in India, expansion plans into India, manufacturing in India are all going to continue to increase apace. Where there is perhaps some flexibility is in the pace with which that investment comes in, and that's going to be dependent on a couple of different factors. It's going to rely on the extent to which the government of India is moving aggressively to create the conditions for that inbound investment, the extent to which there is talent and skilled workforce, highly skilled labor that is going to be required for many of the more advanced manufacturing opportunities that we see in the future. And that means, how is the education system in India going to expand to create the labor force that is necessary? How is the regulatory environment going to allow that investment to come in? Including in non-financial sectors, including in land and labor policies. But I do think that irrespective, that the pace is always going to be moving in a positive direction towards India in the coming years.
All right, so the story on India will always be positive. Thank you very much for joining us, Nisha Biswal, for a comprehensive view on the Indo-US trade negotiations and what we can possibly expect in the next few days as well. We are going to move on and get you more international news right now. The Israel military has intercepted a yacht carrying humanitarian aid to Gaza in international waters. Activists, including Greta Thunberg, who were on board the yacht, were taken to an Israeli port and detained. Israel's foreign ministry has called the aid boat a selfie yacht of celebrities. It added passengers are expected to return to their home country soon. The organization which operates the yacht accused Israel of acting with total impunity. A Singapore-flagged container vessel caught fire off the Kerala coast after multiple explosions and a major fire broke out on board. 18 crew members have been rescued by the Indian Navy and Coast Guard, and 4 are missing. Efforts are underway to bring the fire under control. The feeder vessel was on the way to Mumbai from Colombo with over 650 containers. US President Donald Trump's travel ban against 12 countries has come into effect. This move is a part of a broader plan to crack down on illegal immigration. Countries banned include Afghanistan, Myanmar, and Iran. In addition to a complete ban, Trump also imposed partial travel restrictions on 7 other nations, including Cuba, Venezuela. Colombian presidential candidate Miguel Uribe was shot 3 times during a political campaign in Bogota. He survived the emergency operation but remains in a critical condition. Police has arrested 15-year-old suspect at the scene with a firearm. The motive behind the attack is yet to be ascertained. Iranian authorities have expanded a ban on walking dogs in public to more than 20 cities. Authorities claim that dog walking posed health risks to the public and can also lead to safety issues. The ban has been imposed through local directives and police orders, as no national legislation has been passed. Warner Brothers Discovery has announced plans to split into 2 public companies by next year. Its streaming and studio company will include its movie properties as well as streaming service, HBO Max, while its global networks company will include CNN, TNT Sports and Discovery. The streaming company will be led by CEO David Zaslav, while CFO Gunnar Wiedenfels will take head the global networks business as its CEO. British Prime Minister Keir Starmer shared the stage with the CEO of NVIDIA, Jensen Huang, as the London Tech kicked off. Prime Minister Starmer announced plans to train more than 7 million workers in artificial intelligence by 2030, and NVIDIA will sponsor this initiative. Jensen Huang said the UK is in a Goldilocks circumstance as he praised the nation's AI sector. Time for a short break on Global Lens, but coming up, protests against federal immigration operations in Los Angeles lead to violent clashes between protesters and paramilitary forces. Democratic governors criticize Trump's decision to deploy the National Guard. A deep dive into the issue on the other side. Welcome back. Los Angeles has been on the edge after protests against federal immigration operations led to violent clashes between protesters and paramilitary forces. U.S. President Donald Trump bypassed the authority of California Governor Gavin Newsom, deployed 2,000 National Guards to secure the city and to quell these protests. This did not go down well with the Democratic governors. Here's a deep dive into the issue.
Insurrection Act, you still plan to send troops?
Well, we're going to have troops everywhere. We're not going to let this happen to our country. We're not going to let our country be torn apart like it was under Biden.
What is the bar for sending Marines to
the bar is what I think it is. I mean, if we see danger to our country and to our citizens, we'll be very, very strong in terms of law and order. It's about law and order.
See those protests spreading to other cities, Chicago, New York, for example, in the next few days?
Yes, we're going to be watching it very closely. And when they spit at people, you know, they spit. That's their new thing. They spit, and worse, you know what they throw at them, right? And when that happens, I have a little statement. They say, they spit, we hit. And I told them, nobody's going to spit on our police officers. Nobody's going to spit on our military.
2025 World Pride celebrations wrap up in Washington, D.C. over the weekend. This is the first time Washington, D.C. hosted the event since its inaugural in the year 2000. Also this year marks the 50th anniversary of Pride events in D.C. These celebrations were held at a time when tensions were running high over LGBTQ rights in the U.S. The event also witnessed speakers at the event hit out at Trump and his policies that curtail the rights of the community. Indian astronaut Shubhanshu Shukla is set to make history as the first Indian astronaut to travel to the International Space Station. Shukla and 3 others will embark on Axiom Space's 4th human spaceflight from the NASA Center in Florida on the 10th of June and will likely dock on the ISS after a 28-hour journey. This will also mark India's return to space 41 years after Rakesh Sharma's historic spaceflight in 1984. South Korea has clinched its first win in the Tony Awards. The Broadway production of Maybe Happy Ending has won 6 Tonys, including Best Musical. The production debuted in South Korea almost a decade ago. Maybe Happy Ending is about the romance between 2 humanoid robots living in an apartment near Seoul. South Koreans have now won the 4 most coveted awards in US entertainment, including the Emmy for Squid Game and Oscars for Parasite. Portugal beat Spain in the UEFA Nations League final. Cristiano Ronaldo teared up as Portugal picked up the title for the second time by beating Spain 5-3 on penalties following a tie after extra time. Ruben Neves scored the winning penalty in Munich. From football to basketball, the NBA Finals is tied 1-1 after Oklahoma City Thunder thrashed the Indiana Pacers in the second game. Pacers managed to steal Game 1 in the last second, but no such luck in Game 2 as the Thunder romped home to a comfortable victory. Game 3 of the best-of-7 finals will be held in Indiana on Thursday. On Final Cut this evening, it's the dawn of a new era in men's tennis. Carlos Alcaraz defeated Yannick Sinner in the French Open final after saving 3 match points. The epic final lasted 5 hours and 29 minutes, making it the second longest Grand Slam final in history. We leave you with those pictures. That's all from us on Global Lens. See you at the same time, same place tomorrow. Thank you for watching. Goodbye.
Management guru Peter Drucker said the greatest danger in times of turbulence is not the turbulence itself, but to act with yesterday's logic. My guest today is someone who's been around for over 4 decades across corporate India in different roles. For the last 3 decades, he's been at Nestle, and for the last 10, he's been chairman and managing director of Nestle India, shaping its transformational story. Joining us now to talk about the fires, the storms, the lessons and learnings of longevity and leadership is Suresh Narayanan, the chairman and managing director of Nestle India. What is your leadership language?
Maybe this sounds controversial, but the classic hierarchical organization is no longer going to be relevant.
How you came back to India in 2015, the height of the Maggie crisis.
My father later on told me, when I called him up, I said, "Dad, should I take up this?" So he said, "Son, nobody puts an idiot into a crisis." Most corporations, Shireen, and you know it better than I do because you see many more people, they seldom fail because of lousy strategies. They fail because of lousy leadership.
What is one of the most underrated management principles?
I think the word happy has vanished from our dictionary.
What have been the biggest lessons from a marketing point of view that you would like to leave?
Kodak did not fail because it was a lousy brand. We did a small experiment to have Maggie counters in weddings. A Maggie stall attracted far more attention than the other traditional food fare.
In a wedding?
In a wedding.
How difficult and how different is the Gen Z customer?
They don't come in with a reverence for any brand.
Why do you say so? Do you typically do the lunch round or you don't do the lunch round?
I don't do the lunch round because the lunch round gets a little embarrassing, no?
But what made you want to do these rounds of the office, which you do twice a day? It's almost like a doctor visiting his patients.
Yeah. No, it's a I think it's just the desire to connect with the people because there's no other way. No, I can't keep calling them and disturbing them.
But it's a very young organization. What's the average age? 28.
Cyril Amarchand Mangaldas presents CNBC-TV18, The Thought League Season 3, A Glorious Decade, A Century of Service.
Hello and welcome to Season 3 of CNBC-TV18, The Thought League, a signature platform where India's foremost business leaders, legal minds, policymakers and global thinkers come together to ignite bold ideas and shape transformative solutions for the nation's future. And in today's episode, we reimagine public-private partnerships, not as contracts, but as catalysts for nation building. To explore this, we are joined by two of the most influential voices shaping India's infrastructure and legal architecture. Cyril Shroff is managing partner of Cyril Amarchand Mangaldas. Cyril is widely regarded as the architect of modern Indian corporate and infrastructure law. With over 4 decades of experience, he plays a pivotal role in shaping regulatory frameworks and advising key policy bodies. We also have Vinayak Chatterjee, founder and managing trustee of the InfraVision Foundation. He is a veteran thought leader in infrastructure and PPPs. His work has been instrumental in defining India's model for private sector participation in public assets, blending on-ground insight with strategic vision. Gentlemen, thank you both for joining us today on this special conversation. Now, Mr. Chatterjee, if I can start with you, drawing from the evolution of PPPs, public-private partnerships in India, what shape do you think they should take for India's ambitious growth and infrastructure targets for 2047?
I think my first point of response for you would be the fact that it's been about a quarter century of leading private capital into infrastructure sector. It was in 1997 that Dr. Rakesh Mohan published his seminal report, sponsored by the government of India at that time, called the India Infrastructure Report, which publicly and very consciously espoused the idea of getting private capital to play a substantial role in India's infrastructure development, therefore freeing up public expenditure and the fiscal space for many other developmental needs of the country. Since then, to get directly to your question, the whole pathway of attracting private capital through the PPP mode has gained significant traction. I think if I can talk about the positives, around 2012, almost 14 years since this policy got embedded in the DNA of public policy makers, the year 2012, of the total investments made in Indian infrastructure, 37 came from the private sector, both domestic and foreign. And the ambition thereafter, if the Planning Commission was drawing up the next 5-year plan, and I know from the inside track that they were then targeting 49%. And if there had been another 5-year plan, you would have probably seen the targets at 49%. So it reached a peak. But unfortunately, we had many, many hard lessons to learn because of the rising tide of NPAs, which is called by, the twin balance sheet problem and all that kind of stuff. A mountain of NPAs piled up. And the lessons there are important for us to go forward, which is that we need to create a whole lot of new institutional structures and interventions to see that the next burst of private capital that comes in is actually housed in a far more positive environment than leading to another round of NPAs. So these institutional interventions would require a fresh look at independent regulatory authorities, for which Cyril is an expert on that subject. It would possibly require an institution that featured in Mr. Jaitley's first maiden budget of July 2014 called 3P India, for which he had set aside 500 crores to create the complete positive architecture for next generation PPPs, etc., etc., etc. But let me stop here.
Mr. Shroff, let me pose the first question to you then. And actually, that's exactly the question